Good morning. How are you? My God, I haven't been here so long. It's good to see you, my friend.
What is it you'd say you do here?
What do I do here?
No, you're moving and shaking. Yeah, we haven't been able to book you on the show.
I know.
Because you're so busy.
It's been, I've missed that. This is one of my favorite times of the day. And, it's funny. It's like when you go away for a while and you come back and you look at that tree or that plant. It's like, oh my God, it's like grown.
I see you looking at my hair. You're like, you keep looking above my head.
Who can't? I'm down here, Pete. I'm not up here. Is that the old saying?
I had a teacher in grade school named Miss Shader, and she, every time, it was like so surreal because like I had her, I think in 4th grade, and like every time she would be looking at you, she would be looking above your head. And yeah, I don't know what it was, but like there's something off-putting about when someone is just like staring directly above you.
You've got the beard, and I mean, are you like showering with Rogaine or something? What's going on? You're like going full Sasquatch.
I don't understand.
I have not been able to spend the time.
Sasquatch.
I have not been able to spend the time with you in the last couple of weeks. I would have liked, but Sasquatch. Yeah.
So this is what I look like to you.
The smiling one, not the sad one.
This one's smiling. Honestly, he looks like he just did something inappropriate, and he got away with it.
Maybe that is more you. Yeah, come to think of it. No, the one the sassy guy. Yeah, look at him. He's proud to wear it.
Yeah,
he likes it.
Or what about this one? He's got a coffee. That's nice.
That could be you.
He looks more like a beaver or something. All right.
Brings you back to your Michigan school days.
I got really close to like Wolverine or something. Yeah. Or oh gosh, you didn't see this one, did you? There you go.
Oh, now
We're back. It's like you never left.
Now you've got a Christmas card. This is fantastic. How are you?
I'm good.
What is going on? You're a 118.
Yeah. You jump off the show for like a week or two, and the dollar loses like 5% of value against global currencies. Oh my gosh,
we've a little bit of pullback today, but the strength is.
So let's dive right into it. Let's get into the platform here. We covered Sasquatch in my gnarly appearance.
You refer to it as edgy.
This is so classic.
Non-public.
You and the rest of the olds are so good at this, where it's like you make fun of the person and then they.
What are the shoes?
What I've got?
He's got the new.
These are the
Baby Blues.
Nike Pegasus Premiums.
Okay.
You can't
like
just
that
get
means
these
anything
anywhere.
to me whatsoever. Of course you can't.
But you guys are so good at.
You got to order them online at a special place.
You and Clink and a lot and Terry and all these guys are so good at like making fun, and then like the person who's being assaulted is like, yeah, I know, like I've got like stupid shoes or like I look like an idiot, and then they're like, that's your words actually. You said gnarly, you said idiot, and it's like. Okay, but let's get into this because the dollar has been trading like a little bit of an idiot the last couple of weeks. But dare I say, the last 24 hours feels a little different. Yesterday, you saw the dollar give back more ground as we headed into the U.S. session, and it was like, oh my gosh, they're just going to beat the hell out of this dollar again, and we're going to be trading, like 119 by the end of the week. Pound's going to be up to 140.
This will be an interesting day because it's really your last full trading day of the week. Mm-hmm. We have half a day tomorrow. Mm-hmm. Now, equities open till noon, I believe. U.S. Treasury spot markets. We're open 24/5. Right. Forex never sleeps.
Come on.
Look at you. Maybe that's why.
Come on.
Look at you.
Yeah, that's right.
You don't have time to shave. You got to keep.
I'm literally aging.
Yeah. Yes. Welcome to the night sweats. But non-farm payrolls tomorrow, and then Friday we're open, but
U.S. participants won't be there.
So it will be interesting to see with the last full trading day of the week. Is there a little bit more froth taken off, or I think this will be an interesting because we're starting down. We've dipped pretty good here.
Yeah.
For me, this is. if we end up getting down into 117.40, 35, it'll be the first lower low in this whole week of higher highs and higher lows. Boom, 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 boom,
And
up. So for me, right now, this is a time trade. We don't push lower in the next 2 to 3 hours.
And if you have shorts or dollar longs on,
You're probably going
maybe
to have
time to call it quits.
Yeah, you're probably going to have a hard time getting them back in, or you may want to take a longer view, chop the position a little bit, and
Sure.
then take the roller coaster.
Yeah,
of
if you
non-farms.
were trying to day trade or swing trade this week, and you've got dollar longs on from, again, and this was kind of my point, and you very eloquently noted this, where it's just like every sell-off the last couple of weeks, and this is the start of this week here, every sell-off has been met with more buying
Right.
on the euro side, or every bounce in dollar has been set with followed by more selling. And just looking at the last week of trading here, obviously it's moving up and to the right. And as you zero in on the last couple of days, it has been like, oh yeah, they give back, 20, 30 points, and then they put in 100 points.
Right.
And it's like, oh, they give back like 10, 20 points, and then they put in another 50 points. This last 24 hours is the first time where it's like, they're taking this euro dollar down, 30, 40, 50 points, and they're not bouncing it back. We're not close to 119. We're getting closer to 117.
Right. Very short time frame, though. We didn't put in a new high right at midnight there. When we got back above 118, it rolled back over. But this is going to be kind of an interesting inflection point. I think you'll get both sides to trade here. But it will get, I would imagine, and we'll see, with non-farms coming out tomorrow, probably it'll get a little less interesting the last half of the day.
Mm-hmm.
So the question becomes, can we do a little bit more damage down here and then make a decision?
Maybe that's why we're getting such good volatility, like I say, the last 24 hours, and seemingly right now, is because, post non-farm tomorrow morning, which is 7:30 Central, 8:30 Eastern, I think that losers club is going to set in very, very quickly.
Absolutely.
Like maybe by like 9 or 10 a.m., it's going to be like, oh, spoos are in a
I think
5-tick range.
If you get movement until 9 o'clock, it's going to be hard to stretch it past that. And again, it sounds conflicting when I say non-farm payrolls because I'm the one who always says the number doesn't matter. Number doesn't matter. The markets will move off of it. So you've got to take that into account. With, if we get a really soft number, does that mean they move up rate cuts and the dollar softens a little bit more? Yeah, but it's not like softening from 112. It's softening from 118. In other words, euro is railing from 118.
Sure.
All those things aside, you want to be in a position where if you want to lean a little bit against this trending wise, that for me, it's like, because I get asked, well, you lightened up and it was good. The market rolled over. Don't you feel like you missed out on something? No. What I got myself is some optionality that if I was wrong and it comes out as a really soft number and we print 119.5, because where's the pain right now? Anybody's sitting on shorts in euro. If we print 119.5 and I still like my idea, I can add some there.
Well, because looking at the daily chart, and it's funny.
You've got no exit visas.
Well, it's funny. I can't help but what's been more relevant in my life recently and for my ilk is buying the crypto dip. And it becomes at some point when you're in a range like this, and I use Ethereum the last couple of years as an analogy, it becomes a rounding error of like, oh, I want to be long the 2200s and it's trading 2300, so I can't possibly buy it now. And then it trades higher, and it's like, dude, you were off by like a small fraction there. The trade isn't over
0.1%.
as you watch it, rise up to above 3,000. Same thing kind of here, where I agree with you wholeheartedly. The pain has been to the upside. If you are in a day trading or swing trading mode,
Pain's to the upside if you're a contrarian. If you're
Exactly.
a momentum guy,
Great
and
trades
again,
in here.
You can be, because it's giving you reasonable dips.
Sure.
You haven't had to buy breakouts if you didn't want to. You get 30, 40 points of pullback. Doesn't spend much time there. It confirms, and then it marches to a new high, which is all confirmation. If you're a momentum guy, you're adding to that.
But if you're
works.
if you're a short-term contrarian trader and
This is hard.
and you're short even from right here, let's say right here is kind of a scratch, I would be looking for places to at least take off part of that position going into this long weekend, because the last thing I would want is, I mean, you get a little bit of a dip like we've seen, you know, like to your point with the momentum traders buying these dips and looking for further breakouts have been great. But we've seen plenty of, you know, Sunday night opens, and we're going to get one after a long weekend here where even the dollar shows a little bit of strength and then gets immediately pounded for the next several days. And so just something to watch for. We have some nice research on the Eurodollar that I want to get to just a second, but anything else in here interesting? It's nice to see that the major currencies that have been beating the dollar's butt the last several days are giving back some considerable ground here. Is the Kiwi and Aussie hurting your feelings like it's hurting my feelings? Because this market
won't go.
It won't rally, and it is immediate. It wants to sell off so bad.
and so, again, part of the thinking is, well, these are all basis against the dollar. They all have to catch up.
Not happening.
If you have a year-long time frame, I can say maybe, sure.
Yeah.
But don't think that as the euro breaches its highs and Aussie just rallies 7 or 8 points, what we're seeing here, if you practically look at it and remove the emotion from it, every time the euro stops rallying, it doesn't go down, but Aussie rolls over.
Yeah.
Don't get caught up that, well, it's cheap. Look at, when I talk about tape action, that's tape action. That's telling me that, yeah, they all get dragged, more so one than the other to the upside on these dollar selling currency rally moves. This just isn't the feature right now. And it's not is it tradable? Absolutely. It's not a hidden gem of, boy, these are going to explode to the upside.
Well, what it might be a hidden gem of is if you are a contrarian looking to trade ranges, this might be your ticket, because every time we've gotten up to 60 cents here, we've rolled over.
You've got an 80 pip payout to the downside.
Yeah.
And if you're willing to set that expectation, this has been a rinse, Tony Batista term, this has been a rinse and repeat trade.
Since April.
It's worked really, really well.
Yeah, 100%. You're seeing, they did get up to 61 here. This is Kiwi yesterday, which nice, good for you, but they're now immediately giving back 0.5% here this morning. Totally agree with you. And as a last point, if you are a long-term trader, all of these things are obviously different. You're looking at maybe this Eurodollar extreme and you're saying, well, this is the high for the last couple of years. I like being short the 117s or 118s or whatever. You're getting paid the overnight funding for now unless the U.S. cuts rates. Right now, U.S. rates are double what they are in the Euro area. If you're taking that long-term view, obviously
what about
very
dollar
different.
Swiss, if you really want to talk about cheap?
Yeah, that is one of the cheapest dollars that you'll see across the board here, and getting just barely a bounce back. Yesterday, they got all the way down to
below 79
yeah,
cents.
they got below 79 for a second there. Right now, 79.30. But this is another one that you're getting paid, I think, a full point. Obviously, this stuff changes the overnight funding. And if you have a long-term view, maybe it's there for you. But yeah, to your point, Pete, if you're looking for short-term trading or you're looking for a short-term catch-up between the Aussie and the Swiss franc, it's been a really tough trade, and maybe something you manage expectations around this now and found tomorrow.
Yeah, and honestly, extreme-wise, this is when you say better extremes, this is just one trader's view. This is an interesting extreme. If you want to be short some euro, I would actually probably modify, lighten that up a little bit. I wouldn't mind being long some dollar Swiss too. Okay. I think at this point it's kind of the same trade.
Looks that way, just like in inverse, obviously.
Right. Right. It's kind of the same trade, but it may give you a little bit more bang for the buck if we do see the correction. But where do we want to go to? Slides?
Well, yeah, let's move over to the slides, because I have we've been doing some more research on this show. What about that? And I want to show Pete. We're not going to go into Glenn did some great Eurodollar research yesterday. Maybe we'll break into that if we have time, if we whip through this. But I wanted to show Pete some of the research. When's the best time to get long U.S. dollar? We're going to look at all the different major currencies against USD. Look at some different scenarios. Glenn has started to do more and more research. He's getting into the Excel sheets, Pete, and it reminds me of my early days. Remember when I sat next to you?
Yes.
And we would, me and James would be, you'd be doing, more important stuff. And me and James would be doing research for your show and Tom's show and everything else. And we wore remember those umbrella hats? Because the sun would come into the studio and shine on us for like an hour and we'd get sunburned. Good times. Glenn now doing some great research. Because Pete, I don't know if you noticed this, but your U.S. dollars they're losing value compared to other. Inflation's down, so they're not necessarily losing value compared to goods and services in the U.S., but they're losing value compared to other currencies.
Yeah, these are dramatic moves. Again, 30-year average on currency moves is 2.2% up or down on average. We're 10% right now.
10% for euro and Swiss franc.
Yeah. So is this an outlier year? Yeah. Does it beg the contrarian? And I would imagine if you ran the 1, 2, 3 standard deviations, we're sitting well within the 2 standard deviation
Probably around there.
level statistically. So it begs, they've got to revert. Everything does revert, but from what point? There's elasticity in currencies. We've talked about this before. They tend to go further than what's reasonable and then correct. So be mindful on your location and be mindful that it can't go any higher, because we could have had this conversation at 115, 116, and 117, and you would have been in a different spot.
And remember how did we get here?
Yeah.
Parity.
Right.
Multiple times in the last couple of years. And so when Eurodollar got down to 105 and everybody, we watched this happen 2 or 3 years ago. So many people flocking to this is a 2 standard deviation, 3 standard deviation move like we're at right now.
Spent a lot of time there though. And
we spent a lot, and we got cheaper and we spent a lot of time there.
Right. Yeah. And we tried a couple of times, couldn't get any kind of rally in euro and everything. So the markets don't do what they did 15, 20 years ago, which go to an extreme, this massive, I forget what candle they call it, the key reversal or whatever. There's a Ikimuku something.
Doesn't matter.
Whatever it is. Markets are too liquid now, so they tend to price efficiently. We don't get that blow off, and then they sit, and they kind of wait you out.
Yeah.
Shorts get exhausted. It's just not going down. It's not paying me. And you capitulate. So how do you do that? You manage size and you look for products that are giving you other opportunities. Again, there's nothing wrong with being the contrarian here and the range trader in Aussie. And I think when you choose to do that is what the market, we always talk about this term and it's hard to quantify. What is the market willing to give you? Well, the market's willing to give you a range in Aussie, not so yet in euro. So be mindful of that.
I'm glad you bring that up because, we're going to look at these. It might feel like even, actually maybe especially right now, the U.S. dollar is getting hammered. It's getting hammered against everything, and it's all the same.
Not so.
It's historically not so, as we're about to see, and it's not even not so right now. If you look at euro, dollar, and sterling USD, that's going to look pretty similar. But if you compare those to what Aussie and Kiwi have been doing, not very similar at all. Even dollar yen, Pete. I know that yen has had some strong points the last couple of months here, but we're still trading 145. We're not trading 120 or double or close to double digits like we were a few years ago. And so looking at all these different pairs, looking at all environments, these are 30-day trading periods. So maybe for a little bit longer term trader, essentially looking.
30-day range is a great range. If you are an intraday trader, it gives you scope around what you can expect. Now, there's always outlier, but it's a good period to look back on.
And we're going to look at essentially what happens after the dollar sees a down 30-day period, and then what happens if you were to look for a reversal in the underperforming dollar pair. So essentially, out of all of these, if I were to look for a reversal in the one that was the strongest against USD, how did that next 30 days act? And so looking at just all environments from 2019 until now, these are just the average 30-day moves. And so you're going to see a lot of unchanged. But obviously, the U.S. dollar has been strong against Aussie. And so you see that. And also keep in mind, these are reflective of the U.S. dollar movement. And so that positive 0.08% is telling you that the average 30-day move in Aussie dollar is actually down 0.08%. But if you were long USD, you've seen an average return of positive 0.08%. But you'd obviously have to be short that pair to be long USD. Obviously, the biggest example of what, if you're still saying, what the hell are you talking about, Frank? If you look down at the bottom, USD Swiss franc and USD yen, the average move in USD Swiss franc, 30-day move for the last 5 years or so, is obviously negative. Dollar Swiss franc right now is at 10-year lows. Right. And so the average move has been lower for US dollar, whereas dollar yen is still appreciably higher in the last 5 years. So the average 30-day move is higher than you might expect. But a lot of unchanged, kind of speaks to how these Forex pairs are mostly mean reverting. It's not like equities, right, where the average 30-day move for pretty much any equity index for any period of time is going to be higher, right, because the equity market drifts higher. You've got, euro dollar and pound and USD CAD not trending really in one direction or the other over from 2019 until now. Now, here's where we get some interesting data in here. When we filter for, okay, you've given me all the average moves for being long dollar from 2019 until present. Now, let's filter for if I had gotten long dollar after the previous 30 days was a down dollar move. Right. And what you see is some interesting stuff. One, in those commodity currencies, you saw a little bit of an edge to being long USD after a down period for USD. So mean reversion in that case, or solid contrarian play in that case. And what's funny is we just talked about this, and it's what we've been seeing, where if you were trying to get long USD the last couple of months, when the euro was outperforming USD,
you were frustrated.
Not great. But if you got long USD after a big up move in Aussie or CAD or Kiwi,
it worked.
You saw some mean reversion. They're saying the same thing going back 2019 until now. The other interesting flip side of this is if you're looking at pound and you're looking at Swiss franc, actually you tended to see a continuation of that move. Yeah. So pound outperforms USD or Swiss franc outperforms USD the last 30 days. The next 30 days actually brought some more damage for the dollar.
Yeah, it's an interesting takeaway there.
Last piece in here, just looking at the worst performer. So essentially, we looked at all 7 of these pairs and said, okay, in the last 30 days, let me get long US dollar where it's been beat up the most, essentially, which in the last 30 days was the outperformer against USD, and let me essentially short that currency and long USD in that. And you saw some more outperformance in USD in those commodity currencies, and some of these actually flip, again, the continuation in that pound. But really interesting to see that USD CAD, if CAD was the outperformer out of all of these against USD, the average next 30-day move was a huge reversal in that pair, a huge upside move in the dollar there. So some quick takeaways here to get out of here. Dollar bounces back strongest against yen and New Zealand dollar. U.S. dollar weakness continues, as we've seen in euro, pound, and Swiss franc. Outperformance in Canadian dollar typically leads to a strong U.S. dollar comeback. We just saw that with that big stat there. British pound and New Zealand dollar strength continues when they are the outperformer. So a couple of interesting things. Essentially, you can see a nice contrarian move or a nice reversal for that dollar when it's been beat up against the commodity currencies. You haven't really seen that with the euro and pound majors. and a little continuation. If the stars have aligned in the past, where the dollar was down the last 30 days and a commodity currency was the really big outperformer, that's when you've tended to see a sizable reversal.
And what's great is I talk about market structure, and and I try to give context to it, but I'm sure a lot of people, well, that's very subjective. You're kind of curve fitting. You've actually added statistics and facts to that concept of the takeaway from this is what markets are willing to give you right now.
Yeah.
And that's a solid, this is really solid information in terms of looking at how do I start to contextualize what I want to get. It's really not what you want to get at.
How do they
tend to align
act?
what you want to get out of the market from not some thought of this is really cheap or really expensive, but what is the market willing to give you? And that's what's adding some context. That's how you start to productively engage in markets. Sure, it's opinion based, but the opinion has to be based on expectations. Again, if 118 is out of this world, we should be at 112. Again, if you're not trading over a 6-month period, you're not thinking about this correctly.
Yeah.
So this is great context. Good work.
Yeah,
out of you guys.
Absolutely. Thanks so much.
Right.
And of course,
don't touch the hair. Let the beard grow. This is all working.
I will try to. I'm getting a haircut on, I think, Tuesday or Thursday. We will figure that out.
Let's wrap it up, my friend.
We will also do is wrap it up. Tom, Tony, and Vanetta coming up next. Have a great day, everybody.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the bed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
Well, I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Get tasty, free market. Come on, you know we can you feel it. We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola.
Do I need to
Good morning,
decontaminate your desk?
I wouldn't sit there.
Ah.
I wouldn't touch anything. I wouldn't sit there.
Well, I don't have a choice. Can I go home?
That'll teach you. That'll teach you
Yeah.
to spill in water at my desk.
I didn't bring. I don't even bring water in here. I'm not allowed to have water.
Don't lick his
in here.
keyboard.
Why would I lick his keyboard?
Mark your territory.
No.
Yes, one of those sick fetishes or something
I
like that.
mark my territory by putting glitter everywhere. I decorated my desk for summer. You should come over and see it. It looks super cute. It looks super cute. Can I tell you, Todd McCarthy was like, V. And I'm like, hey, what's up, Todd? And he's like, I want to take a picture of your desk. And I'm like, why? And he says like some lady in like his leasing office also has a pink desk. And he was like, I know a better pink desk.
Wow.
Seriously.
Who won?
Seriously.
I'm just curious who won. That's what I want to know.
How are my favorite boomers? What's going on?
I just want to know, how's your Labubu? That's what I want to know.
Oh, my Labubu is great. I literally, true story, I wrapped it in plastic so it wouldn't get dirty in my bag when I took her home last night. But now she's...
Oh, it's a her? It's a her?
Yeah, of course.
Yeah.
And so now she's safe. But then, can I tell you, the Labubu economy is strong. So I went to go look for an outfit for her. There are so many choices. So I got overwhelmed. But I'm trying to narrow down her aesthetic. But I want to get her a little bag. I'm going to get her like a little outfit, and I want to get like the protective case for her.
Okay. Yeah. On a scale of 1 to 1,000 things I care least about in this whole world, that would be a 0. Like literally a 0 on a scale of 1 to 1,000. If I even hear the name Labubu again, I'm gonna throw up.
I think you're just jealous because you don't have one.
I'm not jealous. If I had one, I'd give it to the dog.
Don't give it to the dog.
Oh, that's
if I had
mean.
one, I'd give it to the dog.
That's mean. That's
not mean. It's just like
if you're gonna give away anything, why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
It's a summer outfit.
You would not know.
Why? Because it's white?
You would not know about high fashion. Yes.
Wait, what are you wearing on the bottom? Let me see. A skirt?
You mean underneath this? Nothing.
No, are you wearing pants?
No, I'm not wearing pants.
You're not wearing pants? Well, you're not wearing shorts.
No, I'm not wearing pants or shorts.
Nah, I really don't want to be here. No, is it like one of those?
Reason why it was on sale when you bought it. It's out of season. It's out of year. It's out of season. I mean, it's.
I bought it last.
Is it one of those sun protection hoodies? Those are nice. I have those like when I go camping or hiking.
It's a high of 90 degrees today, Thomas.
I bought it at a sailing shop.
90 degrees today.
I bought it at a sailing shop. It might be 90 degrees outside, but it's freezing in the air condition.
You bought it at a sailing shop?
Yeah.
Why were you in a sailing shop?
Because I happen to have been there.
Oh, I would go to pick up a man with a boat. Have you heard the joke? They're like, you know, just like low key. Like the worst thing about being a liberal is that you don't have any friends that own boats. I was like, yeah, that's right.
You know, it's funny, of any kind of crazy asset, like
except for Jenny. Jenny owns a boat, so
any kind of crazy asset, like the one thing that I don't think that I would ever buy is a boat. I just don't get the whole concept.
I own a boat.
I know you have a boat, but you like to go fishing, whatever. I just don't like to be out on the water.
Can I tell you this? So I talk to Robin all the time, who is just a wonderful woman. You should just sit down, talk to her. She works here on the Tasty Trade side of things. But her and her husband bought a boat that they are like piloting, captaining themselves, and like are gonna sail it or take it to like far away places.
Like where?
Like Florida or somewhere. Like
From Chicago?
Yes, she's having all of these seafaring adventures, and I love that for her.
Oh, let me think about this for a second. So, can you go from Chicago? I guess you can go from Chicago to Florida.
You can.
Yeah.
Yeah.
What do you mean, Kiko?
Yeah.
Of course you can.
Yeah.
Yeah, you could talk to her about it. Like I don't know how to navigate.
I know one person that somehow did that to take your boat for the winter or something down to Florida.
Yeah.
But it's got to be, how long would that take? Like a couple of weeks?
I don't know.
Oh, yeah. It most certainly can.
Yeah, I mean, from Chicago.
You get a Starlink. She could still answer calls from her boat.
Yeah.
I mean, that's a long The longest boat ride I ever took was 4 hours.
A 4-hour tour. No,
4 hours from one city to another in Croatia. And I'm gonna tell you something. After 4 hours, I was freaking exhausted being on a boat, just bouncing.
I have so many jokes I can make. Just bouncing is also how I get on boats.
Well, I'm gonna tell you, 4 hours on a boat, I'm done. Just get me off.
I gotta tell you something. This is sad enough excuse for never getting to go to the basin when he was in a young, strong man back in the basin, the playpen
on Lake Michigan. I never wanted to go on a boat ever in Lake Michigan.
Oh, that is fun.
That's where we would all hang out.
I've been on plenty of boats in Lake
summertime.
Michigan, and I do not think they were fun.
I did it was fun.
I was trapped once on the air and water show.
Oh.
I was trapped on a boat, like a big giant yacht for an air and water show.
These are not actual problems.
Yeah, it was. I couldn't get off. We were 200 yards. We were 200 yards off of the North Avenue beach, and I could have technically, if I could swim, I could have made it in.
Okay, but you can't swim. We've already discussed this. You have negative buoyancy.
So my big decision came back to: do I want to be the guy that gets rescued in the middle of the air and water show, so everybody could cheer? Or
no, last weekend they were pulling people out of the lake, or a couple weekends ago, left or right, just because the weather just got really bad. It can turn a drop of a dime, and people were on boats because there was an event here, and so people were on boats. They had rented or chartered boats, but there weren't enough life jackets for all people, and there's supposed to be enough life jackets for all people.
I went to the
and one guy had his toes cut off because he was a boat propeller took
chopped his toes off.
Yes.
See, I don't like.
It was in the play pit. It was not.
You should stay away from the propeller when it's moving.
I went to the.
That's a boater's tip.
America's Cup race here. It was the trial.
Look at you with all these rich guy activities. America's Cup.
No. Remember they had the trial for it.
I am black.
They had the qualifying for it here in Chicago.
Why would the America's Cup qualifiers be on my list of things?
Well, I went to that on a boat, and I was trapped out on Lake Michigan. It was brutal.
I will say boats are hard for introverts because you can't do the Irish goodbye on a boat.
You can't do the Irish goodbye.
You can't, you're right, you're stuck there.
You're trapped like a rat.
Yeah.
They won't let you back into shore until after those races are over. So you're out there for 12 freaking hours. You run out of food. You run out of everything. You're hot as hell. Oh my God.
Your thong is starting to chafe.
Yes. And I don't want to be there.
Too good.
Oh my goodness.
So
I
think that was the last time.
You were literally on a boat in Croatia. Or, I'm sorry, Sardinia. You went to Croatia the summer before. You literally go on a boat in the Mediterranean every summer.
This year I rented a boat. This year I did. We rented a boat for. Okay, so listen. So they go. You have the boat from 10 a.m. to 6 p.m.
Yeah.
Right. So I didn't know.
It's a long time, by the way.
8 hours. Oh my God. Yeah. And so they go. So we get down to the boat, and I'm talking to the captain, and he goes, yeah, we're going to go here. They take out a map. They go, we're going to go here, 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 here. They show all the places they're going to go.
Sure.
And he goes, and then we should be back by 6 o'clock tonight. And I'm like, oh, this sounds cool. And then he goes, and I go, but I'm looking at these things. I'm like, hold it. Are there towns or whatever? He goes, no, these are all just swimming spots.
Yeah.
Okay. So after the first swimming spot, I looked at Corinne, and it's 11 o'clock, right? We started at 10.
Sure, right.
11. I go,
you got 7 more hours of this.
What are we going to do for the next 7 hours? Okay, I can't be on this boat for 7 more hours jumping off into the
How does the concept of time, so you thought it was going to be a mini cruise that you'd be hitting towns?
Yeah, you get off, you walk around.
Okay.
You go shopping, you have lunch, you do something.
You wanted to go shopping?
No, but I didn't want to get in the boat the whole time. I mean, I wanted to get something to eat, whatever. I didn't.
They had food on your very fancy boat.
Yeah. They had
okay.
Everything. But my point is, I was on the boat. 8 hours, ask Tony, 8 hours is a long time.
When 8 hours is a long time on a boat in the sun,
Yeah, with sun, and all you can do is jump in the water.
Sure. Or spend time with your wife.
Yeah, well, you're assuming that she wants to spend time with me. You know, so we're sitting there. It's and there's nobody else on the boat.
Yeah. You're lucky she didn't Natalie Wood you.
I was always watching that boat because I was like, you guys are not taking off and leaving me here.
Oh yeah. That movie that happened, like they left the divers and then like the sharks come or whatever, because they used the buddy system, but they were both like buddies, and so when they did their count, there was no one that said that, oh, my buddy was missing, because they were together.
There's a bunch of times.
Right. There's a bunch of There's
a bunch of times when they go down, you go scuba diving for a few minutes, you come back up, and everybody's gone.
Yeah.
You're like, oh, this is not good.
Yeah, and then the sharks come.
And then the sharks come.
It gets worse.
Yeah. Yeah. I mean, what's crazier? You remember John Izzy, who used to work for us?
Yes.
Okay.
Sure.
From Australia.
From Australia.
Yeah.
So John, hey, I can tell the story. He is the only person I've ever heard that survived 2 plane crashes in the ocean.
What?
Yeah.
Well, Australia is just trying to always kill you.
In the Barrier Reef, he was on 2 planes that crashed in the Barrier Reef and survived both.
Stop going to the Barrier Reef, John.
And survived both of them.
He flies around it now, for sure.
Wow.
Amazing story.
He wasn't flying the plane. He was just on planes.
Planes that twice crashed.
Wow.
Around the Great Barrier Reef and survived both of them.
Wow.
You know what chances of me surviving a plane crash?
You can't kill a man born to die.
Can't kill a man born to die is right. You know what chances of me surviving a plane crash in the Barrier Reef? 0.
Wow.
0.
Wow.
I couldn't.
0. If I'm on the plane, I'll be holding you under.
Sure. Thank you. You'd be doing me a favor. Did you see the guy that saved his daughter jumping off the back of the Disney cruise?
Yeah.
Yeah.
Unbelievable thing.
I did. I read that story. It was wild. I'm glad that they're all okay.
She was 5 years old. She was very young.
Yeah, 5 years old. She fell off the boat. He jumps in immediately. Didn't hesitate for 1 second because they said the chances of finding somebody.
Yeah, it's like
0.
Right. Yeah. Like the ocean is so vast.
He jumps in immediately.
Yeah.
Grabs her, treads water with her for like 20, 25 minutes, and Disney has this whole procedure where they somehow they have a rescue boat and everything else, and they got to him and saved him. It's like a 1 in a million miracle.
First of all, how did she even get overboard? Like,
I have no idea.
Like, I thought there were. I've never been on a cruise ever, but I thought there were railings and guards. Especially like
you don't go on cruises just for that reason.
Yeah.
How can a 5-year-old? How can a 5-year-old on a Disney cruise fall? You're on a Disney cruise.
Right. That's what I'm saying. Like, yeah, that's what I'm saying.
I mean, I could see falling off a houseboat, like going down a river, or I could see like somebody
a houseboat.
Yeah, they have like those boats that go down rivers. Like
what are you, Mark Twain?
River cruise in Europe or something. Who can fall? You can't fall off a cruise ship unless you jump.
Sure, right, yeah. Like because when I was 5, I was not very tall, and so it just seems.
How does a 5-year-old fall off a Disney cruise?
Right, yeah. There's some questions there. So.
Yeah, I would say so.
But I'm glad that she's okay.
Yeah, there's a lot of 5-year-olds. There's a lot of parents with 5-year-olds that are canceling their Disney cruise. I can tell you that right now.
Wow.
I would.
Shenanigans all around. Bet, how are you, sweetie? You gonna gas up your boat this weekend?
No. My boat's in another state, so I won't be gassing up no boat. I won't even. Side note, I'm surprised you haven't invited me yet to watch this racing rally in Chicago this weekend. But I'm sure you're going to. You probably have a box seat to it.
Oh, NASCAR.
Yeah.
No, is it on Saturday?
I think it's all weekend.
The 5th and the 6th. I think it's the whole weekend. Yeah, I think. But
no,
right.
I'm going to the Cubs game on Saturday. I'm very excited. I'm going to see the Cubs-Cardinals, the rivalry.
It's going to be really hot.
I don't care.
Okay, I'm just saying you should.
Are you going to wear that? Are you going to wear that sweatshirt?
No, when I go to the Cubs game, I don't wear a shirt.
You're just going to paint a C on your chest?
Yes. Yeah, I'm gonna go shirtless and just
no.
wear sunglasses and a big C.
I mean, you should paint the cherry on that would go viral because they're like, who who is that guy? And then you have like our logo on you.
Do you know what I won't be wearing at the Cubs game? A jersey with my name on it.
I don't know why that's such a big issue. Like if I were gifted a jersey by the literal owner of that team, then I would wear it.
No, you wouldn't.
Yes, I would.
Nobody wears a jersey with their own name on it.
I would love to have a jersey
JJ
with my name on it.
No.
I would love to have a jersey with my name on it.
No, nobody wears it.
All right.
So that's what I won't be wearing.
Okay.
But
first baseball game of the year for you.
it is. I can't believe it. I never made it this long without going. But I'll be there Saturday. Looking forward to Cubs Cardinals.
Wow.
Yeah. Sorry, I'm going to miss NASCAR for you, Tony. But if you want to come down and park in my house and take an Uber downtown, you're more than welcome. In fact, I'll tell you this. I'll take you a step further. If you come down to go to NASCAR, I will drive you downtown.
Ooh, this just got interesting.
I will drive you and pick you up if you're going to spend the day at a NASCAR race.
Door-to-door service, Bat. Don't say no.
Don't say no.
I love it. I love it. I might want to be like a bandwagon rider like Sosnoff, since the Cubs are 1-0 in July. You know what I mean? So maybe it will come.
It's literally only the second day of July.
By the way, NASCAR in Chicago looked pretty cool last year.
It always gets like rained out.
Yeah, I know,
and so, but I think this is the third year, and they're not sure if the contract is going to get renewed. But I will tell you, as someone who lives here, it's already a nightmare just trying to drive downtown. Like it's because everything's all barricaded, blocked. You know, there's just fencing and
I thought it was pretty.
I don't
everywhere.
think the streets are.
I thought it was pretty cool actually.
Up to snuff.
Yeah.
Except the rain messed it up.
I mean, I always get the heck out of Dodge during 4th of July because my mom was like, she's like, oh, do you want us to come over instead of you coming home? And I'm like, no. I was like, because we're going to just be trapped in my house because my mom likes to go to
I could probably use you this weekend if you have time after the Cub game. The kids are going to have a little 4th of July party. I'm going to need like a lifeguard or something like that out there.
A bouncer.
A bouncer
for the door. I need one of those too. I need a lifeguard, bouncer for the door, somebody to watch the keg. Sure.
You are not getting your kids a keg. I will call Child Protective Services right now.
No, I'm not. No, I'm not.
We used to tell our kids that we would have somebody at the door checking for alcohol when they were like 15, 16.
That's weird.
They would have like a ton of kids over, and they were drinking.
Yeah.
And we had to stop them somehow. So we told them we always.
You had to stop them somehow.
You think it's easy? It's not easy. They're sly little.
All you can do, they're like Michael Jordan. All you can do is hope to contain them.
Yeah,
you
right.
Can't stop them.
They're sneaky. They're sneaky little bastards. They don't.
And whose fault is that? And where did they learn that from?
They what do you mean? Where did they learn it from? They're kids. They're no different. Any generation, they're all the same. They think they get away with anything.
I never did it. I was a good kid, man.
Well, then you were the only kid because every kid from every generation.
No, because I was scared of my parents.
Since the 50s, every kid from every generation has tried, and especially if it's somebody else's house, they'll try anything.
Yeah, I don't know.
And they're sneaky. They got every little game device, and
device.
A way to sneak.
What are you? Did you have kids, or is this the plot of Ocean's 11? Like, what is going on?
Wait till you see what
they got a pulley system.
Wait till you see what these kids. Wait till you see what they show up with.
You think we need one more? I think we need one more. Anyway, we got a great show for you today. A bunch of yentas this morning, just certified yappers. But we got a great show for you this morning. It is
Tony, just tell them. I got it. I got a solution for you in this day and age. Just tell them you put cameras outside.
I do have cameras.
He does have cameras outside.
I know, but just make them clear that you put extra ones for them.
They don't care. They'll salute me.
We have a great show for you today. It's a wonderful Wednesday here at Tasty Live at the top of the 8 o'clock hour. Options Jive, discovering the language of price action. What's your love language?
Oh, this is actually, people are going to like this one because this is the question we get all the time. What's a tick, a bip, a pip?
Oh, yeah. Well, is there a difference? I thought they were just like all interchangeable.
A handle, a dollar, whatever. It's all the crazy terminology we use.
Yeah.
That's our love language.
Oh, that's nice.
That is nice because this has been requested by people, so this is good.
Yeah.
Hey, in other show programming at 8:40, because it's a wonderful Wednesday, what's your assumption? So reviewers write in with an underlying and a directional bias. Tom and Bat try to do as many viewer-submitted trades. Last week, Mike and Nick were holding it down, but now you guys are back, and you're going to do what's your assumption at 8:40. Then 9 o'clock, Jacob in the house, skinny on options math. What are Poisson jumps? Poisson?
Poisson jumps. It's
Poisson is French for fish.
Yeah, no, not this one.
Oh.
These are like gaps. These are like gaps. I think the translation's kind of like gaps.
Oh, well, it's literally French for fish.
Yeah, I don't think
Les poissons, les poissons. How I love les poissons. Hee hee hee, ha ha ha. No, Little Mermaid? No, nothing? Okay.
Jacob's going to talk about somebody's thesis that he read that basically suggests that in the end it's all random anyway.
Because he reads other people's theses for fun?
Jacob does, not
Crazy.
Evidently.
Crazy. And then my personal favorite, Johnny Trades, Nikki Batista in the house here to get harassed. If you have a smaller sized account, Nick Batista has some trade ideas for you. And then, of course, Liz and Jenny live from the floor of the SIBO. It was raucous down there the other day. I was watching the show yesterday when they were there. It was like really loud.
You know what? Hold on. Yesterday was loud?
Yeah.
Not much happened yesterday, but surprisingly...
Or whenever the last time they were there. I think it was yesterday. I've lost all track of space.
I was surprised. I was actually surprised by the amount of volume that traded yesterday.
Really?
I was, because I felt it was kind of quiet.
Okay.
Tomorrow's a half day, so I know that.
You had over 1 million S&Ps, but yeah, it did feel like it was quiet to me too.
I mean, nothing really happened for the whole last 5 hours of the day yesterday. Nothing. It was like a $10 range. But I was surprised by the amount of volume, which is a good sign. The NASDAQ was really weak yesterday. I think that's where most of the volume was.
Yeah. Well, hey, let's get into the news stories. You also got Truth or Skepticism, you and Dylan, 1 o'clock here, live, tastylive.com. Also on our YouTube stream. Make sure you hit that like and subscribe button and that bell notification.
Goodwill.
Goodwill. Goodwill. Do you ever shop at a Goodwill?
Goodwill Hunting.
I love How do you like them apples? I like Goodwill Hunting. It's a great movie.
Goodwill Hunting is a great movie.
It's a great movie. And just those two kids from Boston, they wrote a wonderful script. I can't believe they won the Academy Award. Still friends today. It's just a great story. Also, Robin Williams, just was a really good role for him.
Yeah, I didn't like his role.
Okay, great. Hey, keeping it moving, I guess. I'm going to pivot out of that super hard. You want your daily dose? Great, because you don't have a choice.
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, across the wire.
This just in.
Top stories, jump in.
In today's headline,
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's July the 2nd. This is part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Sure.
Ready for the news.
Any earnings, Mr. Bat?
No. You won't get any till like around July 10th or so.
Okay.
When you get maybe like Delta Airlines or something.
NASDAQ handily beat the New York Stock Exchange for stock market listings during the first half of 2025, buoyed by IPO offerings of big names like CoreWeave and Chime, and a jump in proceeds raised via SPACs. How come the NASDAQ continues to just straight dominate for listings?
As opposed to the New York Stock Exchange?
Yeah.
Well, the New York Stock Exchange has their issues. Put it that way.
Okay.
You're not going to get me to defend the New York Stock Exchange or the NASDAQ.
Well, IPOs at the NASDAQ, including those of blank check acquisition companies, raised around $21.3 billion during the first half, compared with $8.7 billion for the NYSE. I just thought that was interesting. But hey, moving on. You're getting your June's job report, but it's coming out tomorrow instead of Friday, because Friday is a holiday, so I'm not sure what the expected move is for tomorrow, but tomorrow's also a half day. I'm not sure how all of this is going to settle out, but your June's jobs report comes out tomorrow, which is a half day, and that report could decide the next Fed interest rate cut. Let's talk bonds, and let's talk wacky sort of market positioning, market timing for this report.
Well, the
bonds are under 115, 114.30, about 10 handles off of their lows. Remember, yesterday they traded up to 116, so that's $1,000 move on the bonds with a nothing market going on here. And even the S&P's expected move, I mean, for today, it's like 20 some odd handles, 22 to 24. And for the full day of July 3rd, you're only looking at 44. So that's a half day, as you just mentioned. So you got a lot more volatility coming tomorrow, obviously, than today from what the expected moves are showing.
I sold some puts in the bonds and the notes this morning.
Okay.
When they were a couple ticks, we're up. I mean, I think we're up a couple ticks on them, but we sold some puts in the bonds. ZBs, I sold the 113s, and ZN, I sold the 110.5s.
It could be interesting because, of course, trade wars are causing a hiring freeze. AI is taking all of the jobs. There's an immigration crackdown. Like, there's just a lot happening in the labor sector. In the labor sector in general. So that's it. Just gonna move on. Hey, the challenge to dollar supremacy is a long way off. That's according to central bankers. But the U.S. dollar down around 11%. For the year, but the dollar accounts for 58% of global reserves versus just 20% for the euro. Any switch to the euro wouldn't be quick. There would need to be reforms. But are you worried about dollar supremacy?
I'm not worried about it, but on a theoretical basis,
things are shifting though.
It's wiped out most of the gains in the stock market for most people, but for people outside the U.S.
Yeah. What are you doing in currencies right now with the yen, with the pound, with the euro?
I am long the yen. I'm flat the euro, which is coming in today. Long the yen, flat the euro, flat the Canadian dollar. I have no British pound. I'm sorry, long the British pound, no Aussie dollar position.
Okay. How about for you, Bat?
Euros. I'm the world's worst commodities trader, so I try to stay away from these because I'm SMRT smart. But the euro is unchanged, but near its highs, and the Japanese yen is basically unchanged, also trading around 70.
Yesterday we sold euro, bought yen. That was actually a good trade.
Okay.
And then we sold euro versus US dollar. That was actually a good trade.
And you had Pete in talking a little.
I did it when Pete was on.
I was trying. If I could, why do you hate me? And I said you had Pete on to talk a little Tasty FX, as if I could have gotten my whole sentence on. So, but how are you finding the Tasty FX integration?
The interface is great.
The interface is great.
Great.
The interface is one of the best interfaces we've ever written. The problem with it is that it's not, for regulatory reasons, it's not integrated yet into our order book.
Oh, gotcha.
And so it has a separate funding mechanism.
Okay.
Which is instantaneous, but it's separate. So it doesn't show up in your order book. So it's a little bit like, that's why it's not on the follow page either.
Gotcha.
So we have some work to do with the regulators to allow them so we can use a single dollar in the account to trade both products.
Gotcha.
But it's a beautiful interface.
Hey, shifting gears to some more commodities here. Copper has rises to a 3-month high on Chinese manufacturing rebound. Copper is looking strong as China says that factory activity is recovering in the world's second largest economy. Let's talk metals.
We don't have a copper position on.
Okay.
Hang on
That'd be
second.
HG, Sadno. If you're looking for /HG, it's up about 0.75 of a percentage point today to 5.13. Not on its highs. Highs are closer to 5.4, but that hasn't happened since March. It's at its most recent high for sure.
So 3-month highs, as I said.
Yeah, sure. Now I can confirm 3-month high, as you said.
As foretold.
As foretold.
Do you do anything in like a FCX either, or just
No,
no?
not right now.
Okay.
No, we're hoping. Actually, we're trying to sell some more bond puts here, so we need one more down tick. Maybe get them down 23, 24. We're down 20 right now, bonds.
Come on, Bondolinis.
Yeah, just drop a couple more ticks for the good kids.
Doge officials at the SEC, who have so far focused on cutting costs, have in recent weeks sought meetings with SEC staff to explore relaxing what some companies have described as burdensome and unnecessary regulations, and that includes reworking Biden-era rules adopted last year on SPACs. So Doge wants to sort of release even more the regulations surrounding SPACs. What are your thoughts on this? And are SPACs back?
No. I mean, there's a couple that have traded, but I would be very careful. The SPACs were kind of a disastrous route for most investors.
But it was so much fun for trading in 2021.
No, it wasn't, actually, because most of the SPACs went from $10 to $1 in about a matter of weeks or months.
I think the most successful SPAC is like DraftKings.
No, the most successful SPAC, I think, wasn't it PLTR or something?
Oh, was Planeteer a SPAC?
Yeah, it was $10.
Oh, okay, yeah, then
But,
that
there was a couple of successful ones, but most of them, like I'm telling you, most of them were like, they came out at 10, they went down to 1, and they're still like hovering around 1 or 2.
I like those odds.
I'd be careful about, I mean, everything's changed now because nobody will invest in the SPAC anymore.
Sure.
But I don't know.
You okay?
Yeah, I'm just not. Let's put it this way. If you came to me with a SPAC, I'd be pretty reluctant to invest in it myself.
Hey, here's something interesting. Public.
They say, I just was reading here. I'm so sorry, but I don't know. Lucid Group with $2 billion. I don't know if that could. I don't know how that could be the biggest. Oh, it's the biggest SPACs, not the.
Yeah.
Not the.
Yeah, I was saying like the one that's
Lucid,
still around.
Lucid was another disaster.
Yeah.
I mean, it went up to like 40 or something, but then back down to 2.
Alibaba Group is up there, Sosnoff, the list of. No, that's IPOs. No, I don't know, man. I can't
Baba
find
was not a SPAC.
No, you're right. It's an IPO. Sorry. I can't find it. Sorry.
No, you're good. Public companies grew their Bitcoin balance by around 18%. That's according to data provider Bitcoin Treasuries, while ETFs only showed an 8% increase in the same period. So public companies are just adding Bitcoin to their balance sheet at a rate that I've never seen before. But someone asked an interesting question on social media, and I wonder if you could provide your explanation or answer. So the tweet went like this. They're like, if every day you read some headline that companies are buying billions of dollars worth of Bitcoin, how come the price of Bitcoin hasn't really gone anywhere?
Because
explain it to me like I'm 5, he said.
Because everybody at this point is reaching, and the people that actually have owned it all along, all these passive investors that have bought Bitcoin at much lower prices are, let's say they're laying it out.
Okay.
So they're taking some profits here and they're selling into this kind of strength, whatever you want to call it. And it's actually pretty impressive the way I'm impressed how people were able to hold out this long.
Mm-hmm.
And listen, I mean, that should.
And if there is an unwind, even the unwind that's going on is so early.
You know, there's a great story that I want to say it was Louis Barcelino that told the story, but it was somebody, or it was a buddy of mine that used to be a broker in the S&P pit, and he said he had this huge customer.
Huge, really huge.
It was a broker in the S&P pit. He had this huge customer, and he said the guy one day he bought, like, these are the big futures back in the day. He bought like 1,000 futures, and he gave him a not held order. He said, "Buy me 1,000 futures," and he thought by buying 1,000 futures that he would push the market higher.
Mm-hmm.
And so he buys 1,000 futures, and the broker buys 1,000 futures actually at a lower price than he thought he was going to be filled at. Like, so he thought he was going to be filled at a certain limit.
Mm-hmm.
And he got filled below that limit.
Okay.
So as soon as he got the fill, the broker, who was my friend, said, thought he did an unbelievable job. And he's like, "I got you filled better than your limit." And the guy, because it was a not held order, which means he could have paid anything. And the guy goes, "Okay, sell him out immediately." And so he blows out the whole 1,000 lots, and the guy loses money on the trade, but he gets out of the whole trade. He goes back to the guy and says, "What the hell were you doing?" And the guy goes, "Well, if I couldn't move the market higher by buying 1,000 futures, then there's way more sellers out there than I ever thought. And so I have no
like a
interest
little
in being long.
test trade, sort of, kind
It's
of.
like, I have no interest in being long these. Like, if you're buying $20 billion worth of Bitcoin here and you're not even moving the market like $2,000, there's sellers out there.
Okay, it took you a while to get there, but there was a good point in that story. What's crypto doing this morning, Bat? Let's check in on that.
It had a decent move last night. If you take a look at Bitcoin, it was down to 105 and change, up to 108 and change. It's 107.7 right now, so it's at the higher end of its range. It's up almost 2%, but it was down last night. Now it's up.
What's Coinbase doing?
Great question. You always ask me that, and you get me. Coin 339 or so. That's up around $4.
Hey, something else that is up this morning is the U.S. banking giants announced plans yesterday to raise their third quarter dividends after clearing the Fed Reserve's annual stress test last week. J.P. Morgan, the nation's largest bank, raised their dividend to $1.50 a share from $1.40. They also announced $50 billion share repurchase program. So J.P. Morgan was up massively, Goldman Sachs was up massively, Bank of America, Wells Fargo, like it's just the 1920s, the early part for the banks.
and JP Morgan's goes ex-dividend tomorrow, just to let you know. It's a bigger dividend, as you just mentioned, $1.50, $1.40.
And you did write about this Sunday in your cherry bomb, but what are you doing anything in the financial sector? They will be the first to report when the new earnings cycle starts again.
I mean, I think that these stocks, I wrote about it a little this weekend. I think that the banking sector has no fences right now. And anytime you get into kind of the wild, wild west with respect to regulatory limits on banks, it gets to be very dangerous. I don't trust these guys.
Yeah, I know. You keep saying that.
So I'm nervous. I wouldn't buy any of them here, but we're not short them either yet.
Sure. Nope. Hey, good news. Clean energy stocks jumped yesterday after a tax on solar and wind projects ended up being removed from Trump's big bill. The Senate narrowly passed the legislation Tuesday and is now going to get considered by the House of Representatives. But the American Clean Power Association had warned that the tax would up to $7 billion to the wind and solar industry's burden. Let's talk your in-phase, your first solar, your whatever.
Yeah, it's I mean, we have only N-phase.
Okay.
And it's been, I mean, to be fair, it's kind of it's same exact price as
Okay. No, it's a nothing burger.
Yeah,
First Solar's had a little bit more of a move. It was down around 140. It's closer to 163 right now. It's just had a steady rally the last 2 weeks or so.
N-phase got down to 35 and it got up to 42. It's like 40. It's nothing. It's already priced in.
Two Chinese AI chip startups are seeking to raise $1.65 billion in U.S. IPOs. The Beijing-based More Threads and Shanghai-based Meta X want to IPO in the U.S. What are your thoughts?
Happy. I love when Chinese stocks IPO.
I know, but this is like on the verge of being banned, I feel.
No, I want as many Chinese stocks as possible to launch IPOs in the U.S. More for us to trade.
What are you doing in your Baba and your Baidu? Because you can't trade these yet. They don't exist.
Nothing.
So nothing? Okay.
Baba's hanging out, going sideways, doing absolutely nothing. IB rank of 11 since you mentioned Baba.
Oh, okay. I'm skipping a story here. Elon Musk's XAI has raised $10 billion in debt and equity as they now try to step up and challenge OpenAI. The funding will go towards XAI's efforts to build out its AI infrastructure. This is, again, Musk's AI startup. They raised $5 billion in debt and $5 billion in equity.
Okay.
Go forth. Here's something interesting, though. This headline says AI's next explosive frontier for investors is not hardware like an NVIDIA, but it is actually software. So looking at things like Salesforce, CRM, or Autodesk, or Duolingo, what are your thoughts that the future of AI is in software, not hardware?
Couldn't agree more.
Ooh, interesting.
100% on board with that statement.
Okay. I should just quit while I'm ahead. That's the news, everybody.
I am 1,000.
And if you're looking for a stock that hasn't performed in any type of rally as of late, and I'm talking about as of late being 2025, CRM would be a stock.
But I agree with that statement. It's in the software.
Okay.
That's whoever figures out how.
That was BlackRock's Tony Kim. So shout out to BlackRock for, now you big mad.
I don't know.
No, that's who said it, but it was interesting. Hey, Apple stock got upgraded yesterday. Jefferies analyst thinks Apple could see stable performance, but he does voice concerns about tariffs and future sale. Apple got upgraded to hold rating. What are you doing at Apple?
We were long.
He's probably watching our show.
Probably watching our show is right. I mean, we've been long it. But at 210 here, we're going to be flat it.
Okay.
Let's put it this way: we did not get caught short. It wasn't our biggest actual long delta position, but we were clearly bullish in Apple.
Something that's kind of getting caught in the crosshairs, but is also on deck for its own reasons today, is Tesla. Tesla's going to announce their quarterly deliveries today. Sometimes it comes out in the morning. I don't have an exact time, but Tesla is expected to report another fall in quarterly deliveries as the backlash against Musk continues and competitive pressures continue to drag on demand. The stock took a hit yesterday as the president threatened to remove subsidies for Musk's companies as the two are fighting again. But again, Tesla deliveries is always like a little mini binary event today. What are you doing in Tesla?
It's funny. It's funny to talk about these these subsidiaries for the taxes,
subsidies,
credits.
Yes.
Yeah, for Tesla. I think Tesla being the biggest animal in the room, in the EV room, it's got to hurt these smaller stocks a lot more than it's going to hurt Tesla. If you take it away from Tesla, you take it away from all the EV stocks. I don't see this as a huge negative to Tesla. I don't know. Maybe it's just
me. What does the stock tell you?
Well, we're short.
Stock's doing nothing. It's 300. It did take a hit the other day.
We're short a bunch of premium in there.
Uh-huh.
And
I'd be ranking 31.
Yeah, we're just we sold it yesterday. It hasn't really done anything. I think we made a tiny bit of money on it yesterday, but
it's been going sideways.
Yeah, I mean the stock's 300 now.
Sure. Well, to compare and contrast, this is a wild story out of China. Xiaomi released, they make smartphones, but they released their first electric vehicle. And again, this is only in China, but they received 240,000 orders in the first 18 hours because this car is maybe $35,000 US, and it has more range, more capability than anything that we have here in America. There's this guy on TikTok that reviews Chinese EVs, and the features that these cars have, you're like, oh, that's really cool. And this car is legitimately $35,360. And China is just eating our lunch right now. So, but 240,000. But Tesla is also trying to compete in China. So, I just thought it was interesting.
Yeah.
Because they make smartphones. They don't even make cars. But they made this car, and everyone wants it.
I guess if you can build a battery, you can build a car.
Yeah, I guess so. You throw a ball, you throw a wrench.
If you can build a smartphone, you can build a car, I guess.
Speaking of new technology, you can also trade it Joby. Have you ever traded Joby?
I don't know what it is.
Joby. You ain't got no alibi. It's a flying air taxi, and they just sold a crap ton of these to Dubai. So Dubai commuters may soon have a way to skip traffic. Joby Aviation conducted the first test flight of its fully electric air taxi, part of a technology called EVTOL, vertical takeoff and landing.
There's no pilot?
No.
You just get in?
Yep. Actually, no, there might be a pilot in this one. It is electric, maybe not autonomous. I will reconfirm and get back to you on that.
I would be surprised.
But if you could get to O'Hare in 5 minutes, oh my God.
It will be very interesting to see if these. I want to see if these have.
And I believe they are autonomous.
They are.
Yeah. Because you're all in on Waymos now, so this is the next step.
Okay,
for you.
I've been in one Waymo.
You're all in on Waymos, girl.
I've been in one.
Bat, would you ride in this?
Ooh, that's a tough one. I think I'll stay to the ground autonomous type taxis.
Yeah, but if you had to, so you would rather sit on the Kennedy for an hour and a half than get into this and be at O'Hare in
I'd rather live is what I'm looking for. The answer is I'd rather live.
JOBY Bat. I don't know if it's the stock is doing anything. Joby Aviation.
Yeah, JOBY closed around $9.70. It's up a dime. This is a stock that was $5 in April, so it has had a rally, but it's doubled. I guess I should say that.
Tom, do you have a favorite English Premier League team?
I don't.
Okay, I don't either, but I just thought I would ask. Mm-hmm. Well, the English Premier League is partnering with Microsoft to integrate AI into the Premier League's app. It is a 5-year contract, and with Microsoft AI, fans will be able to access video, articles, and stats dating back to the league's founding in 1992.
Cool.
Cool. Yeah, there you go. Not sure what Microsoft is doing, Bat.
MSTR sitting around Ivy rank of 10.
No, Microsoft. MSFT, maybe?
Oh, I'm sorry. I apologize.
No, you're okay.
Microsoft 488 and change. It looks like it's down around $6 or so.
Oh, okay.
Maybe $5, depending on where it looks.
What are you doing to Microsoft?
We're short it.
Okay, so then that's good if it's down $5 or $6.
Yeah, but we need it down 40.
Okay, well, I can only help you so much.
I needed Microsoft at, it's 488. I needed it at 455.
By tomorrow?
By July expiration.
Hey, this is crazy, but congratulations. SGA and the Oklahoma City Thunder have reached an eye-watering $285 million contract extension that goes through the 2030-31 season. It is now the richest annual salary for a player in league history. Breaking it down, SGA's contract, it's $71.25 million a year, $5.94 million a month, $1.48 million a week, $868,000 per game, $212,000 a day, $8,800 an hour, $147 a minute, and $2.45 per second.
Man, you really got deep in the weeds in this thing.
That is wild. I would like to renegotiate my contract.
He's Canadian, too.
I know. I hope he's getting paid in U.S. dollars, not Canadian.
Oh, he's getting paid in U.S. dollars.
Yeah. He's a good kid.
He's a great kid.
Yeah.
I don't think they would give a $285 million extension if he wasn't a great kid. But he's going to be a little older. This doesn't start for 2 years, I think.
That I don't know. I think it's.
No, I think it starts in 2 years. I think
it's through 2030-31 season, so it's a 4-year deal. So I don't know how that
starts in
down.
2 years.
Okay. Anyway.
Yeah, it's listen. You know what? It shows how much these owners make.
Yeah.
And
well, it shows how much revenue he can bring in.
Yeah,
right?
I mean, they won a championship. They got a young team. If they can keep the core, he's their MVP.
Sure.
You know, I mean,
congratulations to you, man.
The risk is that they turn into the Celtics.
Well.
Right.
That's the risk.
Hey, finally today for my viral video of the day. If you've ever owned a dog that for half of the year, because of the seasons, your dog is perfect, and then the other half, they're struggling a little. For me, I owned a 6-pound Chihuahua, so winters were hard. Like, she hated winter because she weighed 6 pounds, and I had to put a coat and boots on her. But conversely, if you own something like a Bernese mountain dog, when that heat index gets a little hot, that dog is going to be a little uncomfortable. Check out this Berner and his displeasure when his mom lets him out.
It's really hot. Yep, the heat index is 109. Yep.
I know. I'm sorry, honey. I can't change the weather.
Yeah.
Oh, poor Burner. Yeah, but 109 degrees,
hot.
too hot for him.
They have videos.
Yep, the heat index is 100.
Like huskies, too.
They have videos of huskies where they just put them in a little kid's pool.
Yeah, filled with ice.
Filled with ice.
Yeah.
And the huskies just lie on the ice.
I know. But your daughter used to have a Bernese Mountain Dog.
Love that.
Yeah, he was a good dog. It's the best dog. Anyway, but keep your pets cool. Also this weekend, most dangerous for pets. More pets go missing over the 4th of July than any other time. Fireworks. Your doors are open.
Birds, wildlife, all
No.
kinds of stuff.
Fireworks scare the dogs, and your people are coming in and out of your house. The door or gate gets left open. Animals run away because kids are,
Dogs hate fireworks.
I know. And lots of people hate fireworks. There's lots of communities that are like, I could do without the fireworks.
I could do without the fireworks too.
Yeah. So anyway, just make sure your pets are secured inside. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live and Confirm and Sign next. We'll be back in 90 seconds. It's Tasty Live.
I could do without fireworks.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, my friend, with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P is trading near their lows, Sosnoff, down almost 11 handles. That's about 3-4 handles off of their lows of 62.35. They got up to 62.70. Last night. NASDAQ down 89, 2 days in a row. The NASDAQ is the weakest of the group, although the day is just starting. Russell up $1.40. Russell's been the stronger of the 4 with the Dow. Dow down 29. You see the Dow here has been one of the strongest of the group for the last week or so. A little bit of rotation possibly. I don't know. Just a little bit of movement in the futures themselves. Volatility up 13 cents. Volatility at or around its lows, trying to keep its head up for the first time in what seems like a long time, but it's really about the first time in about 7 or 8 trading days. Bitcoin had a big range from over 108 to down around 105.5. It's sitting at 108 right now, 107.9. Oil up 66 cents. That's a larger move than you would expect. It was actually 30 cents higher than that. It's up a full 1% in oil. IV rank of 30 in oil is neither here nor there. Gold up $9 and change. Silver up 6 cents. Net gas up 4 cents, just over 4 cents. That's a 1% move. That's all I got right now, Sadnov. Let's see what the market brings us.
Yeah. All right, we're running late. Let's do a little confirm and send.
Don't be late.
It's Wednesday, July 2nd. Let's see what we got. In your cherry bomb, you mentioned buy the noise and sell the calm. But I've also heard you say never sell a dull market. To me, these statements seem contradictory. Perhaps I'm not understanding. Could you please clarify the difference?
Buy the noise and sell the calm. I mean, listen, and again, it would be buy the noise on a large down move. Everybody hates everything. The world is coming to an end. That kind of thing. And the same thing to the upside, we'd be looking for the opposite. You know, everything is euphoric. It's going to be great. We're going to all-time highs. Everything is beautiful. We'd be looking to do the opposite of that one. Never sell a dull market. It's kind of when the market's doing like what it's been doing right now, kind of going sideways. It seems like a rudderless ship. Volatility is contracting. It's just an old trader term. I don't know how accurate it is, because I don't think you can really define, you know, what dull is and what calm is. So I don't know. It's a fun saying.
Yeah. I mean, to be fair, when I wrote this, buy the noise just means when things get like kind of crazy, that's when there's a lot of opportunity. And when things are very calm, like I feel like they are now, there's a lot of complacency. And I was thinking more of like a much bigger picture, just view of the world. When we say never sell a dull market, that's always on a very short-term basis. That's like a day like yesterday. We go, you know, or the day before, we're like, you know what, it's really quiet today. Just don't sell a dull. That's more of like an intraday thing. The first line, buy the noise and sell the calm, is much bigger kind of overview of all the markets. Never sell a dull market. It's just a very short-term intraday thing. That's the difference.
Yeah.
They're not really contradictory. Let's go to the next slide. How do you know when it's time to scale up? When I started trading, I was a one-lot trader, but now my account is 4 times the size it was. Does that mean I should be trading 4 contracts?
I don't think it's linear like that, like going from 1 to 4 just because the count of your size goes up that way. But it wouldn't be a horrible thing. Now, I would caution you to, especially if you haven't done it yet, to go very slow in your contract size increase. I'm assuming that you've gone through all the strategies and you found what works for you when you write this kind of email. And I would probably look to double my buying power uses as opposed to making it quadruple the size. That would be my way of doing it.
Yeah, you know, this is something that it doesn't have. You don't have to go. The ratio is not necessarily 1 to 1. Like just because your account's 4 times bigger doesn't mean you have to go 4 times the size. Because that's not how we trade. Like if you're a one-lot trader, maybe you go to 2 contracts, but maybe you add more positions. You certainly could, you know, go Forex if you wanted to, but my preference would be to add more positions. So I'd rather go from 1 to 2 or 1 to 3 or really 1 to 2 and add twice as many positions. That's what I would do.
Right. Yeah.
You never want to do too many contracts. You always just want to add more positions. Let's go to the next slide. I would like to ask for your advice. My 11-year-old son started reading Julia's book. He has been harassing me with questions about options and the stock market. I could really use your advice on how to approach the subject with him.
Wow, I'm an 11-year-old reading Julia's book. I don't think you have to approach. I would just leave that young person, that young man, says his son there, young man alone, and let him go about his own business. He seems to be on the right path, and I think you're only gonna kind of hold him down a little bit. So for me, I just keep giving him as much information as possible, and I suspect he's going to be teaching you pretty soon. So I would love to meet him.
Whatever you're feeding that kid, keep feeding it to him.
Let us know. You should let us know, please.
Whatever you're feeding him, keep giving it to him. I mean, listen, if you have an 11-year-old and he can read Julia's book, God bless. What I would say is one of the things you can do for him is you can ask him kind of like some of the companies that, at 11, he already has a bunch of companies in his head that he really likes. Maybe it's a company that creates some kind of a gaming console or gaming device. Maybe it's somebody that it could be a sports related. It could be computer related, tech related. I don't really know, but whatever it is, ask him for a couple of the companies that he likes, and then maybe in your own account, you can make a few trades for him so he can actually start watching some stuff. Like, he said, let's just say as an example, I love my Apple computer, whatever. Buy him 2 shares of Apple or 5 shares of Apple and see what happens, and get him to start watching it or something like that. Whatever you can do to help him and encourage him, that's what I would do. Let's go next slide. What is the expected annual return one can expect if they do an at-the-money cash secured wheel strategy? As an example, if someone has $1 million in cash and they run an at-the-money cash secured wheel strategy on high-quality underlyings, can they expect to make 25 to 30% annually?
Expect? I don't think you can expect anything. I mean, the market has to cooperate, either go sideways, slightly lower, or higher, which would be the best scenario there. I mean, it's not unattainable. I think a 19% vol is going to make it a little bit rougher, but it's possible with the market cooperating. Sure.
Yeah,
it's 5 times risk-free returns.
I mean, we'd be foolish for saying that it can't happen. We'd also be foolish for saying that you can, that you could expect that. It's not, no, you can't necessarily expect
last year, and again, you're saying some stocks here, like, well, I don't know what stocks you're picking too. I mean, not every stock cooperates with the market too. Right. So
listen, on paper, could you sell enough premium to generate between 8 and 12% on high quality stocks, or between 10 and 15% on some stocks that have higher implied volatility annually? And the answer is absolutely. But you have principal risk. Now, if the principal goes up 10%, then you're going to add those two numbers together. You're going to beat your number. If the principal goes down 10%, then it's going to wipe out your premium. I mean, we can't answer that. Is it reasonable to expect, if you did a index, which has been averaging for the last 15 years around 10%, and if you sold calls against those, which have been averaging around 12%, it would be reasonable in the last 15 years, that return's been over 20%. It's been significantly over 20% for this strategy. So, in that sense, sure, it's been probably over 25%. But I don't, I couldn't say going forward that we would never say that to somebody. We would say, is it possible? Absolutely.
Sure.
Can we expect it? I don't know. Yeah. Let's go to the next slide. I've been lightly selling premium, but always find that it's roughly a 5-to-1 risk reward on verticals and unlimited on naked positions. My concern is that if you close a position at a 50% profit, then that changes your risk reward to roughly 8-to-1. That means you have to be right over 90% of the time to break even. Am I looking at this right, or what am I missing?
Well, you're making it a binary event. It's all or nothing. Many times it's not nearly as much as you would think. It's not nearly as risky as you would think. So I don't think your numbers, I obviously on a straight across the board math model, yes, but in the real world of trading and managing at 21 days, these numbers are completely irrelevant.
Right. That's the answer, is that in a binary world where it's all or none, sure. But we don't live in that world. If you manage at 21 days, most of the time on those verticals, you're talking about a very minuscule risk. It's not 5 to 1. It's not even 1 to 1 in most cases because of the high probability trades. So it's below 1 to 1. So yeah, you're looking at it wrong because you're assuming that it's binary and it's a max loss. And that's just not the case.
Yeah. Sadnov, don't look now. Those Tesla numbers that Vinay was talking about must have come out. The stock is up $20 to $320 and change.
I have one position on in there. We'll see how that goes. Let's go to the next slide. When you are in a 0 DT trade and you see a huge move, like the 9th or the 4th, like April 9th or 4th of this year, that both legs of your position on the one side get so deep in the money, what are your adjustments, or what are the adjustments one can make to keep the losses at a reasonable range? Maybe limit it to 2 or 3 times the premium initially collected rather than lose the entire spread. Basically, you know, when you're in a 0
they're
DT
looking
trade,
for management here. Yeah. Tough question to answer here because it's 0 day and not like, 45 day where we've done the research that would show that, maybe at 2 times the premium collected, you can close a small statistical advantage than letting it go. I mean, with 0 day, I would say you really have to get your management from the opening, and that would be the width of your defined risk trade that you're putting on, and concentrating more on high implied volatility than low. I don't think I can come up with something for here, Sadnov, for you.
Yeah, I mean, if you were talking about a longer dated trade, we would have probably some answers for you. But in a 0 day, it really depends on how fast it happens. And sometimes,
if it's before noon kind of thing, you
sometimes you can have great intentions about adjusting a position, and you just get distracted, or you miss it.
Yeah.
Sometimes you don't want to take a loss 15 minutes after you put a position on. So this is a tough one. I would say if you have defined risk, I would do it based the way Tony and I do it, which is based on time. If trade's not working in the first hour, just move on.
Yeah.
Yep. I mean, there is no, sure, you can limit it to 2 or 3 times the premium if you can, but sometimes you can't. So just, do it based on time.
Yeah. It's a good hack there.
Yeah, that's it.
Very good. Very good. Sadnov, we're going to take a quick 90-second break and come back. We got even the S&P's down 3, but we got an option jive coming at you. We'll be back in 90 seconds. It's Tasty Live.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You know, like when I answer the confirm and send that's in the question.
What are you eating?
Him? Peanuts.
Yeah.
Pistachios.
I ate a pistachio. You're eating and you're just kind of like chewing while he's talking. Like,
no, nothing. Always. It's not eating.
Do you have some control over there?
None.
None.
And there's shells everywhere.
Oh my God, this is so good. I hope you can see this guy. I pray that you can, but I don't think you're going to be able to.
I pray that you can.
I pray that you can. I can't say who, but one of our insiders sent me this. This is Tom. I'm eating peanuts on air, and I don't care face. Here you go.
That's not on air. That's in the commercial.
What do you mean? How did they get it? It's not on
They just
air.
made that up.
See? Yeah, that's what we didn't want to see.
I'm surprised you like. I don't like. Yeah,
I don't like the way you chew your nuts. Okay, I'm gonna tell you that right now.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
It's options.
Eve.
It is an option jive. Sosnoff, you are 100% correct. And we've got even the S&P is down 5, but all that means nothing when you've got this option jive.
Option jive. Looking at positions really fast. Not much going on here.
NASDAQ down 51. Even the S&P's down 5. Got kind of a mixed bag of tricks here, Sosnoff. You've got Tesla trying to get us higher. Only $315 now, up $15. Apple trying to get us higher at $209, up $1.30. Trying to see what's weighing the NASDAQ down. It might be the usual stocks. When you take a look at it, you've got Meta down $5. Google is also down, small now, $1.
Yeah, all I've done today so far is I bought in some NASDAQ futures that we were short, so I'm flat those now, but I also sold a bunch of puts in the bonds and the notes. A couple of tranches in the ZB. I sold the 113 puts. My average price is 115. That's where they are right now. And on the ZN, I sold the 110.5 puts, and my average price is 33. That's where they are right now. So right here. I'm just reloading the long side, I guess, is the easiest way. Perfect.
Easiest way to say it?
Easiest way to say it. Just reloading on some long bonds here. I buy them every time they go down, and so far it's worked. So hopefully the streak continues.
You get long delta.
I get long delta every time they go down. It's worked so far. Let's keep the dream alive. It's probably been our best trade of the year, I would say. I'm guessing, because I don't think we've had a single loser in there.
That's just true.
But we've had to hold them, a little bit sometimes. It's 8:14 in the morning. And we are in Chicago, so this is Central Time. And this is a first piece of research that we're doing for you today. let's take a look. This is a fun one. It's called Tick by Tick, discovering the language of price action or the language of trader love. Let's do it.
Trader love.
We use a lot of different terminology on this show, and sometimes people write to us and go, what the hell are you talking about? What does that mean? You know, help me, help me. Well, here you go. There's a lot of unique terminology in finance, especially surrounding quoting conventions. It's not uncommon to hear words like ticks, pips, handles, bips used in the same sentence. What do these words mean, and which markets do they apply to? Remember, we have lots of different markets. So like futures use different terminology than stocks and options. In fact, I'll tell you, when I first got to the trading floor, it took me like 2 months to figure out what people were saying. Like I couldn't understand all the traders have their own language. And I think
I could see it taking you 2 months because you were born with a silver spoon in your mouth and you didn't have to make money from day one. It took me 3 years to save $5,000 so I could start trading. And I had no backfill of money that I can rely on. So if I didn't make money from day one, month one, pay all my expenses and, my rent and maybe feed myself if I had time, I couldn't last.
Congratulations.
So I had to learn the terminology right away.
Congratulations. Well, so did I, but that's neither here nor there. It still took
Evidently not, as told by the story by you.
It still took me a couple months to figure out all the different terminology. Let's go next slide, John. A tick is the minimum amount a price can move for any market. For example, U.S. stocks are quoted in U.S. dollars, and they move in 1 penny increments. They used to actually move in fractions, and everything's been decimalized. I don't know what year it was. But everything moves in ticks or pennies. A handle is the whole number part of the price quote. So NVIDIA's down 19 ticks. The handles is 144. Now we would never use the term
NVIDIA's
ticks.
down 19 ticks. We would never say that in a million years.
No, we would never say that. We would say NVIDIA's down 19 cents, but you can say the handle is 144.
Sure.
But we would say NVIDIA's down 19 cents, but you can interchange it with ticks if you want. Let's go to the next slide. Pips, percentage and point, are similar to ticks, but generally refer to foreign exchange markets and reference the 4th decimal place. Some currencies like the euro are quoted in half pips. So the Aussie dollar is up 8 pips. Yes, this is very unique to the spot FX market and to the and to the futures marketplace for currencies. We don't quote things in pips very often, but we will say they moved like this morning the euro moved 120 pips, something like that. But because we don't want to confuse everybody, but this is how foreign currencies are quoted. They're quoted in pips, percentage and point. Let's go to the next slide. Bips, which are basis points, represent 0.01%. So a 1% move is equal to 100 basis points. This is a lot how we talk about, for example, bonds. We'll say, when they go from, 4.3 to 4.4, we'll say they moved 10 basis points, that kind of thing. So this is most often used in reference to debt yields. We will talk about basis points all the time when we talk about, how interest rates move and when we talk about what the Fed does. Like, for example, we put here today, the Fed met today, they raised short-term interest rates by 25 pips. So pips are for foreign currency quotes. Bips or basis points are for interest rates, and ticks are, usually used for futures trading. I would say we use it more. We use it for futures trading, and in the stock world, we use cents. That's probably the easiest way for us to say. Let's go to the next slide. In addition to knowing the tick sizes for each product, traders need to familiarize themselves with the dollar value per tick. So, for example, stock tick sizes and tick amounts are the same. So if a trader's long one share of Apple and price increases by $1.50 or 150 cents, that trader's P&L will go up by $1.50. Actually, it's 100. Well, it's one share, right? $1.50. So if we go,
they got it. Yeah,
they got it right. If we go to the next slide, option contracts control 100 shares of the underlying. Thus, a 50-cent increase in the options quote is a $50 change to a trader's P&L. And that's the way it always works. With options, there's a multiplier of 100. Futures are a little different, but options have always been this way. Let's go to the next slide. The multiplier is always 100. Futures ticks are the most variable because they depend on the underlying asset and they're not standardized. So, for example, tick sizes in the CL are a penny, but the value per tick is $10 because the contract controls 1,000 barrels of oil. Thus, a 10-cent move or 10 ticks in CL will result in a $100 change in a trader's P&L. And since they're not standardized, every asset is different. That's what makes futures a little more complicated. We call that nuanced know-how. That's the challenge with futures. It's not the trading part. It's just knowing what the tick sizes are. Let's go to the next one. Why aren't they standardized? Good question. They really should be.
You could quit. Well, I mean, because when they came, they didn't all come out at the same time, Sadnov, and some are contracts and commodities a lot older.
Yeah, okay, all that's true. But we still, at this point in time, everything should probably be.
We should be able to, the industry should be able to get its act together.
So ES contracts are $12.50 a tick. The GC contracts are $10 a tick. The 6B contracts are $6.25 a tick, and the CL contracts are $10. So it's not, none of this is standardized. That's what makes it challenging. The trading's the same, but that's what makes it challenging. Let's go to the next slide. So basis points always refer to 0.01 basis points. It refers to the whole number part of the price quote, and pips refer to the fourth decimal place of the currency pair quote. Tick sizes and value per tick vary across multiple products, especially futures. So traders need to familiarize themselves with these amounts to properly size their trades. The cheat sheet way of doing it is to look at the buying power reduction, because that's the easiest way to kind of make sure that your risk is in line with what you think it is. Just look at your buying power reduction.
Yeah, 100%. Now, if you're looking at a vertical spread, that might make it a little bit different, right? Your buying power reduction. So, but on the singles themselves, you're 100% correct. Good work, my friend.
The vertical spreads are just the risk. That's all it is. It's just the risk, no matter what.
That's true. That's true. Let's take a quick 90-second break and come back. We got more Tasty Live. Sound off the opening bell, the moment you've been waiting for. We'll be back in 90 seconds of Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot. At the end of the thing, it's like losses could have been catastrophic, and they're not.
Cool.
So I appreciate you.
I hear you.
I appreciate you guys. Thanks so
Thank
much.
you, man, and I appreciate you holding on the line to say that to us. So thank you.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, Mike. You're like a caged animal. Are you tired from your jet lag yet?
No.
Is it?
No. I mean, yes, I'm getting up a little early, but no, I'm not tired.
A little earlier.
A little earlier. Well, I went to bed a little early last night because I got tired last night. But during the day, man, I got so much energy because I'm so rested. I didn't do anything for a week. It's not like me.
Nothing? Good man. Don't let that good stuff go to waste. Good job out of you. Sosnoff, let's take a look at what's going on in the market. Even the S&P's down 6. Sosnoff, 6 and change, 6.5. Again, last time I quoted them, they were closer to 35. They're still there now. They're about 7 handles off of their lows. NASDAQ, which is down 37, is about, 70 handles off its lows. It looks much to do about nothing. Sosnoff, volatility unchanged. Russell up small. Dow down 40. Bonds down 27. That's your big mover, Sosnoff. 114.17 down near its lows, just making new lows a moment ago. Bitcoin up $2,300 over 108, 108.1 or so, flirting with its highs of the day. Oil up 62 cents. Sosnoff, I put on a oil strangle on my option trades today, every Tuesday and Thursday, Sosnoff. I'm up 70 cents on it already. Would you take a 70-cent profit overnight in oil?
I mean, I have a bunch of strangles on it, and I took off 40% yesterday, another 20% today. So I'm still in the position. I have 40% of my position left. I'm just lightening up in there. You know, it's been a great trade.
Yeah, I agree with you. I was working a bid below to see if I can get a little bit more out of it, but I'm gonna see if I can get the 70 cents overnight. I'll take it. Run like a thief in the night. Market's set to open here in less than a minute, Sosnoff. Say something profound.
Rule number 1: the default is always take your profits. If you're curious.
Sure. Yeah.
I mean, I was mentioning before. This is the smallest position This is the smallest amount of positions and the smallest amount of risk I've had on all year right now, our extrinsic number is very low. I need to put positions on. I just don't want to force them here. And I don't see, other than the bonds, which I feel like are at a pretty okay extreme, very short term, I don't see a lot. So, I mean, I'm pretty bearish.
I just got filled on my oil strangle, 137, sold it at 144 just yesterday. Sad enough, you too can watch those types of trades, and I know you like them a lot because they're winning trades. You don't get a lot of those overnight for you, but you should check it out. Option trades today, every Tuesday and Thursday.
Well, your Tesla didn't open up that much.
Tesla's going to open, but we don't know how high or low. It's up $8 right now, 309. So after trading up to 321, I saw it as much as 321.
Yeah, I'm flat. Premium came in there a little bit, little tiny bit. Let's take a look and see if there's anything else crazy. And I'm gonna say, yet. Not really.
I heard one ding.
Oh yeah, I got no dings. I mean, I don't know.
You're all dinged out?
No, I'm just looking right now. I'm going through really quick to see if there's any problem children. God, I thought Apple would open higher.
What do you think of the NASDAQ here? It looks like it's weak, but still it's only down 30 cents. Sorry, $30.
It was ugly, and then Tesla kind of saved it a little bit. I don't know. What do you think?
I don't know. I have one of the smaller positions I've had on in quite some time too. I don't know. I would like to see a little bit of a downturn here. Even the S&P is 62.41. Down 8. You could see here they really haven't had a downtick. I'd like to see one of those days where we take out, 3 or 4 days of this up move just to give us, Johnny come latelys a little chance to trade too, get volatility a little bit higher. /VX up a nickel here. Let's see if it goes over its highs of 1890. Maybe if it goes over its highs of 1890, we can get a little bit of movement to the downside. So far, nothing.
Yeah, I'm just looking kind of across the board to see if there's anything that seems a little out of whack, and there's not. I mean, it's a good opening for the good kids. Nothing much. I mean, we covered NASDAQ futures when they were down 70. They got down to about 100, but now they're only down 8, so that's not bad. And bonds are right where we did the trade, and S&Ps are right here. Russell sold off a little bit. Looking at stocks on the board really fast. Big movers, obviously Tesla, you mentioned it before, but
it's not the 20 points that we had we were expecting prior.
No, not at all. Yeah, I don't see anything that's huge. UNH down a little bit after yesterday's huge move. Adobe down a little after yesterday's huge move. Costco continues to be weak, but man, I'm curious to see what our customers have in store for us today because
we got what's your assumption immediately following
because I'm struggling.
Yeah, we'll see what they were doing. Well, let's do that, Sadnov. It's only 3 minutes into the opening and you're struggling. It makes for a long day. Let's take a quick 90-second break.
If I'm struggling at 8:33, to find stuff, you're damn straight that's going to make for a long day.
And some would call you a professional, right? Like I wouldn't, but some have. I mean, option guru and all this other crap.
I'm a professional something. I'm a professional something, all right.
We'll get to the bottom of that. What professional something he is immediately following these.
I mean, I got to figure out. I don't know how I'm going to get to 50 trades today. That's what I'm trying to figure out.
You didn't do it yesterday, so you have a goal. We'll take a quick 90-second break and come back. We got more Tasty Live with what's your assumption? That's right. You came to bat for us. We'll be back in 90 seconds with Tasty Live.
of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live till about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options that gives flexibility. It's more capital efficient, and Tasty Live does it again. They teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, my friend. We've got, what's your assumption?
You know, I'm going to need a little help today.
As opposed to every other day?
Yeah. I'm really going to need a little help today.
Well, even the S&Ps are down 6. NASDAQ's unchanged. Well, it's down 7 right now. It's just up 10. It was down 30. Volatility's up 2 cents. Right now, it's a tug of war between good and evil, green and red.
I don't like this market here.
You don't like the height of the market here? You don't like the complacency in the market here? Use an adjective so our viewers can get a feeling for what you're thinking and not what you're saying.
I don't like the market here. I think it's going to maybe work its way a little bit lower.
That's a lot of conviction right there, ladies and gentlemen.
I'm looking
volatility up in nickel. Bonds are the only thing that's helping you to the downside for the market, Sadnoff, 114.18. But they've kind of had their move lower for the day, and the market really hasn't responded. If anything, the market's actually rallied into this bond move.
Yeah, the bonds seem to have no relationship with anything, to tell you the truth. I mean, I think because of the weakness in the dollar, the bonds have stayed very, very heavy because with the dollar crashing, you know, if you're outside the U.S., do you really want to, you know, are you going to roll the principal risk on moving into U.S., you know, dollars here to buy bonds? I think that's the reason.
Yeah.
I think if the dollar gets stronger, you'll see the bonds go higher. So I think it's a 2-for-1 play.
Sure.
I think that's why they're so damn heavy. But anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. It's 8:42 this morning, and it's a beautiful Wednesday. I think it's a beautiful Wednesday, actually.
It's a beautiful Wednesday in your world, Sosnoff, and that's all that counts to us. As long as you're happy, we're happy.
It's a beautiful Wednesday in my world somehow.
Who knew?
Yeah. Tried something new for breakfast this morning. I've been pretty much on my Japanese, Chinese, kind of cottage cheese kick for breakfast over the years. And today I went to I picked up this specialty guacamole with mango in it. And it was quite delicious.
Mango's a disgusting fruit.
Really?
Yeah.
Why? I like mango.
It's slimy. Well, you would like it. It's slimy. It's smelly. It's everything that you stand for.
Perfect. Well, I liked my mango guacamole, and over my sushi,
and your cottage cheese,
and the cottage cheese. Yes. All right, let's do it. These are trade ideas that came to us, or trade assumptions that came to us from viewers all over this universe. Let's see what we got. From Cristobal, you think I'm going to fall for that knock 'em stiff Ohio thing? I don't think there's a place called Knock 'em Stiff. But, yeah, I haven't hit a lot of shots knocking them too stiff lately. Anyway, Cristobal, let's see what he says here. Apple.
Knock 'em Stiff, Ohio, Sosnoff, also known as Glen Shade or Shady Glen, is an unincorporated area located in northeast Huntington Township of Ohio.
There really is a Knock 'em Stiff?
That's true. Yep.
Wow. Man, somebody was having fun. Somebody with a lot of love for golf came up with that name, and they
No, Sosnoff, as the story goes, a preacher came across two women fighting over a man and advised the women that the man was not likely to be worth their trouble and that someone should knock him stiff. Another explanation is that it is named for one of the many slang terms used for moonshine.
Wow. I have learned something new today on this July 2nd. Wow.
See that?
Knock 'em Stiff is a real place in Ohio. Anyway, the tale of two stocks going in an opposite direction. Is there a pairs trade to be made here? What Cristobal is saying is he wants to buy Apple and sell Oracle, ORCL. I'm going to tell you right now that 2 days ago, I freaking love this trade. But the problem,
what about today now?
But the problem is that 2 days later, Oracle has
Market's
dropped.
moved?
Well, yeah, Oracle's dropped. Let's see. It's dropped almost 10. Oracle's dropped $10 and Apple has rallied $10.
Right.
Actually,
well,
Apple's,
we hope you put it on. Yeah.
Apple's almost right $11 now. So this has been an incredible, just an absolutely incredible run here for Apple, Cristobal. And I'm going to tell you right now also, we were super bullish on Apple. This was not this.
Yeah, this was a trade we got on.
This is a trade. This is a trade we were all over. So I actually really like your trade. I am just not going to touch it. Not after it moved $20 already. But I like it. Just it came too far too quick.
Yep.
I liked it. I wish I was 2 days ago. Let's go next slide. I would have been all over this trade 2 days ago. From Atlanta, Georgia, Mikos. The Russell has been the laggard, but July has traditionally been a good month for stocks. I like a Jade Lizard here. What's the Russell? Russell, I'm about unchanged today. I like a Jade Lizard here. Selling the 205 puts and the 230, 235 call spread. You know, the Russell has had a monster move yesterday. I think we're a day late on this one. It was up $25 or $30 yesterday. I just said I'm a little bearish here. This is not a trade that I want to put on today, but I would have liked this trade 2 days ago again. I know it sounds like a broken record, but I'm pretty particular about this stuff. And I thought 2 days ago the Russell was really too cheap. After yesterday, it kind of normalized. Don't love that trade here today. Let's go to the next slide. Aaron from Waxhaw, North Carolina. All right, what do we got here? He big mover lately. Gas is cheap relative to heating oil, proxy for diesel. 2 weeks in the contracts. RBQ5 and HOQ5. Tony, help me here. Haven't traded either of these in a while. RBQ5 is the front month. It's trades plenty. This is RBQ. RB is gas futures, gasoline futures.
That is correct. Something we don't trade that often.
What's the ratio here, Aaron? Is it 1-to-1?
Let's see.
And
RB
HO
/HO
/HO.
Yeah, one uses around 3,100 in buying power. The other uses around 39. I would say it's 1-to-1.
Yeah.
I'm not familiar with the two as a relationship to each other. I will say that. Wow, Sosnoff, you are just going to pound them out today. You need trades. You're looking for them.
Yeah. All right. Well, I put this on. What is it again? HO versus RB.
Yeah, you should be selling HO, buying RB. That's the way it's written there, and that's the way you did it.
I bought RB. I sold HO. All right. Fingers crossed. Godspeed. Let's see. I did the Q5s in both. Let's go to the next slide. All right, AA Ron. You got to tell me when you got to tell me when I need to get out of this sucker.
Yes.
Perfect. Let me just get rid of those things. Good. Let's go to the next one. Simon from California. F1? What is this? A strangle in F1. I don't know this stock. FI.
FI. Let's take a look.
Fiserv. Man.
Yeah, we've traded before.
Fiserv?
I think we have.
Stock's going
Earnings
sideways.
are coming July 21st. I'm going to look at August markets. They're okay, 20 cents wide. The calls are a little bit wider.
Let's take a look. Volumes are pretty light. You're going to have to do something small here. Strangle. What does he want to do? 155, 200. 155. This is a very bullish skew. Is that what you want, Simon? Markets have been...
He has it as bullish. He is correct.
Yeah. Positioning major player in stablecoin, so I'm long that too.
I mean, the stock's on the lower end of its range. 160 is near the lows. It's 172. The highs made in March were closer to 230, so it's definitely on the lower end of its range.
Okay. I mean, I haven't traded Fiserv in years. Yeah, I filled it at 377.
Beautiful.
I think that's fair. Let's go to the next slide. Stanislav from Slovakia. Index or ETF neutral, 1 to 2 days, most likely trend to be bullish and close higher. So you're just Stanislav, you're just betting that we're going to just rally into the for the next 2 days.
4th of July weekend, baby, America.
Yeah. Ooh, you know what?
Even from Slovakia.
So even Chris Vecchio would love you. And there are plenty of traders that have bought before U.S. holidays. It's an age-old approach to trading. Not my favorite, by the way. As somebody who's traded before every single holiday, because I never usually go away anywhere. I mean, even though I was away last week, I'm usually never away. So I think I've traded every single holiday ever before, the day before. I don't think it's that much of a layup. I know a lot of people do like it. I'm going to pass. It's not my thing.
Okay.
Let's go. Because this is all real money. I got to like it. Jack from Philly. Slightly bullish on him. Has a strong call skew. We do not
have a strong call skew.
Stock is trading
Him's down 70 cents. Sorry.
Stock had a big drop. Now it's kind of like mid-range. This is a potential strangle play. I have no issue with this. An August strangle here with a little bit of, neutral. Expected move is $14. So the stock's 47. So let's go to the 35 call just for argument's sake. Pick up $2. That takes us to about the break even, and it's going to have a lot of call skew. And you can go to the 70 call. 70 call. 70 call 36.
70 call what? 70 call what, please?
70 call 36 put. Close, kind of close enough delta wise. Again, not my favorite trading stock, but something worth doing now. Let's give it a shot. 423. All right. Something.
423
Thanks, Jack. 423 it is. Let's go next slide. Edmund from Santa Catarina, Brazil. IONQ, bullish. 44 days to go to expiration. Just sell the 34 put naked. IONQ. Stock's $40. Let's see. We don't really follow the stock. It's kind of gone sideways. It's done nothing, right?
Yeah, pretty much.
You want to go to August, 44 days out. IONQ, just sell the 34 puts naked.
I mean, it's sideways, sad enough, but it has been kind of moving upwards, right? I mean, the stock in March was...
Edmund, what I usually do is I go to the expected move, and the expected move here is $10. The stock's trading for 40, 50. So I would go to the 31s, just because that's the expected move. Market's 130, 140. We'd probably try this at 133-ish. Market's actually 128 bid. Thought I'd be filled. Nothing. Thought somebody would need to reach for a put or two in here, but nothing yet.
Yeah.
All right, I'm working it. I see. 130. I gave it up. Let's go next slide. I gave them their 2 cents just to get filled. Teresa from Bern, Switzerland. So we're going from Brazil to Switzerland. ZC. We have a bunch of corn positions on already, Teresa. So this will be nice to add into our, let's see, /ZC.
Into our repertoire?
Well, we currently have the July. Well, let's see what she wants to do first. Corn seems to be ready for an up move. So we have a pretty neutral position on, but I will recenter this position, Teresa, and give it a bullish. I'm currently short the 413 calls and the 402 puts. But if you're bullish in there, what we do is we move the puts up to 405 and the calls up to 416. That'll give me a bunch of long deltas. Done. So basically, I bought a call spread and sold a put spread in there to adjust my position, to play for corn to the upside. I'm not disagreeing with you. I think it's an interesting play here.
So you didn't do her exact trade because you had an existing position on, but you skewed your trade to mirror her deltas.
I sold a put spread and I bought a call spread based on what you said.
Selling a put spread is bullish. Buying a call spread is bullish.
Yes. Let's go to the next slide. Oh, this is from Warren Buffett. Very nice. QQQ, I don't know. Buy and hold.
Hey, Warren. Thanks for watching.
Yeah, just buy and hold. Long-term growth. I'm going to pass. Thank you, Warren. Thank you for your input. Let's go next slide. Michael from Madrid. Pepsi. We have not traded a lot of Pepsi. Earnings on 7/17. Play it neutral, sell the strangle. 7/18 strangle, 128 put, 142 call. Probably so results, but already discounted in price. We don't trade a lot of Pepsi, Michael, but we'll do it for you.
Oh, that's so nice.
He wants to do August because they have earnings the day before. He wants to sell, the expected move in Pepsi is $6. He wants to sell the 128 put and the 142 call. Pepsi's moved up a little bit, so we'll probably leave the 142 call and move the put up to 130. And you said, Michael said about $2, but this trades about 222.
Wow.
But I moved the puts up a little bit. So filled on that. So We don't trade a
Do
lot
you
of
find
Pepsi.
that you're getting filled at mid-price, or you got to be aggressive with your pricing so far today? Volatility is basically unchanged up a nickel.
No, fills were good. Fills were good so far today.
Okay.
Yep. I mean, Pepsi was mid-price. Pairs trade we passed on because it's already had a $20 move. IWM passed on because it moved $25 yesterday. The pairs group of gasoline and heating oil, and gasoline. Yeah, it's a small winner right now. We bought, what the hell did we do? We sold heating oil and bought gasoline. Yeah, it's about unchanged, let's just say. Moves around a lot. FI, which is Fiserv, we sold a strangle. Index, we passed. HIMS, we sold a strangle. IONQ, we sold a naked put. ZC, we actually are short a skewed strangle with a lot of bullish delta. Qs we passed on, and Pepsi we sold an earnings strangle. 6 out of 10.
6 out of 10, Sadnov. How do you feel on that performance today?
I mean, I needed to get some positions on, so I'm happy about it.
Very good. So you know what? I need to take a quick break because at the top of the hour, Sadnov, and we've got the skinny on options coming out. The options math, Sadnov, with my man Jacob. He's always bringing it. We'll be back in 90 seconds with Tasty Live. Even the S&P is unchanged. NASDAQ up 28. Russell up 3. Oil up 20 cents. We'll be back in 90 seconds with Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys. Yes. Vanetta this morning was giving me a little flack. It was lighthearted. She meant well. Okay. For my particular baby face.
Yes. You are young.
Just
young
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing. But
the last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah. When does yours get delivered?
50,
you didn't do the sword?
50 grand. And there's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
I'm going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades today. I'm Tony the Bat Batiste, and I've got not one, but 2 trade ideas for you today.
Exploring Zero DTE. We promised you we would take a look, and here we go.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with my man Jacob is in the house. The skinny on options. Matt, how are you, Jacob?
Good morning, Tony. What a high energy morning we're having here. How about you?
So far, this high energy morning has even the S&Ps flat. They're unchanged. So you better make something happen.
No. I don't make things happen. I make things really, and we don't want things to happen. We want them to go up and then come back down and to sit in place. You know, we want a lot of activity for not going anywhere.
This is true.
You know, that's the truly ideal market is wild and crazy times to get back where you started.
This is true.
Oh man, we should do an option jive with the Hobbit there and back again. But today we're not doing an option jive. Today we're doing a skinny, so it's going to be a little bit heavier than that, a little bit more convoluted. But I think it's sort of it's meaningful both because it highlights one of the things that, you know, people like to point out how the models that we use for describing the market are flawed, and they're absolutely correct. They are flawed. And so today we're going to sort of explore one of the ways in which these models can get relaxed and expanded to include more things. And you know, it's sort of at odd, or, you know, as opposed to introducing stochastic volatility, you can instead introduce Poissonian jumps and get a lot of the sort of same behaviors that you're modeling. And then the question is sort of which one gives you a better description or a more useful description. And I think that, I mean, as retail traders, the answer is we take the prices that there are. But in terms of understanding what's going on in the market, it's possible that this sort of Poissonian jump approach is more promising than the stochastic volatility approaches because it doesn't give quite as much like flexibility for making nonsense of. And I'll be more specific about what I mean by that as we get into it.
Beautiful. Let's do it.
All right. So we're going to model price jumps. Right. The key thing here is that in our usual Black-Scholes model, everything's sort of powered by these Brownian motions at the bottom. And that means that everything is continuous, right? The Brownian motion and continuous. I could give you a formal definition with epsilons and deltas, or inverse images of open sets are open. But the real like intuitive thing, which is correct in this purpose, is if you want to draw the price path, you could do so without taking your pen off the page, right? Which maybe isn't true when you think about what happens after an earning. So you wake up in the morning and there's been a 30-point jump in something, right? Maybe it's hard to keep your pen on the page. And sure, since there's limited observation time, you could make it really, really steep between these two sudden moves. But maybe that's not the right way to describe it. Maybe that's like, you know, stretching our description rather than trying to be accurate. So we're going to look at how we can maybe incorporate modeling the actual jumps into these prices and see what sort of the minimum amount to let go of them the theory is. So let's look into it.
Let's do it.
So just to review, our comfortable Brownian motions or geometric Brownian motions, which are just, you know, Brownian motions going on in the exponential space, they describe a lot of real world phenomena, but they're also really popular for mathematicians and physicists and modelers because they have they fully are described by a relatively short list of properties, which is sort of the ideal setting to be in as a mathematician when you want to prove things. Right? They start somewhere, might as well be at the origin. The important part here is that it's almost surely continuous. Almost surely is sort of a probabilist thing that we say all the time, because if something happens with probability 0, we tend to ignore it. And almost surely says ignoring things that happen with probability 0. It's continuous. And in independent increments, this is sort of the most efficient market hypothesis derived property, and it's one that we're going to want to keep, right? Which says that the changes from, you know, time 1 to time 2 and the changes from time 2 to time 3, you know, the change from time 1 to time 2 matter for where it starts at time 2, but doesn't affect how it's going to behave from time 2 to time 3. That's independent increments. And then for Brownian motion, those increments are themselves normally distributed. That's just and with this variance of the distribution growing linearly in the time. Right. That's what that final bullet point is saying. And so now we're gonna see what we lose if we throw out that almost surely continuous requirement. We're gonna keep a continuity requirement, but it's gonna be weaker than that one. And we'll go forward and look at it. Because we're gonna generalize from Brownian motions to what are called Levy processes. And a Levy process is very similar to Brownian motion. It starts at 0. The increments are independent. For any amount of time, the distribution of how it's changed over that amount of time only depends on how long it was, right? T minus, like the move from time s to time t is exactly the same distributionally as the move from time 0 to time t minus s. It only matters how long you waited. And then instead of continuity, right, instead of not being allowed to pick our pen up off the table, we're going to say that it's called continuous improbability. And what it's saying is that for any particular time, the probability that there is a jump then of at least any particular size goes to 0. Now, key is that because there are infinitely many times, even though each one is probability 0 to have a jump, it doesn't mean you never have jumps, right? Any particular time, you're not going to find the jump then. But if you look at, a span of times, there might be a jump in that span. But the property that is maintained, the reason that Levy processes are like the canonical way to generalize a Brownian motion to include discontinuities is because they retain this property called infinite divisibility, which is a really nice property of normal distribution that exists only in a relatively small set of distributions and is something that we'd be looking for in most of our models. And I'll define it more thoroughly on the next slide or two. But the idea is that if something doesn't have, we can go forward one as I talk, if something doesn't have particular special times in how it's evolving over time, then you should be able to think of how it's changed from time 1 to time 2 as how it changed from time 0 to time 1 plus how it changed from time 1 to time 2, or how it changed from time 0 to time half to time 1 to time 1.5 times 1.5 times 2, right? You can add up however much you want to chop it up. You can take all those little pieces and add them up, and they should make a full thing. So let's go forward. We can look at the.
Sadnov, did you get all those halves? I just want to make sure you got all those halves in there. I didn't think you were paying attention, to be quite honest with you.
It's all right.
I'm a little lost in the sauce.
Well, carry on. There'll be a test when he's done.
I'm lost in the sauce. Definitely lost in the sauce.
Probability distribution is infinitely divisible. So these are going to be why the sorts of distributions we're going to think about for modeling how things behave over time. It's infinitely divisible if for any particular n, you can cut it up into n pieces, these fn's, where you take n copies of an IID thing and add them together, you get the initial distribution back. The normal distribution has this property. It's very simple. The variance and the mean both shrink by a factor of n, and that's how sums of normals are normal. It's great. These are very important for models because if you don't have designated special times, then the distribution of something's state in the future should be something infinitely divisible as all of its states looking up till that point. And now in the way that the Brownian motion was normally corresponded to the normal distribution, where like any increment of the Brownian motion was normally distributed with some given variance, every Levy process corresponds to an infinitely divisible distribution, and vice versa. Every infinitely divisible distribution corresponds to a Levy process. And so that's why sort of Levy processes are the canonical way to generalize Brownian motions when you want to include discontinuities, because you want to maintain this infinite divisibility property, right? You don't want to say, oh, well, there's this, special time and things are just different right then. Now, in the financial world, maybe we should have this, right? We have expirations, we have earnings. There are sort of designated special points, and those are not well handled by these models, right? That is not the kind of jump that these Poissonian jump models are describing, which is, I think, probably the biggest limitation of the field, or like the largest false promise that makes people excited about it, and then they get into the literature and they go, oh, but no, it's talking about jumps that just occur whenever. Right, that you wake up one day and there's a price jump, not you saw it coming because there was an earnings report coming out. So that's an important failure of these things. But it is also handled. There's a whole chapter on. I'm going to recommend a book at the end. There's a chapter in that book about these, about incorporating special times and earnings, or they just refer to it as market announcements, but they mean earnings announcements and things like that. But yeah, so let's go forward. So we've got these Poissonian, these Levy processes, which are correspond to infinitely divisible. And then this can seem like it's giving you way too much freedom, but in fact, there's a nice theorem called the Levy-Ito decomposition theorem that says that any Levy process is pretty much a Brownian motion, is a sum of two independent things. One of them is a Brownian motion, the thing that we're all very familiar and comfortable with, that just, zigzag moves around, it's got some drift. And then a separate piece that's completely independent of just jumps happening. And those jumps have to be formed in a particular way called Poissonian jumps. The Poissonian jumps work as follows. So you construct a measure, and it can be more or less any measure you want on the size of possible jumps. So you could say that every jump that occurs is going to be size 1. Or you can say that when jumps occur, they will be normal distribution sizes. So it's like, as if the Brownian motion was just given some extra free time while no one was looking, like in an instant, and it was given an extra, 20 minutes, and so it made it an extra normal distribution jump. It can be any distribution on the size of spaces. And what it does is it then, for any collection of jumps or thought about what sort of jumps might occur, it assigns them a rate, right? The normal distribution, you look at the area under the curve of the bell curve, and you say, all right, so the rate at which jumps of, one standard deviation size are going to occur is how much area is under the curve there. And what do I mean when I say rate? I mean something about exponential clocks, which may not be the next slide, but it might be 2 slides from now. We'll see. But the idea here is that they have to occur at a fixed rate that's sort of independent of both the Brownian motion and of their own arrivals, right? When you get a jump, that doesn't mean you are or are not getting another jump soon. They're just in an independent exponential way. Let's go forward. I think I have a more thorough description of exponential clocks. So you get a lot of freedom in how you size the jumps. That's sort of where, if you're exploring the space of Levy models, you get a lot of decision to make about how you want to think about your jumps being sized. But the times between them are very strictly limited in how they can behave in order to maintain this infinite divisibility Poissonian Levy properties. An exponential distribution are this one parameter family, right? The normal distribution is a 2-parameter family, has mean and variance. The log normal is similarly. The exponential distributions are even smaller. There's just one parameter. They look like these, their point distribution functions look like these curves in the top right up there. And they're defined entirely by a rate parameter. And the rate is the same as the inverse of the mean, right? How long it's going to take something to come in is 1 over the rate at which they come in, right? They come in at 2 per hour. So you expect them to be about 1/2 hour between them on average. This is like a widely applied thing in the world of modeling because it covers anything where you have is sort of the limit of you have a lot of separate things that are each unlikely to occur, but you have many, many of them. So, right, one way to think about this is how many coins do I flip before I get a heads? If I start with 2 coins that are each 50-50, okay, then how long does it take to get it? Or maybe I do 4 coins. I flip my coins twice as fast, but now they're weighted and they come up tails 3/4 of the time, right? Or I flip my coins 100 times as fast and they only come up tails 1/200th of the time, right? And so I'm getting the same total number of average heads in any 1 hour, but I'm flipping more and more and more coins that are less and less likely to come up heads. Or to give a less abstract example, we think of these, the really old way that this was talked about, like the literature from the 60s, is as calls to a call center, right? You've got thousands of customers out there in an average day. Each of them probably doesn't call you at all, but over the course of a day, you probably get some number, you get 10 calls because each person was about 1 in 100 to actually give you a call. If you take the limit, you have more and more people, each being less and less likely, so you have a fixed rate. That limiting process gets you an exponential time spacing. Right, so the more modern way to think about this is pings to the website, right? How many requests does the Wikipedia get in an hour? Well, there's 1 billion people in the world all thinking about pinging Wikipedia, but most of them don't in any particular hour. Or if you want a more physical object, you can think of draw a chalk circle on the ground while it's raining and count how often raindrops land in your circle. Right, the one raindrop.
That's what I like to do on a rainy day for sure.
You gotta count your raindrops.
Go outside, draw a circle. I use tape so that the circle doesn't get washed away, and I can see it a little bit clearer. But I like your idea too.
I mean, but the tape eventually gets washed away and ends up in the ocean and.
Oh, there we go. I use biodegradable tape.
Oh, okay, good. Yeah,
That's all good.
Tony,
Yeah.
it's important to be very conscious of that sort of thing.
Very conscious, very conscious.
So these exponential clocks are quite important in a lot of things and are sort of the key limiting feature. In the same way that Brownian motions restrict the space of all possible continuous price motions to a relatively small idea of it has to behave like a Brownian motion. This Poissonian process means that the space of all possible discontinuity arrivals is restricted to they have to arrive at exponential rates, or else we'd lose infinite divisibility, which we don't want to.
No, we don't want that at all.
We have trouble. We have difficulty modeling or thinking about models that don't include it because they mean that there's some sort of extra special moments that we don't understand. So those are exponential clocks. We can get to sort of well, there's sort of two takeaways. There's our first one here, which is about why we don't always have to incorporate these, right? Sort of why these stochastic volatility people don't include jumps in their models at all. And it's because, more often when we around at Tasty think about what's wrong with Black-Scholes, we think that the problem is this constant volatility assumption, not the continuity assumption. And part of that is because there's a discrete quantized nature of market observations. Like, while I say you draw your curve with a pen, really it's not a curve drawn, it's a bunch of dots, right? Prices only update, maybe it's 100 times a second, but it's still separated. There is still a positive amount of space between them all. And because of that, you can't really tell if it was really, really steep or an actual jump, right? There's not the models can't be distinguishing between them because in reality, we can't distinguish between those two things. Right. But on the right here is sort of how a stochastic volatility person would instead include jumps in their model. And they would have these spikes of volatility where you have a really, really, really brief period of very, very, very high volatility. And that'll get you something that looks like a jump as long as it occurs sort of between your your time ticks. But I think that sort of I say recent-ish because the literature I know is all from 10 years ago. But mathematical developments have shown a lot more promise to sort of having a robust Levy process-based theory where you can understand what's going on than identifying a correct stochastic volatility model. Because as I've often complained, when you start introducing these stochastic volatility models, you have to make up just all these unobservable parameters to describe how the volatility is going to evolve. And in so doing, you make the models really, to me, worthless, right? Because they're so either overcooked or under-prescriptive, right? They either are fully based on old data, and therefore they did a really good job of describing the past, but there's not a good reason to trust them about the future, or they're just pulled out of someone's, behind, and you're left wondering why you should believe this person. In contrast to that, the Levy processes are relatively restricted in what sort of ones you can introduce because of this decomposition theorem. And then within one of them, you can sort of test the exponential clock theory because there's a lot of data, especially nowadays because of website needing to optimize themselves for users. There's a lot of work and data on how to handle things arriving in exponential rates. And so you can just take the Brownian motion part that's well understood and add on this increasingly well understood aspect of jumps and get to a model that's, more computable, more intelligible, less made up, but still, of course, flawed because all models are flawed. Yeah. All right, let's do takeaways. Tom, how are your emails doing?
I'm struggling with this one.
All right. Brownian motion powered Black-Scholes is very appealing for theorists, but it's too restrictive to actively described markets, both because of constant volatility and continuity. If we relax the continuity requirement, it opens up the range of models to anything that has a Levy process, which is a Brownian motion plus some Poissonian jumps, which arrive at independent exponential rates. In practice, in the financial world, there's sort of constant arms race amongst big firms to have more refined, more accurate models so they can try to better price things. But retail traders that's not available to us, right? The prices that we see in the market are the prices that we live with. We can choose to accept to trade them or not trade them. We can't say that they're right or wrong. And so more realistically, if you want to shield yourself from some sort of discrepancy between your model and reality, right? You're using a Black-Scholes model, it's not true, but it's the model that you can think of the most clearly and do computations with the most readily. And the best way to sort of protect yourself from the fact that it's not true is to sort of maintain attentive and activeness, right? Because any failures of the model are on the large scale, that in the minute moment to moment, it can't look that different, right? Whenever you don't have a jump arriving, it's still a Brownian motion between. The Black-Scholes model is still true. And as long as you're attentive to when these jumps might happen and not caught off guard, that's about as best as you can do. And then I'm recommending a textbook for anyone who wants it. It's aimed at people who are financially literate but not mathematically experienced. In that sense, is I think good for our audience. Financial modeling with jump processes from. I read a bunch of it. I had one of my advisor's other students. This was his primary reference for his thesis. But yeah, it's a nice way to describe these things. I think it does a good job of breaking it down into digestible things. So if anyone wants to, not be as lost as I've made them and go home and do a bit of reading, you can find copies on the internet for free. As with most academic things, the authors get no money for every printing, and they're very willing to help you steal it. So don't feel the need to pay for it if you're out there. All right.
Well,
What do you think of that?
He effectively made me feel really dumb again.
Yeah. That is why you hired me.
I'm going to.
How often does that happen, Thomas?
I'm going to need a full dose of Tony and Scott right now to just bring me back to thinking that I'm you destroy my intellectual manhood. So
well, let me start. Let me start right now, Sadnov. Even the S&Ps are up almost 9 handles. The Nasdaq's up almost 90, all on the Sean Diddy Combs verdict, Sadnov. That's why the market rallied.
Truly. Oh, man.
I will say one thing. I think the Sean Diddy parties are over. Just so if you're thinking that you've got a party there in the future, you don't. Okay. I don't think you'll hear from Sean Diddy. Did he get acquitted on everything?
I think racketeering he got acquitted on. I don't know about anything. I mean, I don't know. I think he's going to jail. I mean,
I don't know, but
I don't know. This is all very interesting.
I wasn't following this case very closely. Just so you know, this is not a modern day.
Because it had such personal reference to you.
Well, I just wanted to give you the reason why the market was rallying. That's all.
Mm-hmm.
Oh, thank you so much.
Part of our new software that randomly attaches news stories to market moves.
Yep, 100%. Yep.
I just need Tony and Scott to bring me back to earth now and make me feel better about myself.
We're going to do that for you, Thomas. Don't worry about a thing.
Oh, I don't worry about it at all.
You can talk about baseball, all sorts of things.
Nah, baseball.
It's the season.
All right, Jacob, I got to let you leave. Maybe you can give me the cliff notes when you're done, but we'll take a quick 90-second break and come back. We got more Tasty Live, Sadnov. More. But that's right, your friend and mine, the intellectual genius himself, Mr. Scott Sheridan. We'll be back in 90 seconds of Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
All right. Perfect. I would like to buy Park Place.
No,
What?
there is no Park Place in this game.
Yes, there is. I'm looking at it.
No.
I
This
will
is mine.
take it.
It's mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want
I'm
it.
the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly, this is the mayor, and I am overturning everything, and I
You're
am
in over
allowed
your
to buy.
head.
Excuse me?
You're in over your cute little head.
Don't patronize me.
You
This
don't
is a
come
board game.
down to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads, and what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue, a beautiful car worth 10 times more than your dog who is gone. Got to deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Enough out of you. That's right. Tasty Trade World Headquarters, your friend of mine, and Sosnov's intellectual genius friend, Mr. Scott Sheridan. How are you guys?
I am excellent, but I do have a question. It's directed at Tom.
Sure, go ahead. Fire away.
It's 95 degrees with 100% humidity, and you're wearing a hoodie.
Yes.
We didn't talk about this ahead of time. Is that correct, Scott?
No, we did not.
Okay.
When I was over at Master Control, I said, "Is Tom wearing a hoodie? Is that a short sleeve? Is that a short sleeve hoodie?"
No,
I just pushed arm up to show the guns.
It's a Bill Belichick hoodie.
That's the
Wait a
terry
minute.
claw.
Is
terry claw.
It's a pool.
Yeah,
It's a cover.
yeah.
Oh, it's a pool cover
It's
up.
a pool. It's a sale. I bought it at a sailing
Oh my god!
store.
Oh my god! I didn't realize it was terry cloth.
Terry cloth.
Yeah, that's the one where.
Is it really terry cloth?
I bought it at a sailing store.
Okay, for sure Corinne bought this for you.
No, I bought it myself.
No chance.
I'm telling you.
Either Corinne or Todd, one of them.
No, I.
Wait a minute, what sailing store did you buy this
What
at?
sailing
What was
store?
the name of it?
Where were you, Sardinia?
No, he bought
I
it-
bought
he
this
bought
in
it
New
here.
Buffalo. Three Oaks, not New Buffalo. Three Oaks.
See, you lied. We got paid.
No.
Three
That's
Oaks. I
100.
bought it at a store in Three Oaks. I was there. I was buying.
Why were you at a store? Why were you at this sailing store? So this whole story doesn't make sense. Why were
He
you?
was buying his mother. He was buying his mother a sunfish.
You
One
don't
of
go
those,
to sailing
little-
stores. That's
I
not
was
you.
in Three Oaks.
Wait a minute, because you were at like a farmer's market or something, and you saw it.
Yeah,
Good.
Corinne was buying something, and I just walked, and I was there, and I was like, "Oh, I like this. I'll buy this."
Okay, well that was a bad decision, Sal.
Wait a minute, do you have a
Nobody
t-shirt
likes
on
it.
underneath that?
No, I'm naked.
Does the terry cloth feel good?
Feels great. I'm wearing this every day. I'm never taking this off.
Wait a minute, so this is like your work robe?
Yeah, I'm wearing this
Yeah.
every day. I'm
That's
ordering.
exactly right.
50
It's his
of these.
work robe.
It's his work
Sosnov is wearing a work robe.
I'm ordering.
Tony, you agree?
100%.
I'm ordering 50 of these. I'm gonna wear them every single day forever. They're so comfortable. Yeah.
This was the one he wouldn't let me, because I gave him props. Like when he first wore it,
I saw him walking around. No, he wouldn't let me touch it. He goes, Batistas can't touch this cloth.
Oh, that is pretty soft.
So he said to me, he was like, the Batistas can't touch it.
You're thinking of the one Mike Butler has. That's a Costco one.
No, I know
Did
yours
you see,
is nice.
This was hysterical. Lululemon is suing Costco.
Yeah, I know.
I saw
You
that.
see this?
yeah.
Because whatever their version is, like $120, Costco sells it for $8.
Yeah.
It's $8.
It's $8. They said they sell it for $8, and they're suing them, saying that they stole their design. So I guess yoga pants or a yoga shirt. That's
I hate Lululemon. One of the worst companies in the free world.
Totally agree.
Lulu up $4, Costco down $4.
I don't care. Lulu, one of the worst companies in the world.
I agree with you. I stopped that boycott. I boycott Lululemon. I used to wear Lululemon.
Yeah.
I moved on to Viore.
I like Viore.
Yeah, right.
It's a good stuff. You like Viore? You should get some Viore.
You should get Viore.
You would probably like it.
I don't even know what Viore is.
Yes, you do. There's a shuffle zone.
It's an Italian restaurant, Sadnov. You'll love it.
Just keep walking a little further.
I like their...
Keep walking a little further down Southport.
Yeah.
Past Addison. So just keep going a little further. It's on the left. You know where Arc'teryx is?
Or what is?
Arc'teryx. Don't know what that is either.
Arc'teryx?
Oh my God, you've never heard of Arc'teryx?
No.
It's great. It's great. Vinny has a lot of it. It's more for winter wear, isn't it?
Outdoor wear. It used to be better. I have to say, I was wearing it 20,
of course it used to be better.
25 years ago. I have some of the original, which was great. Then they sold it. Not as good as it used to be. Still good. You've never heard of Arc'teryx?
No.
Oh, come on.
I never heard of Arc'teryx. I never have.
Yes, you have. I'm going to show you. Basically, every jacket I have is Arc'teryx.
Arc'teryx?
Yes. I'm going to show you.
Okay.
I'll show you the logo. Can you bring the logo up and just show them?
I can't. I have to.
sorry.
This is remote for
Sorry.
the special child.
Sorry. Special child, could you bring it up?
Wow.
Ooh.
Never go against the family.
Hey, ooh.
I'm allowed to say special child. You can't say special child.
Oof.
Oh. Wow. At least I didn't say helper monkey.
I think somebody's a little hurt about not being taken to Europe when another child was. Oof.
Nah, it's okay.
Yeah.
It's okay.
It seems like it.
I think so.
It's all right. It's all right.
Yeah.
I know my place. All right.
It would have been a little awkward with you sleeping in the room, too.
I know. Well, Vinny, I would just go next to Vinny in the middle. We would just go in the middle.
Head to toe. The four of you, I don't know.
Son. You would just sleep outside my door like you did when you were 10 or 11 years old.
I could just be outside. Yeah.
All right. That's
all right.
That's a good
on
visual.
the floor outside my door.
Yeah.
That's how much you loved me back in the day. Now you're saying bad things about me.
No, it's okay. Okay.
I'm not naming names, but somebody told me that you have a special event planned for the Cubs game. I want to know if this is true or not.
Ooh.
Special event, like what?
Shirtless with a big C on your chest.
Oh, we talked about that this morning. Yeah.
Is that true?
Yes.
Okay. I'll pay to see that.
Oh, you would? Well, at least
we can make this pretty viral. You put like a cherry on there too.
At least I won't wear
It's like
a jersey with my name on the back.
Captain.
I don't wear jerseys with my name on it. I have one. I don't wear them. The six will
Only
wear
your
it.
bitches do.
The six will wear it. Now she's got her own jersey.
Okay.
He walks in with an entourage of people wearing his name on the
I
jersey.
do not wear jerseys with my name. Can you wear a jersey with somebody else's name on it?
No, not unless they're professional. Not like
professional.
What are your kids' names or your wife's
No,
name?
but I have a Suzuki jersey. Can I wear that?
To a Cubs game? Sure.
Yeah. Okay, the problem is it's in Arizona, but okay. So if you go topless.
You can actually wear the terry cloth sweatshirt and
you
just
go
take the sweatshirt off from
with
there.
a big blue C. We're getting you on the big screen. I know people.
Yeah.
I know people. All right, we're doing this for sure. I want to see you holding like 7 cups.
Oh, yeah.
Right?
Yeah.
Oh, my God.
I mean, I'll be 7 beers in by the
third inning?
fifth or sixth inning.
Nice.
Yeah. Hot day like that.
Oof.
Yeah.
Oh, my God. All right.
I'll be a couple hot dogs in. I'll be 7, 8 beers in. I'll be good.
What's your go-to hot dog there?
Oh, there's only one. I have to have the grilled hot dogs with the onions. I can't even
Do
remote.
they do that is it on the first?
Oh yeah.
The grill?
Right on the first base
First
line.
base side.
Yeah, right first base, like kind of like.
What kind of hot dog is it?
Oh, that's a good question.
Aren't they Vienna there?
I don't know. They do have Vienna, but I don't know if those are Vienna.
They used to be kosher,
Right.
I don't know if they are anymore.
I don't think so.
Yeah, I don't think they are, but I'm not sure what hot dog they use. But they're actually really good hot dogs.
You put mustard on it?
Of course. But they don't. You know what I don't like about this is the one thing I miss from New York. New York has the spicy brown mustard.
Yeah.
Chicago
only yellow.
Only yellow.
Yeah.
It's a
it's
a big miss.
Speaking of mustard.
Nah, I gotta disagree. I was just at where was I, Nikki, last night or the Monday night?
First of all, last night was
Kaiser Tiger.
Last night was Tuesday night.
Tiger has a spicy mustard.
Yeah, that's
good.
a sausage place. I mean, they should have spicy mustard, but they don't at Wrigley Field.
Oh, sorry. We're just talking about your small niche.
We're talking
around
about
you,
mustard.
the 6 feet
We're talking
around
about mustard.
you.
I know. So I'm going to tell you. We talked about this. You know, Katz's has the pop-up at Bub City.
Katz's has a pop-up at Bub City?
Yeah, like next week.
It sounds like he doesn't know about
No,
it.
that was us. We talked about that last week.
We didn't
while
talk
they were
about it?
gone.
Oh, Katz's is doing a pop-up at Bub City.
Katz's is doing a pop-up at Bub City.
And I'll tell you what, because I didn't go.
How long the line's going to be for that?
You won't be able to get it.
Around the corner.
You won't be able to get
It'll
it. I mean, unless you get there at like 6 in the morning.
Yeah.
Yeah, I'm not.
Right. And the other place, which I never went to, you went with Jules.
Yeah, what about it? Which place?
Great Lakes Pizza, reopening after
I saw that.
After 12 years.
Yeah. Jules, me, Tony, and Slimmy. Tony, you were there, right?
Right.
Yep.
Yeah, we
Right.
went to
And
Great
they
Lakes
were open like Wednesday, Thursday, or Thursday, Friday, Saturday for like 3 hours.
Okay.
How was it? Best pizza in the country?
So first of all, we get there, we have a reservation because they only make like 6 pizzas a night. And it's like the soup, it's like the pizza Nazi, So we sit down and I go, yeah, we ordered our pizzas. Like we ordered as many pizzas as we could order, right? For the 4 of us. They gave us a table for 2 with 4 seats. It's me, Jules.
This was Jules back in the day.
It's me, Jules.
And Tom back in the day.
And you were large.
Yeah.
Yeah.
So is Tony, so is Jules, so is Slimmy. They gave us a table for 2 for 4 of us. Okay, it barely holds 1 pizza. We ordered like 4. Okay, or 3, whatever. And
if you wanted a drink, you had to go across the street and get it.
If you wanted a drink, we had to go down the street to Walgreens to get it.
No, you didn't.
Yeah, because they wouldn't sell them there.
What do you mean they don't sell drinks?
They sell pizza. That's it.
I'm telling you, it was the weirdest thing.
It's the craziest thing.
How was it?
So we had to go down the street and get our drinks. Okay, bring them back.
Okay.
Because whatever, you can bring your own.
How do you think it was eating like this?
Yeah, we're like this. Like we're like it's like we're eating like this.
It was a great experience.
We were laughing. We were laughing so hard because the 4 of us were eating like we barely.
I had to wait for Jules to dissect this pizza and say, Jules, can you pick up my Coke for me, please? I'm parched.
We didn't have enough room for the sodas because we had to put those on the floor because we didn't have room for the pizza on the table.
He's right. We did put them on the floor.
Yeah, and we had to have them hold the pizza. Like we had to eat the pizza really fast so our next pizza was ready already. Because there was no room on the table for the pizzas. So as an experience, it was the worst.
But as a pizza?
As a pizza, I remember it being pretty good, but I don't think it was like
the best.
I mean, we didn't walk out of there going, "Oh my God, it's the greatest pizza I ever had."
I mean, it's rated the best pizza in the country. That's tough.
It was I will tell you that the owner, once when I went by there, because I was trying to figure out where the place was, and they were closed, he invited me in. He was super nice.
Well, I wonder if it's the same guy.
Of course it's the same guy.
12 years? It's been closed for 12 years.
Okay, well, what store is still there 12 years later with the pizza ovens?
It's not in the same location.
Oh, it's not?
No.
Oh.
No. It's somewhere. I think it's on Clark. No, because it was like in.
It was in Andersonville.
Yeah. No, I think it's on Clark, maybe up in that area, but I don't think it's.
I can't believe it's been 12 years already.
12 years. Is that crazy? You were a child.
I was 1 year from being here 12 years ago.
You've been here 11 years?
10 years.
You've lived to tell that story?
I know, it's amazing. Crazy. Been a good run, guys.
It has been a good run.
It's been fun.
All right, let's do some business, and then you can get...
Yes, Johnny Trades. We're doing it live on TikTok.
Top 20 symbols going through.
You're a big TikTok guy.
I'm a big TikTok guy.
Do you want to say hi to the TikTok crew when we go live for Johnny Trades after this?
Sure. Who's the TikTok crew?
All the peeps on TikTok.
Oh.
Don't worry, I wasn't.
I've got a huge following.
I wasn't talking. How many followers do you have? 3?
10.
That's pretty good.
No, I don't have any followers. Okay, what do you got?
Top 20 symbols going through the system. First 40 minutes, no broad-based indices or futures. Time for you. Number 20, MSTR at a 10. For everybody else, Tesla at a 28, Apple at a 25, NVIDIA at an 8, Hood at a 52, PLTR at a 23, TLT at a 16, STZ at a 24, AMD at a 14, UNH at a 62, GLD at a 22, OSCR at a 51, Reddit at a 48, IBIT at a -1, Meta at a 29, Amazon at a 30, Intel at a 29, HIMS at a 43, TQQQ at a 20, Mara at a 13, and number 20 for Tom, MSTR at a 10.
You want me to get you one of these when next time I'm in Free Oaks, Michigan?
Only if you'll autograph it.
Why don't you make that our next Tasty Gear?
Should be.
Too expensive.
Really comfortable. Too expensive.
Way too expensive. For Tom, that's like half a year's worth
of
allocations. My market on that.
I don't remember what it was.
I'm gonna say 125, 150.
You got Scott. You got it all wrong. He bought it because he thought it was a woman's. He bought it for his wife. His wife said, "Honey, that's for men." And he went, "Oh, okay." And then he put it on. That's what happened.
Do you think she would ever let me buy anything forget it?
No, there's no chance. My market, 125, 150.
Probably.
Yeah.
I don't remember.
Yeah, that's too much. That's too
My
much.
market is 40 and under. Okay.
I'm telling you.
Fancy. It's fancy.
Yeah, terry cloth. That's fancy.
Yeah, terry cloth.
Yeah.
Wardrobe in years.
All right. So let's play some music and take it away.
Yes, play some music for the Johnnies. Play some music. Thomas, you ready? Couple trade ideas. You want to say hi to the TikTok crew?
Yeah. Let's do it.
Yeah, come on here. Say hi.
TikTok crew.
There he is. Look at this. All right, Johnny trades. You want a couple, 4 trade ideas? Not 4, 3.
Good. Go.
Couple. I think you're going to like these. Let's do it. All right. First trade. Roblox. You got a position?
Yes, I'm shorted.
Of course you are. I'm getting shorted too. I'm with you. I don't know how I feel about this. The 115, 125 call spread in August. I did it at $2.09. Stock is a triple.
What are you doing? August? Yeah, I think it's the biggest sale in the world. Which one?
You freed up some money after you closed
Which
that
one?
RB and HO trade for a nice $15 profit. So you freed up some money.
Yeah, you got to tell him. You got to get the mute button so that you can mute him.
What strikes? I said
115, 125. You see, Dad, he didn't even notice you were talking.
Yeah, he just talks.
They're on the screen. They're on the screen.
Hey! Speak when spoken to.
115, 125. What price you do it for?
I did it at 209. The stock's probably up a little bit from there. 103.17 is where I sold it.
Yeah.
When it was trading at 103.17.
It's 103.47. All right, it's close. I'm trying to get it done at 115. Nothing done.
Beautiful. It's 1 for 1 for
213.
Johnny's.
213.
213, nice. Got a couple pennies better.
Okay.
This one you gotta at least have something on here. Royal Caribbean.
What about it?
I'm getting some short delta. It's at 325. The stock. Have you traded this?
Never.
Recently?
What's the
Well, you thought it was going
Caribbean,
bankrupt.
He hasn't traded since it was going bankrupt.
Yeah.
Yeah, I mean, this is a joke.
350, 360 call spread in August at 220. Same sort of setup as Roblox.
Kind of like these Batista trades.
I know. I came with the good stuff. I figured you would like it.
All right, nothing done yet. Working at what price?
If it gets to 350, it'll be like a roughly $100 billion company.
325.
Royal Caribbean cruise ships.
325.
Beautiful.
225.
225.
225.
Yeah, selling right around a 20-ish delta, 25 for the short.
225.
2 for 2 for the Johnnies. What a beautiful day we have. Third trade. I'm doing a naked call with a put ratio spread. CCJ. Stock has gone parabolic.
What's CCJ?
Nuclear is hot. It's one of the nuclear stocks. Julia is a frequent trader of it.
Okay, what is it?
I'm selling the 80 call. I'm buying the 70 put, doing 2 of the 65 puts. This is one you got to kind of put your thinking cap on.
August?
August.
Hey, what? Give me the strikes. What are you doing?
Selling the 80 call.
Oh, let me see what this.
And then I'm doing the 70-65 put ratio spread.
You're selling the 80 call, and you're doing the 70. You're buying the 70 puts, selling 2 of the 65 puts.
Yeah.
But I'm not sure I understand the logic here.
Well, it's synthetically the same sort of risk as a strangle, but you got a little kicker to the downside. I mean, if you looked at it, the stock has gone, it's a double in a month. So
What'd you do this for?
$1.70. It's a neutral trade with a little bit of a kicker to the downside. If you get an inside down type.
All right, 183.
Doesn't use additional buying power too. So you got better price than me.
Yeah, on all of them.
That's because
the market's up.
Yeah, and because you're the best.
No, it's because the market's up.
No, you're just better than me. It's okay.
Because the market's up. But anyway, yeah, all right, I did all 3. What else you got?
That's it. That's all I have for you. That was the quickest Johnny trades I think we've ever done.
It was pretty quick. I'm not going to lie, Sal. I don't know if you still got a minute. I actually just found is that by Dave Terry? Is that a Dave Terry hoodie?
This is? I don't know.
I think I found it for $95. It's recycled fabric. This is very bougie.
This is out of your fashion league. Okay, I'll look at it at the break and tell you if it's who it is.
It's 100%. It's a Dave Terry hoodie. I know my Shiat. So
yeah, this is way out of your league. This is
you.
This is it. They don't sell this in like the Italian Corinthian leather store. For. Whatever.
Listen. Us Italians have been wearing terry cloth while you were pooping yellow.
Do you have the matching set though? Do you have the pants?
Do you have the shorts? You have to have the shorts now, Thomas.
I don't do matching sets like your elder Batista.
Yeah.
Yeah. No, I don't do sweatsuits.
Sadler, there's nothing like a good set. I'm going to tell you that right now. If you
Omaha.
don't waste your time with just one.
Omaha.
Thank you. There we go.
A little late.
John's Omaha.
John lets it go a little bit. John lets it, kind of settle.
Right, and then he comes in real late, like piling on, like you back in high school football. He's like the last one on top of the pile.
My next trip to this little town, I'll pick you up one. What color you like? You like purple, right?
You gotta get a red one,
like
bright red.
Get you a purple.
I'll go with a navy blue, Sosno.
Navy blue. You're just jealous.
No, I really like your white one. I would wear that in the winter all the time. Hey, listen, let's take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny from the SIBO. You're going to love it. Check it out. All the guys will be yelling and screaming. Gals, girls, everybody. Moms, dads. We'll be back in 90 seconds. Peace.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
On today's Trader Taste Test, Tom has a fever, and the only cure is the KFC Chizza. What? Let's go.
Let's see what we have here. Okay, I don't think it's elevated chicken parm, okay? I don't know.
What are your thoughts? Just visual presentation.
He's just going in with his hands.
It's pretty beautiful. Let's see. I'm going to be totally objective.
Okay.
Impossible.
Okay, Jamal, you're black. We're eating fried chicken.
Yeah, right. I know it's on there. It's warm.
No. I like it. It's hot. It's delicious.
It rivals the chicken parm in prison.
Out of 5 stars, what do you give it?
1. I'm going 4.2.
Wow.
I'm easily impressed, as Tom will tell you, though, but I think it's very good.
3.5 just because I like Kentucky Fried Chicken.
Do you want to be KFC style?
3.7. I gotta be real. 2.7.
Okay.
Because the chicken's good. I mean, the chicken's not bad. The sauce tastes like pizza sauce, like bad pizza sauce.
I like it.
Out of 5, what do you give it?
3.5.
That's what you do. What?
He likes it. 3.5 stars. He doesn't like it a lot, is what he's trying to say.
It's an elevated. It's an elevated.
It's an elevated nothing.
It's a chicken. It's actually pretty good.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. I'm Hold on.
She's wrong, I'm right.
High school party, high school kind of.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. The same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette right there is Miss Jenny Andrews, and the natives are restless today, ladies and gentlemen. The natives are restless.
Chaos just broke out on the floor behind us. I don't know what happened, but it got crazy for a minute. And I do think our viewers can hear the noise because Vanetta this morning was talking about how loud and busy it seemed here yesterday, and Tom was like, no, there's nothing going on.
So yeah, but I will tell you, they were not, the ruckus behind us had zero to do with trading.
So you can see, floor official just came to the floor.
Yeah,
see what's going on.
They got to keep those guys in line.
They heard this floor official was on the other side of the floor.
There's my favorite floor official.
And he heard the noise, came running to keep everything under control.
Yep. Well, and I do believe it's because they have to have their jackets on while we're here, and they don't like it.
And now it's honestly, Spoo's up 13. It is getting a little busy. The market opened this morning. What were we, down 5? Always around down 5, maybe.
Yeah, and then the number came out worse than expected. I don't remember what the number was, but I remember it being worse than it was expected.
But now we've seen Spoo's up 10, 12, 13, almost up 14 now. So we're getting a little bit of a rally.
Yeah, we are. There's a little bit of a rally. There's a rally in the alley.
I don't know if it had anything to do with the post I saw about a trade deal with Vietnam.
As soon as the post came out, we went back down.
Yeah.
So I don't think so.
I don't know.
I thought you were going to say Del Monte. Jenny's like, Del Monte's filing for bankruptcy. I was like, okay, settle down there.
Canned fruit. I hope it doesn't spill over to canned soup because I've got a big Campbell's position.
Del Monte isn't Campbell's.
No, but it's canned. It's canned items. Canned. Maybe I should cut back on my Campbell's position.
If the Del Monte news is bothering you, you should for sure cut back on your position.
The Del Monte news, and I'm gonna search who owns Del Monte. Like, who is Del Monte under? I'm gonna search.
No idea. No idea.
Del Monte.
All right, but let's do, while she's searching, let's pop in the platform and take a look at some of our positions. That Apple calendar that we put on yesterday is already a 9%. I'm going to leave it. Oh, yeah. Because it was 10. I'm waiting for 10.
It was a little more. You can leave it. We have a GTC in for 20. Del Monte Foods.
Okay, I opened up Delta Airlines. Delta Airlines, we have 30% profit, but it is also a 16-day option. So
FDP.
What's FDP?
Del Monte Foods.
I will look at it.
FDP. See if you can.
68,000 shares have traded.
What's
this is
the
not
price?
with the product.
Fresh Del Monte. Anyway, filed for Chapter 11. That's what I just read.
And it is really bothering Jenny.
Where am I going to get my canned peaches?
I don't know. Do you still eat canned peaches?
No. No, but like growing up in my grandparents' house, I felt like that was part of the morning ritual. You know, dish out some canned peaches, throw a little cottage cheese on top of them.
Did every grandparent in America eat cottage cheese and peaches?
And canned peaches?
Yes.
Here goes who could have been our guest today, but I think he's a little busy.
If you need me, I'm around.
No, I don't think we have the microphone in today, but that's okay.
I think he's a little busy. It's been busy on the floor, honestly.
It has been busy on the floor.
Yeah.
Yeah. Okay, so Jenny, this is what I was doing while you were looking up Del Monte.
All right.
The Delta Airlines, it's got 16 days left.
Yes.
Little word to the wise is that we are off for 5 days. So by the time we come back in, this will have 11 days left. So let's take this either out in time or close it for a 30% profit.
Sure.
So you get to decide. Roll it, hold it, or close it.
59. Oh, can you take FDP off the top, please,
Sure.
and replace it with DAL?
Delta Airlines, 37.9
rank. Open up the trade page.
Ooh, we're going through earnings.
And this is going through earnings. Let's just take this off.
I agree.
Take
So
this trade
what would it
off.
be? Roll it, hold it, or close it?
That's a real brain buster, Liz.
I know. I think I broke your brain.
I'm going with close it, please.
There you go.
I'll take close it. Right. Why go all the way to August when we have earnings coming up? You can. What else? Let me take a look. Delta. Does an earnings setup calendar make sense? No. Or their earnings are July 10th.
Their earnings are pretty quickly.
Very soon.
Then taking a look at this, you're going to love this one. This is a surprise for you. Etsy, 40%.
You know,
we put it on 2 days ago.
Etsy's is having a little run today. Etsy's up 225. I am keeping my Etsy positions going.
We're 11 cents away from our GTC. Do you want to hold on to this position for 11 cents?
Is it July or August?
It is July. Or it's August. It's August.
Oh, it's August. It's August.
We're 10 cents away from our GTC.
Jeez.
I am currently replacing
I guess
the order.
go ahead and take it off. But what I would personally do, what do we have in there? A spread?
Yeah, we have a spread.
Because if I look at this and I sell that 50 put for 217 in August.
You're just trying to lure me in.
If I sell that 50 put for it's
$1,700.
I guess I was looking at the wrong thing.
You were, young lady.
It looked like it's just a very small amount of buying power.
So I'm going to clean this account up only because, okay, hymns. Oh, we'll talk about that at a later date.
Yeah, we've got hymns coming up on What's Your Assumption. We have a super busy morning. We have a study from Jacob, which is a really good study, and I think all of our 0DT SPX traders are going to love it.
Oh, I love it. I love it.
She loves it. I love it. 8:30, the bell rings. We're on the train. I go to put my SPX trade on maybe around 8:35 or so, and Liz is like,
hold.
You better read Jacob's study before you push that button.
So do you want to go to that now? We might as well, right?
Yeah, sure. Why not?
Okay.
Why
so
not?
I had to go through. Just avert your eyes to the picture that you just saw because we'll go to that in a little bit.
Everyone should avert their eyes from that picture. All right, intraday theta behavior in 0DTEs.
Okay, you ready? Are you ready, Jenny Andrews?
I'm ready.
Okay, theta measures in dollars per day how quickly an option is expected to lose extrinsic value should the spot price and volatility remain steady.
Okay, theta serves as both an indicator of short option profitability and a measure of risk via its inverse relationship with gamma, making theta one of the most key Greeks for option sellers to monitor.
Okay.
And that's what, when I opened up my account today, I said, this is what my theta is, Liz. What's your theta? It was the first thing I looked at.
It was.
Yeah.
Because we were lacking in theta in our accounts. I was
quadrupled it by the end of the train ride.
I did too. Okay, let's explore how the theta values available from the at-the-money 0DTE options have fluctuated throughout the trading day.
Okay, let's look at it. Fire up the next slide.
Okay.
This study, here it is, using over 2 years of data in 0DT SPX options. So since it says over 2 years, we must have just had the 0DT a 2-year birthday.
It's 2 years and 1 day. We have
because
no idea.
it was almost. These studies used to say almost 2 years. Now it says over. We missed the birthday party.
Did they have a birthday party here, Matthew, for the 0DTE options? No, there's no raising of the roof.
That's what I would love to know. Like, what day did the 0DT options begin? Because they must have just had.
Watch this. Frank the Great. What day? I feel like we were on a game show. What day did the 0DTE options begin? Take it to the chat.
Do you remember one day I said, if someone can answer this, I will send you like a hat and a T-shirt?
Nobody answered it.
No, I did. I had to pack up some prizes and mail them off.
This is just Frank the Great because he is going to figure this out for us and he will let us know.
Okay, 0DT SPX options. When did they begin? If their birthday was just a couple days ago,
July 1st.
Maybe we could have a little belated party. Have you seen that Curb Your Enthusiasm when Larry David's invited to Ben Stiller's birthday party, but his birthday was 2 weeks ago, and he's like, what's the statute of limitations on birthday parties? Like, it was 2 weeks ago.
That's a long time. Yeah, I agree with Larry David on that one.
So he didn't sing. When everyone was singing Happy Birthday, Larry David wouldn't sing.
And I do think you can. He didn't sing. It's pretty funny. I do think you can have a party before you turn it, but not 2 weeks after.
Right. If it's a surprise, maybe before.
Yeah, 2 weeks before is fine, just not after.
Liz and I talked about it. This is our year of birthday parties. We're all turning 50. This is our year of everyone turning 50.
After I turn 49, I will turn 50. But
She's
yes.
the youngest one of the group. She illegally entered our grade.
I did illegally enter your grade.
You did.
I know.
You did. You belong with the 1995 graduates.
Yeah.
I don't know how you did it.
Those were a bunch of hosers. I like 1994 graduates.
Anyway, all right, let's see. Once we'll find out if it's the birthday. But back to using over 2 years of data in the zero DT SPX options collected every 10 minutes.
We found the at-the-money theta at every snapshot, averaging the put and call, or equivalently half of the theta of the straddle. Fine.
Okay. All right. Aggregated across days to find, for example, the average theta available from zero DT options at 10:30 and every other 10-minute mark, and the dispersion standard deviation around this average.
Okay. That was a little too much for me, but I know what the study says.
Did dispersion throw you off?
Yes. They filtered the result by VIX at the market open from 0 to 15, 15 to 25, or 25 plus.
Let me break this down for you. We're going to see theta decay if VIX is under 15, if VIX is between 15 and 25, or over 25. We're going to see the theta decay in a time frame, in the daily time frame of the zero DTs.
Can we just remove that one aggregated across days to find yes? Because this'll
it's not that confusing.
We are all now dumber. Like just remove that.
Yeah,
because look at this. This I know. This I can see.
This makes sense.
All days, intraday evolution, all days, and this is what the theta curve does look like. We know.
And all days means VIX wherever.
Yes.
Every day, doesn't matter what the VIX was.
Yeah. So this means VIX wherever. So you can see. What I love is this little 9:30 time frame that's on all of them.
That's got where he has the dotted line.
Yeah.
So you can see the chart starts at 8:30 when the market opens. When these zero DTs open, that bar is at 9:30, and so you can get a gauge on when because we were asking Jacob, we want some studies for like a little beyond the open, so you could see there's.
No, this
minimal
looks
decay between 8:30 and about 8:40.
That's what I found was surprising. Yeah. But this looks pretty standard. Now, this is all VIX things, so it does look pretty. This looks pretty much like a straight line.
And VIX right now is 1673.
Yeah.
Yeah, 1673. So let's take a look. Let's look at this for today. Like, where are we? VIX 1673. Here we have.
Well, hold on. This is VIX under 15.
Okay.
This is VIX under 15. So here's what I was going to say. And, like, this is the most glaringly obvious one to me, and Jacob has done studies on this before. We're waiting until at least 9 to put on the trade, because what I find fascinating right here is how flat that decay is from 8:30 to 9.
8:30 to 9.
It's so hard for me to sit on my hands and not do those trades.
And you see almost no decay from 8:30 to 9. And then at 9, it starts to drop off. So in low VIX environment, I'm waiting until maybe just before 9 to put on that trade.
I mean, in all this, I'm waiting until just before 9. I'm definitely not going to do it on the open. We used to get in there on the open at 8:30 and try to put it in right away. I'm done with that. I'm going to go have a cup of coffee, walk the dog. I want to wait. I want to try to wait until closer to 9. That's my ultimate
Well,
goal.
this is in low vol. When you take a look at, let's go to the next slide. So here
it's still pretty. I mean, it's still pretty flat there.
No, but not to 9. You can see it's like, I think it's about 8:45. Go to where it starts dropping down. Move your arrow to the point where we've got that flat from like 8:30 to somewhere in the middle of that bar.
So like right here.
Yeah, and you're not at. You're probably 8:45, 8:50.
I mean, honestly, Jenny, this is like we're picking at. But so I'm still gonna wait. Like I don't need to know where the VIX is. I'm gonna wait until right around 9 o'clock.
Yesterday I was out of my trade.
Look at how big this is. It goes straight down after the 9 o'clock bar.
I like getting in around 8:45, 8:50 because yesterday I was out of this trade by 9:03.
You know what though, and that's what's great about these. To each his own. I want to try to wait until 9 o'clock, and I know Jack Tucker's a 9 o'clocker too.
So I think you can look at these charts. Number one, what's glaringly obvious is when VIX is really low, I'm definitely waiting. And from experience, I know if I put these trades on at 8:30, I'm not making money on them until it takes a little while to start making some money on them. And you could watch it. Like we were watching it on the train. 10 minutes after it's on, I'm up 5%. Then 15 minutes after it's on, up 10%. And you could kind of watch the decay happen. And in the early hours, 8:30 for the first 10 minutes or 15 minutes or so, I don't see much decay.
Well, we haven't been moving.
No.
So this is a non-moving market. I mean, even up 9 right now.
Well, no, I mean, mine's a loser. SPOOs were down 5 when I put it on at 840, and it's a loser right now.
No, it's a loser. It's moving a little bit, but it's still a non-movement. You're not getting an up 50 day. It's
No,
not like,
no.
because the volatility is saying it's not moving. Like this, I think, is a non-event day, right?
And I did
so
a 20
far.
delta. So it's like very close to my short call.
It is very close to your short call right now.
So this 15 points, when the vol is low, and even going to the 20 delta, you're not getting it that far. Where
And you weren't collecting much.
No, and a 15-point move is getting almost to the short. 20-point move is getting to that 20 delta.
Yeah. And and that's just it. Is I think you're going to get paid more for your 20 delta than you would if the VIX is higher. So let's go to the next one. So this is VIX greater than 25. Now I would argue, Jenny, that in the majority of our trading career as tasty traders, the VIX has been under 15.
Oh, do you think so?
Yeah. We had a decade. A decade, 10 of the 14 years, VIX was under.
We had a long time of low vol.
Yeah.
Long period of
a long time
bull market low vol.
Now we're right here. I mean,
2020 brought back the vol.
But we're in this range right now, and we've been in this range from 15 to 25. So this is the new range. And I think it's very rare. So here's the above 25. It's very rare when we get above 25.
No, you're right. So Tasty started in like 2011, and we had very little vol.
Very low
We would
vol.
have random months,
I mean, it was
right?
like 6, 7.
Yeah, we would have random months. Like there was that one August of 2015, and then there was a December of 2018 or 2019.
It was in December,
and that was it. And that was it. And otherwise, we had very low vol until COVID came, and then the vol's kept his wings up since then.
I mean, wings up meaning like, we're at 16 right now, but 16 is the average, isn't it? 1674 right now.
18, I think, is the average. Yeah.
Yeah, right around there. So
Right.
we're under the average.
Right, it's low right now.
Yeah, it's low.
But market's at all-time highs, so that makes sense.
Okay, so let's see Jacob's takeaways. Although theta decay gradually accelerates throughout the lifespan of a long-dated option, its behavior on expiration day can be unexpected.
Unexpected. Typical at-the-money 0DT theta declined roughly linearly over the course of a typical trading day, with minimal gains or losses remaining by the afternoon.
That's true. On high volatility days, this trend persisted, but with much wider range of outcomes around the averages. So what we're saying here is you can actually see it go up with the high implied volatility. Like if you look at 12:15 right here, it ticks up.
Can you go to the previous slide, number 5? So this is what we're in today. VIX between 15 and 25. This is where we are today.
It's pretty linearly. Can you say that word again?
Yeah, generally, according to Jacob, generally linearly. So what I wanted to look at that...
Roughly linearly.
What I wanted to look at in that chart was, because I know we've had some studies before of like, if you're not a winner, close by noon, or manage at this, manage at this price, or manage at that price, or close at a certain time. So I wanted to see, like, is there a point in the day where that decay slows?
No.
But no.
It doesn't slow, but here, this is the one thing I will say. I'm going to go back to the takeaways. Okay, but this is the one takeaway I got. So on high volatility days, the trend persists, but with a much wider range of outcomes around the averages. Even when waiting until 0 DTE to trade highly responsive options, it's important to execute trades where there's still enough premium.
Right.
And I think that was it. Is like that's why we kind of said, 8:30 is going to give you the most premium, but you're not getting any decay.
Right.
And 9 o'clock gives you premium, but you're getting the decay.
Correct.
So that's
Correct.
that was his surprise. He said, I woke up this morning too. It's a surprising takeaway.
Oh, let me read that. I know I've got to read this because I do think it was kind of funny. Pretty straightforward, but with a surprising result.
Yes.
So my main takeaway from this, and I think it's yours as well, I wouldn't do these right at 8:30. I'd wait. I wouldn't put these on right at 8:30. I'd wait. Give yourself a window of time for things to settle down.
Unless you've got VIX over 25, then Godspeed.
And what was happening in VIX over 25?
Because it at least starts the decline right away.
Oh, yeah.
But once again, I think you're safe if you say pick a time and stick with it. You know what I mean? It's kind of like when you're playing blackjack. Do you hit on 16 or do you not? Like either whatever you do, you do. Like stay with it and it'll all come out in the wash.
Okay. Do you hit
You know what I mean?
If you hit on 16,
you can stay or hit on 16.
Oh, I don't know. I don't really play blackjack. I'm more of a slot. I'm more of a slot girl.
But it is like stay consistent. If you hit. If don't. Like don't be like, oh, today I think you're gonna have this. Like stay consistent and it'll all come out in the wash.
All right. Perfect.
And there is our disclaimer.
And so that was, I think, a good study from Jacob. And I would say let's pop into Twitter and see. Often our viewers post their 0 DT trades.
They do. Hold on. Let's go.
To see what's going. That picture.
November 22nd, 2022. Frank, love you. Thank you very much.
November.
November
Does
22nd.
the SPX 0DTs started in November?
Apparently.
2022.
Frank doesn't lie.
2024, 2025.
So
They're well over 2 years old.
2+ years of data. That's what Jacob said.
Yeah.
2+ years. We just haven't been reading it right.
Okay, Cupcake Trader, I would love to hear how to translate the SPX 0DT strikes with and GTC.
Oh, into ES.
Into ES.
So,
okay, yeah.
So I've been doing here. I'll show you. So this is what we've been doing. So this is what
And when
my
she
son
says
is doing.
we, she means her and her son.
Yeah. So because of the pattern day trading rules, he's required to use this. Now it's not going to look as good right now because it's 10.
Because it's yeah. You
10,
can always
19.
use tomorrow's if you want to.
That looks too good.
I know.
But so that's what we'll do is I'll translate these strikes. So Jenny was doing the 20 delta, right? So you're doing 20 delta. Now you have to double the width. So if you were doing 20 delta, $15 wide, you have to go 20 delta, $30 wide because the ES is half of SPX. So that's all you're doing. So just keep that in mind. And so when you're collecting, I'm going to show you this. If you're collecting $1.80, it's actually your profit of 90. You have to cut everything in half.
I am listening to you.
When you're using ES, you have to cut everything in half. So if I was going to do, a lot of times he'll do the 40 delta. That's actually what I taught him was the 40 delta. So he does the 40 delta or the iron fly. Ooh, I think he did a wide one today. So 40
he
delta.
did an extra wide?
Yeah, I think he did a wide one today.
He's getting crazy.
Because he was doing the iron fly before.
Oh,
and he separated his
and now he
strikes.
separated his strikes.
Yeah. So okay.
Well,
so $62.50.
That's maybe for the best. Maybe
$40. Yeah, for today it might be for the best. So and then. So if you're going to do this $20 wide, you have to make it 40. So if you have $62.50, go to $62.30. That's a $10 wide for $260. Then if you did the top, you'd go to 40 delta, which is crazy because it's right there. 20 deltas wide. So all you do is double it. So if you're using ES instead of SPX, you're going to put this in and you have to double your strikes because everything is halved. If you look down here, the max profit on these, instead of $7, it's $6.47 and 50. And I will also say the other thing with the handcuffs here is it costs him a little bit more. So he's $5 in and $3.48 in fees,
cost.
and then it's $5 out and $3.84 in fees. So it's charging him about $13 per transaction, where SPX is not.
So again, we still have fingers crossed and very hopeful that one day soon these pattern day trading rules go away.
Correct.
That's our hope. Until then, this is an alternative.
Until then, this is an alternative. That's correct.
I was just looking up Jack Tucker strikes and Eric strikes to see what their call strike is, and it looks like 62.15. They have a couple tranches, 62.15, 62.20 are their call strikes, and I think my call strike might have been 62.15, which with
It's out of the
who's
money
up
right now.
13, it's a couple dollars, $2 out of the money. So it's not terrible. It's not terrible. It's still out of the money.
It's still out of the money, right? And so that's just it. Is sometimes you gotta wait. And so I know when you're doing these wider ones, and I think they were using the 40 delta. I don't know. They must have been using the 20 delta.
I had 20 delta
because you use the 20 delta. So these are sometimes you have to wait. And I know sometimes with the iron fly, I'm out at like 1.
But my question is, at what point do you take a loss? Like if normally I put these on at 8:40 and I'm out in under an hour. Now we've been an hour and a half or so into the day. At what point do you take it off for a loss?
I think it's odd because sometimes I'm out at like 12:30, 1 o'clock, and ours are too.
Well, the iron fly or the 40 delta,
Yeah.
you do a lot more 40 deltas.
Yeah, I do the aggressive
So
one.
that's a little different. But the 20 deltas, usually I'm out of these pretty quickly. So if you're not out of them, that means the market's going against you.
It's not really though. You need
No, I
time.
know, it's still out
You
of the
need
money.
time to come out. Like you need time to march on, and this will decay. The theta will keep going. The movement hurt you, but the theta will work in your favor.
I don't mind though. I don't mind taking them off for a loss if it's just like I looked at mine before the show. If I take it off for a loss here, it's just what I made yesterday. So if I'm worried that the market's going to keep running up and worried it's going to run through it, if I take it off for a loss today, I'm just giving up yesterday's profits. Sometimes I will look at that.
Oh, for sure.
Yeah, I'm never afraid to take something off for a loss if I sometimes feel like, okay, maybe this isn't going to work out today.
No, you shouldn't be afraid to take things for a loss. But I will tell you, sometimes with these, you need patience. Like I've had these trades come off at 2:45.
Yesterday, so I did 2. I did the 20 delta early, and then I did the iron fly after, and the iron fly didn't come off until 1:15. But those come off later.
Yeah, those come off later.
But those are much less risk.
They are much less risk.
They're much less risk.
Okay, so that is that. I'm going to go back into Twitter. Thank you very much, Cupcake. So that's just it. Is make sure you have everything, and you can put a GTC in for the ES options. Well, to Frank's point, you can put a closing order in for the 0 DTE options.
Yes.
But when you put a percentage in, it defaults to GTC.
Okay, so that was good, and that was a great question. Oh, if you could scroll, you can scroll and you could see Jack's and Eric's and everyone's
they're top
trade,
down. Okay.
From they're lower. They came in earlier of their morning trades. Their morning trades, which I was just looking at of what their strikes were to see where their strikes were. But you could see their calls. We're trading like just below their first tranche. One tranche 62.15 is the short call. Second tranche 62.20, and they usually are selling about the 20 delta.
Yeah, 20 delta, $25 wide. I think is
yeah. There's Jack
Tucker,
and Eric's short strikes were the same.
In Eric's short strikes, he's $25 wide too. They're very similar. Yeah. So those were these mornings, and then Frank the Great comes in with all this stuff, which I love, the economic indicators. So thank you very, very much. And that was that for
I know
today.
we have a lot of tweets that have rolled in.
Well, I know. I just wanted to get to this, Jackie. So a quick $150 again. Great. SPX 61.45 put credit spread. Made that during the bus ride to work. Thanks, Mr. Market and Tasty Live.
Credit
love
spread.
It.
So when you say put credit spread, you know they're selling a put spread. Selling a put spread on a quick bounce, they get out.
Yep.
Great.
And they did.
Yeah. So well done, Jackie.
So that's awesome. And then here we've got Ajit coming in. Names are the highest IVP and IV this morning.
Okay. And you've got your usual cast of characters.
Hood's on there.
Robin Hood is on there. 141. Well, let me take a look. Hood is crazy. 49 rank,
up 7% again today.
I know.
Now they do have earnings coming up.
This is nuts. It's nuts. The move in Hood.
It's a big move.
Yeah. It's been a big move. For sure. Definitely. I don't know.
Okay, so that's on there. Thank you very much. I'm going to get back into Twitter because this is what
Oh,
Jenny.
When we said avert your eyes. No, this is funny.
Who did this?
Led Sosnoff. I don't know.
Although I hope you're watching Joe Mama because Jenny thought this was
Joe Mama.
you.
Don't take this the wrong way. I said the guy in the back on the drums. Is that Tom or is that supposed to be Joe Mama? It almost looks like Joe Mama.
No, in the same breath, she says Joe Mama looks like Richard Gere. So
is that Richard Gere on the drums?
That does not look like Richard Gere. That does not look like Richard Gere. I want to see what STZ did yesterday.
Yeah,
they had
Constellation
earnings.
Brands.
Constellation Brands. Okay, so let's take a look.
Up 4.5%. A little bit of a jump.
Yeah, a little
nothing
bit of a jump.
crazy. We didn't trade it. It's not that liquid. But
no, but it is a little bit of a jump. That's the only earnings that we had from yesterday. So
yeah.
Let's go.
Now, as far as
you know what, Bob on Fire, your dedication and commitment to giving us the earnings trades is fantastic, even when it says none, none, none. We love it.
None.
What do you think he's barbecuing this weekend?
4th of July. It's hot in Texas.
Yeah, but you know he's going to barbecue. It's his thing.
He's gonna put on.
I'm going brisket.
Yeah, probably a brisket or some ribs. I don't know.
You know what I bought the other day, and I got it for my husband and my brother because they both like to cook a lot. And Bob, I would like you to weigh in on this. One of those blankets. I use the term blanket.
Oh, fire blanket?
No. It's for grilling. You put the meat in there to rest, and then you zip it in.
Oh, really?
It's like, so it looks like it's like metal, but it's like thick metal. Not metal, like, you know what I mean?
Yeah.
It's silver. And so you put the meat in there and you zip it.
That's
and so
cool.
then you're supposed to let the meat rest for X amount of time.
Because I like that, because I hate when they say like, oh, take the meat off and let it rest, and then it's
cold.
You feel like it's getting cold.
Yeah.
Right. So I like that.
Uh-huh.
Now next to my grill is a fire blanket.
That's really good.
When you said a blanket, you know, I have never grilled since I almost lit my house on fire.
You haven't grilled since?
No.
Really?
Yeah, I had to call the fire department. My neighbor called 911. The fire was huge.
Raging.
Raging, close to a tree, close to my house. My neighbor called 911.
What were you cooking when you set it on fire?
I don't need... Maybe just chicken? I don't know. Beer can chicken, maybe? I'm not
beer can chicken can start a fire.
Well, what they said was
Was it grease fire?
the grease. Yeah, it was a grease fire. The grease trap had too much grease in it, and it was a grease fire. It was a very big fire. I haven't grilled since.
Oh, yeah. I know. I should say, I'm not a griller. My husband does all the cooking and the grilling. But we almost had a huge grease fire because he loves bacon. Have you ever had bacon on the grill?
No.
Oh, it is so good. So he used to cook bacon on the grill, and then the grease would fall. But now he's got a fix for that.
I do cook. I have cooked bacon on the. I have one of those.
Like a scale. Yeah, like a flat top.
Yeah. What are those called?
I don't know, but they have good smash burgers. You can make smash burgers on
I've
those.
got one of those flat tops.
Flat top, yeah.
And I will cook on that. And I don't consider that the grill. Like I'm not worried
It's
of lighting.
inside.
No, I have that outside.
So you'll use that.
I'll use that.
But there's no grease that can fall, so you're safe.
Right. It's just all a flat top, so there's no grease going through where the flames are coming up.
Yes.
And so I will use that.
So Bob, if it is a brisket, tweet us a picture.
Yeah, send us a picture of your. Everyone, tweet pictures of your holiday parties. Love
And then
to see 'em.
look at this, Mikey from our Polish Warrior. Happy Hump Day, ladies. Could have had more money in my pocket for the free shot, but I got greedy, and the big drop at 9:44 spooked me. There's a big drop at 9:44
Today? Or yesterday?
No, today.
Happy Hump Day could have had more money.
A close at 62.20. You got it. Ready?
Good luck, Mikey. Big drop at 9:44. I never saw.
I put my trade
I was watching pretty closely.
I closed my computer. I wasn't watching closely.
At 9:44, 9:44 is when Matthew said, "All right, girls, we were finishing up our
I was thinking
mic test."
I was thinking 8:44.
No,
on
we were
the
sitting
train.
right here. We were watching because we were talking about JD's trade.
No, it did drop.
But it went from like up 14 to up 8.
Yeah, it was lower than that, I think. I don't know if it was a big drop.
7 points, boom move, big drop.
Woo! But nonetheless, we're rooting for you here, Polish Warrior.
You know what's kind of having a big move today? Want to go to the platform?
I sure will. Hold on, I want to make sure we get these.
Look at John. He's got a lot going on.
Okay, so Brian comes in. How much do you consider fees and commissions when doing 0DTE SPX? I don't in SPX. I mean, I want to make sure I'm collecting at least $50 to make sure the costs are covered, but I don't. SPX it's pretty reasonable.
Right, it's not that bad. Like we'll put on that iron fly for $80, and we'll take that off. I put on my 20 Delta. If I'm only making it $15 wide, I'm only collecting about $350, and 20% of $350 is only $70. I'm only making $70, and I'm not that worried about it.
No.
So.
But you wouldn't put. Let me ask you this: you wouldn't put it in for 10% because $30 is too little.
No, it's too little.
Too little.
Yeah, too little.
So to Jacob's point, you got to make sure that you're collecting enough to make it worth your while.
Right.
That's a good question. Okay, and then this John has. I have myself a little mess going on.
Oh. 62.10.
What do we have here?
We're at 62.13. So he's got shorts at 62.10. I have a little mess going on. Small iron fly, 62.10. $5 wide, iron condor, 62.20 calls. Very small, but learning. I don't.
I think this is great. And everything's defined risk.
But with the small iron fly, I'm afraid is the $5 wide too little to make enough. But pull up a $5 wide iron fly and see what you're collecting.
Well, it's not. He's in backwards if it's an iron fly because here you've
iron.
got a.
He's shorts at 62.10, call and put, and then he's got a $5 wide iron fly. Then he has another iron condor, which you probably put on earlier, and it's closer to the calls.
Yes.
So that other iron condor, I would put in my GTC to take that off. And then the iron fly, I would also put in a GTC. But I'm just wondering if what you make on a $5 wide iron fly is too little. I just want to see what you just use the money now and see what you collect on a $5 wide. $4.40. So if you're taking 10%, $50. Yeah, sure.
Yeah, but that's letting it go the whole time. So. Yeah, I guess that's not bad.
But are you going to get $4 out of it? I don't know. We've never done one that narrow. We'll do a $10 wide,
This is typically what we'll do. Is a
$10 wide for about $8. Yeah, close to $8, and we take 10% out of it, about $80.
Yeah. Yeah, and that's what
either
Jacob
way.
said
That's a very low risk trade.
Yeah, and that's okay.
Yeah.
Keep your risk low, and when you're learning, I love it. And you're defined risk on all fronts, so it works out well. Okay, hold on. And then I want to make sure we get to Jeff. These ones came in These ones came in right above Frank.
Okay.
So, additional to your market measures discussion, my
This is from
experience.
Steve, yeah.
This is from Steve. Oh, sorry, Steve and Jeff. Okay. So this is from Steve Jones. Additional to your market measures discussion, my experience, if the market is going to experience an insane day, that tendency is frequently obvious during the first 30 minutes. I agree. That's just it. Is like 9 o'clock, I think the market settles down. On days like that, I do not put on a 0 DT
And I'm
trade.
with you, Steve. There are days I don't put it on. There are days where I'm like, you know what? There seems like there's too much craziness going on today. I'm not going to put it on. So
I agree, and it always happens before 9. Like that's what I'm saying. Even today, we were down when we put it on before 9 o'clock.
Yeah, but at 9 o'clock we were still down. Like at 9 o'clock, the market was still down.
Was it?
Well, you can check the minutes.
I don't know because we were walking off the train. We can't check the minutes, but at 9 o'clock, it's still it seems like things do shake out right around then.
I'll take a look. I'll pull up my minute. Minute by minute.
She's going to go minute by minute. And then Jeff comes in. The 0 DTEs are too stressful. I've switched to selling Friday expiration on Monday. I just closed the trade for 50%, entered a $20 wide 16 delta for $9.40 credit, and closed it for $4.82 profit this morning. I love it, Jeff. Okay, so what Jeff's doing is, watch this. So he's going to SPX. These are the zeros, and he's going to go to the 1 day, which would be tomorrow. So his deltas were.
So at 9, we were 61.96. 61.96, and now we're 62.14. It says at 9, 61.96.
Are you in the right day? We're 62.24 right now.
7 9 a.m. 61.96. Yeah. 61.96.
50 points lower?
SPX today. 61.96. No, and right now we're 62.15. We're only 20 points higher. Yeah, we're 20 points higher.
We're 60.
Yeah, you're looking at the ES number.
Oh, I am looking at the ES number.
Yeah.
Okay, that makes a lot more sense.
Yeah,
I was
it
like,
was 20 points lower.
Yeah, okay.
Right, so at 9 o'clock, it was 20 points lower. This is why, I mean, today we did have, and honestly, if looking at this minute chart, it was shortly after 9 that we had our run up, and it has been a steady run up from 9:05 until oh, and like Mikey said, until 9:43, and then we did have a drop, and it went from 62.15 down to 62.05.
Yeah, it did drop. Yeah,
10-point drop. 10-point drop. Looks kind of big when I'm looking at the minute-to-minute chart.
Okay, but take a look at this. This is what Jeff is doing. So he switched to selling the Friday expiration on Mondays, and he just closed his trade for 50%. So he's selling the Friday expiration on Mondays.
So every Monday he'll go in and sell the end of the week.
Yeah, and he's doing entered a $20 wide 16 delta wings. So
let's look at next Friday for that. Because of the holiday, I think that's maybe fair.
Yeah, so if we were going to do that, let's go.
So we go to next Friday, which would be July 11th.
So 9 days, and he's doing a $20 wide.
Is he at the 20 delta?
It says $20 wide. It just says entered a $20 wide 16 delta wings.
16 delta.
Wings.
Is he doing an iron fly? 0 DGs. Switch to selling. Let me see. Sorry, Matthew. I'm out of my camera view. Hang on. All right. I'm trying to read this one.
Yeah.
The 0 TTs switch to selling Friday expiration on Mondays. $20 wide, 16 delta wings. So just go to the 16 delta wings and make it $20 wide.
So
buy the 16 delta wings.
And $20 wide would be.
Yeah. So if you buy the 16 delta, we're at the 6100, 6080.
Then you go to the 16 delta wings down here. I'm going to buy that and sell.
6330, 6310.
Yeah.
So you're getting $7. It's not bad.
It's not bad, and that's a week long. And you do have some decay in there. Now the problem is this is more of a durational trade than not, and you've got a 12 rank in SPX.
You've got a week to wait on this, but I mean, what is if we went through the holiday, if we today sold Mondays, what are we getting on Mondays? Like if we come back in on Monday to see where are we on Monday, but then a lot can happen over the weekend. A lot of people don't like that weekend.
I don't like the weekend risk.
So, and he's going to get less because he's putting it on a Monday for Friday, and we were going over the weekend. A lot of people don't like that weekend risk.
I don't like the weekend risk. So
okay,
no, but I do like it. Thanks for sharing with the class. I like seeing what everybody else is doing, and that's pretty cool. Okay, so thank you. I'm gonna like this. Retweet it. Okay, we've gotten to most tweets. Do you want to jump into
what's your assumption? I have a question though, and maybe viewers can answer it. It seems like if you're in the platform, like AI is up 4%. AI is up 4%. If you look at the chart, that's been popping up this week. I guess it does look small.
You have a weird.
Oh, I've got my weird chart.
You have a 1 minute chart up.
Oh, I still have my 1 minute chart. But that's up 4%. If you go to BBAI, which is another AI company, that's up 14%. That's up 14%. Like, are all these AI companies up, and why? Like, what's going on? What's the news? Why are these popping up?
Let's pop out the news.
Yep. Show me the news, Liz. Show me the news. Anything big going on in these companies? Sometimes our viewers know.
This says Big Bear showcases breakthrough AI-driven forecasting.
Okay.
So it's just Big Bear.
Okay. Just this. Let's take a look at puts in here. Is there anything, and what's the? Is there anything to do here? Anything to sell?
174 million shares have traded.
It's up.
No, you're looking at.
I'm in the wrong one.
You got to go.
BBAI. Let's take a look. You go to August puts. The 6 puts are 70 cents. The 7 puts are $1.15. The 5.5 puts are 50 cents. That's not bad.
No, and keep in mind, there's only $7.64 stock, but it is cash secured.
It is cash secured,
but it's still cheap.
I don't mind these. I'm always looking for low price products that have decent premium in the puts. It's not bad.
So if you're going to be selling this, now it did gap up today. If you're selling the 6 put,
yeah, but it gapped up today, but only gapped up $1. So you're still $1.70 below where it's trading.
I mean, I would sell a 7.
I know, right?
Yeah. If you want to, I mean, I don't think you need to do this, but you could
buy something.
Yeah, you're getting 112. You're giving up very, very little, and then you're only using $238.
No, that's not bad. But even, what did you give up?
Very little. I bought the 3.5.
Yeah. That's not bad at all.
No, it's not. I mean, honestly, I would put it to 110. You're giving up 5 cents, just as risk definition.
No, just as buying power reduction.
Well, I mean, it's only $500. It's not really that.
But I mean, I don't think this thing's going below 3.
It was
like
It was literally just below 3 here.
Well, I'm going to get into
because it did. So look at this. It gapped all the way up. So this BBAI was $2.36. Then it went all the way up to 10, and then it came all the way back down to under 3.
Remember on the train, I asked, like, have you looked at this BBAI?
I was like, are you meaning BZAI? Because that's the one.
You don't want this.
I was like, are you saying it wrong? Because I remember you bought some of this too when it IPO'd.
No, but I'm gonna sell some puts in BBAI, and I know it sounds weird, like, oh, it's on a rally, and I'm gonna sell puts, but again, it's up. And I might even sell the 6 puts or the 5.5. Even the 5.5 for 50 cents. In this small account, we go for bigger credit because we can only do 1. But if I'm doing multiples, I might go for smaller credit and we'll go further.
Yeah, for sure.
Yeah.
For sure. I'm going to ship this though. I'm going to go with the 7, 3.5. We're going to get 110 for it. Let's see if we can get filled.
That's not bad.
No, that's not bad. We got filled immediately. Have you been doing your job?
No, I haven't pushed one trade out yet.
They're all out on this side. So
all right, I'm gonna
BBAI, Etsy, and Delta Airlines are all pushed out.
All right, and then we probably should get to what's your assumption.
Yeah, we should, because it's 42. Okay.
All right.
So while you're pushing those out, I'm going to go into what's your assumption. Now we have a handful of trades that we're going to go over. I know the boys did it this morning. We take a look at things a little bit differently because our capital constraints are a lot. We definitely have handcuffs that Tom doesn't have.
Well, yeah, and just like I said with the BBAI, we went close to get more credit because we don't want to wait 45 days for 50 cents.
And I bought something because we don't want to put up $500 to do it. Okay, so first up, Apple, long Apple, short Oracle. A tale of 2 stocks going in opposite directions. Is there a pairs trade to be made? This is from Cristobal.
Let's go to the pairs trader and see. I don't mind. Usually with the pairs trade, I'll do stock to stock. I'm not going to do trade option to option. So let's go to the pairs trader and see.
Table. Pairs.
Or you could buy, like buying in the money option in Apple, buying in the money put, buying in the money call in Apple.
I just want to see, so it was Apple and Oracle, right?
Apple and Oracle. But if you want them to work like a pair, you can't do like credit spread to credit spread.
No, you can't. But look at how close in price they are. 211 to 224.
Sure. Do you want to do?
See, even if you did. So this is.
How many are you going to put on?
I have 1 lot. It's costing us.
Oh, it's $200 each. $200 each.
It's holding up $200.
Yeah, margin, like half
the price of each.
Go ahead, we'll watch it. Well, we're putting this on a baby scale to $200 for each product, buying 1 share of Apple, selling 1 share for Oracle, but we'll watch it like a pair. So and you might see us take a very small amount out of it because we're only putting on 1 to 1, where maybe I do 10 by 10 or do something a little bigger if I wanted that pair.
And I do want to take a look. Hold on. I just want to look at, to your point, if we wanted to control, because we can do this.
100 shares.
Want to control 100 shares, you can. If you're going to control 100 shares in Apple, it's going to be a lot more expensive, but you could.
And then how long? What's the time of this pair? You've got to give it some time.
August 15th.
Okay. Then August 15th, it's gonna be expensive if you want to buy an in-the-money call on Apple.
I don't want to buy an in-the-money call on Apple. You got to get it.
You have to go so far.
Yeah,
we're gonna do zebra to zebra, but that's gonna be expensive.
We're gonna do our pairs trader.
Yeah, just 1 to 1 or 2 to 2 or maybe 2 to 2,
so we can see it.
Yeah, so we'll notice.
You know what? Honestly, we got to put a 2 lot in because otherwise they're not even gonna be next to each other.
So, yeah, we'll buy 2 shares of Apple, sell 2 shares of Oracle. And again, this is baby scale for demonstrational purposes only.
It's using $436. I'm sending it. Okay. So they're filled. Good. We're filled on both. Okay. Now I'm going to go back. Thank you very much.
Okay.
And this is from Mikos in Atlanta, Georgia. IWM neutral. Russell has been a laggard, but July has traditionally been a good month for stocks. Okay. I like a Jade Lizard here.
Sure. Okay. Oh, and I like it. It's a bigger Jade Lizard, $349 credit. So they're looking at $5 wide call spread, $330, $335, and the 205 put. So
okay.
I like, bringing that up, collecting more. 205 put.
What cycle were they in? 45 days.
45 days. So go to August.
205 put, and then 30,
and then
35.
330, 35.
So they're not covering the width. I'm okay with that. So you've got $5 wide, you're collecting $3 on.
Now, this is expensive for us. IWM is expensive for us. We might have to, what's the put? What's the delta on the put? We might have to bring the put up a little bit and buy something.
The delta on the put's almost a 19.
Yeah, I don't want to bring the put up any higher, really, but just maybe give up $1, buy something for $1. Then we go from $3,000 to how much?
To, $589. It's not
sure.
that bad.
There's a little risk on the upside.
I'm going to pull the put
risk
up
on the upside, but
no, you're only getting 15 cents. There's risk and risk, but it's you've got a little bit of risk. I don't mind this. So we've got a Jade Lizard type trade in there. I'm going to hit send.
Okay, that's good. So far, 2 for 2.
2 for 2.
Excellent.
Okay, next up, Jack from Philly, HIMS.
We already have short puts in HIMS.
Okay.
I think.
Yeah, I think we do too. Neutral to slightly bullish on HIMS. It has a strong call skew. So even being neutral.
Who's up? Those are
16.
16. No, 18. Yes, Boozer up 16. SPX is up 18.
Yes, Boozer up 16. Okay.
17. It's rally. There's rally in the alley.
There's rally in the alley. Get your stock. My son is not out of his, and it's causing me heart palpitations.
Oh, poor JD.
I know, and I think he took like $300.
But he's had all winners.
He took $300 in risk on this one.
And he's only 18, and this is his new account. But he's had enough winners so far to still net be up on these.
No.
Oh,
not if he loses $300.
So this is going to be a lesson, and if today ends up to be a full loss for him, and maybe it won't, maybe it'll come back. But if today ends up being a full loss, he might say geez, I worked so hard on these, so many days of winners, and one loss wiped him out, and then it's a lesson.
You gotta stay with it.
Well, it's a lesson. It's showing some of Jacob's studies.
You got it. You almost have to stay with it,
or you have to collect more or risk less. That's when. We talked to Jacob and we asked him, what trade do you like? And he likes that iron fly where he's risking very little because it only takes 2 days to make up one loss.
Correct.
So that's when you have to ask yourself, do I want to have to make my percentage so many days in a row to make up one loss? Then it becomes very difficult to make up that one loss.
Well, and when you're looking at these, when it's through or close to the call, this could still be a winner at the end of the day if you collected enough, but you just have to sit on it. You have to sit on that loss all day long.
So I don't know. I mean, We'll see what happens, but you heard all the noise. We had a little rally. What order went through? 6250 calls, 6250 calls, 6250
200
puts.
that, yeah. Okay, so we do have HIMS in here. Now here's my question to you, Jenny Andrews. We put this on 7 days ago. So 1 week ago, we were sitting in these chairs and we sold the 38 put in HIMS. It is now up $61 or 18%.
I rolled my put up to the 40 put. We could take it off. We can take it off and take our winner, or we could roll our put up. I rolled my put up.
I almost think we should roll it up too, just because it was what's
your
assumption?
There's still 270 something.
There's still 270 something in it. We could take our $58 and go back in and put this on next week.
But it's only up 17%.
I know.
I would just put in a GTC for 50%.
I wouldn't have even
call it a
looked.
day.
I wouldn't have even looked at this had we not gotten.
Yeah, I would just put in my GTC for 50% and call it a day. I took puts off and rolled them up to a higher strike.
You must have been in a nearer cycle.
I'm in the July.
Yeah, this is August. Like you're
Yeah.
in your cycle. That's why you can roll them up because you're getting out for so much more than.
Yeah. Well, there wasn't anything left in the puts I had.
Yeah, 'cause
so
it's
if I
July.
want to stay in it and there's nothing left in the puts I have, I'll
You
roll
throw
them
it
up.
up.
But there's enough left in those.
I think so too because it's August.
Yeah.
So that we're already with you. So I'm considering that 3 for 3. Okay. So then IONQ Edmund.
IONQ. Is this one of the?
This is a like a supercomputer. What are those things called?
No, I think this is the. Oh yeah, the quantum computing.
Yes.
Yeah,
Yes.
the
Yes.
quantum
Yes. Yes.
computing.
Okay.
IONQ.
So IONQ 45 DTE bullish. Just sell a 34 naked put August. Okay. Let's take a look. Do we have IONQ?
We do.
Yeah.
What do
And
we
we
have?
have the 30 put that 7 days ago we put on with HIMS.
All right, put in a GTC for that too.
Right?
Sure. Yes.
What put did they want us to do?
The 40 put. Where's IONQ? 41. I don't know which put they wanted, but
here I'm going to go back to it. I've got the GTC in.
We've got the
they
30
wanted the
the
34. So we have the 30. We're a little bit less aggressive than you are, but we've got the 30 put in.
34 put gives you $2. Uses only. No, I'm not. I'm not in our show account. I was like, geez, this is only. I'm not in the right account right now. How much buying power is that put using?
I'll have to put another one in because we have it in. The
34 put.
$340.
Yeah, it's still very, very
Still pretty
little
good.
buying power.
I think that's why we had IONQ in. No, we're conservative. We have the 30, but we're going to leave it because we've got it in already. Okay, so that's in. Next up, ZC. Didn't we do this yesterday? Did we get filled?
We tried to put in put spread in corn yesterday. We tried to sell a put spread in corn. We didn't get. If it's not in our account, we didn't get filled. And this is from Teresa from Switzerland.
Wow. Okay, let's go ZC.
Yeah. All right, ZC.
76 rank. We did not get filled, right? Let me make sure.
No, I don't think so.
We only have MCL in. That's our only futures position.
No.
So if we were going to sell a put, we would go to the 51 day.
Wait, were we selling a? Oh, I've got to get out of this minute chart.
Yeah, you do.
I gotta get. I was like, geez, why were we selling a put when it's up so high?
Here, let me show you the visual of what it looks like.
Yeah, let's sell. Let's try to get filled on that put spread in corn.
So the put spread we're going to take a look at. If I was going to go in, I'm going to go to regular August, and I'm going to go to the expected move.
And I think it's a 50% multiplier. So $10 wide is like a $5 wide, and that's how we were doing. I think maybe the 390, 380. 390, 380, we can get about $118.
That's not bad, and you're putting up $381 to do it. Actually, if you take a look at this, because it is futures and they have the span margining, the buying power effect on this is only 194. Even though your max loss is 381, we know that. So this isn't bad. We tried to get filled on yesterday.
When you're placing spreads in futures, always check your max loss because it's usually more than the buying power. So just double check so you know what your risk is when you're getting into a trade.
It is kind of crazy.
I know. I don't know why it works like that, but 390, 380 for 118. We tried to get into this.
Here's what I want to do too. So it is. I'm going to cancel replace real quick. I just want to see. We're in for $2.37. I'm going to take it down,
which is $118.
$118. So I'm going to take it down one.
And you go down to 100. Yeah.
So I'm going to take it down one. I'm okay with that. I just wanted to see what the tick was.
Okay.
And we're filled.
We're filled. Okay, push that one out. I'm going to make sure I'm getting everything out on the follow page.
Yeah, so the ones we're missing are corn, apple, and oracle. Everything else is pushed.
Corn, apple, and oracle. I've got just pushed out corn, pushed out apple. I don't see oracle.
Refresh.
Up here. And oracle.
Okay.
Everything is out.
Perfect.
We've got 5 more minutes or so. Let's see if we can get to the rest of these trades.
So then we have QQQ.
From Warren Buffett.
Warren Buffett is greater than Tom from Omaha. Oh. Okay. QQQ, I don't know. Buy and hold. Just buy and hold the equities. Boys, long-term growth.
I don't know. I don't know what to say about this.
We will take a look at it. So this is the NASDAQ. We do not have anything in there.
I don't think we...
Do you know what, though? I mean, we're not going to put this in, but if I were doing this and I was just going to go out and buy it. So let's just go through something real quick. So you can go out and you can buy 100 shares of triple Qs and put up $27,000 to do it. And you're going to control 100 shares of triple Qs for that
$27,000.
$27,000. Or you can go out and do a call zebra, meaning you're going to sell the at the monies or sell the 50 delta, buy 270 deltas. and you're going to spend $4,300 instead of $2,700 and still control the same
And then
amount
you've
of stock.
got 100 shares of triple Qs. You only have $4,300 at risk. You're using much less buying power. It's defined risk if something happens. If if it goes up, great, you're a winner. And we have too many short puts and too many other positions to do that.
I do, and we're not going to use $4,000 to do this, but here, I just want to show, if you ever wanted to, you can go to just search in this bar, Liz and Jenny, you can go up here and search for a zebra.
Oh, and find it. Well, they may have redone our website, Liz.
There you go.
Oh, there you go.
So you can learn about this. There's lots of things that we do, a zebra breakdown. There's lots of stuff on here. How old do you think that is?
I was going to say, that's so old. You're better off watching the strategy series on the zebra.
The strategy series, correct. So those are in Learn.
Yeah.
So there is the strategy series, but just type it in. You can see what a zebra is. It's pretty easy to do.
All right, I think we have one more, and I will. The nice thing about Twitter is our viewers respond to each other. So Steve Jones wrote in responding to Brian about the fees, and Steve likes strategies which generate large profits on each trade. He doesn't like small profits many times. He likes larger profits.
And it's okay.
And there are a lot
to
of people that do
And that's
that.
what I love about options is you can do that, and we can do the little ones. Like I'm teaching my son to do little bits every day with smaller profits.
Well, I think looking for large profits, you almost need a bigger account. You need a bigger account.
Agreed.
Like, if you were looking yesterday at puts that were $1,000 in Circle or puts that are, hundreds of dollars, those are bigger products.
Those are.
If you're a smaller account, you almost have to settle for smaller wins.
Well, I mean,
smaller
that's
profits.
that's just your common sense slide. If you don't have a big account, don't swing for the fences because you could lose.
Yeah.
Ultimately, you need to be able to trade another day, right? So you don't want one trade to take you out. So if you're looking for a huge profit, you don't want that one trade to take you out.
But yeah, it's easy. We say this. It's easier. The bigger account you have, the easier it is to trade.
Yeah, I mean, that's true in life. The more money you got,
the easier it is to make money.
That's correct.
Right?
Okay, let's get to this last one because I think we are almost out of time. Okay, this is Pepsi
Ooh, Pepsi.
Neutral.
I haven't seen this in a while.
And this, the reason I wanted to get to this one is this was on Ajit's list too.
Oh, yeah.
Pepsi was.
Okay.
So Pepsi Neutral, July 18th. Earnings are on 7/17.
I wouldn't go neutral because earnings are coming up. You'd be going through earnings, and with the neutral trade through earnings, I would wait. I would wait till right before earnings. Pepsi has had a little run up. If you looked at the chart, like just recently, it's had a little run up, but they still have earnings coming up. So I might do a Jade Lizard. That's kind of neutral. But they could still win if you get, big movement to the upside on earnings.
We don't have Walgreens Boots Alliance in here anymore, do we? No, it's gone.
Is Walgreens, does it exist anymore?
Well, no, I was going to tell you this. When I was at the Mayo Clinic, they called my phone like 4 times.
Who?
Walgreens Boots Alliance. Because I have so many shares of it, and they wanted me to vote.
Oh,
on a merger.
So they called you?
They called me, and they took my vote.
You're the biggest shareholder.
They took my vote over the phone. Dan was like, what are you doing? I was like, I vote affirmative for all these things. It was pretty funny.
It's still there. Yeah, WB is still there.
What I voted for was $11.45 is the price I voted for.
Yeah, $11.40.
Okay, but nonetheless, to your point, Pepsi, you do not want to be neutral through there. It's already got a 40 rank. I was going to say,
Spirit Airlines would have called me.
I thought it was crazy. And then at one point I was like, is this a scam?
Is this really Walgreens?
Yes.
Is my prescription ready?
Is my prescription ready?
Okay. Pepsi, I mean, as far as I'm concerned, like puts are neutral too. Maybe I'd sell a put in Walgreens, or in Pepsi, maybe just that 125 put for $1.10.
You could sell a 125
buying
put.
power is not bad.
I did a week-long 153 at the money calendar.
I bet you a diagonal is really cheap here too. Oh, but a calendar's neutral, and they were neutral.
The calendar's neutral.
Yeah,
That's the only reason I was saying that is you're going to spend $1.53 on a neutral trade through earnings. Now, I don't know that I want to be neutral through earnings.
I don't mind that 110 put.
I don't mind.
I mean, the 125 put for $1.10, it only uses $900 in buying power. So you have 10% return on capital. You're using $900 in buying power to make or is it more?
Which one are you on?
The 125 put.
It's using $1,500.
This is why I have to be in our show account.
I know. It's really throwing her off, ladies and gentlemen.
I'm really thrown off today. Okay, so I still don't mind short puts in Pepsi or put spread.
And puts are neutral too, but they want to be neutral. There is
Do an
earnings
earnings
coming
setup
up.
calendar. Go to the 16-day. Go to this
That's what I had in. I had the 137.
Yeah,
so I was
go ahead.
buying
Yeah,
the
go ahead.
137. It's $1.50.
It's an earnings setup calendar, and then we'll see what we want to do with that 130.
Sorry, I saw that one. So 153. Let's do that. All that's on.
Excellent, Liz. Excellent. 10:58. Spoos are only up 15.50.
So I'm pushing this. We're filled immediately. I'm pushing that in. So today we closed our Delta. We closed our Etsy. We sold puts in BBAI. Oracle, Apple, we did a pairs trade. We're long Apple, short Oracle. We sold a put spread in corn, and we did an at-the-money earnings setup calendar, very short term in Pepsi.
Okay. And
done for the day? We're off for 5 days?
Oh my gosh, we are. We are.
Well, I'm off for 4. You're off for 5.
I will say, yes. So we're done for the day, and we are done for the week. There's programming tomorrow, 7 to 10, but we're not on.
Nope.
And then I'm not here. I'll be taking my daughter to camp. The TP will be filling in on Monday.
That's correct. He's already locked and loaded. He is ready. He's ready and already talking to me about the content that he wants to talk about on Monday.
Oh, good.
Yeah.
I'll tune in. I'll listen to you from the
Yep,
road.
there you go.
We'll be on the road, but I will listen to you from the road.
We'll give you a shout out. I'll pepper in some words that you'll know are for you.
Have
Just
a wonderful
like
show with TP.
Thank you.
And everyone out there, have a happy and safe 4th. Remember, fireworks are for the professionals.
I thought you were going to say, remember, trade small, trade often. Trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
I'll see you Monday, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here. And Tasty Live has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batiste. I've got my man Mikey Butler with me as always, and if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day, I get to spend it with my buddy, Mikey Butler. How are you, sir?
Doing swell.
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 Yes. Amazing day.
Yeah. Everything's up. Apple's up to $10 in 2 days.
Apple has had a monster of a move.
I know we've been going back and forth in the YouTube chat about the Apple call diagonal that hasn't moved, and it is now a scratch.
There you go.
Got back like $500 in 2 days just with the long call option that was basically worthless.
Maybe close and roll to a new one?
I did. I closed it. I'm not going to roll
just yet
until I see some kind of sell-off in this market. But yeah, I mean, I've taken off a lot of positions. I feel like now's the time to add on some downside hedges. What do you think about that?
Ooh.
I don't hate it. I mean, we have new highs basically. So
yeah,
as we've said,
live volatility low.
Yeah.
Market new highs. Why not?
Yeah.
Actually, I just did one in the queues. I closed it for $100.
Took that off yesterday into the down move
on the yesterday.
Time is
Yeah, you have to do it immediately.
Yes.
Right when the market opens, you have to do it immediately because otherwise.
That's the only time it's red.
Yeah.
It was like that this morning too.
Yeah.
Out of 6 or 8 points to the downside. It was another dip. It was yet another dip. I mean,
extremely temporary.
It's 2, 4, 6, 8 straight green days in the market. Beautiful thing.
But yeah, got some other positions churning here. I see some questions in the YouTube chat about some of them, but we'll walk through.
Have you noticed our new little, or it's not new, but there's a top fans thing on YouTube. I have to read up
I see
more.
it. Yeah.
You see the little icon there.
Scramble everything, number 3.
Scramble everything is number 3. It's pretty cool though.
Yeah, that is sweet.
I'll have to figure out how we can best
Sunflower
use
number 1.
Huh. The peeps, baby.
It's got to be from like watch time plus engaging in the YouTube chat.
Yes.
Some kind of algorithm.
Yes. We're gonna have to figure something out. Get prize of some sort. We gotta see how we can track it on the back end to see who,
what's moving.
Interesting. Something new. Quick little market update here. We've got E-minis up 12. It's been a steady climb for most of the session here. Had a little bit of red, which was swiftly taken off the board this morning. We were down like 6 or 8 points from the lows. We opened in the overnight session 62.47, got as low as 62.35. So it was about 12 points, was kind of as much as you were given today. We're up here just about 5 or 6 points off of the highs. NASDAQ up 131. You got the Dow down 34 and the Russell up 14. The Russell has been the strongest of the group over the third quarter because we ended the quarter on Monday, second quarter on Monday. Russell has been the strongest, kind of flipping the script a little bit, maybe some rate cut projections getting baked into that. Oil actually catching a little bit of a bid here, up $1.09, 66.54 on the oil futures. Volatility 1850 on the VIX futures, down 20 ticks. You got the VIX itself at 1676. Why would there be any vol? This should be at 0 considering we can't go down anymore. Bonds down 29 ticks. We top tick that one, unfortunately, down almost a full point. Gold and silver both relatively flat here. Gold's up $4, silver up 27 cents, and Bitcoin blasting off $4,100 on the futures. Spot is up 2,400, having a strong session for Bitcoin, but volatility remains very, very low. Actually upticking a tiny bit today. We saw negative numbers earlier this session. Volatility is still very, very low in Bitcoin and iBit.
Yeah, it is a crazy couple of days in the market. That's for sure. Ooh, Bitcoin's up 4K now.
Yeah, that's what I just said. 4K on the futures. Spot's up 2,400.
Craziness.
Big move.
When does it end? It might not. It might not.
Up only.
That's the funny thing.
Everything.
Lovely. Well, we're streaming live in the YouTube chat. If you want to join us there, just pop over to Tasty Live. You'll see this video front and center. You can pop in your trade AJ's questions along the right-hand side chat. So the top fans thing, it resets every day. Resets every stream. So it's basically the most active people in the stream that day.
Got it.
So I assume Scramble Everything and Sunflower have been in since the morning.
Yeah.
Chatting it up.
Yeah.
That's my assumption.
Got it.
It's cool though. It's nice.
It is really cool.
Gives everybody a chance to be on the podium.
Yeah. I know we're exploring some like other YouTube related things that I think would be fun.
But yeah, as I stated earlier, I closed that Apple long call for a scratch.
There you go.
All it took was 2 days after waiting months. Yes. But yeah, I had the 210 long call left over from earnings. I initially had the 210, 220 diagonal spread. I rolled the 220 down to the 210 to create a calendar for June for $1.27. So I reduced basis down to about $6 and change. And then, or just under $6 actually. And then I sold out of the 210 call that was left over with 2 weeks left for $600 today. So I netted 7 cents, which is better than losing $600.
Yeah, that is certainly true.
Yep. And then Natty Gas, we got the 1 day reversal I was looking for, and I closed that for $120 this morning.
Wow.
So shout out Thomas.
My Natty Gas position.
Bringing the heat. I mean, it's got to be up.
I'm up about $100.
There you go.
$140.
There you have it.
What a little day here.
I see Robert in the YouTube chat asking about my plan for FedEx. So FedEx, another one that just recovered instantly. I had the 240, 250 diagonal spread, long August, short the weekly for earnings. Rolled the 250 down to the 240 for 66 cents into a calendar. So this is the problem. Like,
You got to stop doing these roll downs for 60 cents.
That's
I don't know
what
why
I'm
you do it. Just buy back the call and lean long.
Yeah.
And if you
And it
get
would've
bailed
been
out,
fine.
yeah, you can't do these 60-cent roll downs. You kill me. You're killing me.
That's and we talk about that all the time. Like our roll down minimum is $1 for this reason. Because like literally into that earnings sell off. When did I place this?
Or make the trade smaller, like on entry, like, you know, where you can just let it go.
Yeah. So yeah, the earnings sell off brought it down to 220. And I just rolled it down. I was like, yeah, it'll be fine. We're not going to gap up immediately. And we did. So it's up 20 points. It's higher. We are now higher in FedEx than we were after the earnings sell off. Yeah. So that 60-cent call that I rolled into is now trading for $430. So this is what we talk about. Like, and normally I would buy it back. For whatever reason, I didn't. I rolled it down, and that cost me a net profitable position. Because I would be up at $200 right now if I didn't do that, if I just left it.
Yep.
But right now, I'm still dealing with a loss because my short call has now $430 in it instead of the 60 cents I sold it for. So to answer your question, Robert, there's a couple things I can do here. So right now I gotta move this now, because my average trade price is $600 and I have a 240 calendar that's basically at the money and trading for $300. So I have to re-diagonalize this.
Yeah, close it and fresh. Be fresh.
Yeah. So what I'm going to do is...
And then it's done with, and you can like look at your new position and take profits based on that and not have to like continue to finagle it. You know, sometimes you have losing positions. It's okay. You know?
Yeah, so I think what I need to do here is just re-diagonalize it. Because I've got a $6 debit. I can add to the position, which would be going from a 240 to a 240 calendar to a 240, 250 diagonal for $3. So basically setting up a diagonal if I were to go long August, short July. Or I can buy back, I can just close the position and go long September, short August.
Close it and sell a put spread if you want. 230, 220 put spread. You can, you know, once you're at a calendar spread, it's dead. You know, it's a dead position. So whether you go in,
happen too fast is the problem.
Yeah.
But I think what I'm gonna do, let's see, $6. Yeah, so I'm just gonna buy this back, or I'm gonna close this, I should say. I'm gonna close this for 380, book a loss, and I'm gonna just roll the whole position out to September. So I'm gonna go to the 240 September, 250
August.
Yeah, 250 August, 240 September. So I'm basically just shifting. If I would have done it in the near term cycle, I would have still had the 240, 250 for $9 debit. Now I'm going to long September, short August for a $9 debit. So I'm just giving myself a lot more time on this position. So there you go. Just adjusted it to the 240, 250. It would have been a similar debit if I left it in August, long August, short July, but it would have been it's not a great scenario if FedEx would have sold off. I wouldn't have had enough time for it to recover. So
Shout out whoever gave me the STZ trade. Closed that one this morning. I forgot about it. Literally forgot that I had that trade on it. That's why I looked at my account before we got on the show, and I was like, what's moving here? So I closed that one out. So thank you to the peeps.
Love to see it.
Yes.
But yeah, made that adjustment. See if we can get a continuation in FedEx. It's still at lows, even into this little rally here. So long time for it to continue here. Boulder's got an Apple diagonal. Short the 210 call for tomorrow.
Ooh.
And long the 210 call in July 18th. So it's a calendar spread.
Yes.
Most likely get assigned short stock on the short tomorrow. Any advice on how to handle assignment? So you're at a coin flip for assignment here because it's basically right there.
Yeah, you're not getting assigned tomorrow.
You won't get assigned unless you let it expire in the money.
Yeah.
And it is in the money. You're not going to get assigned overnight tonight.
No.
Because this option has enough extrinsic value left in it to where it prevents you from being assigned. You have
It's got to
about
be a
$100.
double minimum.
Yeah. I would just get out of this. This is your best case scenario. If you're profitable on this position, I would just get out of this. Because you just ripped a 10-point rally in Apple in the last 3 days.
Yeah.
Which was definitely not expected.
Yeah.
Considering the 16-day implied move is $7 going forward.
Yeah.
So yeah, if you're profitable, I would just get rid of this.
Good trade.
Yeah. Let's see. Small diagonal and Apple.
Everybody's trading the Apple.
Yeah, this is
But we finally got paid on it. We've been long. We've been trading Apple long, and it's been a grind. It's been a nothing thing, and now it's finally moving. So it's nice.
Oh yeah, Wandara was the one that kept asking me about Apple, but I think they closed already, and they didn't get this rip. Maybe the expiration was different, but yes, a different diagonal. Long the August 205
in Apple.
In Apple, short the 210 for July, up $175. What's a realistic exit? Yeah, this is it.
Yeah, you're.
Typically, when we put on a diagonal spread, when it moves in the money, we just close it.
Yeah, this is. I mean, you made all that whole thing came in the last 2 days.
Yeah. Thinking of holding through earnings, but already a nice profit. Yeah. So like I close mine. I'll come back for earnings.
And listen, you can close it and put like this trade. In terms of upside, there isn't a lot more upside if the stock continues higher. Like if the stock continues higher, you might make 20 or 30 or 40 cents more. There's not much more to make here. If the stock drops back to 200, you're going to lose $300 or $400. So your asymmetry of risk is a lot against you and a little in your favor because of the move that you had. You really need the stock to stay right here. If you're sort of bullish or still bullish, take your profits and roll to something that has a little bit less risk on. Go to the August 215 and sell the 220 against it. You take your $200 or so off the table, and this trade on a $5 up move is going to make you $400 or $500 versus the diagonal that you have on that's going to make you 40 or 50 cents. Like this is. You have to trade this position in this sort of move. If you're neutral, then you got the position for it, and you sit. But if you're bullish, your trade kind of is maxed out.
Yeah. And yeah, another nice thing about closing a position like this is it leans you naturally short into this big rally we've seen.
Yeah.
Because you're closing a bullish position, even if you're not adding a bearish one.
Yeah. Go to September, August.
Yeah.
This trade will be you'll make more money on the continued up move than you will with your current position.
Made a mistake on Google from last week.
Okay.
Now I have a July, August 175 calendar with a cost basis of 778. I was considering rolling the short to August 180 for a $2 credit. Is there a better option to consider? You didn't make a mistake. It's just the market just ripped.
Mm-hmm.
There's nothing you can do about that. But yeah, August, if you're long the 175 in August and you're short the July 175, what I would do is I would just, if you're comfortable holding this through earnings, which it seems like you would be if you're moving it to August, you can move the 175 from the July 18th into the earnings cycle, which is the July 25th. And you can do that for a scratch. So I think you either move it to the 180 or the 185. If you go to the 185, you'll pay like $1.30, but you'll have a $10 wide diagonal and your basis will be about $9. If you go to the 180, you will have a 5-point wide diagonal with a basis of $7 and change. So I kind of like giving yourself no risk to the upside if there's a big blowout move to the upside. If you keep it to the $5 diagonal, then you could have risk to the upside if there's a huge move up. But yeah, I think you could roll it to the next weekly cycle, do something like that versus rolling to a 45-day vertical. To where that's not going to move because you have a $5 debit. You'd have a $5 debit cost on a $5 vertical 40 days out. That's only going to appreciate to $2.50, even if it goes in the money. So I think if you're keeping the dream alive here, you go from the 16-day to the 23-day, and you go to either the 180 or the 185. 35.45 August. Strangle in AEVA.
AEVA. Via technology. This is a fun one. From 3 to 30, so that's a 10xer. What do we got?
Not a strangle. A call credit spread.
Oh, what are those strikes?
35.45.
They have this on in August?
They're looking at it.
Oh. This seems like it's something that would be hard to borrow. No.
I mean, it's fine. There's just a lot of risk.
It's got to be
into the move.
Biotech or something, right? Autonomous vehicles.
Ooh. Smash. Yeah, 35.45. The 35.45 credit spread. It's just, I don't know. It's okay, but you're selling. You have a lot of risk for very little profit that you're not going to get anytime soon, unless it drops from 30 to 15.
Yeah.
I would rather, if you're playing for a downside move, I would rather do a diagonal, like buy the 35 put in the 44-day and sell the 30 in the 16-day.
Mm-hmm.
That you'll get paid on.
Yeah.
Pay $5.50, and you'll get, this could be a $300 winner or more if you get a $5 sell-off, or even if it just stays right here for the next 2 weeks, because then you're really getting that premium out of the 16-day. So that's what I would do if you're playing for a downside move.
I would just,
or do nothing.
This one's fringe, very fringe stock.
Very fringe. Covered call in bull.
And Weeble, our competitor. Send this to 0.
Long stocks and want to sell the 15 call in August.
Yeah.
Sure. 10% cost-based reduction immediately.
Here, I'll do it. $500 in buying power. It's a nothing burger, you know. Come on. Yeah, I like that. Interesting trade.
Any adjustments on your IBIT crab trade?
It's true. Let's see what I've got here. So it's up $20. I still got about $2 of extrinsic value in this. So I'm gonna just sit here. I got one more roll to August, so if you want to roll this to August now, or you want to roll it up and out, you could do that too. But I'm gonna just hang out. I mean, you got Bitcoin at highs.
Yep.
Okay. Okay, here.
Yeah, I've got the 60-70 strangle, and I will not be touching that thing unless it reaches 70. Then I'm going to move the whole thing up 10 points. Because permabull, hashtag permabull. I'm limited by PDT rules. Is selling an iron condor on SPY a day before risky? No, not unless you, as long as you don't touch it. If you're trying to avoid day trading, let's say you're trying to do like 0-day stuff, you could do, if you're selling it, like let's say that, you know, the market closes here at 3 o'clock. If I sell an iron condor at 250 and I close it on the open the next day, that's not a day trade. It's a quick trade, but it's not a day trade.
I think generally if you're subject to PDT, you should probably do these infrequently.
Yeah.
I mean, like especially if it's a $5,000 or $10,000 account, you don't have the flexibility to lose, $400 or $500 in a couple hours. Yeah. So I think like that's probably, what I would say. But if you're hell bent on doing it, use like XSP, which is cash settled. That's one where you don't have to close it because it's all cash settled, so you have no assignment risk. But yeah, if you put it's day of. So if you put something on the day before and close it the next day, that is not a day trade.
John, I just put a link in the YouTube chat to some videos on the crab trade.
Yes. Calendarized ratio or butterfly.
Yeah. It's just a butterfly spread where you push the long option further out in time.
Yes.
Just like a diagonal spread. You're just inventorying delta, getting lower IV exposure, getting more time-based slow trickle exposure, and that's it. Killian wants to put on a bullish trade in Target, but it has moved up almost $10 in 2 days. Yes, it has.
Mm-hmm.
What is an appropriate time to put on a bullish trade? Well, if you're Tom, you're putting on bullish trades when the market is down. And ideally, it feels good to do that. It feels better to do that, to put on a bullish trade when the market's down. Mm-hmm. However, maybe you've been waiting for Target to show you some signs of life, and now it has. And you're like, okay, now it's going from 95 to 105. It's trading above the previous chop range that it's at. I think it's going to 125 or 130. And this is still a fine time to place a trade if you want to.
Yeah.
In terms of expiration choices, it really depends on what strategy you're doing. But if you're trying to like sell a put, I think you do the cookie cutter August cycle, which is 45 days. If you're doing a diagonal spread, I think you could do long August, short July, or if you want to be more conservative, long August. And it's pretty much.
Yeah. Not a overly volatile underlying. You've got mid 30s implied volatility, so not bad. It's certainly popped up a little bit recently. Just like a short put spread. Is that crazy?
Good.
Like thinking like the 190 strike. $2 and change.
Certainly could.
Hate doing it into this big move though. I'll do this. 190 at 220. We'll see if we get filled, and I'll let that sit. Maybe we get a down tick and it'll get
filled. How about a call crab trade on AEHR?
AEHR. Where the hell are you guys finding these stocks? AEHR. What's
Yeah, we don't normally trade
Air
these.
test systems.
We don't normally trade these stocks that don't have weekly options because it tells you that there's not enough activity in here to open weekly options. But I mean, yeah, I don't mind this. It's a $200 risk. You have a $5 wide call vertical, or sorry, $5 wide call debit portion of this trade, and only a 2.5 point wide credit portion of the trade. So you have no risk to the upside.
What is it? What do they got here?
The 12.5 in September.
September put.
Call. Long the 12.5 call. Short 2 of the 17.5s in July. And then long 1 of the 20s. So it's a cheap shot.
Yeah. Yeah, I don't hate this. This is, a sub-billion-dollar company, so I would, it's not.
So defined risk is
probably, yeah, if you're, yes, that would probably be a good thing.
What are the borrow fees on this?
Does it have one?
Yeah.
2%, nothing.
Yeah. So that's another thing. If you have short calls on a hard to borrow stock, just check the borrow fee. You can just click short, like sell short stock. If you're on the review and send tab, it'll tell you it's 2.2%. Anything that's really high puts you at assignment risk with the short calls.
Yeah.
And then you pay that fee. So this one I wouldn't be worried about. Do you have any triggers that you personally use to change or close your positions? For example, I see your overall P&L day percentage very, very high or low. For example, if you see your overall P&L day percentage very high or low. Yeah. So for me, my method is I look at the positions tab, I look at P&L day, see what's the biggest number, and then compare that to my P&L open. And usually I don't really do anything unless I have a winner if I'm closing a position. And then once I do that, once I close the winners, if there are any, I'll go back, see what else is moving in P&L day, and then I'll open it up and see if there's anything to do in there. Sometimes that triggers an adjustment, but that's pretty much it. Just make sure on your positions tab, just make sure P&L day and P&L open are right next to each other. And that makes it very easy to see what you're looking at.
Yeah, I'd say generally I just go through my positions. I'm flexible with stuff. Like sometimes I close it for scratch or a small profit, small loss, depending on what has happened. Like if, the move today in Constellation Brands, like I have no reason to keep this position on. The short call was right at the money. Sure, I could hold it. I didn't think twice about it. Same with Natty Gas. Like Natty Gas, it's not a 50% winner, but we got a 2.5% move today, and it's just I like to close and move on to something else. There's always other opportunities. Like you don't have to be super strict on everything. Like I have to get this amount. I have to get that amount. Sometimes it's just time to go. Like we had that Apple position. Would have been nice to hold it an extra, little bit. But you get a move like that, and it's like you just got bailed out. I'm out. And I'm on to the next one.
Yep.
So I think when you see big moves in P&L on any position, whether it's winning or losing, that's my trigger to do something.
XYZ call diagonal. Not a fake stock, people. Not a fake stock. Not anymore.
That strikes.
Long September 70, short the August 80.
Yeah, I like it.
Yep. Yeah, this one's really cheap.
And if for some reason it's a stock that's like always cash secured, so you might have changed now. All right, I'm in. I'm with you.
Just another stock that's up almost 100%.
Oh, it's a little cheaper buying power requirement. Still very high though.
No, I like this a lot actually. The anytime you can get a $10 wide diagonal spread with some time associated with it for less than $5, good return on capital potential.
Mm-hmm.
Yeah, I'll get on this with you. Why not?
There you go. got Bitcoin potential. It's got stable coin potential, even though Circle's down $11 today. What's Coinbase doing? Let's see. Coin up, going nuts.
Yep, I like it. It's ultimately an earnings trade.
Mm-hmm.
You have 1 week beyond the earnings cycle specifically, but picking up a little more premium, probably getting a little more juice out of that. And I don't think it's actually, I'm not sure that it's actually confirmed in that cycle yet. But yeah, I'm in.
Me too.
I might have screwed up an NVO diagonal. I've rolled a few times, but I think I dinked. Currently holding a short 76 August 8th call and a long 75 August 15th call. What should I do with this? So you basically have a calendar spread.
75, 76.
Yeah. So August 15th, 75, and an August 8th, 76.
Oh, you're done.
Yeah.
It's over.
So yeah, it's just a calendar spread. Technically, there's 1 point difference, but 1 point doesn't really do much for you. So there's not much to do with this. Depending on your overall cost, you could buy back the 76 and move it up to the 80. You would add $1 to it, but these markets aren't great. These markets are not good.
You got 60 cents. This thing's trading for 60 cents. I would just hold it. If you want to be bullish, start a fresh position. I mean, this one.
It's done.
That.
You might actually be better off just like holding this if you can't get out at mid price.
Yeah.
Because these markets are not good.
Got 50 cents, 60 cents of risk.
Can you roll an in-the-money spread out in time and collect so much credit over time that even if both legs are in the money, you can make a profit? I have a put spread in CL that's tested and was thinking it's a possibility, but it seems too good to be true.
To roll out
an in-the-money spread, you are paying if you're rolling an in-the-money spread, you would pay a debit if you're rolling into the same product. In CL, you might be rolling from the 66.55 Q contract to the 65.17 U contract.
Yeah.
And that is not really a credit. It's just that if you have a put spread,
your put spread's getting deeper in the money.
Deeper in the money. So it's you're collecting a credit because you now have a lower probability trade.
Yeah. You're not yeah.
So
and that's because of the spot prices.
Right. Yeah. So I mean, it's too good to be true because you're basically just getting closer to you're getting closer to max loss because the contracts are going down as you roll out in time.
Yes.
It's a very odd scenario, but you won't collect enough to offset that.
No.
So.
And there's going to be slippage there. So the 15-cent credit is probably not, well, let's do the 70.69. Just show that. Roll it here. So you have a wide spread here too. I mean, you're probably getting your price still getting paid. Your price still getting paid a credit, maybe a penny, but you're not getting 10 cents.
Yeah.
And now you're deeper in the money.
Yeah. So yeah, the credits you're getting will not offset your risk over time. It's still like okay if you're still bullish. I think it's still fine, but you still need that move.
Yeah, you got to roll the delta.
Yeah.
So when we, for in the money spreads, you can't roll them because they're done. If you're super deep in the money like this, but if you're rolling closer at the money spreads, you have to roll to the same delta, not the same strikes in futures. That could get you your same exposure to the new contract, same delta exposure.
Yeah. Low IV rank in SMH. Put calendar into the up move.
I don't know how you fade these stocks, but let's do it.
Yeah, I think you could do calendar, diagonal, long August, long August, short July, or long September, short August. That's the question. September, August.
Yeah.
Diagonal spread.
50 down here. Maybe a crab. Only gets you another $1. And
I mean, you can get into a 15-point wide for less than $1,000, which is kind of what I would do if you're doing a diagonal spread.
I got one that's 25.
There you go.
September, August.
Yeah, if you're doing a straight up calendar, September, August,
962.
Those are cheap too.
Yeah, everything's cheap. Volatility is dead, gone. Who would ever trade to the downside?
That's a great question.
No, I think it's a good spot to get a little bit,
If you are planning for some kind of reversal, then yes, you can get cheap diagonals here.
And the spread will barely move too.
Yeah.
I mean, this is
To the upside.
Yeah.
I'll do it. I'll do the SMH September, August. I'm going to do the 275, 260.
E-mini's up 18, high of the session. We are saved.
We are saved. I'm going to leave it at $8 exactly. See if we get a continuation through the rest of the day, then it'll get filled. SMH. So I'm long the 275, short the 260. So I got a 15-point wide diagonal for $8 if I get filled. And if we keep ripping to all-time highs, I can just move the 260 up to like the 265 or even the probably move to the 265 for just a small hedge if I want to do that. But crazy. 6E was a rough one. Got out today for a loss.
I just closed mine too because it expires tomorrow, and I have all my Tasty FX positions are in some way long the dollar.
Yeah.
And those are not nice.
No, every single layer of my tranche is a loser.
It's okay.
I have two tranches long the dollar shekel, all losers. 3 tranches of the long the dollar franc, all losers. 3 tranches of short the dollar, short the Aussie dollar, all losers. But they're all really small.
Yeah,
it's like a $200 loss overall for all of them.
Yeah.
Total, but still funny to look at.
I was explaining this to Gus because he did the show with Glenn yesterday. I was like, everybody is bearish the dollar, which means that it's time to get long the dollar. And this chart is just incredible. I think the dollar is down like 15% in the last since the start of 2025. And it just goes. It seems like it can't go lower, and then it does. The DXY is the dollar index, but it's heavily weighted towards the euro. But everything is up against the dollar. It's crazy.
With the explosion in covered call funds, leverage ETFs, interest ETFs all around, has Tasty ever thought about running an ETF that runs the strategies you guys teach?
Sounds fun.
Like an algorithmic trading vehicle for whatever strategy.
Mm-hmm.
Yeah, the problem is
how regulated we are.
Yeah,
we can't. We're not going to be launching a fund with the talk shows.
That's the problem.
But
I see how much regulation just goes into like videos that are hosted on Tasty Trade.
Yeah.
So the thought of a fund where people are investing and you have to be fiduciary, you have to be the fiduciary.
Maybe one day.
But the whole point of this show is to teach you how to be your own fund manager.
Yeah, do your thing. Yeah. No, I mean, yeah.
But yeah, like I say it all the time, like my number one strategy, if I were to have $1 million, I would just sell 2 puts in SPX. If you can live off of 10 grand a month, which is what you would collect selling 2 puts in SPX through every 30 days.
Have risk.
There's certainly risk. But again, if you're living within your means, you can just not have a job. That's a tale.
You gotta get the $1 million first, though.
First, you got to get the milli. It's coming soon.
Doesn't grow on trees.
NFL season starts September 8th. Plenty of milli makers
Just
there.
bink one of those milli makers, no problem.
Correct. Can you give another quick look at where to see borrow rates in the platform? Yeah, you just throw on a short stock position and you'll see.
And it'll tell you on the trade page, like it'll say if it's a hard to borrow stock, it'll tell you right here. Here, what's a hard to borrow? I think
Core weave. There you go. First Solar, 170, 175. Short call spread, I assume, that expires in 16 days. Cannot roll for a credit. Should I hold or take losses?
gotta hold. I mean, it's going to trade at half the width. High implied volatility, 58% implied volatility. You're right, right on the dance floor.
Yep.
Wish I held my short puts last week. Somebody from
Literally everything I've pulled up on this chart is up 30% in 2 weeks.
up only, Mikey.
It's insane. But yeah, you've got 16 days for it to reverse. You have a huge move today. If it doesn't work out, you could always do something for earnings if you want to add more risk. But yeah, the 170, 175, although it's painful right now, it is trading for half the width, which is what you'd expect for an in-the-money spread. And you can make all that back if you get a small sell-off here, as long as you're comfortable risking what you have on the table. Meta trade idea. August debit vertical spread, 740, 760.
Yeah. I don't mind the cheap shot into earnings. I think that's right around highs. 747, the high, 52-week high. I know why you do that over a diagonal spread, because the diagonal spread is much more expensive. So, yeah. Stock is at all-time highs or just off of all-time highs. So if you're not as bullish, maybe you just do a short put spread. You do a 10 or 15 point wide short put spread. Gives you a little bit of a buffer. Both in play.
Yep. Copper futures, HG, almost back to March's multi-year high. Fading last time worked great.
Oh, God.
Yeah. When it just got obliterated.
Let's see. Is it MHG?
Yeah. Try again. Fading it.
These things move, too. So you got to be careful here. I'll be the test pancake. Oh, God. I filled above the mid price.
They wanted that.
Yeah. We're about to rip this guy's face off.
Yeah, even the 515, 510 in the 55 day.
Oh, you're looking at
just like a vertical spread. 515, 510 put spread. Risk 600 to make 660. Something small like that I think could work too. If you're fading this, 510 brings you back to the launching pad pre this move.
You're just making up vocab words. It's a launching pad.
It's just so funny. I just can't believe we're here. From the April lows when the world was ending. Quick reversal. Have you also closed the micro natural gas futures long? I never got into that.
I think that was Thomas. Didn't Thomas put one on in there? I believe so. Or he had it on in addition of the short put spread. He had the short put spread too.
Nice.
So that's a good trade.
Yeah.
Oh, I just got filled on my target spread. What did I do in there? Sweet. That was just a short put spread, right?
I think so. Yeah.
Yes. 190. There we go. All right.
Where would you sell the puts on SPX? It doesn't matter because they're all expiring out of the money. Just kidding. So yeah, I would just, your cookie cutter 45 day, it's still the same stuff. But if you're trying to just like make it clean, maybe it's July 2nd. So maybe if you're doing this, you do every 30 days on the first of the month, and it just brings you through the month. You find an option that's trading for $5,000, which right now is at 6,000, 66, 60, 60. And there you go. You have 200 points of wiggle room to the downside. If you get tested, you can roll it out and down to the next month, collect a credit. There's a lot of manipulation you can do here, but you just got to keep your size in check. The number one thing with this strategy is if you're doing this month to month in SPX, XSP, SPY, you have to do it in a size that you can absorb a 20% sell-off at any point in time, 30, 40% sell-off, which means you're pretty much cash secured.
Yeah.
Like if I had $1 million, you can sell 2 of these and have 1.2 million in notional risk, because if the S&Ps are down 90%, you're out of your house anyways.
Yeah, you're not worried about that. Yes. But that's always the killer. Like,
yes,
it's always the problem. Because you look at this and you say, oh, well, I can do 10 of them. Why would I only do 2? And
if you do 10 of them, you can only absorb a 10% sell.
Yeah, if that.
Yeah.
Volatility changes, all that good stuff. So it's always, that's always the killer. So it doesn't matter, just like you said, it doesn't matter which strike you use, as long as the size is, relative to your portfolio.
Yeah. And let's say I'm doing this and then one day there's a sell-off of like 100 points on the day that I'm normally rolling. I'm not selling the out of the money ones. I'll just sell it right at the money and just be like bullish.
Sure.
You can do that kind of stuff. So, but yeah, if you're sized correctly, you can create whatever rules you want.
Size is always the killer.
Yeah.
Always.
That's the whole thing. You have to be able to absorb the worst market sell-off we've seen.
But then everybody says we're going up only forever. Why wouldn't I just move this in? Why wouldn't I do that?
Exactly.
Everybody gets that. You just gotta keep size in check always.
Mikos was selling a call spread, thinking of selling a call spread in HG, not shorting the whole thing, lol. Yeah,
that's probably more conservative.
Short call spread or long put spread, I think, could both work. Like a 5.25, 5.3. Yeah, a short 5.25, 5.3.
Which one, August or?
August, yeah. Risk 750 to make 500. The put spread I was looking at was 600 for 600. So either way.
Yeah. Certainly a more conservative trade than what I did.
Yep. Bruce saying you could always roll the contract out and sell covered calls. Yes, if you're doing that in SPY, you could do that. You could take the shares and convert it to a covered call. But if you're in SPX, there's nothing to take. So you could just roll the in-the-money put forward and still pick up the premium. But yeah, that will be my retirement strategy for sure.
With SPX at
With SPX at 6 million.
Yeah, it'll be at 60,000.
Oh my God. I have an inverted TSM July. 185, 170 inversion in July.
185, 170.
Obviously, I was waiting for a pullback. How can I buy the guts and sell the wings and recenter?
You've been waiting for a pullback for 4 months.
Yeah.
I mean, when was this?
71.85.
You got to make these roll ups. I don't know how you've just been short the stock this whole time.
Yeah.
The 185, it sucks. And I get it that maybe you won't be able to make money on the trade, but you can't take $50, $70 of an upside hit on a trade. You have to roll up the calls if you're going to do that.
Yeah.
Roll up the puts.
Like a week ago, it was down below 210.
Yeah.
Then
you're but I get it. You think it's going to crash.
I know.
But
it's tough.
You can't, unless you're comfortable being short the stock here, because that's what you are. You haven't rolled, you haven't reduced your delta. It's been just short stock for the last 50 points.
Yeah. So right now, you can roll to August, but you're picking up pennies.
You have to, and you have to take some risk off.
Yeah. And it also depends on how much premium you have thus far.
No, it doesn't.
It doesn't. It actually doesn't with a 15-point
Just
No way.
throw in the towel. Sometimes things gotcha.
Yeah.
Roll to, or if you want to be short, then just take the short shares and have the static delta. But if you're trying to manage this trade, you got to close it because it's not a manageable trade. You're short stock.
Yeah. And
Take short stock, sell puts, or roll to the 200, 230 inverted strangle, and you'll make back a couple $1,000 if you get a down move.
Yeah, it's tough. But yeah, unfortunately, this one's too deep in the money to really do anything with it. I was even looking at September, and there's no premium there either.
Mm-hmm.
Do you still have the Carvana trade on?
Do I?
I do not. I never had one.
I think I did have one. I sold the 370, 380 call spread on the 5th. I closed it on the 12th for $1.77. So I took $100. I guess if you still had this on, it's probably still a good trade. 370, 380. Yeah, it's come in about 20 more cents over the last 20 some odd days, 30 days.
You could sell puts in SPX into one of the 3 to 5 corrections each year. Yep.
Can't time that.
Doing it every month, regardless of VIX, is a bit riskier, yes. But if there isn't a correction, then you're not doing anything.
Yeah.
But yeah, the nice thing is the whole thing is sizing. Like you can manipulate your put. You can manipulate your put into the correction and still take advantage of the IV. Put spread I sold in UNH is failing. Sometimes I convert losing put spreads into iron condors instead of rolling or doing nothing.
Do we have strikes?
I do not.
You got all kind of expanding here.
Yeah, in a product like UNH, I think it's okay, but I would just be careful with that because if you're selling put spread and then the market goes down and then you're selling a call spread above your put spread, you're probably creating a very narrow range with very little space for the product to rebound. So I would just be careful about that.
I'm gonna sell put spread here.
Andrew, would be a nice retirement plan if the apocalypse doesn't happen first.
That's
yeah.
fair.
I think what's going to happen is I'll finally get to that point, and then the aliens will invade the day after, and it won't matter.
290, 280 put spread in UNH. I put on.
Greg sells SPX almost every day in 0 days. I love life.
There you go.
You do, especially if you're selling puts into these crazy moves. 270, 280 UNH is the put spread. So yeah.
Yeah, I'm with you. I'm a little closer.
What
I'm
percentage?
one strike in.
What percentage of your trades would you say are 0 day trades?
Mine?
I don't really do it.
Small percentage.
I did that 1 0 day butterfly.
Yeah. Oh yeah.
I don't even know what happened with that. I need to.
Yeah, don't.
I definitely didn't close it. That's for sure.
I mean, mine was $60. But then I had one that was a $265 loser. Like they're just, it's too binary.
I think that was a full winner. June 27th? Did the market sell off?
Yeah.
Okay.
It sold off on the close, which I think bailed you out because I had, let's see, the 27th.
Yeah, I had the 6175. That was my closest long call. So I think I did get bailed out.
I was the 6175 as well.
And it closed at 6173.
There you go.
Sometimes being lucky is better than being good. Okay, last one here. QQQ has been going sideways for 2 hours. Yep. Does the team buy fixed interest rates if you have any balances left? Like a interest rate sweep? Don't believe so.
By BIL or SGov. That's the way I would go, because then you don't have to, they're liquid and you can trade out of it the next day. But yeah, I keep my, I would rather have the capital freed up to use in some other, if something happens in the overnight session, I want to be trading some futures. I'm not parking it in this.
Fair.
But I get it. If you want to, or put X amount into it.
All right, that's it.
Cool.
We're out of time.
Sweet.
Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Stay tuned, though. We got plenty more content coming your way on the YouTube channel, as well as tastylive.com. We are off the rest of the week. We got a half day tomorrow. So the boys in the morning will be on until 10 a.m.
Yes.
And then the rest of the
Futures will be open the whole day tomorrow. Stock market closes at noon.
Central.
Friday, no stock options. No, futures will be open until noon.
Cool.
So futures will trade all day tomorrow and into noon on Friday.
Back Monday.
Back Monday for stock and options.
Sweet.
Cool.
Thanks for tuning in. Stay tuned on tastylive.com and the YouTube channel. We'll be back Monday. Have a great weekend. Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your partner.
Who loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's gonna do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy.
Yeah.
Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
Oh. It's not even close. Like you got buildings full of people. What do you want, Mr. Sosnoff? I have nothing.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
We're back. It's Wednesday, July 2nd, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, ADP this morning, bad. Tesla sales, a disaster. Stocks testing all-time highs.
Yeah, I mean, Tesla's still up almost 5%. So, I don't mind it. I'm long Tesla. But yeah, short trading week here. Volume's a little bit light, bad ADP, but we are going up. So, it's all about tomorrow morning, I think.
All about tomorrow morning. As a reminder, with the markets closed on Friday, the non-farm payrolls report will be released tomorrow. It's actually quite a busy day when we get to the calendar at the end of the show. Non-farm payrolls, initial jobless claims, ISM services. There's a 30-year bond auction. We just had a 10-year note auction hit the wire 5 minutes ago. We'll get to that shortly when we head over to notes and bonds. But before then, we should probably talk about the expectations for tomorrow's non-farm payrolls report, if only because we're not going to have a chance to review. Futures Power Hour and Overtime will be off the air on Thursday with the rest of Tasty Live programming for the holiday. So this is what you need to know going into it. And we've been told that you ignore ADP, Thomas. That's what they keep telling us. I know that we have some exciting things to discuss today, including the Dallas Fed Energy Survey, which our producer Josh was very excited about prior to the show. But before we get there, Thomas, we need to talk these jobs figures. It wasn't a good report today. ADP private gauge of payrolls down 33,000 versus an expectation of 95,000 jobs gained. We do see that tomorrow's report for non-farm payrolls only doing at 110K, which would be deceleration from 139K. The unemployment rate due to increase to 4.3% from 4.2%. Although that really should be the least surprising aspect of the report. The prior month's unrounded figure was 4.244%, so literally 1,000th of a decimal higher, and that thing gets rounded up to 4.3 anyway. It's right on the line. I digress. Wages still firmish. And quite frankly, is this a jobs report? Are we in the realm where the Fed would say, okay, yeah, not a cause for concern yet? I would say so, because if we want to keep the unemployment rate at 4.5% or lower through the end of this year, which would still be very, very healthy, you're talking about an economy that only needs to add about 40,100 jobs per month. So, Thomas, yesterday on the show, we reviewed this particular set of data, which showed that when you have a rebound in the form and function that you did in the first half of the year, being down by 8% or more only to close the first half green, the only two times in history thereafter where the market did not finish out the rest of the year in the green was because of recessions in 1957 and 1990. So it feels like this jobs report may be overlooked. No one's really talking about it. We're all thinking about the long weekend. And yet the critical piece of information to determine whether or not the stock market keeps going is very much the story from 2023 and 2024. Are we just muddling through? Are we powering forward? Do we not need imminent rate cuts? Tomorrow could be the range of estimates is starting to get a little bit wider, in part because of today's ADP data. So I would think that this actually may be one of the more important non-farm payroll reports of the year.
Yeah, I mean, the market's already started to price in a more aggressive rate cut path than the Fed has telegraphed. So, I mean, we're already, priced in for more rate cuts than what the Fed is saying. And the equity prices are reflecting what, the bond and the SOFR futures are saying. So, I mean, I think I said this last week, but a slightly soft jobs report to inline expectations is probably the best scenario for a risk-on reaction from the market. Today we brushed off the ADP numbers pretty quickly, and that makes sense because the correlation between ADP and NFP just isn't that strong. And we also got some positive news on the trade war front with the Vietnam trade deal.
Yes.
So that's showing that, there's at least some progress being made, even though Vietnam, isn't as large of a trading partner as some of the others we're trying to negotiate with, but showing that there's progress being made. So that's giving, a little cookie to the market. And shaking off these numbers, I think it's, it's risk on. It's good for sentiment. It's showing that, still resilient bullishness in the market. But then again, light volume, can be seen as somewhat of a low conviction if you're moving up on light volume. So I think it's, for me, I'm dipping my toes a little bit in equities by getting long Tesla, but I'm still keeping money on the sidelines for when volatility increases and you could expend your capital in a more efficient way.
We are barely 0.25% here from these all-time highs in the S&P 500. You mentioned it being a low volume day. It is a very slow and steady kind of day. 634,000 contracts traded here in ES. That's as light as it gets, Thomas. That's not anywhere near our 1 million contracts for a healthy volume session. And yet that is stereotypical of the summer months. Low volume, low volatility, a steady, slow technical drift to the upside. We brushed up against our 1 week moving average today in the S&P and bounced up into new highs, 62.78 and change. That's your all-time closing high that you have here, February 19th. Secondly, 6278.75, so 13 points away from it there. The NASDAQ 100, we've seen a now complete rebound after yesterday's pullback. Maybe that was in part due to the ridiculousness of Tesla coming back in. Another day where Tesla's dinged for politics and the market quickly picking it back up. So you mentioned that you're long here. It's a 4.69% bounce for Tesla. Once again, returning into a low area that we had around the initial early June Trump-Musk tiff. Either way, though, the NASDAQ is up, and it's a decent day for the mega cap names. I think that's worth pointing out here just off the bat. Rotation's not fantastic. S&P is leading the equal weight. Same thing for the NASDAQ. So the breadth could be better. But you talk about Tesla being up 4.3% now. NVIDIA is up 2.4%. Broadcom's up 2.04%. Even Oracle's up 2.64%. So it is a day for tech. It's a day for tech here in the market, Thomas. And when I look at this tech sector ETF, thinking about the broader NASDAQ, for the folks who are painting the last few days of price action as a potential morning star candlestick cluster forming up here, this negates that view almost entirely. There's no continuation or follow through to the downside. And a market where you're holding above your 1 week, your 1 month, both have increasing slopes rate of change against this low volatility. I mean, I don't think there's anything other than to buy the dips and just stay on long until this thing finally cracks.
Yeah, and with tech like NVIDIA particularly, I was surprised to see that it didn't have a negative reaction to the ban provision for states regulating AI being taken out of it. I know that would have been a small win for them, but yet we're still climbing. So I mean, that's what you want to see when the leaders are leading, of course. But I don't know. I was thinking about getting long NVIDIA here. I probably would do it if we weren't right before the NFP tomorrow.
Yeah, that is a consideration as we think about this market. And today's a day where, depending upon where you're positioned, you might be at 23 DTE on some contracts. today's probably the day to do it. Forget the fact that the market's closed on Friday, where that would be your typical 21. Tomorrow, unless you plan on rolling your positions before non-farm payrolls, you are staring down significant event risk that could totally dislodge any gains that you have instantaneously as we, reach the peak of the decay curve. So if you have something at 23 DTE, now is the time to move it. If you were going to move it Friday or move it tomorrow, you might as well move it today. Give yourself a little bit more duration, a little bit more time. Again, the mindset being the typical 45 and 21 out tasty methodology. Of course, if you're a short-term scalpel or a zero DTE trader, this doesn't necessarily apply to you. But I really like the fact, Thomas, that when we look at this market here today and thinking about, either holding on to, retaining, extending bullish exposure, a company like NVIDIA, it broke out to new highs. It pulls back into the former highs set last November, here again in January, very plainly treating that as support in today's session. It's almost textbook in a sense, where you're seeing these, move up, pull back into your 1 week, calm down for a little bit, and then you keep running up higher. And that stair step to the upside, it's, of course, benefiting the indexes. The big names are carrying us to the top side here, 12.3 IVR in the S&P. We'll talk about the metals because the metals are having a good day. And so when we think about sector performance, the metals are near the top of the heap. But semis are the second best performing sector ETF at 1.86%. You're also looking at regional banks, which are performing well. It's another day here out of the regional banks. KRE continuing its breakout, Thomas. Great news for your Russell.
Yeah. We talked about the banks. Here, though? We talked about the banks in our morning article. The Fed stress test, all the banks passed, and now they're, as they do after they pass these stress tests, they usually announce bigger dividends and things like that. So, of course, helping the Russell with that large financial regional bank component.
The KRE breakout is really encouraging, and the Russell Continuous Contract offers perhaps the clearest view that right now this is a market. Maybe it's an inverse head and shoulders pattern off the bottom here, which if it is, we're talking about 2,700 or so in RTY over the next few months. That's an enormous move to the upside. We're talking about something in the neighborhood of 22%. Okay, that would be big. That's not a small call, but yet that's the scope and scale of the technical measured move. Just looking at the chart here, that would pull us into, about 2670 or so. Structurally, you got to be bullish. But for my consideration here is I have had Russell call spreads on. We're pushing up into new highs today. We're at 23 DTE. So do I want to hold on to this position right now, even though it's working? It's in the money, right? The fact is, if tomorrow's non-farm payrolls report provokes a new growth scare, let's say it comes in negative, the Fed's late. Let's just work backwards from our long-standing data series. There are maintenance rate cuts, there are emergency rate cuts, there are recession rate cuts. In the emergency and the recession rate cut scenario, historically speaking, that first month, those first 3 months for stocks are not good. So if the market has to reprice a July rate cut for whatever reason as a result of tomorrow's jobs report, my instinct would be rate cuts for bad reasons, not for maintenance reasons. And that could probably hurt the stock market moving forward. So I don't want short-dated exposure here. I want to keep a bullish Russell position on, but the way this is structured, it's just running out of time. We're running into event risk. It's not worth having on in its current form and function. But something that's more typical or akin to the typical tasty methodology, say 44 DTE, and looking around a similar parameter along the 23 short to 2350, it still provides enough of something there to make it a worthwhile trade. It's a 3-to-1. We could go out a little bit more to get some convexity, if you will. I think I like this closer to the 25% probability of profit. And so I'm going to get out of the 23 DTE. I'm going to go back into the 44 DTE. I still want long deltas on in the Russell. I just don't think it's worth rolling the dice for tomorrow's non-farm payrolls report.
Yeah, I agree with that. And, with an emergency rate cut, you're not saying if they cut in July, that's an emergency rate cut. Would you say that's a recessionary rate cut if the jobs report comes in way under? or say negative. Say negative.
Where are we priced right now? No, I wouldn't call it an emergency pricing because we're already at 23.25%. And so it's, let's call it a 1 in 4 shot. I don't think that the market is dismissing, right? If this was a 2% chance before tomorrow's non-farm payrolls report, and then it jumped up to say 55%, I would think that's the market going from everything's fine to holy cow, we've totally misread the situation. Emergency.
Right. So
yeah, but it would be recessionary, and I don't think that's good for stocks.
1 in 4 rate cut odds right now. A month ago, we were at about 1 in 5 for July.
Mm-hmm.
So that's why I think we're walking a tightening line for the Fed to act on the labor market. I mean, you're getting like job openings this week actually increased. Then the ADP data comes in under. And then you get some more layoff announcements from big companies like Microsoft, which, is an additional round. It's not their initial. They're saying another 9,000. And now we get NFP tomorrow. So it's a pretty big week for these rate cut odds to move. And, that's why, like I said, inline expectations slightly under, probably the best case scenario. What if we come in above? Does that July rate cut go back to 1 in 5 or even under? And how does the market digest that?
Yeah, I got an eyelash that's driving me crazy here. Sorry, folks. If the July rate cut odds drop because of tomorrow's non-farm payrolls report, it's the best thing that you could hope for. In part because we want to see strong earnings growth. We want to see a good round of earnings here for the second quarter. That despite the volatility and the policy uncertainty and the Calvin ball tariffs, we're doing it to stop fentanyl or to restructure, jobs in America and to re-domicile manufacturing, or it's actually to eliminate the IRS and income taxes, right? All sorts of reasons have been thrown out there, none of which would ever come true. But if companies were able to plod through that, muddle through, if you will, keep calm and carry on, then now that we've entered into a world where it's like, okay, it's more stick than carrot, it's really, he's just trying to incentivize a conversation here. He's not actually going to destroy the economy with these tariffs. That's why he keeps pushing things out and kicking the can. Corporate earnings hold up. The economy's in better shape. 23, 24 mindset. The Fed can't give us cuts for the right reason because things are better than expected. And that's not a bad thing. So you want strong data. I think this is a very clear picture here on out. If the deciding factor, as the title of yesterday's show was, second half recession or boom, we want data that suggests we are not heading into a recession. Slowdown, fine. Recession, not fine. I'm working these orders here, Thomas. I'm going to try to get my Russell exposure rolled over. The other position, of course, is the NASDAQ, which is still sitting at 29 DTE. And one would have thought I learned my lesson yesterday with Jamal, but we're still hanging in. So I'm not going to stagger both of the equity positions right now. But I feel pretty good about it either way. I like this hold up here and the fact that, again, we're churning up through former resistance, all-time highs, basically pinning there, holding. It's great. We still have room to run.
This is kind of looking like it's the time for the Russell to have its time, right? Because you're finally in the fold of where you're eventually getting rate cuts. The labor market stays steady. Corporate profits, increase slightly. Banks doing well. And energy kind of the wild card in there for the Russell, since it's also weighted heavily for Russell. But I'm starting to like the Russell more and more as we progress towards these rate cuts.
There were two items of interest that popped up before we turned the page off of stocks. Earlier this week in the S&P 500, we had a technical event occur, what's known as a golden cross. This chart comes from Subu Trade, so I disclaim any liability if the data is inaccurate. But for my spot check when I was reviewing it earlier, it looks right. To this end, the July 1st, 2025 Golden Cross, last time it occurred in 2023, obviously not great for the first few months, but that's not atypical. As you move further out in time, it speaks to an improved technical structure broadly in the market. Okay, bottoming takes time. It's a process. You don't go up in a straight line. So you get your golden cross, momentum's finally reaffirmed. A bunch of people decide, you know what, I'm going to reposition, take some profits. It's been a nice rebound, but the uptrend is very much there. And the longer you go out in time, 6 months later, 9 months later, 1 year later, you're looking at hit rates 88% and north in terms of positive outcomes. Okay, that's one thing. The second thing is that we are in the midst of a holiday period here. And that's not the chart I want. I want this one, which is from Options Jive. Sahil shared this with me yesterday afternoon. There's a bit of a skew around the July 4th holiday. Okay, we typically see a market that has rallied a little bit into July 4th. We could see the mean return. Okay, 0.2%. And on the other side of the July 4th holiday, or the closest day, so this would be our Monday session, July 7th, the typical return has been negative 0.2%. It's been down 67% of the time, whereas the day before the holiday has been up 63% of the time. So putting all this together, Thomas, right? We know July tends to be a great month seasonally, 10 out of the last 10. If you get a good jobs report tomorrow, it suggests that the economy is not falling into recession. We know the market has a tendency to rally this time of year and right before July 4th. Not something to fight. You get a little pop intraday, close your book going into the weekend. But if you get weakness come Monday, roll your eyes at it. It doesn't change anything whatsoever. Sound like a plan?
Yeah, I mean, do you think light volume right now is retail trying to predict a good jobs report?
I wouldn't call it that. I mean, retail's been really active, and I know that it's, dollar cost averaging, yada, yada, but retail's been really active over the past several weeks, and you still have a net short position in both the S&P 500 and the NASDAQ. Not super stretched, but you do see, I think we're in the Z-score for the NASDAQ coming to this week is like negative 0.75 over the past 20 years. And for the S&P 500, I think it's like negative 0.58. So not huge net short positions, but still a market that is net short. And with each passing day, maintaining those shorts is costly. And with each passing day, if you're holding them, not only maintaining the position with cost, but it's markets moving further against you. So there's a greater and greater incentive to just capitulate. We're starting to see signs that it may be occurring as we're putting up into new highs. You see volatility start to tick up, which is volatility being pushed higher by the call buying itself, tail wagging the dog. Not great. But I'm hearing on this ride to crazy town, Thomas, they want to run deficit stats. We want to push the Fed to cut rates. We want to inflate assets. You got to stop worrying and learn to love the bomb at some point.
Yeah, that's a good point.
I think we can make our way over into equity bond markets unless there's something else that you want to discuss here quickly, Thomas, while I get this hair in my eye out of my eye.
Not really. I mean, we got a little bit more insight on tariff impacts. We got Constellation saying the aluminum tariffs are going to increase their cost, and yet the stock is still, a fourth or fifth day up on earnings. So it looks like, the market's still thinking that even though it's increasing costs for these companies, it's manageable and it's, there's an end in sight.
Let's take a look at what's happening with our lovely bond market here today, Thomas. Bonds perhaps eyeing the spending bill from earlier, which if you're following the saga, not that I am, we are finding ourselves looking at a Congress that's currently sending groups of people to the White House to get their palm squeezed by President Trump. That's not surprising because that's typically what happens. They're whipping votes as one were to whip votes. When we think about what's happening here in the Treasury market, though, today, you're directionally neutral in notes wrapped around the 50% mark of the yearly low-high trading range, which clocks in around 111.5. We're getting a little bit closer back to the midpoint. I think that's good news. We don't want to stray from the midpoint when you take a directionally neutral trade. We want this thing to grind sideways and time to tick off the clock. And so getting back to, say, the 1 month here, That seems ideal. I have some things doing here, though, Thomas, because I was sitting at 23 DTE earlier. I need to make an adjustment to my position. I don't want to stare down the non-farm payrolls report tomorrow and risk a big explosion outside of the range. It's only a 21 IVR, but nonetheless, I think it's still a decent enough trade. And so I have a working order to get back in, going out to 51 days, the 108, 109, 114, 114 short iron condor. Again, playing for a trade that basically sticks right around 111.5, and we're back pretty much to that midpoint once again. So I'm not going to, gnash teeth over a 2 ticks here or 3 ticks here in notes. I'm going to try to get in now. Regardless, this has been a trade that's worked all year round. There's been some frustrating windows for a few days in early April, but for the most part, we have been wrapped around 4.35%, 4.25% in the 10s, and I think that's the right price. So I'll keep betting on the price being right.
The dovishness is getting challenged a little bit here in bond prices. I got long ZB yesterday, so not liking today, but I'm going to stick with the position. That June swing high, I think we can get some support there. And, I got plenty of time on this position. It's 51 days out, so I'm going to stick with it definitely for now. I think tomorrow brings a lot to the picture for the rate cut bets, but,
I misread the calendar for what it's worth. There is no 10-year note auction today. The auction was announced yesterday. I completely misread that. So there's no 30-year either tomorrow.
Okay. Yeah.
Mistake.
I was going to say I missed that in the market reports we do in the morning.
I was looking for it right here, and I misread the auction schedule. So,
happens.
like Travis Kelce, keep going, Thomas.
Doing something.
Yeah. Well, go ahead.
Yeah. I'm also long ZN. I'm just going to stick long here. I think more dovishness gets priced into the market. That's been the trend. I'm going to try to play that in the price action.
Well, seeing as how there's no bond auction here today, which is a misread of the wrong column, you look at this move here in bond and ZB, right? Notes are drifting back to the midpoint of the range, but at a certain point, we have to take a stab at guessing whether or not the long end of the curve may be pinned for now. Of course, if we think about the actual dollars and cents of the Trump spending plan, it could require a lot more debt issued. And I know that Fed Chair Powell is not going to lower rates, and Trump's been saying things like we can't issue debt longer than a 9-month term because we want lower rates before we issue longer term debt. I don't know if the market's giving you a signal here today now that this bill's passed and looks like it could very well pass the House, that we're on that trajectory. Evening star candlestick cluster here, Thomas, right up at resistance, these swing highs that you have in early May. We had the engulfing bar just 2 days ago where it looked like we were breaking out. Yesterday's doji, not terrible. Today looks a little bit worse. So the uptrend off the lows is thus maintained. I'm still holding onto my short put spread. I still have my long call spread on. That was rolled out. Tomorrow matters a lot. Tomorrow matters a lot for the bond market, because if we get a break here, you lose everything that we've had off of the panic lows in May.
Yeah, and I mean, the more supply for, if the government needs to spend more, needs to loan more, so more supply in the treasury market, more supply, of course, lower prices. But Bessent said earlier this week, or at least he alluded to it, that he's not keen on issuing long-term debt. So it seems like they're going to try to do it through, shorter term tenures. He said something about the rates don't make sense for issuing long-term debt where they are, and he's expecting, that they'll fall. So I don't know. Did you see that comment from him?
I did. I think Bessent's just saying what he needs to say in order to get Trump not on his back.
Okay.
Bessent's doing what Yellen did. And this is one of the big frustrations that you have in the 2010s is you have the Fed pinning rates near zero. treasury yields are so low, and is the government issuing ultra long debt to take advantage of it? Of course not. So why did we run into this refinancing cliff, right? That Ilya's been talking about, how all this debt now needs to be refinanced in 25 and
COVID
26 because it's COVID money. So we had low interest rates from governments, bond yields are on the floor, right? Mortgage rates are below 3% for the 30-year. Missed that boat, Mr. Westwater. And what did the government do? They're like, okay, yeah, let's issue 5-year notes. No, go out to 50 years. Go out to issue the century bonds. Take advantage of the environment. Poor fiscal planning.
Yep.
Okay, so potential top here. I'm not changing position, but look, I think that the grind in the notes, there's a great juxtaposition right now. If the Fed is really cutting rates because of a maintenance problem, bond yields can go up. Or maintenance issue, bond yields go up, right? That's what happened in September. Market judged it to be a maintenance cut. The economy was fine. But if it's recession, what are the two places you hang out during a recession? Long end of the curve and gold. Since 1980, best two performing asset classes. So not, a good jobs report tomorrow probably takes some edge here off of bonds. Does it change the trajectory? No, because then the Fed doesn't need to cut for the wrong reason. And a bond market is kept in check. Trump doesn't get his way. You don't reinflate an economy. Could be worse. Gold, silver are up today. Not as much as copper, though. Thomas, there's a growth sheen in this market. You look at the Russell up nearly 1% right now. You see crude oil up 2.4% right now. And you see copper here sitting up 2.04% right now. It's going to be the highest close that we've had since before Liberation Day. In fact, it's going to be the highest close that we've had since March 28th at this trajectory. Is this a sign that trade wars, tariff talk, it's all over? Or is there something else in play for copper, which is a commodity that we don't produce nearly as much as we consume?
I think a lot of it's the trade war headlines. We've seen copper really make moves, strong moves on headlines for trade, and the Korea news definitely gave a boost to prices this morning. But it's been in a good trend, and we had that, if you look at the 4-hour, 8-hour kind of bull flag preceding this this move higher, I think it's a really strong technical chart here. I think I think it's a good long all in the way until you get up to like 5.6, up there around the swing high for March.
It's a 38.1 IVR. Do you think, when you look at gold or silver right now, the volatilities really have come in. So selling, if you're going to be bearish, for example, selling a call spread, I always find that to be a very difficult pill to swallow in the precious metals. Would you sell a put spread here with a 38.1 IVR in that neighborhood, right under recent lows near, say, 5? Or would you look to buy a call spread of something of the sort up near the yearly highs closer to 5.4 or 5.5?
I mean, I think you could do either. The call spread, you're getting almost even 1-to-1 odds at the money for 55 days out. The volatility, it's kind of been, it's not too high, it's not too low, so you could kind of structure it any way you want. If you put a put spread around, recent technical levels, it can make you feel better, I guess, if we get a directionally neutral move. I was looking at selling or buying a call spread this morning, just right near the money. You get, the 5.2 on 5.22, you get 50% POP, and you're risking 112 to make 137.
The short put spread side of this, if you go out to 55 days and we think about the recent swing lows down near 5, right? You have this range top right near 5. And then a few days back on June 27th, you can kind of see here, we're just going to pull this up. Okay, here's your guy near 5. We'll go to the 4-hour time frame. Right. This is the candlestick I'm thinking about. That low is 5.021. So if we wanted to give it a little bit of breathing room here and go 10 cents wide starting at 4.95, this is a 68% probability of profit, Thomas. 2.5 to 1. It's not a bad way to express a bullish point of view right now if we think the metals still have some room to run. At least the growth story in market still has some room to get run. Industrials, banks, consumer discretionary, tech. Those are not the hallmarks of a market that's worried about growth. Copper up, oil up, silver prices up. Not exactly the sign of a market that's concerned about growth. Let's keep riding the rocket, Mr. Westwater. Silver prices here back in long, which is working out neatly today. I still don't have anything doing on in gold, but with that pullback to the 1 month here and this beautiful hold of that former zone, October high, March high, we're scooping down into here up against the 1 month, and we're kind of carving out a series of higher lows now recently. This kind of feels like a spring that's coiling, and as a long-term silver bull, I had to just get back in. So I myself am back in long the 38.39 call spread here. That's published to the Tasty Live follow account. Growth seems good. Gold would not be the place to be if we're in a growth mindset for the commodities.
Yeah, I am long silver. I'm long the call spread 37.25, 37.5. I'm going to stick in it. I got 26 days left. I might roll it next week. But I agree. I think silver is the place to be between the two right now.
What's your take on the gold-silver ratio at these levels? I know it's been something in focus recently, right, when it was percolating above 100. Certainly it's not that elevated these days.
Yeah, no, it's come in. And where's it at right now? I'm trying to pull it up.
91.70 basically, which is more or less where it was for the first quarter this year.
Yeah. It made that big pop in the early April. We held up around 104 for a while, dropped back down the beginning of June, and now we're lingering, like you said, right near those Q1 levels. Oh no, I mean, I'm not going to do like technical analysis on the gold silver ratio, but we're still elevated relative to, years back. And if you're getting this growth concern, I think silver is probably where you want to be right now. Although gold's not horrible if you're going to get some fear coming into the market on an equity sell-off if NFPs are bad. It's just where's the preferred place to be, and if you're playing it solely on the gold silver ratio, it's probably silver. Gold
Probably
actually,
silver right now.
Yeah. I mean,
go ahead.
No, I was about to say.
To make me look like a damn fool.
Yeah,
you were saying it's going to make me look like a fool recently.
Yeah, I mean, gold's in the middle of its range, from those June highs to the late June low, almost pretty much right at the 50% fib retracement level. I mean, if there was a little more volatility in gold, maybe an iron condor, but I don't think it gives you the best numbers right now.
Not at 22.1. I find myself very frustrated with this because naturally when I, did this on Monday and tweeted it out, gold's chart looks the worst it's looked all year long. It's proceeded to rip like 3%. Worse yet, forget the ego, the abandoning of the position at the end of last week because of the consistent drop below the 1 week moving average, 50-day moving average, 1 month moving average, not necessarily in that order, has been met by now. This one's for the producers, a Morningstar candlestick cluster. So today there is a bit of follow through. We are reasserting ourselves back above the 5, the 21, the 50. That's difficult to ignore, but we are still technically at the midpoint of the range. The risk to reward in getting long here is cheaper than it's been in a while, but it's not fantastic. Getting short here, the momentum's not necessarily with you. We look at the most recent sell signal in MACD from June 20th. What has that produced? A loss of $40, 1%, and we've already started to see it curtailed. Maybe we're just going to run back to the upside again. If it's a situation similar to what happened in April, where forget the actual tariff announcement itself when everything gets slammed April 3rd through the 7th, in the run-up to the April 2nd announcement when Trump was teasing, I don't know what it's going to look like. Is it going to look like this? Who knows what we're going to do? Gold is rallying up on that uncertainty. We just got a Vietnam trade deal today. There's rumors of one with India. If we're going to get a pushback or a deadline extension, it probably runs up until July 9th. Because if they say that we're going to kick the can down the road, that disincentivizes negotiators from other countries to bring forth their best deal beforehand. Just draws things out. So maybe we're going into that window here, Thomas, where there's just like, okay, maybe some of these tariffs are going to go on again. Maybe they're not. I don't think they will. But just in case, let's get on some gold. And you could see here at the end of March into the beginning of April, gold went from $30.75 up to over $3,200 an ounce in about 4 sessions. I've been wrong on this. I'm a long-term bull. It kills me that I got out long only for it to return back to where I entered. But this is a tough spot right at the 50% mark. So I'm going to wait. A good jobs report tomorrow, Thomas, not going to be good for gold prices. A bad jobs report that indicates recession, that's good for gold prices. So if bad jobs data, gold dips, I'm a buyer. Good jobs data, gold dips, we may have to wait for $3,200 an ounce to get long again.
Yeah,
Otherwise, I might just miss
that makes
this swing. I might just be missing the swing.
We always could be missing the swing.
I don't like missing the swing. Energy's firming up here. Dallas Fed Energy survey came out today, Thomas. I was briefly paging through it after Josh very nicely shared the link with me earlier in the chat, and I couldn't help but see that producers are expecting about $68 a barrel for oil here for the foreseeable future. And that's more or less where we are in the futures market right now. It's a 2.49% rally in today's session, but give or take a buck or two on either side of this 50% mark of the post-Liberation Day low, Iran, Israel, U.S. tensions high. We're effectively wrapped around there. So I'm still leaning directionally neutral. Is there a reason why oil is trading to the upside here today, though?
So the EIA numbers came out as well today because they're a day early, or actually they're right on time. Holiday doesn't affect that, but commercial stocks, so excluding the SPR, increased by 3.8 million barrels. So we are about 9% below the 5-year average for this time of year. But a lot of this build was because imports increased. We got imports averaged 6.9 million barrels per day last week. That's an increase of almost 1 million barrels a day from the previous week, which have averaged 6.1 million barrels per day. So we get higher imports, less exports. That's what's really driving this inventory increase. It's not so much domestic supply and demand issues. Otherwise, you'd probably be seeing a negative reaction to that. I think we got an OPEC Plus meeting coming up this week for August, where they're expected to increase production by another 411,000 barrels per day or whatever number they decide. But the Dallas Fed Energy survey, it shows you $68 a barrel they're expecting. So what's their hedging behavior going to look like if you're assuming that is the average and everyone is close to that, even though there was a wide variance of prices. I think it was all the way from 50 to 85. Maybe that was for the year-end target. But if producers were expecting a bigger drop in prices, they'd number one, they'd be hedging some of that activity in the futures market by shorting oil prices, so putting pressure on the futures, so the basis shrinks between the cash price and the futures, so downward pressure. But I don't know. I think after the shock of all of it, this geopolitical premium coming out, you get a market that capitulates. It returns to somewhat of a baseline of where we were before, and you see that on the chart, this huge price spike, and then we come back down in 2 days. But Iran, adding a little bit to that geopolitical premium overnight by making a new law saying their Security Council has to approve any inspections from the International Atomic Energy Agency. Mm-hmm. So that's showing a little bit of hawkishness returning into Iran after this was all settled. So the hardliners in Iran still in control, even though the conflict, the war has, it's leveled off for now. It's a ceasefire. but things could pop off at any moment again. Probably not over the short term, but these signals coming out of Iran looks like the hardliners still very much being hardliners. EIA numbers not dissuading some buying today. Oh no, I think around 70. If you get up there, I'm long oil myself. I have a put spread on at 61.62. We're trading at 65, 44 days out. I'm going to hold on to that for now. It's at 21% of max profit. I'll try to hold out, a dollar or two more upside. You're at that 50% mark. I'd take it off.
Talk to me about natural gas prices. This has been a difficult trade, uncomfortable, right? We had a really big bounce last week after it dipped down towards 3.4 and then immediately collapsed thereafter at the start of this week. We did test new lows that we've seen for the calendar year 2025 a few sessions ago, but I think that you and I are in very similar trades where we're looking short put spreads that are effectively, well, we're basically at the floor right now. How are you handling things at these levels in natural gas?
Yeah, so I took off the call side of my condor yesterday on that drop, and I'm holding on to the put spread side at 3.25, 3.3, and that's for the 26 days out. So I'm going to keep holding on to that because I think we've hit a bottom here for now. And I say that cautiously because these moves, if you look at past bottoms, they've been flushed out before. But I also added a micro natty gas contract on the long side yesterday. So I wanted to get a little more bullish than I was on a short-term bounce. And I'm thinking about taking this micro contract off right now, just pocketing that money and keeping the put spread side on to stay long and keep expressing that long view. I think prices just, they got a little oversold. Bearish sentiment got a little bit extreme. And now we are, the shorts have taken their profit. They're taking their profit now. If the move follows through tomorrow and we clear some of those swing lows from May and June, I think we could, go back up to 4.2, 4.1. And that's certainly a place I'd take the put spread off and probably get short at that point.
I'm sitting here right now. I'm riding this out. There's no implication in my view from the non-farm payrolls report. I can't think of a single time when natural gas has moved substantially because of NFP. Maybe something COVID related, but any given month, I'll take the opposite side of that. One of the reasons why I like having natural gas positions on during a non-farm payrolls week, Thomas, because of the lack of correlation, just having something uncorrelated with your stock and bond trades reduces the beta weighted delta of your portfolio. So one of the things that you can do as a trader, if I want to bring my overall risk down, it doesn't need to be closing out positions. It could be layering in a different product with a different strategy, a different time horizon. All those different assumptions then can bring you some sort of benefit. So I'm going to keep with the directionalists, the neutral trading in oil. I'm going to continue with this short put spread here in natural gas. There's now two of them on, actually. So hopefully tomorrow's low holds. Yesterday's low holds. Tomorrow's low, I don't know where tomorrow's low is. If I did, we'd be making a lot more money, Mr. Westwater, right?
Yeah.
Okay.
I mean, if you really quick, if you look at that tail, that was a
Sure.
nice candlestick for getting long there. You hit a bottom, you get the long wick on the bottom. That's it's showing that buyers are stepping in at the low prices and then at least holding some of the gains. But also the Fed survey, 3.66 is the year-end target for natural gas for survey participants. So not much higher, about 16 to 20 cents higher than where we are right now.
Let's pop over here to the dollar, which is losing steam today. There was a remarkable scene this morning on the floor of the House of Commons in the UK where the Chancellor of the Exchequer was crying because Keir Starmer, the Prime Minister, couldn't promise her job in the future moving forward. The country's finances are getting strained. They keep talking to having to raise taxes to pay for stuff. And yet, where's the growth? Post-Brexit disaster, obviously. Not a surprise.
And
So
when
the
you
pound
say
is getting-
crying, that was literal crying. You're not being figurative.
No, I'm not being facetious. I mean, like literally tears on the floor because of how crazy the UK fiscal situation is getting. Okay. But to that point, being an objective observer, you and I, Ilya, Victor, name someone who pays attention to the macro, okay, here on the network. We had a lot of issues with the dollar declining alongside treasuries in April. You don't want to see a currency go down when yields go up. Typically, spot currencies trade around interest rate differentials, largely the 2-year interest rate differentials. So when you start to see like the long end of the UK gilt curve blow out, like the US Treasury curve blew out in April, and then the currency's getting hit, hold on, widening interest rate differentials, but weaker currency. Oh, the market's pricing in a different kind of risk now. And so you see that relationship today. Gilt yields up, pound down, and down sharply, off by 0.76%.
Lack of faith.
I don't have any lack of faith, lack of fiscal faith, even, if you will. Not an issue for the euro, which is off the lows. And broadly speaking, the dollar, which was having its best day since June 17th, is losing a little bit of that steam here again. And so much so that we now find ourselves back below the 1-week moving average, Thomas. We had this bearish engulfing bar, or we might call it a key reversal after that bounce back here on June 23rd. And ever since then, no session has put a close above our 1-week moving average. So perhaps that's one of the characteristics right now of this dollar decline. The momentum is pretty firm at the moment. And if you're going to be trading the dollar on the long side, you are effectively trying to catch a falling knife of sorts. So structuring the trade the way you structure the trade matters. I've been buying out of the money puts here in the 6J, closer to 0068. There's 2 now long put spread trades on in the 6J contract in the tastylive follow account. But outside of that, I've had difficulty calling a top in the euro. It hasn't worked in the Canadian dollar, the Australian dollar. And until that technical momentum breaks for the broader DXY, we're basically trying to catch a falling knife, is what I'm saying. And it's painful. So trade small if you're going to do counter trend trades right now. It's a big sentiment mismatch. But markets can stay irrational longer than we can stay solvent. And certainly they can stay more irrational than a 45 in 21 day out window.
Yeah, I did that. I had a short call spread on the euro. I had to abandon today, and it's the first time the euro's burned me this year. Although I switched my strategy, I was long the euro trades all year, and then I tried to call a top, sell the call spread, and lo and behold, I burned myself. Didn't really take any real signal besides for the price action, trying to call a top, and it did not work.
Did not work. This may not be working. That was nice. You get that little bottom candle here right up against 0068. You get a rally into 007. The yen has an extreme long position in the market still, and the dollar sentiment is so bad. If I'm not going to play anywhere else than the most extreme place if I'm going to do something counter trend in the FX world.
And Chris, did you see this? Because it says Thomas Macy says he has enough votes in the House to block Trump's bill.
I didn't know that.
Yeah. Politico is reporting that.
Is that giving us anything in bonds or notes? Nothing doing? I guess let's see the vote first, right?
Yeah.
You don't need that many. Yeah, my congressman's not happy about this bill because we're not getting a big enough SALT change. All right. We only have 2 minutes left here. We have Truth or Skepticism coming up at the top of the hour. What's next on the calendar for tomorrow? We've talked about it a lot. We said it's a busy day, and indeed it is. There is no 30-year bond auction. Strike that from the record. Yesterday's record, too, and Monday's. Non-farm payrolls tomorrow morning, 8:30 a.m. Eastern, 7:30 a.m. Central Time. We went over the top line before. It is expected to slow down from the previous month. ADP looms large. Should we throw out the reason why the episode's called Ignore ADP, so they say? Since the pandemic, directionally, when ADP misses, non-farm payrolls has tended to beat. And when ADP has beat expectations, non-farm payrolls has tended to miss. I can't tell you why. People have looked into it. Our best scientists are trying to figure it out still. We look to the non-farm payrolls report, though, after that, ISM services. That's one of Ilya's favorite reports, and quite frankly, getting back into positive territory here, into growth territory again, aka not recession. That's the whole ball game the rest of the year. Are we recession or not? This would be a set of data that says no recession so far. Good enough for me, Thomas. Hopefully you have a good holiday. We have overtime later today, so I'll be back with Ilya and Radigan at 4 Eastern, 3 Central. Quick programming note for tomorrow, no futures power hour or overtime. So good luck trading that non-farm payrolls report in the morning. For Thomas Westwater, though, I've been Chris Vecchio. We're taking a quick break here, and it's Wednesday. So you know what that means. Sosnoff, Radigan, Truth or Skepticism, up next on Tasty Live.
Hello, everybody. We're back. I'm Tom Sosnoff here with Dylan Radigan. This is Truth or Skepticism. Dylan, how are you today?
I've never been better. Pleasure to see you. It was real nice to have you in my hometown of Milan a week ago. I hope you had good travels. I don't know. Did you make it home? You look like you're in one piece. You survived the flying.
I'm feeling good. I'm in one piece. Had an amazing trip to your adopted, to the city that has adopted Dylan Radigan, Milan.
Yes.
And we had some fun meals and a great time walking around the city, and spent a couple more days in Italy. And I'm ready. I'm back, baby. Let's go.
It's sort of interesting because I know we got a different topic, but the live trading event that you did was on the same, was with 24 hours after the B-2 bombing in Iran of the U.S. military, which again, it sort of was one of the greatest validations of your never-ending hypothesis that nobody knows anything. Because for sure, if you told anybody that the U.S. is going to do direct military intervention as an act of war inside Iran, you would for sure run some lock limit here, some lock limit there, oil here, futures there. Nothing. It was unbelievable.
Yeah, it's really incredible, and it's a hard concept for people to grasp, especially people that aren't in this business. But after you've been around the block a few times, you grasp it pretty quickly.
Well, why do you think that? I mean, because the reference you used when you were conducting the live trading event was the market response to the first televised war in '91 with the Kuwait situation, and then fast forward whatever it's been, 30 odd years since then, and the market indifferent.
Well, 34 years later, the market response is exactly the same. In 1991, which I think Desert Storm was 1991, the U.S. invades, and it's the first televised war, and we all thought the market was crashing. When I believe it was a Friday afternoon, and on Monday we thought it was crashing. It was either Thursday to Friday or Friday to Monday, but the expectations were the initial response would be the market would open down limit, and it opened up limit. It's so insane, that it was at that moment that I realized, okay, that was 34 years ago. And I'm like, I'm never falling for this again. I'm never, ever falling into this trap ever again. You want to tell me, I've been, since that date in early 91, I've been telling people, I don't care if I told you what the Fed was going to do. I don't care if I told you what the news was, what the earnings were. You wouldn't know what to do. If you had tomorrow's paper, except for the closing prices, but you knew every single bit of information, it wouldn't make a damn bit of freaking difference. And that's where we are today. It doesn't make a damn bit of difference.
And so the other thing that struck me, other than that first aspect, was sort of the scale. When you do these events, and I've been able to go do a handful, like 4 or 5 of them over the years, but when you do these events, they're actually at an extremely high professional quality. You have, I mean, the venue that you had in Milan is a venue that where some of the biggest rock and roll bands in the world perform. You know, it's one of the most famous dance clubs in Milan, a beautiful space. I know the other spaces you go to in London or in Texas or DC or California, or obviously in Chicago. Very big, very, not just big, very professional, very high quality spaces. And very high performance technology and all. You, sure. I guess what I'm getting at is you not so much you. The company invests a tremendous amount of resources. These are not cheap bookings to book the rooms. It's not cheap to fly everybody around the world. It's not cheap to, you know, to staff them and the crews and all the things that come, all the overhead that comes with doing live events. And the company doesn't charge for tickets.
No.
The company doesn't charge a subscription for the feed of content, whether it's you and me talking or you and Tony or the girls, Liz and Jenny, what never ends. What's the logic behind investing such a significant number of a significant level of resources in both live events and streaming content and just giving it away? What is that? I mean, the obvious thing is it's marketing, right? Like we want to get customers for the brokerage and we want to have people that's kind of a stupid question on my part, but not everybody gives away as much as the company. It's not about giving it away. There's not another brokerage, and you're not a CEO anymore, I suppose, but there's not another brokerage executive. And then when you were a brokerage CEO for many years and you're a senior executive at a brokerage now for forever, that is so directly invested in you allocating the time to shake hands and, you know, do all the sort of the holding, kissing babies and all that stuff. Why have you invested so much of yourself, and why have you recommended that your companies invest so many of their resources in giving this away? And it sounds like it's a little bit of a pandering question. I feel a little silly asking it, but it did strike me that that there's a lot of resources that go into this.
There's marketing is, there's a lot of great ideas out there. You know this, Dylan. There's a lot of really smart people, and there's a lot of amazing ideas and amazing technology and amazing businesses and all this. But the success rate is incredibly low. And I don't care how smart you are, and I don't care how great your product is, and I don't care about any of that stuff. The difference between being successful and not being successful, it's almost like if you're a professional baseball player, the difference between, you know, hitting 310 and going into the Hall of Fame and hitting 260 and just being another name in the history books is a couple of bloop singles to right field. And those aren't by accident. Those are earned. And whether it's, you know, beating out a slow grounder, whether it's, you know, hustling on a different kind of play, whatever it is, your ability to differentiate yourself in business, like in anything else, is something that is remarkably difficult, because there's literally millions and millions of businesses, and the number of success stories where you get to be, you know, you build something that's, let's say, $1 billion plus or $100 million plus. I mean, you know how difficult it is. And so, you know, one of the challenges is, how do I market my product? And to differentiate yourself in the marketing world is so hard. And especially, you know, I mean, marketing is something that you can easily fake, meaning that, you know, some people think, oh, we're great marketers. No, I doubt it. Most of the time, I doubt it. There aren't that many great marketers out there. And, you know, our expertise was on the know-how side of the financial world, the trading, you know, we knew how the sausage was made, but we didn't know how to sell the sausage. Mm-hmm. So one of the things that we focused on was to kind of do, you know, we're like, listen, we don't think we can compete in a traditional marketing world, so let's create our own marketing world. And to do that, what we decided right from the start, this is not something that I decided to do in 2025. This is something I decided to do in 2000 when we first built Thinkorswim. Was I'm going to go on the road and, you know, almost like a politician in a certain way.
No, I was very congressional with all the handshake and the baby.
Yeah, and I'm going to be like, listen, I'm I'm going to be everywhere. I'm going to be like poop. Okay, I'm going to literally be everywhere. And so I'm going to build a model based on goodwill. And people said, well, that may work fine if you're running for Congress, but that doesn't work in the world of finance or the world of business. There's no such thing as goodwill. I remember distinctly people just telling me that, Tom, this model is insane. It just won't work. And I'm like, okay, well, thank you for your help. I'm not asking for your opinion. I'm not asking for help. And we decided to build a goodwill model, which essentially is real simply put, it's, I will tell you, Dylan Radigan, everything I know about trading and everything I know about the world of finance. And you could think I'm full of shit. You could think I'm a freaking genius. I don't care. But I'm going to be honest with you, and I'm going to tell you everything I know. And I have spent, 20 some odd years already. Now I've spent 45 years doing this. And it's hard to find people. We used to have people that would be like, can we just pay to sit on your trade desk? This is back in the 80s. Can we sit on your floor? One of my I'll tell you one of my craziest stories. There's a guy that runs one of the largest high frequency firms in the world, Jump Securities. And I'm not going to mention his name, but he's the CEO founder, one of the CEO's founders. Anyway, he's a billionaire now, amazing character. When he was like 20 years old, he said, guys, he knocked on our door and said, listen, I want to learn this business. Can I sit on your floor? Can I just watch your program?
Just sit in the chair next to you and watch your screen, basically.
Yeah, not even me. He's like, can I just sit next to this guy over here? He didn't even know who he was. He's like, he was program trading for us. And he's like, which means we're doing our baskets. And he goes, can I just sit next to him? And I promise I won't, I don't have any money or anything like that. I won't take any of your ideas. I just need to learn the business and nobody will teach me. And we're like, all right, kid, whatever. And now he's a billionaire. I mean, it's just, it's one of the wildest stories ever. And he's built one of the biggest firms in the world. And he's never forgotten us. Like, he's like, we're still, friends to this day. And it's crazy. But that was like the start of goodwill for us. I didn't even know what that meant then. But since we built Thinkorswim and then obviously onto Tasty even more so, it's always been about marketing through goodwill, which is very simply put, I'll help you however I can. And I don't want a dime, but if you're going to be in this business, you're going to trade, use our software. That's the trade-off. That's fair. And you know what I found is that people are really good. People are good. If you give them something and you're real, then they will give you something. And it's been a very fair relationship for now going on the last 25 years. 10 at Thinkorswim and 15 at Tasty.
So that anecdote is something that what I'm thinking when I listen, there's sort of two kinds of relationships in the world. Transactional relationships. I'm going to give you this if you give me this. I'm going to sell you a hamburger. You're going to give me $10. I'm going to tell you it could be favor trading, financial, whatever it is. And then there's what I'll call transformational relationships, where I share a piece of information or an insight with you, and it changes the way that you view the world. Or you share some information with me, and because you share that information or that knowledge or that experience with me, it alters how I see the world naturally from just having absorbed whatever you've offered me. So it's not a transaction, it's a transformation. And most of the business world and even the personal and social world is transactional relationships. I like the way I'll do something for you, you can do something for me, whatever. But the most powerful relationships are the transformational relationships. The most powerful politicians are transformational speakers, not transactional speakers. The most powerful brands are the transformational brands.
I would agree with you, although there are a few weird anomalies, but yeah, sure.
No, of course. And listen, the vast majority of business makes plenty of money doing transactions. It's not, I'm not suggesting that the transactional foundation is not what this is about. I'm just sort of observing that like your offering is more of a transformational offering, which is I will do everything I can to transform the way that you understand money and trading. and then because I'm able to offer you access to that information to help you yourself realize your transformation, you then will naturally want to use the same tools that I'm already using. Because if I can bring you to if I can transform understanding to what it is, to how I view the world being, you or the Tasty methodology, once I come to that sort of worldview, I'm naturally going to want to use your infrastructure.
Yeah, that's exactly it. The only thing is, when you talk about businesses and you want to talk about like the scale of building businesses and things like that, the amount of people and businesses that have been successful in using this approach or who have even tried is minuscule. Like it's a fraction of 1%. Like this is not standard. This is not a standard playbook at all. Most businesses, and if you went down the list of the top 100 biggest businesses in the world, none of them have taken this approach. This is not how you build $1 trillion business. I mean, this is Mark Zuckerberg is not answering
the ultimate transactionalist.
Yeah, I mean, Elon Musk is not answering customer emails. I mean, to a certain extent, Steve Jobs actually did. But when you really look at the powers that be, this is not the way that they run businesses. It's not in the financial sector. I doubt that Charles Schwab or Thomas Pettifree would respond to your would help you out with a vertical spread. I don't even know who the CEO of I don't know the CEO of who of E-Trade even is right now, but if you wrote to Vlad at Robinhood, I doubt you'd get a response on how to do an iron condor. So I don't think that that this is standard practice at all, and I don't think that anybody else in the world of finance even does anything like this.
And so then at the other end of the spectrum, outside of sort of the business world, whether at any size, the most sort of the grandest expression of this was of some version of America at its peak power, I would say. That America at the peak of its power was the ultimate in soft power. That it will give away food in Africa, we'll build schools, we'll build roads, we'll give away medicine. And in the process of doing that, we'll enroll more and more countries of the world into being allies or enrolled in the American ideals, whatever those even are. But it's sort of the aspirations are very clear and very beautiful of America, however the implementation is. And we've now seen China very actively cultivating that same thing, building hospitals in the Caribbean, roads in South America, schools in Africa. All this, it's no different, right? Where it's like, do you believe in the Chinese way? Do you believe in the American way? Do you believe in the tasty trade way versus whatever? What is your perspective on both the effectiveness of American goodwill and investment of U.S. tax dollars in goodwill relative to the new, more modern, the current sort of transactional thing, which is why should we give anybody anything? They don't do anything for us.
I mean, obviously, I believe America's right now is on a path that's very self-destructive. I believe we're on a path that's very closed, and we're isolating ourselves, and we are destroying 100 years of goodwill. This is one of the things that scares me the most about, the whole Trump aura, the whole Trump philosophy about America first, and about, just closing down everything from our ecosystem to our social systems to everything else about this country. It is the scariest aspect of it, which for some ridiculous reason, I don't at all understand why people don't get this, and why they think that, why they think it's not important if kids are dying of AIDS in Africa, or, or there's people starving in places around the world that can't feed themselves and things like that. It bothers me that they don't think that that's our obligation, and it is our obligation. And it's one of the reasons that this country is as great as it is. It's one of the reasons that we have the strongest economy in the world. It's one of the reasons we have the richest economy in the world. It's one of the reasons we have the GDP that, with only 300 and what do we have, 330 million
50,
people
30,
or 350 million people, that we have a GDP that blows away countries that have 1.6 billion and 1.3 billion. What does China have? 1.3 billion.
Yeah, and even Europe's 450.
Yeah,
Bigger.
I mean, we're talking about, you know, the size of our economy, the size of our GDP, the size of our trade numbers. It's extraordinary, and it's because we've always had the ability to make sure that we are not only just we police the rest of the world, but we also support the rest of the world. That goodwill is the foundation for all our successes, and it's being ripped apart without any concern or conscience right now, and it's extremely dangerous. And I think that, you know, and we're all being incredibly short-sighted because, oh, the stock market's at a record high, so everything has to be great. That's not the way it works. Greed is a horrible, you know, greed ultimately is a killer, and everybody who gets too greedy comes back to earth. One way or another, it doesn't matter. It comes back to earth. We've seen it time and time again, and it's, you know, it scares me.
The thing that I don't think, I was saying this on overtime, and to this end, people talk about how well the stock market's doing. As far as I can tell, the decline in the U.S. dollar has wiped out the total value, the dollar adjusted value of the stock market's advance renders it unchanged. You know, that basically the stock market's rising in a world where the world is saying that the value of the U.S. currency and the relevance of U.S. economic power is in its fastest decline in decades.
This is.
Am I misreading the dollar?
No, I mean, this is very true. But I mean, the one thing I'll say about that is that, you know, Americans are very ethnocentric. We don't focus on the value of our dollar, we you know, relative to other currencies, whereas everybody else in the world focuses on their, because we don't transact in anything but dollars when everybody else has to transact in everything that actually converts to dollars. So I would also say that there is some cyclicality to the price move in dollar. I mean, the dollar has gotten very cheap, but the dollar had also gotten very, very expensive over the last decade. So where is the happy place? It's probably somewhere in between. And the dollar also tends to be a very cyclical financial instrument. So I do think that the dollar has, you know, two-sided potential, and we could easily see it back in a more reasonable range. I don't think the story, I think you're right with what you said, that the dollar has the decline of the dollar has effectively, you know, wiped out some of these gains. But I also think that that doesn't tell the true story. The true story is that the decline of the dollar is a reflection on the decline of our goodwill. And I think the two go very much hand in hand. And it's not all there is to it. But I think that the two, you can definitely see the correlation between the two. And I think that the goodwill aspect of what's happening now, the damage that we're doing, both reputationally and the damage that we're doing, you know, as just in with respect to humanitarian services, it's a horrible thing. We are good people, and we are acting like bad people. And that's because the person at the top is a bad person, period. He's just a bad person. You know, when you're a miserable prick, you're a miserable prick, and there's nothing you can do about it. Like that's who you are. You're just a miserable frickin' prick, and there's nothing else you can do about it. That's just you are what you eat. You are that person, and that's it. And we have to suffer through that.
I'm trying to think of how to ask this question or express this thought. The two ways to incentivize any change in behavior is some sort of a reward or some sort of penalty, right? You know, you're going to be penalized somehow, some deterrence, financial, social, whatever the penalty is, or financial social reward, right? And I think that the issue with goodwill as a way of doing business, whether it's Tasty Trade or the US government, is that the dividends from the investment of goodwill don't come at the same time of the investment in the goodwill itself, that the goodwill is an upfront cost, and that it takes years to harvest that investment. And so it's easy to say, well, to look at the budget and say, well, hang on a second, we're doing 10 events, we're doing an event every month, it's $100,000 every event. Like, I could save $1 million just, or $500,000, just reduce the number of events by 50%, and boom, I just made us $500,000 without any apparent loss in revenue, because the direct revenue doesn't correlate to it. Or I can stop giving AIDS medicine to Africa, or I could stop building hospitals in Asia, in rural Asia, and what's the problem? But then when it comes to actually having buy-in from global partners to conduct, relevant multinational activities in finance or defense or development, they're not there. And when it comes time to find software customers, they're not there. But I just think that the biggest issue is with a transactional relationship, both the benefit and the reward and the payment all happen at the same moment. So it's very tangible, right? I'm going to give you this. If you buy the ticket, you can come to the show. And then I can say, hey, Tom, how many tickets did you sell? And you're like, oh, I sold 1,000 tickets at $50 a pop. And that paid for the whole event, plus we made a profit. Whereas if the event's just I gave whatever Africa $100 million worth of medical, but in exchange, I got control of their mineral rights, whatever. Those are all transactions. Maybe it's better to say, listen, if I give you the $100 million, I want your minerals. If I give you the $100 million, I want your oil. Why is it so much worse to go transactional in the Trumpian fashion than to go transformational, where I'll take the upfront cost on the certainty that over the next 50 years, I can go sleep in any town in the world and get anything that I want relative to money, policy, or opportunity?
Well, time will tell. I mean, but history so far has shown that the approach, the soft power or the goodwill approach has been incredibly successful, and the transactional approach has not been. Now, time will tell this time around, of course, and hopefully the results are, not they're not destructive and they don't take too long to recover from. But that's what scares me the most. If you want to know what scares me the most, that's what scares me the most, because I have probably more experience than anybody in building businesses around goodwill. I mean, I've never seen anybody do it before. At least we've done it twice. And it is, it's something you can't buy. You cannot buy goodwill. You have to earn it. Like it's sweat equity. And I don't regret 1 minute of all the sweat equity that we've put into this, and it buys us, it buys you room, it buys you a cushion. You can disagree with people. There are people out there that say, screw you, I don't like your politics. Okay, fine. But you do respect me. And that's the good thing. And I'm fine with that. And there's people out there that, that are like, I really appreciate that you've tried. Maybe it worked, maybe it didn't work, but I really appreciate that you tried and it was genuine. I think that goes a long way to building a strong, fundamental foundation to any business or any economy. And I'm not so sure you can buy it back. I just don't know that you can buy it back. I don't know that you can flip the cards over and the next day come in and say, you know what, we screwed up. Here's some medicine or here's some whatever. I'm not so sure it's that easy. I don't know if you could get back to trust.
You're saying if you build your business or you build your global political power on the back of 100 years of goodwill or on the back of 30 years of goodwill for Tasty, and then all of a sudden you try to monetize it through a series of sort of crude transactions, and then you try to return to the soft power. But there is no return to that, because the foundation of goodwill or soft power is trust, and
Sure,
and trust is built over decades and lost in minutes.
Yeah. I mean, exactly. I mean, are you ever going to, you know, would you trust Wells
No.
Fargo? Would you trust Wells Fargo if they invited you to a free event?
No.
Of
Right.
course not.
And we all have people in our lives who've lost our trust for various reasons
Of
in our
course.
personal life that we would
Yeah.
never ever
Of
bring
course.
back into our orbit for anything.
Of course. Some people have family members that they feel that way about. Other people have, work relationships, personal relationships. Of course. Absolutely.
Now with geopolitics, it's a little different because it's sort of the realpolitik, right? Where it's like I may hate you and you may abuse me, but I need you, so I'm going to be, whatever I'm going to be. I'm still, it's easier to dismiss a personal or a social relationship than it is a business or a government relationship. But ultimately, I guess the bottom line for me is that the U.S. dollar is where the loss of U.S. goodwill is being reflected right now. And maybe I'm over dramatizing that to your point. It's a cyclical asset. It was too high anyway. So I may be and I'm more sensitive to it because I have a dollar income and a euro cost. So I'm uniquely sort of aware of it in a way that probably gives me a slightly more distorted, obviously a more distorted sensitivity to that. But I do think that the dollar is where it is.
If you ask 99 Americans, where the US dollar is relative to anything else in the world, they would have absolutely no idea. 99.9. Tell me where the US dollar is relative to something else. It's just a nonsensical question. There's no starting point there. You might run into a trader along the way that in the 99 or in the 100 people or 1,000 people, but no, nobody would have a clue. So that doesn't impact, I just don't, that's not enough.
Yeah, just while I've got you, I know we're going to run up on the clock, but a couple of trading related questions, because yesterday the Senate passed the sort of big, beautiful bill. And the sort of underlying premise of the big, beautiful bill is lots of money for the rich. And setting aside, my social, moral opinion of the policies, it does feel like a time where it's going to be a money party, where it's going to be where we're setting up a risk-on environment, a liquidity-driven rally, that it's going to be great for crypto, that it's going to be good for stocks. I mean, and I don't think it's going to be good for America over the intermediate and long term. I think it's setting up a whole set of huge social and financial catastrophes. Honestly, it's catastrophic in my opinion. But I think there's a sugar high that comes off of the back of this piece of legislation that could fuel more momentum, especially in all the risk on assets, whether it's sort of the high beta stocks or crypto. And I'm curious whether you buy into that particular thesis.
I buy into the sugar high thesis more than anything else. I am an efficient market theorist. I believe that this will be a very, I do not think that much of this is sustainable. I think that there is too much bullishness, too much complacency, not enough fear, and this is a sugar high. And I'm very nervous now. More so, anytime that you just, essentially take the let them eat cake approach, it never ends well. And there is under no scenario should we be placing less burden on the wealthy. And I'm wealthy. Okay. So it's not like I'm not, not talking my book, under no burden, under no circumstances should we place less burden on the wealthy and more burden on the poor or at least less wealthy or less fortunate in terms of, how much money they have. And so I do not understand how any of this is good. I feel like it's all also very disingenuous and kind of walks back on a lot of promises that were made, throughout the campaign. I can't even imagine how anybody would have voted for this.
Yeah. I agree. I mean, I agree. The other thing because I was talking to Angeline and Rich this morning in London, I've been doing most of those mornings just as I get to wake up with them and go to sleep with Chris and Ilya, which just explains how sad my life has actually become. That I instead of waking up and going to bed with a beautiful woman, I wake up and go to bed with Ilya and Chris and Rich. But anyway, this is my karma at this point, so I accept it without any complaint. But we were having the discussion this morning. I think Rich and I were, maybe it was Angeline, about a competitor whose name shall not be named is offering a tokenized offering European customers access to some sort of the superstar U.S. stocks like Tesla via a token.
No, on stocks that are not yet public companies. So, for example,
like a SpaceX or something. You're saying
SpaceX or OpenAI, things like that, not publicly traded. There's and only to European customers. It's not legal yet. It is legal. Parts of it are legal in the U.S., but it's never been tested. There's a couple of cases that are currently, in litigation, and so it hasn't been fully run
unresolved.
Yeah.
But I guess what kind of struck me about it though was, are we going to move to a world in the next 5 years?
Yeah.
Where instead of, because I mean, as you know, one of the great fee harvesting fields of the entire financial world is currency conversions, where they basically keep a huge book of currency. They charge everybody this huge vig on the conversion. And then at the end of the day, they just net the spread, which might be 2% of the book, but they're charging a fee on 100% of the book. And it just seems like something where tokenization for currency swapping, yen, dollar, yen, euro, blah, blah, blah. It just seems like the token is sort of ripe to replace currency conversion, or for that matter, that the token is ripe to replace various mutual funds or ETFs that sort of are aggregating US stocks, et cetera, et cetera. And my thought in talking to Rich and Angeline this morning was, this feels like one of those that's like never going to happen, never going to happen, never going to happen. And then everything, like horse and buggy style. Do you believe there's a future in the next, I don't know, in the near future, that tokenization will become the mainstream mechanism for asset transfer across borders and across jurisdictions and across regulatory theaters?
I've been talking about this now for probably 5 years. And, and I don't want to say preaching, but I've been talking about globalization through tokenization and globalization, financial globalization, through digitization. This is just the tip of the iceberg. We've actually looked into multiple offerings ourselves. In the US, it's really difficult. In Europe, there's a little more leeway based on the size of the company, to offer tokenized offerings. I think the secondary market, once that gets resolved, meaning so if you were to buy one of these tokenized offerings, how do you sell it? So there's some issues there. But once the secondary market gets a little bit firmer and it gets a little deeper, and once the number of offerings become, a lot more common, I think it's unstoppable, to be fair.
It's an inevitability.
It's inevitable, yes. And it's inevitable. I mean, at this point, non-public companies that are, still in the private stage that are, selling tokenized stock, depending on how you're securing that, there's a bunch of issues, but taking it to the next level, which is what you're actually suggesting, is 100% going to happen. 100%.
But it's not a trade. You wouldn't. There's no trade. Is that why Coinbase is up so much?
It's why Robinhood's up so much. It's why Coinbase was up so much. It's why these stablecoin stocks are up so much. Stablecoin, just what you said. You want to cut the banks out? Just everybody goes to stablecoins. Let's keep it simple. And you basically you go from 100 basis points down to 1, 2, 3, whatever it is. But you save 97%. I mean, it makes sense. It's going to happen, but the growth of our business is in the derivative space because it's more capital efficient, and none of this is derivative based. So it's not capital efficient yet. So it has limited upside. I think over the next 3 to 5 years, it'll be pretty big.
And then the last thing, which is sort of the correlated but uncorrelated, because I also feel like the transportation tech is going to also have a revolution the next 5 years. That the same way that we're going to get tokenized, that self-driving vehicles will be the standard within the next decade, and that the owner-operated vehicle will be a novelty.
Well, I don't know. I'm not ready to say that the owner-operated vehicle will be a novelty. I am ready to say that you might not be taking a black cab in London or a yellow cab in New York City, or whatever color cabs they have in Milan. I think that there's a very good chance that you're going to see, public transportation, basically Uber, Lyft, whatever, all forms of, just on-demand transportation become self-driving. I don't think that people are ever going to say, you know what, I'm going to take a 60-mile drive in a self-driving Uber to go visit my cousin somewhere. So I think that, it's unlikely to have I think we're decades away from it having a personal impact on people and the way that they move around. But inner city traveling, tourism, business travel, 100%. It's going to change everything.
One interesting counterpoint that I was reading, which is a Malcolm Gladwell point, which was the problem with self-driving cars is not that they're prone to make a mistake and run over Granny or run over the dog or do something like that. The problem with self-driving cars is that they have 8 billion sensors on them, and so they actually never make mistakes. And so if anybody ever runs in front of the car or ever steps in front of the car immediately comes to a complete stop, which eliminates the deterrence aspect. So the reason why children don't play soccer on Michigan Avenue is because they know if they do, they're going to get hit by a car. But if children go play soccer on Michigan Avenue, all the self-driving cars are just going to stop. And that you need the deterrence of crazy Tom Sosnoff barreling down the road, in order to make sure that the roads don't get overtaken by stickball. You could hold up the 405 with a stickball game because all the self-driving cars don't honk. They don't care.
Yeah, like I said, I don't see that. I think you're decades and decades and decades away. I think you're going off the deep end here, Mr. Radigan.
Okay, listen, I had one too many carbonaras.
All right. Anyway, that was a great talk today. Appreciate it.
Yeah, welcome home. Nice to have you back in your saddle there.
Thank you, everybody, for tuning into Truth or Skepticism. We'll see you next Wednesday, same time, 1 p.m. Central Time. And thank you so much, Dylan. See you next week.
It's a pleasure. Always. Have a good week.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. Your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
What is going on, everybody, and welcome back to today's assignment. It is another shorter week in the market, so we got some things to talk about, some things to touch on before the shorter day tomorrow, and then market being closed this Friday for the 4th of July. So before we get into all of that, Dr. Jim, how we doing? How we surviving so far after this insane rip we've been seeing over the last couple of weeks? How we doing?
Man, it's a crazy rip. It's a crazy rip, and it's continuing today in very much a slow, kind of torturous way. The market is incredibly slow today. And, I mean, we've got jobs tomorrow morning. Is tomorrow a half day in the market?
Yeah, I believe. If I'm not mistaken, somebody fact check me on it, but I believe it is a half day. I believe it closes at 1 o'clock Eastern. If I'm not mistaken, go ahead, fact check me. Somebody research that. But I think it is going to be a half day, some potential volatility in the morning from jobs report. You think we get a little bit of a shakeup? You think it might be a little bit muted because of the holidays?
I don't know. You know, that's a great question. I mean, I think a lot of people are kind of, I mean, it appears they've already mailed it in. So it's not, they're not even waiting for the end of the day to mail it in. Like they've already mailed it in, right? So, so the question becomes, you know, tomorrow morning, I think there's going to be a lot less volume than usual, but that doesn't mean that it won't be a big move. In fact, sometimes that means there'll be bigger moves because there isn't all that liquidity to absorb kind of the step-by-step function of wherever the market wants to go. So, you know, I don't know. I mean, it really could go either way. I'm very curious to see what happens. You know, it's always kind of an interesting day when you have like a big economic print, a jobs number, inflation number, whatever it might be, on like a holiday type of day. Obviously, tomorrow is. I'm going to be very curious to see what happens at 8:30.
Yeah, no, we'll see. It is another shorter week in the market. It's July, the beginning of July. Sell in May, go away. I don't know. The market's been really slow. I don't know. From my perspective, things have been really slow lately. It feels like I've been watching paint dry a little bit. You know, VIX has been muted a little bit, of course, not surprised by, you know, us trading near all-time highs. But sell in May and go away. What does that even mean to you, Dr. Jim, before we get into this segment? Things are a little bit slower. Is it because we're at all-time highs? Is it because volatility is just lower? But that's what it's been feeling like.
I mean, that's kind of the old, that's like an old market adage, the whole sell in May and go away.
Yeah, that's from your
repertoire. Yeah. I think it has to do with, you know, most of the stock market returns tend to be concentrated in the first 4 to 5 months of the year. And then I think generally speaking, the summers tend to be kind of slow. And then the fall is usually when a lot of volatility can arrive if it is going to arrive. And so I think that's the basic kind of premise and the idea behind that. I mean, I think the research team has actually looked at that. So if people are out there and they wanted to see the actual data on this, because you and I are just kind of talking, from the seat of our pants here. But if you wanted to actually take a look at it, I think if you researched or Googled, I should say, market measure sell in May go away, or options jive sell in May go away, I think the team has already looked at this. And so you could check out the archives and maybe learn a little bit more about it. But I think it's just based on the concentration of returns kind of being in the first half of the year. Oh, you're muted. Oh,
there you go.
There we go. Yeah, so I think that's the basic.
Yeah, all I was saying is whoever said they sold in May lied, because we're at all-time high. Somebody definitely bought. So debunked, right?
That's 100% true. Oh, that's a good point. I mean, somebody's got to be somebody, right? Like somebody's out there.
Yeah.
Oh,
No,
so funny.
We can go ahead and start jumping into this platform. I want to show you some of the things I've been looking at. Also want to get into Disney a little bit. That's kind of been the talk of the week. I know Disney's been in a lot of the headlines because of the rescue mission that they were on with the people going overboard earlier this week. I've been still seeing a lot of headlines coming in throughout the rest of this week, but I mean, it's still not helping my put position. I'm very glad that everybody is okay and safe. Did you hear the headlines about what happened at Disney in the cruise ship?
I didn't actually. This is
really
to me. So yeah, brief me on the situation. I don't even know what you're talking about.
Yeah, chat. Feel free to tune in, and I hope everybody's doing well. Hope everybody's been having a great trading week. But so there was, I believe she was 6 years old, fell overboard on one of the Disney cruise lines, fell overboard, and then the father immediately jumped in, out of the cruise. And then he had to tread water and found his daughter when he jumped in, treaded water for about 20 minutes. They stopped the ship. Something that's really interesting is they have something called a MOB system, a man overboard system. And I believe it detects when somebody goes overboard. Another piece of technology I was learning about talking about these cruises, but they stopped the ship, was able to drop down, go on one of those little mini boats and go rescue them, find them, and deliver them back to the cruise ship. But just crazy, because whenever we find headlines where people are falling off of cruise ships, it usually doesn't end too well. Also, it's very difficult to find people out there. And then number two, jumping in there after your daughter instantly, I mean, is insane, because both of them could have went away, and then also just finding your daughter. So it was just a crazy headline story, like him jumping in after his daughter, finding him, treading water for 20 minutes, coming and picking him up. And that's what's been going on in Disney. If you've been living under a rock, Dr. Jim, it's been a pretty crazy headline.
I guess I have been under a rock. I'll tell you.
Yeah.
My hat's off to the father, 100%, because, I mean, as a parent myself, I
can't imagine.
The visceral.
I'm not even a parent. I'm not even a parent.
No, the visceral reaction is you're jumping overboard immediately.
Right.
He probably didn't even hesitate.
Yeah, because if she goes, I go. Might as well.
Yeah, of course. And so, man, my hat's off to him for not hesitating and getting out there, and and then waiting for obviously the mob system to come and get them both. And so, no, it definitely could have been. It could have been a whole lot worse. But man, wow, that is a crazy story. I can't believe I missed that.
Yeah.
So, yeah.
Pretty big headline. That's what's pretty much been going on with Disney. Disney's been rallying to the upside ever since. I mean, I know I've had that put in there for quite some time. 16 days left to expiration. I mean, unless something crazy happens with Disney, that's not coming back in my favor. So I'm just risking the debit that I paid for that. Other than that, got a little bit of the micro NASDAQ. We have a little bit of a short position in there right now. Going to be looking to manage that. Market's been so slow, actually, Dr. Jim. So as you can see with the P&L on the micros, I mean, it's been fluctuating from like plus and minus $30 for the last couple hours. I mean, the market doesn't feel like it's been going anywhere after the rally we put in all morning. So coin sold an out of the money call spread on coin, wanted some exposure to the crypto market. Bitcoin's been rallying too alongside this overall market. Got a little short exposure over there. This one I've had on for maybe about a week now. Circle Internet Group. Wanted to get some extra premium out there. Sold an out of the money put spread. Collected about 238. 44 days till expiration. Need more time to let that one cook. Disney, like we touched on, not much we can do there. Just going to be patient. Pay to debit on that one. Netflix sold an out of the money call spread on Netflix. This one's been really slow. Some of these positions are slow, but there is 44 days left till expiration on this one too. Netflix is one where I was just scouring the high options volume page, and I was looking for high option volume tickers, really, especially whenever VIX is so deflated and the market is trading at all-time highs. I'll just go to that options watch list and just toggle through the high IVR and really just pick apart, what's tradable in there. So I found Netflix, wanted to get some exposure to Netflix. Was able to sell that for about 230, 223, a little bit over a third of the width of the strikes. And then we have a few positions on in QQQ. QQQ, I have an out of the money call spread. I threw this one on today. I know we're trading all-time highs, but this rally, this continued rally, not that it caught me off guard, but it's always impressive whenever the market does do that. And because we continue to rally and we're still sitting at these highs, I sold an out of the money call spread, 44 days till expiration. Maybe the market wants to cool off a little bit within that time window. That'll be nice. Put that on in there. And then we have an iron condor as well. We actually sold a put spread, then we sold a call spread. We legged into it. The call side is getting tested right now, 16 days left till expiration. If the market dips within the next week or two, I should be able to take both of those sides off for a decent profit since we're getting close to that expiration date too. So that's the plan for QQQ, but we did get on a longer term directional position on in QQQ. And the only thing that really stands out to me is, I would say, other than letting the rest of the positions just cook and be patient, is Disney. Got my eyes on Disney. That's one that really just got away from me. But does anything stand out to you on your end, Dr. Jim, from what you see over here?
Well, my question is, as far as the iron condor, I'm curious. So you legged in.
Yeah.
Which that makes some sense. Are you planning to leg out, or are you hoping to take it off kind of as a package?
No, I'm just going to take it off as a package. It was one of those trades that I had put on, and the direction went in my favor very, very quickly. So I was like, oh, I kind of want to get on the other side now. Like, those premiums jumped up a little bit. Now I legged into an iron condor. So that's kind of what happened with this one. I'm not going to leg out of it. I'll take both of them off. If it's a scratch, I'll be happy with that too. But I should be able to squeeze a little bit out of it if we do get a cool off period this next week or two.
That's interesting to me that you wanted to leg in, and I'm assuming you legged in, like you sold the call spread on a rally and you sold the put spread on a dip. Was that kind of the thinking?
Yeah, exactly. I believe. Yeah, exactly. And it was one of those where the initial entry, that direction went in my favor a lot quicker than I had anticipated, and I still wanted to hold the position. So I was like, you know what, let me get some extra premium, and then I sold the other side. That's kind of what happened. Didn't intend to do that, but it just happened in the moment. Market moved a lot quicker than expected. The iron condor looked a little bit more attractive 10, 20, 30 minutes later, whatever it was.
Mm-hmm. Yeah. So I'm curious though. So why wouldn't you kind of maintain the same kind of spirit on the way out? So why not think about the two sides independently, much like you did on the way in? I'm not saying that what you're doing is necessarily but I'm just curious why you're kind of shifting the mindset from, on as a package, off as a package, which is normally what we do, but it didn't go on as a package. It went off in pieces. So why not consider taking it off in pieces?
No, I mean, you're right. That's a good point. That's another thing to consider. Could take it off in pieces. Depending on which side the market is closer to, whether it's a put side or call side, I guess I could think about if I want. Well, then that's going to come down to the question of, I can leg out, but it's going to come down to, do I want to milk this anymore? And it's like, I could, this one's further away from my call side, or this one's further away from my put side. It's less likely to test this side. I could leave it on, squeeze out the extra whatever premium in there. So, I mean, it's something I could consider. It's not a terrible idea either, but that's really what it comes down to. More so because it's so close to expiration, is one of the reasons why I also just want to take the capital and start deploying it elsewhere, just clean that up a little bit. So that's the thought process there, and we'll see how it pans out. Shorter week this week, so I might not be able to do anything in there. And I mean, I was looking at the rest of the portfolio. It doesn't look like I'll be making too many adjustments, just forward looking in a half hour on Friday. It doesn't look like there will be too much more adjustments. Really just going to look around to see what other else premium is out there. So if anything else pops up on your radar, you let me know what you're looking at.
No, I definitely will. No, I mean, I like the thinking, and the fact that it is a short week and you don't have that much time left in the strategy. After these two holidays, though, one thing that I guess is kind of nice for us as active traders is the next. I mean, we've got a couple months clear where I don't really think there are going to be any holidays. I mean, you think about August. Well, actually, no. Think about the rest of July and then August.
What Labor Day?
Labor Day is September.
Right.
Okay.
That's gonna
Is
be
the market?
that's the next major one.
Okay.
Yeah, it's like the first week of September. So we've got a clear runway for about 8 weeks or so. So it might be a nice trading environment. Once you get kind of on the other side of this iron condor, whether it comes off in pieces or comes off as a package, I like that. I like the strategy. And like I was saying, it's not really. Doing it one way and then doing it the other way is not necessarily wrong. I was just curious to kind of get inside the old noggin there.
No, I got you. I know one position I'm still kind of eyeing here is that micro NASDAQ. Just to give a quick visual on what's been going on today, as you can see, that P&L is just fluctuating at around break even pretty much the last few hours here. What was your thoughts on the initial rally in the morning? Did it catch you off guard, or was it kind of like, we're all-time high, so it's not too surprising, but wow, that's impressive. What were your thoughts on it?
I'm not surprised by the rally. I am pretty surprised. But the morning was kind of active.
Yeah, it was. It was.
Yeah, the open was not that active. But yeah, like the pre-market was kind of like, all right, there may be a little something happening here. And so I think we may have kind of a back and forth day with, some good opportunities or whatever. And that never really panned out. Like there wasn't really, you can see it on basically any chart that you look at here. It's been very quiet. The rally doesn't necessarily surprise me. But yeah, I think we talked about this just last week. It's like, when the market prints all-time highs, the likelihood that it keeps printing all-time highs is extremely high. The likelihood that it just keeps printing a new all-time high is very high, which, that makes a lot of sense if you just think about where you are, in terms of like being at an all-time high, you just need a new tick and you have another all-time high. So that makes a ton of sense. I'm not surprised by that. I am just surprised a little bit by how quiet things have been.
Yeah, I forget which book I was reading. I forget what they had said, but it's always funny. Like the psychology in a lot of these situations is very similar to no matter in different niches, whatever you want to call it. But in terms of like trading all-time highs, I know we had looked at the data many times before. Because we're always at all-time highs, it feels like. But the probabilities of us seeing another all-time high and when we might get that, the odds of that happening is pretty high. And I remember I was reading a book not too long ago, but it was talking about something when the overall bias is like long or short. If it's like if you don't feel like taking the trade in that direction, at least don't short it, or at least don't long it, or whatever the case might be. And that one kind of really resonated with me because I was like, I tend to do that so much. I was like, instead of looking for shorts all the time, I could also look for long opportunities. So that was also the go in which why I got on a little bit more long delta, and just to be a little bit more delta neutral and just be a little bit more mindful of that too, and have a little bit more of a focus on volatility for the portfolio at the same time. But that's another reason why I started selling a little bit more put spreads too. Like over here in Circle Internet, just to, get on a little bit of long delta too. It'd be nice to capitalize on pops in the market too, not only to the downside.
Wow, look at Circle. Look at that IV rank.
I know.
So wow, the IV
negative 0.4. It wasn't like this when I put it on though.
No, well, yeah. Because Circle's been in play. Circle's been absolutely a monster of a mover lately, and so wow, they must have bring up the IVR chart of Circle. Do circle.ivr.
Oh, right. I forget about the IVR charts.
Wow. Yeah. Look at that. That's crazy stuff. Yeah. So we were all the way up to, over 200 on the IVR. And now it's below zero. Man. Wow. So what change? Crushed. Yeah, and the implied volatility in there, like that's really pretty significant. And so, how is the positions doing? Well, go back to the position tab. How are we doing?
Yeah, here. Let me open this up right here. See if I can find it. I'm not sure. Oh, I'm on .ivr. Let me go to actual. So we had sold this one on the 25th of June. We sold it for about 238, and right now it's trading at about 285. So not being able to capitalize on a lot of that IVR we've been seeing in there. So this one's going to be an interesting one. Maybe we get a little bit of a pop soon. Yeah, maybe we get something in there. But 44 days till expiration left on this one. So it's a little bit of a muted move, but the IVR move is impressive, no doubt.
Yeah, no, it absolutely is. And yeah, that's with that type of volatility crush. I mean, you would expect it to be more. I mean, it's helping you on the position, of course, but because you've really been on the wrong end of it directionally. I mean, it's just it's overwhelming the volatility move, and so yeah. So you got Walmart up, little Walmart action.
Yeah, no, I got Walmart. I got a couple for us to get into. Wanted to get some.
Okay.
It's only right. It's 4th of July. I was looking at some tickers that experience a little bit more volatility, during 4th of July. And, maybe there's a little bit of correlation there, maybe not. But some of these tickers do experience heightened volatility around 4th of July. I got to ask, what do you guys usually do around 4th of July, Dr. Jim? You guys pop your own fireworks? You guys go see some fireworks? What does the family usually get into?
Yeah, we might go out. So my kids all get scared at fireworks. I mean,
Do they really?
Every year is the same thing. They get excited. They're like, let's go check it out. Like, let's go this, let's go that. And we've gone a couple different places, but it's like so loud that they all just want to run back inside. It's so funny. Every year is the same thing. So I imagine it'll be the same this year, but I'll let you know, next week or whatever. But no, we've got a barbecue at friend's house on Friday, so that's gonna be a lot of fun. I don't think we'll be doing fireworks or anything like at my friend's house. But yeah, so my kids are like they like the idea of fireworks in theory. They have a hard time with them in practice.
Dr. Jim, guys, don't let Dr. Jim say this is about his kids. This is straight from Dr. Jim's journal. No,
that's it. That's 100%.
Yeah, no, that sounds like fun though. I know in Colorado things got really dry. We were getting fires, so later end of my years we weren't able to pop fireworks like we used to kind of growing up. Florida's a little bit wet, so a little bit more common to see those things out here. But Target looking like it's getting a little bit of a head start on this rally into the 4th of July. 26.4 IVR rank. Volume is decent, 4 million volume. The liquidity is decent there. Earnings is going to be August 20th. So let's look at this options chain. Not looking too juicy right off of the bat. Not a big Target goer. Target was always one of the weird stores that I would go to just because it didn't feel familiar. Kind of grew up off of Walmart, but I can appreciate a Target though. I can definitely appreciate a Target.
So you want to? So you're thinking about playing it or playing it to the downside? Because
I don't know. I don't know what I want to do yet. In terms of getting long or short 4th of July, I'm looking to lean a little short, not to be a pessimist up to 4th of July. But I'm definitely leaning a little short. I'm gonna check out Costco too, and then Dollar General. So we got a few.
Dollar
observing.
Man, I haven't traded Dollar General in a long time. So Costco, maybe not even ever. So yeah, so Costco. I mean, I love Costco, 100%. I mean, Costco is an amazing company. And so, what's the ticker symbol for Dollar General?
DG.
Okay.
Yeah, DG is looking like the IVR is not very attractive on a lot of these, and I mean, DG is even trading at its highs almost for the year. We had a pretty big gap down on DG. Not sure what happened over here back in August. They took a hit.
And so, wow, 115. That's crazy. So, yeah, I mean, with IV ranks so muted, I mean, you got Airbnb.
Yeah. This one's more traveler kind of tourism stocks, but still very active industry during the 4th of July kind of season.
And so, I mean, yeah. So, I mean, as far as the IV rank is concerned, Airbnb, I think, looks like your best option across the board. The tricky part is open up the trade page again, like open up the whole page. They have earnings coming up in a couple weeks, right? Yeah, August 5th.
Yeah, August 5th.
Yeah, so, I mean, so what's your...
couple weeks, that's a pretty big roundup. Dr. Jim.
Well, I mean...
No, you're right, though. You're right.
Are you...
I mean, that increase in IV. Yeah.
Well, yeah, but when I see this, exact situation, I typically pass. I typically say, all right, maybe I'll do something around earnings, but I'm not going to do something now with earnings in like 4 weeks.
Specifically sell something or...
I'm not going to do anything in there.
Okay.
Because of the implied volatility expansion going into earnings. Now, do you feel the same way? Or are you kind of like, hey,
no,
I still like the time. I like the IV. I'm going to give it a shot.
No, I completely feel the same way. And I'm glad you even pointed it out, because if you didn't, I probably would have came across that and pointed it out later on. So completely in the same boat there.
So that's what makes it tough. I mean, it's July 2nd? That's what makes it tough right now, because there's just so many, there's so many earnings coming up in the next couple of days or next couple of weeks. That
even here
heading into earnings season. I mean, you got booking holdings right there. I mean, it's all booking. What is that?
I mean,
like the booking commercials that I'm thinking of.
It should be. I mean, they're trading on the market right now, and Low liquidity though, 124,000 volume, not very great. Not like earnings isn't July 29th anyway, so we would have scratched this one. But yeah, that one's bookings holdings.
Okay.
We're gonna go to Marriott. Marriott is the hotel I'm sure a lot of us are familiar with. July 30th. Earnings again. Wow. A lot of earnings is gonna be in our way this week.
Yeah, it's tricky, man. It's tricky, you know. So I mean, this is where kind of leaning on the indexes makes the most sense. Even going to some international indexes, even going to like some non-equity indexes. You know, you get into like the beginning of July, the beginning of October, the beginning of April, the beginning of January. They're all basically the same, in my opinion, where you have these earnings coming up. But it can be difficult. It can be difficult to find opportunities that aren't associated with upcoming earnings.
No, not at all. Pepsi, Dr. Jim, don't sleep on Pepsi. They started their pre-rally for the 4th of July.
Well, Pepsi is an amazing product, and I don't know where you stand on that, but Pepsi is, I mean, it's head and shoulders above Coke, and it's not even close. It's not even close. Correct? You're with me on this, correct?
I thought I lost you for a second, Dr. Jim. Pepsi over Coca-Cola? What in the world?
I mean, people always say
a while.
People always say,
like, look at the revenue numbers.
Test, you would know the difference.
Let me look at the revenue numbers.
You give me 20 chances, I'll be 20 out of 20 Pepsi versus Coke. There's no question.
You don't even believe that, Dr. Jim.
Oh, I 100% believe it. I will be batting 1,000 after.
You don't even believe that. No. No. No, Pepsi's been doing really well. I can appreciate a Pepsi. A little, I don't know. It's like chalk on a chalkboard or fingernails on a chalkboard is just what Pepsi's giving. I don't know. Mm-hmm. Does that make sense? Do you see where I'm coming from or no?
Well, are you talking about the actual product or are you talking about this little move in the stock?
No. The actual product. I think the move is impressive. Move in the stock is more impressive than the drink.
I'm not following because you're confusing the senses now. Like you're talking about fingers on a chalkboard, that's a hearing thing. And we're talking about sipping on some Pepsi. That is an amazing, delicious.
Wait, there's a word for that. You're a finance professor, but there is a word for that.
A word for what?
When you give a behavior to an inanimate or something object. I know we got an English professor somewhere in here, but
it's not in this conversation.
No.
Sure.
No, I do appreciate a good Coca-Cola, Diet Coke to be specific. But no, Pepsi's been doing really well. We're going to run into earnings on Pepsi too, kind of like you mentioned. So we're stuck there as well. Coca-Cola is going to have earnings here soon as well, July 22nd before the bell. So we got to learn a lot of earnings to look forward to, at least, Dr. Jim. So we're not going to force anything here. Like you mentioned before, looking at the ETFs, looking at the overall market, we did sell something in QQQ today, so we were able to get a little bit more delta on in the portfolio. But other than that, is there anything else that was standing out to you before we start to close here, Dr. Jim?
Man, not really. Like I said, I mean, right now, I mean, for everybody out there, it's just like this saw. Just like this saws kind of go through. It's tough sledding for individual stock opportunities because of earnings. And so it's like, hey, just leave your powder dry. Like there's going to be so many opportunities when the earnings dates actually arrive. And so, I mean, for me, I mean, putting on a position now with the stock that has earnings in 3-4 weeks, you're making it harder on yourself, in my opinion, because you've got the vol expansion. It's just going to be a more challenging trade from start to finish. And so right now, I would just be looking at indexes only pretty much, and then leaving some capital, you know, ready to go for earnings season. I mean, you've got NVIDIA right there, 156. Wow, that's crazy.
156, Dr. Jim. Wow, this is really a sleeper run. I don't know what it is. Early April, that's kind of been our benchmark for like the last few months, though. But early April, what an insane run we've seen in the market since then. It just feels like a different kind of run, though. I know usually when we get to all-time highs, we get a lot more chattering, I feel like, about the market and just from like a social sentiment. I don't get that right now. And we're trading at these all-time highs and these year highs on a lot of underlyings right now. So curious to see how things play out. I'm really curious about the housing market, not to pivot too far, but I'm also curious about how things are going to go on that. And I know I've been seeing more headlines about that too. So maybe it's worth paying attention to real estate underlyings to where we can get some exposure over there too. So that's been top of mind. Other than that, Dr. Jim, anything else before we start to hop onto this 4th of July weekend?
Man,
I just dogs on the grill already, some burgers, man, grill something.
Yeah, 100%. And it's all eyes on tomorrow morning. It's all eyes on tomorrow morning. You know, with the jobs report, like I said, it could be super quiet. It could be super muted. But I have a sneaking suspicion that if we get a number that's like not necessarily close to the consensus number, we might have a pretty active half day in the market. So I wouldn't necessarily sleep on tomorrow. But hey, if you've already got vacation planned, you're already taking the 4-day weekend, just make sure your positions are sized accordingly, and then just go enjoy your vacation. You know, as long as you've got size in check, you don't really have to worry about too much.
Yeah, I mean, I'm looking forward to a shorter week. Again, market's going to be closed on Friday, and then I believe a half day on Thursday. So yeah, shorter week in the market. I would like some volatility just heading into the long weekend. So maybe we get that tomorrow morning. We'll be looking forward to it, adjust some of these positions. But other than that, Dr. Jim, we always appreciate you here in the teacher's seat, getting your insights and perspectives on everything that's going on in the market. Thanks for tuning in. That's going to do it for today's assignment. Be sure to stay tuned for more segments coming on next. Hope everybody has a great 4th of July, and we'll catch you guys next time. Peace.
Peace.
Hello, everybody. We're back. I'm Tom Sosnoff here with Dylan Radigan. This is Truth or Skepticism. Dylan, how are you today?
I've never been better. Pleasure to see you. It was real nice to have you in my hometown of Milan.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Hello there. Okay, well, this is the last full trading day of the week. Tomorrow, of course, it's a half day. Runs from 9:30 to 1, I guess, EST. And of course, Friday's off. So this will be the last show this week, and I'll see you following Monday. And I've got a pretty long list of symbols, so we better get started. Record highs pretty much across the board. Here we have the spider, green. In fact, we've got, all these days here with one very brief little exception. It's pretty much green every day. Of course, the big item tomorrow is going to be the jobs report, which I suppose people will be bullish. We shall soon see. The comp Q, the index itself, in this instance, we tagged on Monday that long line going all the way back to 2023 that I talked about, tagged it right like so. We're matching that level today. Looks like probably a record close high at this point, but we're still under that trend line for the moment. One item very much worth watching continues to be bonds. ZB is down today. TLT itself is down about 0.75%, but as I've said almost every day, this is an important pattern to watch. It's very likely it's going to move a lot either up or down tomorrow. After the jobs report. We're a long ways from completing the pattern, but it's still a very clean pattern and well worth watching. The diamonds are actually a little red at the moment. We got exceptionally close to lifetime high on this. 447 was the peak. Yesterday we got up to 445.97, so I think that's like 1/4% from the high, so maybe even less than that. Just a little quick brain math there, but exceptionally close, but kind of in a wait and see at the moment. SMH, the semiconductor index, is, I think on an intraday basis, might have sneaked just a little above, maybe by a penny or two, its former peak. The lifetime high was back here, way back, a good, almost solid year ago, back on July 10th last year. We have matched that. And this line here, we'll see if we can leap across that tomorrow. It was a big recovery day today for semiconductors that did away with the weakness we saw on Tuesday and Monday. So we're probably looking at a lifetime high close on that one as well. Some individual items within that. Here's AMD, which needs to conquer this gap to kind of shake off this short-term bearishness. 141.81 is the location of the gap. Micron has dropped several days until today, and it has to beat this peak right here, which was the post-earnings high. On semiconductor ON, this is a big old top to it, and there's a gap right there. So I've actually been entering into a short today on this with a stop at 58, which is just above that price gap. But all in all, tech semiconductors having a good day. Here's the cubes, which are up a little more than 0.5%, and looks like probably not a lifetime high close on the cubes, very close to it. The lifetime high close was just on Monday. Now, the big winner today, you may have seen, was a company I've talked about a few times before, Centene, CNC. And this is something I pointed out, and I'd never heard of these guys before, but after the United Healthcare focus from December, I started to look around at different healthcare companies, just kind of curious what's out there. And most of them I'd never heard of. It's just not a field I've looked at. One of them was Centene, which I noticed had this enormous rounded top going back for about half a decade. So I talked about it. I wrote about it a couple of weeks ago also. And it was just kind of hanging out, not doing much of anything. As you can see, just kind of ambling along in the lower 60s. And just like I said, doing nothing at all until last night. And they basically yanked their guidance and have had the biggest crash in the history of the company, down over 40%. Not often you see a big company drop 40% in one session, but there we have it. So another victory there. Well, one victory for the Bears, based on that beautiful rounded top. So that was a good winner. Tesla, as I said yesterday, on this show, I'd say that's probably about it for the selling. Well, turned out to be, that's true. We're up about 5% on Tesla. Our friend, the Fibonacci's there, did their job. They provided support because, ever since this low here back in April, it's just, we've gotten smacked down a few times, but, higher low, higher low, higher low, higher low every time. And the fibs are an important element to that. So now it's probably kind of done with a bounce too, because there's some big old chunk of overhead supply right here. But wasn't a bad guess yesterday that we were done with the selling. Even in this all highs environment, still some short ideas here and there. Here's a few of them. I'm watching the time carefully. We're actually doing okay. We're going to get through this. So here's a few items for your consideration. Costco, COST. And I'm in each of these. I'll just mention the stop loss. Right along 997 for me on that. Dollar General, DG. Zoom in. It's all about this gap. So I think about 120 would be a good stop loss in that one, just above that gap. EAT, which is Brinker International. This one has had a sensational run. We bottomed here at around 20. We got to almost 200, almost a 900% increase in that span of time, but it's pretty richly valued right now, and we're getting close to, or maybe already achieved, roughly a double top. So this was the peak back on Feb 4. We got close to yesterday, starting to stall out a bit here. So that's one idea for you. Fluor Corporation, FLR. In this instance, we had a big tumble and a big recovery. And in this case, strictly speaking, the stop probably should be up at this gap. I'm being a little more conservative. I've got it down here, like so, which is the recent high. So 52 is what I'm using on that one. And just one last idea, HIMS, HIMS. I did a little post about that this morning as well. This one had been on a tremendous tear here. We bottomed on this one at around $3 back in May of 2022. It went from 3 to about, above 60. So what is that? 20x plus, about a 2,000% gain, something large. But since then, it had a hard tumble, recovered, did not beat its prior high, sort of a lower high here. And then recently we had a big gap down. And so I went ahead and shorted this a couple of days ago. And once again, the most liberal stop would be way up here, which is just too far, I think. The second most liberal stop, I think, would be around about there, which was the peak on Friday. I've got it even tighter than that. Really get this on a tight leash, like so, bang. And we've had 3 red days in a row, so that's moving in the right direction. Over in the land of gold, the gold sector XAU, this is still on a long-term basis very elevated. Now, gold's doing well today, miners are doing well today, but this is very high on a long-term basis. And this is a very broad pattern going back about 12 years. So that's worth noting that even from this multi-decade distance, this goes back to the early 80s, you can see this is very rich right now. Even though we might get a day or two here and there of strength. GDX in particular, the ETF, most popular ETF for this, is up more than 1% today. And I would say that I think the breakthrough that the bulls we want to see would be just past this peak at 54.15. As it is now, they're vulnerable at least to this supporting trend line, like so, particularly, like I said, with that long-term pattern. But I'm not messing around with any of this stuff. The one I'm completely focused on continues to be palladium. And this is something I kind of just discovered for myself only a couple of weeks ago, but it's been looking good. First of all, we've got a very nice base down here. We've executed a whole series. I see one that I missed, a whole series of gap ups. So let's just draw that real quick, right like so. And let's change that to green, which is a little bit more appropriate. So just going to tidy this up for you a little bit. So this was a major bottom here. We had a gap up here and a gap up here. And even today, another gap up like so. So very nice trend going. And this got very exciting back here on the 26th, but it burned off a lot of that. Fell, but you know what? It didn't even bother getting as low as the gap. That's how much buying there was. And then sort of shook that off. And today, zwink, up we go to a new recovery high. Added to which, it's not like nobody's been noticing. Look at the volume. Let's make this nice and big. You can see how much volume has increased lately and very steadily too. So that's another good sign. So continue to be long palladium and very enthusiastic about that. But with the report tomorrow, let's keep an eye on interest-sensitive items. There's XLU, whose lifetime high is right there. So it'll be interesting to see if it slips away. And I don't think it's going to break this blue trend line, but it might. So this is worth watching. But more importantly is TLT. As I said, it's down to 0.75% right now. I'm short this. The stop loss at 88.50 for me. And ultimately, the real completion of this pattern would require slipping below 83. Just before we go, Bitcoin is bouncing by a few $1,000. It's near lifetime highs. Could well achieve them tomorrow, post that report. So we've undone yesterday's drop. And in turn, MicroStrategy, MSTR, has also shaken off yesterday's sell-off. And we're pretty much where we were at the peak on Monday for this one. But in a few moments we got left, a couple of odd ones for you. This is the cumulative advances and declines amongst the market. As you can see, we're very, very high right now. The last time we were this high, the only time really we were this high, was back in the summer of 2021. So worth noting. And the other item, which is also a calculated statistic, is something we look at every few weeks. This is the percentage of stocks above their 200-day moving average, which is symbolic of kind of this relative strength amongst all those. And we are quite high on this one too. This is pushed above right here, above, I believe, 60 at this point. So you can see the strength pushing back against that. So we'll see in tomorrow's half day if that strength continues, if we get another lifetime high, which would be very easy if the report was seen as bullish, or if we start to burn off some of these recent gains. So anyway, like I said, today's last day for me, and I'll see you on Monday after all this. So have a good 4th of July, and I'll see you on the 7th. Bye-bye.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
I will pay for the first bar mitzvah that has eggplant parmesan as the primary dish.
Can you throw weddings in? I'm done with bar. I'm done with bar mitzvahs. If you throw weddings, right? If you throw weddings in.
Wait, hold on. Cancel the kiss and Yeti. You're in show now. All right, we got it.
If I got married again, I would have eggplant parmesan as my dinner.
If I get married again, how stupid are you?
Not if I get married again. If I was
exactly
getting
what
married.
you said.
Don't cut that out, Beth, for him.
If I got married again, I would have eggplant parmesan as my dinner.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the last call. Even the S&P is making a new high, as Vanessa Logan would say, up 22.5. NASDAQ up 138. Russell up 26. And the Dow, what's wrong with you? Down 26. Didn't you get the memo? Volatility down 20 cents. Bonds down 23, 114.21, lower end of the mid-range. Bitcoin up 4,000 and change, back up to 110 and change. Sound enough, trying to stay over 110 for the first time in what seems to be about 2 weeks or so. Oil up $1.77. Good cover by the bat this morning, Sadnoff. Hey, and you know what? I'm going to give you a little bit of an honorable mention here, Sadnoff. You said, yeah, I've been closing some of my oil too because volatility's been contracting. And you're right. IV rank was 30. It got up to 36. I don't think you watch as attentively as I do because I'm trading all day long. But it got up to 36. It's down to just under 34. Gold up 17. Silver up 39. That's a bigger move on a percentage basis by 2-1 to gold. And nat gas up 6 cents after basically crashing the last week or so. Let's see what's been moving this market, Sadnoff. We go to the high option volume list. We click on the net change. The downside, it's UNH down 17, flirting with 300 at 309. That's a 5% move lower. Netflix down almost 9. Meta down around 5. GE down 4. And BABA down 3 and change. Your beloved McDonald's down 2.5. On the upside, Sadnoff, MSTR up 28 and change. Coin up 21. Tesla up 12. It was up much more pre-market, only up 12 right now. It got as high as 316. It's 313 right now. TSM up $8 and change. That's a decent sized move. See a little bit of volatility percolating with earnings coming too in a lot of these stocks. That's all I have, Thomas.
been trying to fill an order in UNH. The IB rank in there exploded today, and it's a stock that I thought yesterday I had it in my neutral category, and I didn't trade it today. It was up. It was up like I want to say up $16 yesterday, down 16 today, something like that.
Yeah, maybe even a little bit more. Yeah, I mean, yesterday's high looks like it was around 328 or so, and it closed at 326. It got as low as 311. So yeah, you're spot on. Yeah, you're spot on.
Well, I can't fill anything in there, so it doesn't matter. Usually you can get some fills in there, but
earnings are July 29th. Markets are okay.
Yeah, I know. They're okay for strangles. I tried to do an iron condor. No bueno.
Understood.
Yeah, I finally had to give up. I gave up a lot. I wouldn't do it. I just wanted to put something on in there. I'm behind today. Just want to get some trades on. I did the
you did the 260, 270 put spread, 360, 370 call spread. Sadnov, your short strikes are around the 20 delta, and you were able to get over $3.12 for it. Not too bad. Not too shabby.
The Ivy rank is like got high,
62 or something. Yeah.
Yeah. I don't know why I did an iron condor rather than a strangle, because I could definitely afford the strangle, but I figure I'll just.
I know. I heard you with Dylan. You're wealthy. I understand. Yes.
Very wealthy. Yes.
Yes, you can definitely afford to strangle. Yes, you can. And you can afford to be strangled too, Sal. No, that's the good thing about that. You know what I mean?
Sure. Why not? Well, I didn't think I would get to 50 trades today, and I haven't yet. Maybe we will before the close. Don't know. We're hovering around 45, so I need to get, a few more trades on the board. Yeah, I mean, UNH is the only thing I see that's kind of like, all right, that's interesting. What else you got?
Yeah, I get it. Yeah.
I mean, what else? Is there anything else that's like, that's worth a long shot here? Or to put something on to force it a little bit, something that's been moving around a little?
I know.
No, is there anything?
I can't see it, but I will tell you one thing. I was watching the market all day today, trading the market all day today. It was a much harder sale than it was buy. I mean, we just crept up today.
Oh, I didn't even try to sell it one time today.
Right. You could.
And this morning, I thought the NASDAQ was super weak. And
it most definitely was. I hate it when the Russell's the leader in the clubhouse, but you're right. The NASDAQ was the weakest of the group. I thought yesterday we had a chance to bring them lower. I thought maybe this morning we had a chance to bring them lower, but man, they just have no velocity to anything. A lot of stocks. Your hood, by the way, is back up $6 and change over the highs. It showed pre-market yesterday.
Yeah,
98 change.
One stock that I had on my radar because I thought it was in that like friend zone where it's not going anywhere.
The friend zone, did you call it?
The friend zone was Intel, but there's just not enough juice in there.
Oh, come on, Intel. That's where all good traders go to die, please.
I know. Trying to do something, but I just don't.
Trying to hurt yourself?
There's nothing in there. I like selling. I sell dollar put. I don't like selling 70-cent puts. Let's see what we can get.
Well, sell two, and you'd be selling $1.40 puts.
You can do that. You can ladder it out if you want. Let's see. Is there anything else that jumps off my screen? Let me see. I haven't. No, not really. Man, I've tried. I've been all over the place. I've typed in like 30 different names today. But all right, what else you got for me?
Oh, no. You can't do that 10 minutes into the show and ask, what else do you got for me? Not going to let you. Not going to let you.
Well, I will tell you that I was, my game plan today was not to do anything stupid going into tomorrow. Like, because, I've been in positions before over the years where I've tried to force, some trades going into a long holiday weekend. And I can promise you it's not worth the force.
And it doesn't usually work out for the best.
Yeah.
You're right.
I mean, the biggest position that we put on today was buying bonds and buying 10-year notes. The 10-year notes are the exact same price. They haven't gone anywhere. In fact, let's take a
look. About /ZN?
Yeah, /ZN, but I didn't check out /10Y. Let's see. Oh, it's only traded 1,500 contracts today.
You are correct. It looks like the yields are going a little bit higher, obviously, with bonds going lower.
Yeah, a little tiny bit, not much.
Plus, the first time it seems like it's had a higher closing price than the day before, and what seems like, what is that? 2, 4, 6, 8, 10, 12 trading days, 11 trading days, something like that.
Yeah. Yeah. I mean, these things have been on a nice roll, but okay. So anyway, so I'm not going to touch that. And like you said, you know what? This was kind of one of those days where they finally pumped a little juice back into crude oil, a little juice back into gold, a little tiny bit, nothing much.
No, I think they definitely did. They came for a little bit of the commodity premium today. I think they expanded a little bit.
A little tiny bit. And I think that makes sense going into a long weekend. You never know what can happen. Somebody.
Oh my God, Seth, if you got your Intel puts off, you got stocks moving 5% a day all over the place, and you got to sell Intel 20 puts. Are you proud of yourself?
I just wanted to have some positions on in there. I got like nothing on, so I got to just throw some stuff on all over the place. I'm just spreading the,
I looked up that sweatshirt, by the way, that you're wearing.
No, Vanetta did. She told me. You lied. Vanetta looked it up. She said, I looked it up and gave the information to Tony. You didn't look up anything, okay? You just have your monkeys do everything. All right? She told me.
Hey, it's good to be king. It's good to be king.
She told me. She's like,
underneath the
I'm like,
description,
Tony looked it up. She goes, Tony didn't look up anything. I looked it up.
Underneath the description, it says, this heavyweight terry cloth hoodie. Heavyweight.
It's light.
It's 90 degrees outside. You're wearing a heavyweight terry cloth hoodie.
Okay, if you you're really obsessed with it. You want me to get you one? You want me to give this one to you? I'll do whatever you need. All right? You're a little obsessed. I'm going to wear it probably like now every other day.
You should. Sadov, how many points above the Iran bombing do you think we are on the E-mini S&Ps?
Oh, in the S&Ps?
Or maybe
I
it's
would say
SPX.
they were 59, 70, 300.
You know what? You can't, 310. You can't get,
Oh my God, I'm good.
You can't play games with you. You know what I mean?
Yeah. I got a memory. Don't test me on.
You got a memory. When's your son?
Don't test me on option stuff. Don't test me on markets. You can test me on birthdays. Yeah. I don't know any birthdays. I don't know any birthdays.
This is true.
But you test me on X prices. Yeah, I'm good.
You're too good. My time.
If there was a Price is Right show on prices, like where was wheat trading in December of 1999? I'd be like, what?
The opening price, please. The opening price.
426. Yeah, no, that kind of stuff I'm good at.
You are.
It's the other stuff I have a little problem with. All right. Well, I'm going to take a quick scan here and to see if some of these. Well, you know what? This is just one of these little rotation days. I'm not going to get excited about it one way or the other. There is nothing that just jumps off the screen at me. A lot of stocks that were down yesterday are up today. A lot of stocks that were up yesterday are down today.
Yeah, a little bit of rotation.
Yeah. I mean, I'm looking for stocks that, on a very short-term basis, maybe they get a little bit of a bounce. I don't really know. But a lot of the stocks that I like here, they're really cheap IVR-wise. Like Baba had like a 9, Costco had like a 3 or whatever, 4 IVR.
Yeah.
There's not a lot of juice in there. Like even if you wanted to sell puts, there's not a lot of stuff to.
Yeah, and you're just naming stocks that were high flyers that have come back a little bit here.
Yeah.
And you're looking to right.
Yeah. Now, with respect to Bitcoin at 110, I wish there was something to do in there. But have you seen the IV rank in Bitcoin now? It's like 3.
Yeah. Are you talking about coin, COIN? Yeah. You
No, I'm talking
Coinbase?
about like IBIT.
Oh, IBIT. Yeah.
Yeah, whatever those are, all those stocks.
Yeah.
It's really
it's
low.
an 8. You're right. Mhm.
Yeah. So there's not a lot of juice even in, even if you liked Bitcoin at 110. I mean, I think, from what people have been telling me today, the reason that Bitcoin's up a lot today is it came for a couple of these, stocks that
The fringe players that haven't gone anywhere as of late.
yeah, they come for a lot of the digital asset stocks, which is very possible. I don't really trade much of them, so can't help you there. But
right.
I mean, we got a bunch of trades on today, more than I thought. Probably 10 to 15 opening trades.
Yeah.
6 during what's your assumption? At least 5 in the bonds and the notes, and a couple of other ones I just did, Intel and UNH and things like that. So I think about 12 to 15 trades at a minimum, maybe more opening trades. That's not bad. But I mean, I'm going into this long weekend like you. Very low theta numbers, very low extrinsic numbers, very low capital usage, and very manageable delta. I mean, there's
going
nothing,
into a half day tomorrow too, right?
Going into basically a 4-day weekend.
Yeah.
And I don't have much on the board. And let's see, what kind of volume did we have today?
Even the S&Ps have traded 828. A light day, Sadnov.
So it's a light day, and then tomorrow will be a lighter day.
Yeah, tomorrow we've got Thursday's Thursday's actually a full day for futures trading, right? Half day on Friday, and the stock and options have a half day on Thursday and closed on Friday.
Yes, but it's electronic.
Stocks and options is a half day on Thursday, closed on Friday, and futures are a full day for futures and a half day on Friday.
There is unemployment numbers tomorrow morning, so we're betting on the bonds. I think that's a better bet. Let's take a look and see what the S&Ps are looking like for the opening tomorrow.
Even the S&Ps, I looked at it's only, well, you got 34 handles for July 3rd, Sosnoff.
34 handles. That is probably the smallest. That's the smallest unemployment number. I mean, remember, we've been as high as 90 before.
Yeah.
Usually mid 40s, 50. 34 handles for the opening tomorrow is pretty muted.
Yes. And I think it's reflecting a little bit of the amount of trade that we've had as of late. I mean, we talked about yesterday, 7 million SPY options trading. Today you're looking closer to under 6. So crazy low volume for the time being.
The strangle is 30. Yeah, right there. It's $34 exactly. That's the strangle, and I'm sorry, that's the straddle in the ES options. So ES options are half the size of SPX. If you just want to take less risk, you do /ES strangle. If you want to do the 1 day as opposed to the SPX. You want to do expected move 1 day? Let's do it.
Sure.
Expected move 1 day. We're currently trading at 32.70. So if you go $35 away, that takes you to 32.35 on the puts, and the 63.05, 63.10, let's say.
Yeah, 10 at least. 10 to 15, wouldn't it be?
No, 35.70. No. 63.10.
Yeah.
Sell the 63.10s. Boy, the puts are twice as expensive as the calls.
63.10 is a 16 delta. You've got to go closer to the 05 to 24 delta versus 20 delta. If you go to the 300, 305 is where you should be probably. But yeah, you got looks like a little bit of put skew, right?
Yeah, I'm going to move the strikes around a little bit here. Simon says here. Simon says do this. Simon says do this.
Are you going to do strangle?
Yeah, why?
I'm just trying to get. I want to know how wide you were going. That's all.
Yeah,
if it was an iron,
I'm going pretty wide. I'm going to do it based on price.
SPX volume's pretty good though. A lot of players there.
Yeah, I'm going to collect about $8.30.
You must have moved your put down a little bit. You moved your put to. So
I moved
22.20
down to adjust by price. So I collected $8.30.
By price, you mean the price of the options that you're getting, because you're okay, because your delta is 18 on each side, but you're further away from the market you are on the puts than you are on the calls.
Yeah. So anyway, took a little
Put
overnight
skew. I mean, that's what it has, right?
Took a little overnight shot just to put ourselves in a position where we have something to talk about tomorrow morning. Expected move $35.
You moved the calls up a little bit too.
Yeah, I moved everything up just a little bit outside the expected move. We collected $8.30, which is the equivalent of $415, 50 cents a point.
Right.
So $415, and we'll see how that works out in the morning.
That's all you go to sleep, Sadnov. That's all you can do.
It's half the risk of the SPX, and there's no exercise or assignment risk tonight.
That is correct. That is correct.
Yep. So we're in the game.
You are in the game. You are in the game, my friend.
In the game. That's right.
Make you feel good?
Tomorrow. I guess.
You feel like you pushed it?
No, I feel like it's just something to do. Hoping tomorrow morning for a bond rally, that'd be the best thing for me. A bond rally, and then maybe a small sell-off in the stock market afterwards. That's what I need. Perfect. I think I don't think, based on the close today, there's no buyers and no sellers. I mean, there's like nothing happening. I think you're going to see the same thing tomorrow.
After the number, so you think it's going to be a non-event?
No, I think it's going to be a non-event by the end of the day, by noon tomorrow.
Kidoki. So what if how about the move for tomorrow? What if we get here, let's go through the scenarios. We get an up move. You can fade that in 24 to 48 hours. Does that mean Monday or Tuesday?
Oh, Monday.
And if we get a down move, I'm going to say the same thing. You can fade that on Monday or Tuesday. That's going to be harder for you to do.
It'd be harder, but I'll do it.
And what if we do nothing, Sadnov? What if we just stay here in a $20 range, 20-point range? What happened? What then?
Sit back, relax, and collect your profits. Sit back, relax, enjoy the flight.
I'll take it. Heads I win, tails I win.
Sit back, relax, enjoy the flight. That's all I got for you. All right, we got Chris and Ilya. Let's bring them on. I don't think we have Mr. Radigan today.
Oh, gentlemen. Chris, Ilya. Hello, gentlemen.
Hello, boys.
Tom, Tony.
Where's your Italian sidekick today?
Stuck in Traffico. I think that's
Milan traffic. Got it. You know what? They don't really. London has traffic. Milan, no traffic there.
Really? Bad. I'm surprised.
Yeah, Milan traffic at 10 o'clock at night makes sense.
Yeah, right.
No traffic there ever.
My dog also ate my homework, so.
Your dog ate your homework.
It seems like that's the same universe of excuse, but we're not going to. We'll have to give Dylan a chance to defend himself when he's on air in a little bit.
He better have pictures.
That's funny. I was just going to say he's rushing back from the vet.
Let me tell you something about Dylan Radigan. Chances of him owning a pet, 0. Literally 0. Yeah, he can't take care of himself. There's no chance he can take care of a pet.
That was literally the thought in my head.
Yeah, there's no chance. All right, boys, this is holiday trading at its best. S&P's up 25. NASDAQ up 150. NASDAQ, was so weak pre-market, down 100. We opened this morning, and then up 150. It hasn't even looked back from the opening. It's just straight up. Once the Tesla news came out pre-market, the NASDAQ just rallied and never, ever turned around all day. Apple was kind of the strongest, and then Tesla, they just stayed strong. You think this is good for tomorrow, or what do you think for the number and for the market?
Ilya?
I mean, I think the number is not really that big of a deal. I think if you look at NASDAQ by itself, it basically reversed what it did yesterday. So it's gone on a little back and forth ride, and it's basically where the week's started. S&P is near the highs. We're still kind of hovering at these year-to-date high levels, and my thinking is it's either all going to go down or it's all going to break up, but it's not going to be a kind of one-off news motivated sort of thing. And obviously we have a jobs report. It's a shortened week. Volumes are real low. So if there's an opportunity for something to get jumpy and weird, tomorrow's a great day for it.
Chris?
I don't think the market is positioning right now for tomorrow morning, but tomorrow morning is interesting to me. Good news is good news, of course. We want good news for this stock market right now. We don't want a Fed cut in July. So if the market sells off on good news, then I'll be a dip buyer. But, guys, if this is going to crazy town, we just got to Dr. Strangelove this one. Don't worry. Love the bomb. Strap in.
Strap on.
I think again, the best play for tomorrow, if you're playing it, best risk reward is in the bonds, not in stocks. But that's just my 2 cents. If you had to play something for reversal tomorrow, I'd play the bonds or I'd play the U.S. dollar.
You say play for a reversal. They've been rallying for the last 2 weeks. What's the reversal? That they rally back higher?
Well, they were 116. They got down to 114.5. That's all.
All right, they were 111 10 days ago.
Yeah, I know. I still think a rally in the bonds would be a little bit of a reversal, and a rally in the dollar would be probably the most oversold. As for individual stocks, they're pretty high right here. So I don't know that there's at 62.75. I'm not thinking you want to go home long S&Ps, and the expected move is only $34 in the S&Ps, which is as small an expected move we've seen on unemployment in probably 2 years.
Yeah.
So, I don't think the market's expecting that much on the economic number. So I kind of like the, I like the bond dollar. I haven't been long dollar in a long time, but for a trade, I don't hate it here. And bonds, I don't hate here. The S&Ps, man, they're rich. People are buying the never sold dull market thing.
Yeah, and going into the 4th of July weekend with the cheap gas.
Cheap gas. Well, it's more expensive today. It's up $2.
The oil's up $2. Yes.
Yes.
Not about the pump.
Yes, but you can find it.
A month to roll in.
Where you live, Tony, it's $1.98. Don't worry about it.
Are you kidding me? We're still paying $3.80 out here.
No, that's what it is here. It's the same.
We're in the fives.
That's by choice.
He's talking about super supreme premium gasoline, he's not talking about the
beyond premium, Tony. I don't premiums for peons.
Super supreme for me lords and above. He's not talking about the gas that we get, guys.
I'm not talking about.
He's at like that 93 grade. I'm not selling that like 83 grade gasoline.
Yeah, I'm not talking about
83 grade 10% ethanol. That's where I'm going these days.
Mostly lead, actually.
Yeah, we're not talking Costco gas here. Just so
no. Sadnov's up there in that 93, 95, octane.
Yeah. We're talking. I get my gas pumped for me.
Mm-hmm. You're right about that.
So does everyone in the state of New Jersey. Does that make them the special as well?
No.
No.
Yeah, you guys can't even pump your own gas over there. They're really gouging you. All right, Sadnov, I'm gonna let these guys go. Hopefully,
he doesn't live in New Jersey.
Don't put that on.
Whatever. Hopefully, don't let facts get in the way of a good story, Sadnov. We're gonna take a quick 90-second break and come back. We got more. I'm gonna go get stuck in traffic. We'll be back in 90 seconds. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. As you should be, by the way. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are
just question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing. But.
Last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah.
That's
when does yours get delivered?
50,
you didn't do the sword?
50 grand. And there's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
Going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market. dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
We have a trade deal. It's Wednesday, July 2nd, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Thomas Westwater in Chicago to start the show. Dylan Radigan should be joining us shortly. We're here to take you through the rest of this hour as we wrap up the trading day. Futures market closes at 5 Eastern, 4 Central. If you're on the platform, Tasty Trade, on the website, tastylive.com, welcome. Thanks for joining us. Come over to YouTube. Tell us what you think of these markets. When you think of these markets shrugging off a huge decline in Tesla sales, not as bad as expected, maybe a miss on ADP, appetizer for the non-farm payrolls report tomorrow, doesn't matter. We have a trade deal with Vietnam. Retail stocks doing quite well today. Nike taking another leg up, Apple taking a leg up. It's a good day all around. Nvidia trading higher as well. S&P 500 very close, just so close to an all-time closing high here as we turn our attention to these charts. We're looking at a close for today of 62.75. Thomas, earlier on Futures Power Hour, we noted that the high was 62.78.75, so not there quite yet. For the NASDAQ, it's a resumption of where we were basically to, well, start the week a little bit higher from where we began the week. But racing yesterday's losses overall, a modest session, light volumes, low volatility, continued push to the upside. The big mover, of course, in the equity market is the Russell, which is up by 1.41% and closing at the highest level we've seen here in the RTY U5 contract since March. The cryptocurrency space had another good day where Bitcoin may be breaking out, and we'll have to get to that shortly. Of course, in bonds, we do see a bit of a pullback as Trump's bill meanders its way or snakes its way through the Senate and back into the House, where they are still voting on a resolution, whether or not it can make its way to a full floor vote. That vote's been open for about 2 hours, which is unusual, so to speak, but we'll watch that here during the show. Gold, but silver and copper more so breakout. And a mixed day for the dollar, though good news for Ilya and his short British pound position. Guys, we started off with the day with a market that was looking a little bit weaker, but as the session goes on, stocks firm up. Thomas, I already had a chance to speak with you earlier, so Ilya, before we hand the mic back to Thomas, give us your quick, 1 minute rundown on this equity market move on this NFP Eve.
I mean, probably the most interesting thing here is just the market's sort of autopilot disposition here. It doesn't look like there was anything that really nudged them this way or that in particular. I mean, ADP came, nobody really paid attention. The trade deal with Vietnam, okay, yes, but it didn't really move the overall index in a decisive sort of this is the news kind of way. We're basically sitting at the highs for the year and almost like waiting for what the second half theme is going to present itself to be. And in that sense, the jobs data is, of course, very interesting. So it's almost like the markets are at a kind of starting line to kick off January again. We had our spook, sentiment has recovered, let's try again. And the NFP data is perhaps the first sort of opportunity to really get some second half allocations moving. Obviously, we can see volumes here are very, very low, so it's not like money is rushing to position for the next quarter or two. And so we then end up with this being kind of the first big tell. And as we've been talking about, the disconnect between stock and bond markets is what I'm most interested in, because the bond market is saying that inflation expectations are down, not up, and Fed funds futures are saying the Fed is going to do 120 basis points in cuts through next year, not 75. So somebody here is wrong, and we're going to get a chance to maybe see who that is with this data.
Thomas, we firmed up here a little bit into the end of the session. We're basically going into non-firm payrolls in at least the SPX. If you're looking at SPY as well, these are all-time closing highs.
Mm-hmm.
Do you feel different than Ilya does or than I do about tomorrow's jobs report? Because it seems that Ilya and I have a bit of a disagreement about the importance of tomorrow's NFP figure.
I think it's important. I mean, like Ilya said, there's going to be a theme for the second half of the year. It's, the Fed's going to cut. The economy's holding up just enough to avoid a recession, but keep profit margins aloft. Trade deals are now happening. So there's some exuberance. The thing that holds me back is this light volume, but again, that's to be expected during a short holiday trading week. But positioning wise, I'm holding back. I'm long Tesla, but that's about it for equities. I'm waiting for volatility to expand, for the price to pull back, and then, getting more directional in this market for equities.
I saw an interesting stat earlier today. You mentioned sentiment. I think that's a point worth discussing. The June AAII asset allocation survey came out earlier. Just some of the top line figures here, and this is available from AAII. You can go over to their website right now. What do we notice about this? The stock and stock funds allocation is at 67.5%. That's above average. We see that bond and bond exposure is at 15.9%, which is slightly below the longer term average. And ultimately, cash is basically down 3 points. That's 16.6%. That is below the average. So to a certain extent, it makes sense. If the market was in a chase mode in, we'll call it the second half of the second quarter, trade agreement framework reached with China in Switzerland May 12th and onwards, basically, the market goes into chase mode. It still feels like we're very much positioned in chase mode. And so this, in a certain sense, it's crowded. In another sense, we know where, futures traders stand, and futures traders haven't jumped on board yet. So typically you're going to see the, exhaustion type move once everyone piles in long. Thomas, while we have you here, just a quick look at what's going on in oil prices, because you are a bit of our resident expert. Crude oil's up 2.8% today. Natural gas up 1.73. So Natty's a little bit in from when you and I spoke earlier, but crude oil has extended its gains a bit more. Was there something in the inventory data today that helped spur this on? Something tomorrow that we're looking forward to?
Yeah, it was all imports. Imports increased a lot. Exports decreased. So that's why, you get this stock build. And this comes after 2 weeks of heavy declines in inventories. We're still 11% below the 5-year average for crude oil inventory when you exclude SPRs. And today we're seeing, the backwardation is strengthening between the current contract and the next month's contract. So backwardated about $1.47. That's down considerably from, a couple weeks ago, but you had the geopolitical risk premium in there.
Mm-hmm.
So if you're looking at it from the beginning of the year, we were almost out of backwardation in February. And then all the way until May, we traded around 60, 70 cents. And then this Iran thing really jumped us into a steep backwardation, and now we're still fairly elevated. So when you're this backwardated in the oil market, it's kind of, some people see it as a proxy for physical demand, and that's kind of what you're seeing in the U.S. with stocks 11% below the 5-year average. You got, earlier in the year, I thought there was an artificial, cap on prices from OPEC since they'd increased production. And perhaps we haven't hit that yet, if we will. I mean, we're only trading at 67. Myself, I'm long. I have the put spread on in oil at 61, 62. I'm going to keep that. And, if I was taking a position today, I'd be slightly bullish. So trading up back towards the 70 level, I think. But, a lot of this also has to do with the jobs report tomorrow. If we come in under, that's going to spook the demand side for the market and perhaps push us back down.
Elliot, was there anything that you flagged in today's trading about oil, or is this simply just, as Thomas says, a story of inventories? Because when I look at the scope of today's data, I don't necessarily see anything super inspiring, even if I would suggest the market does have a growth tilt. Banks, industrials, consumer discretionary, copper, silver, the dollar fades over the session.
Mm-hmm.
It felt growthy. Felt like oil had enough of a reason to be there.
I mean, sure, but I think when you look at the price action, I think to Thomas's point, you got a kind of nudge with these inventory numbers, and that was really sort of intraday the catalyst. Now, it's always difficult to unpick, like, did the market want to go higher and didn't because it obviously knows that on the calendar is this event risk, and it's going to wait to get to the other side of the event risk before doing what it was already going to do, just in case the number is something way off sides? Or was it the number that motivated the reaction? Ultimately, it doesn't matter. The market is telling you where it wants to go. But the trigger seemed to be these inventory numbers. And to Thomas's point, crude imports absolutely surged. I mean, we're looking at 2.9 million barrels, almost 3. That's, I mean, we'd have to go back 2 years or so to see something comparable. So perhaps there is a story of demand here, but not exactly even the numbers. I mean, obviously, you wouldn't expect if you'd get a 3.8 million barrel increase in overall stocks that prices would go up. But after the kind of declines that we've seen, you take that in context. In fact, the Challenger job cuts data was kind of a similar story today. We had the smallest number of job cuts for any month so far this year. But also, 2025 has had the most job cuts since 2020.
Mm-hmm.
And that's because they were all stuck in the first quarter, mainly in February and March. So to kind of see normalization at the headline of the inventory numbers, that's contextual. But that imports number is seemingly speaking to significant demand, because that's new. That's offsides. So maybe there's something here, and certainly after the kind of sell-off that crude oil has had, maybe it makes sense that sort of the path of least resistance is a bounce. But I agree that tomorrow's jobs report is a downside risk for this. So I'm not looking to be a buyer. I think the story that the bond market is telling us, the story that the disappointments in U.S. economic data has been telling us, all of that points to everybody but equities having sniffed out some kind of an economic downturn. And that's not a great environment for for crude. It's just a matter of when the evidence appears, it seems like. So, and some of it has appeared already. So I think I would rather be using this bounce as an opportunity to sell, rather, not yet, but once it appears to peter out, rather than something I'm going to be chasing higher.
We're going to take a quick break here. After this, we're going to swap Thomas out, bring Dylan in. I'm going to make a case for why the oil move is why bonds are weaker today. Quick 90-second break. We'll be back here on Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are
just question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing. But
last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah.
That's
when does yours get delivered?
50,
you didn't do the sword?
50 grand. And it's
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
I'm going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you...
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
We're back. You're watching Overtime on Tasty Live. I'm Chris Vecchio in New York, Ilya Spivak in San Francisco. Dylan Radigan now in from Milan. Before the break, we were talking about how oil prices were pushing up today on the back of these inventory figures. I want to make the argument Ilya, the rolling 24-hour correlation, looking on a 1-hour basis between bonds and oil prices. Yesterday at their high, when bonds were trading up at 116.03, the rolling 24-hour correlation between bonds and oil was literally zero, flat. Today at the lows, that correlation between oil and bonds was negative 0.79 on a rolling 24-hour basis. And that makes sense from our fundamental macro view. Higher oil prices, particularly those that climb sharply in a quick period of time can have a shock effect, if you will, into inflation expectations at the long end of the curve. So do we make too much of this? I see a potentially bearish looking set of candlesticks here. I'm not too concerned because we do have that jobs report tomorrow. You and I have talked jobs for a quick minute here, though. Dylan, now that you're on with us, what are you thinking about the jobs report tomorrow? Do you care about it? Does the market care about it? Should we care about it?
I mean, I think this particular jobs report, it seems like, on the margins less than other jobs reports, but you can never, I said this earlier this week, you can never dismiss a jobs report. It is, for my money, the most significant piece of economic data that exists in the United States, full stop. And, I think what we have going for us right now is that people seem to have a pretty good comfort level with whatever the number is going to be relative to expectations. But you can never rule out the possibility that you're going to get a jobs number that's wild. I think the risk right now is that the jobs number is materially weaker than expected because of CEO uncertainty about budgets, because of all the tariff cockamamie in the first half of the year that may have contributed to a slowdown in hiring. I mean, this is totally conjecture. And so there may be a world where the jobs number comes in well below expectations, if only because of the lack of confidence in budgeting, because of the lack of confidence in the cost of operations, because of the lack of certainty of the tariff. Now, obviously, nothing that I just said is not within the totality of all the integrated analysis of expectations. So one would presume that whatever the forecast here is here for the number, that forecast is accounted for that uncertainty. But at the same time, there's a reasonable chance it could be wrong.
The forecast actually is the number that we should pay attention to. Ilya, this is not a great number. It's basically the break-even rate for jobs growth in the U.S., expecting 100. And I just want to make sure, is that right?
I think it's 110.
Okay, yeah, it's 110,000.
That'd be the lowest in 8 months if we hit it on the figure.
Which is interesting because at 110,000 jobs, that does not keep the unemployment rate in check over the next 12 months. But then again, the expectation for tomorrow is to see the unemployment rate rise to 4.3%. I have to say that does not concern me in the slightest, because the last month's unemployment rate was 4.244%, and that didn't get rounded up. But if it was 4.245%, it would have been 4.25% and then 4.3% already. So a 1,000th increase in the decimal, okay, that's the line between 4.2 and 4.3 as of last month. So seeing a slight tick up here is not a shock. But when you get to 110K, we're starting to get into the zone where jobs growth may be at a place where it's not necessarily replacement level, where you're going to get a little bit more pressure on the labor market moving forward. If we think that the second half of the year has to be defined by good news, is this good news that we're getting jobs growth, but it happens to be much weaker than we need to sustain the unemployment rate at current levels?
Well, this is the key question, right? Because I'm going to say this until I'm blue in the face until this actually corrects, but there is a huge disparity between what the Fed is saying about the economy and what the markets are saying. And somebody is wrong. And what the markets are saying is that there's not an inflation concern because the break-even rates in the bond market are back to basically the April lows. And Fed funds futures are saying the Fed is going to do 120 basis points in cuts between now and the end of next year, which is about 50 basis points more than what the Fed is saying. So unless you think it's in the post-May 2026 period, because the markets think, Powell's term is going to end and the president's going to put some lackey in there to cut rates. No, that's not the way that the markets are pricing this out. It's fairly even spread over next year. So you look at this and you go, okay, what is it that the bond market sees? Why aren't they concerned about inflation? Why are they basically telling the Fed, you're not doing enough based on what you're saying, you're going to end up doing more. That speaks to some kind of an economic downturn that the market is envisioning. And although the economy has definitely taken a step lower versus where it was at this time last year and all through the second half of last year, it's not like coming apart or anything. And so Powell's argument actually sounds relatively reasonable. Look, I have a jobless rate, 4.2, 4.3%, and doesn't actually matter. By history's standard, it's not that high. In fact, it's not high at all. Inflation is at 2.4%. Looking at the latest CPI, that's not anything crazy. So why would it make sense to get concerned? Well, in looking at Powell's argument at face value, it's very reasonable. Why jump on rates now? Why do anything? The economy is fine. Why not wait and see? But the markets are very clearly saying, no, that's incorrect. So in that sense, you get a soft jobs number and the market sounds right. Is that a source of optimism? Or is that optimism already all in the market because the market is already tilting to pricing all of this out? Is this good confirmation? I suspect not.
I don't know if you guys noticed today, but the anti-fiat cohort of assets did pretty well. Silver prices here continue to hug the October and March highs, riding that 1 month moving average. They're starting to potentially perk up. But my interest is in what's happening with the cryptocurrencies here, because Bitcoin, very quietly, you only see it in the futures market, but we put in this bullish engulfing bar. We were below yesterday's low. We closed above yesterday's high, where we've been talking about having interest in IBIT because of the technical setup here. That's starting to look like a bit of a breakout right now. And I don't hear anyone talking about crypto. Dylan, the top story right now on Fox Business News and CNBC is about how the House GOP is fighting with itself to figure out what they can do with Trump's bill. And it seems like the fighting is about just how big the deficit's going to be, right? There's no more earnest attempt at actually producing a budget surplus. If who's going to solve this then, right? Like, it isn't to take a step back, big picture on Bitcoin. The dollar's being diluted. The U.S. is on an unsustainable debt and deficit trajectory. Here you have Elon Musk and Doge and Donald Trump coming in saying we're going to fix it, and this is the best thing that we can produce. Who's going to fix it then? Who's going to have a mandate to fix it if Donald Trump and Elon Musk didn't? Why shouldn't Bitcoin be trading higher?
So let me just make sure I'm tracking the logic. You're saying the last hope for non-abusively spendacious American government was the Trump-Musk operation. Is that the first assumption?
I think that is the understanding for a broad swath of the American public that's engaged politically.
So the last hope for sort of to get it under control was a Trump-Muskian sort of Doge-driven intervention.
Let's put this to the chat and I'll read it back. For those people that voted for Trump, right? Did you think that like fiscal restraint was part of the message, right? Was that part of the deal? Right. I mean, that was my perception.
But I think that's a reasonable to high level sort of assumption.
Okay.
And now you're saying, well, obviously that's off the table because you got maniac deficit. You'd think a Democrat was president looking at a budget like this in terms of the deficits and the recklessness and the madness and the absurdity and the preposterousness.
A former Democrat is president. Go on.
Therefore, you're saying that this then leaves the dollar and the sort of traditional currencies more vulnerable than ever to the fruit birdery that is the government. Fair?
Fair.
Thus, non-fiat assets, i.e. Bitcoin, should be more valuable.
Correct.
Mm-hmm. What about the fact that Bitcoin in and of itself is its own freestanding fruit bird and that its very existence is its own uncorrelated exercise in preposterity, or preposterousness might be a more appropriate. I guess to all jokes aside, I'm not sure that my jokes are particularly jokey. It's not clear to me that Bitcoin is any more credible than any other asset. All assets are up, and I think that the whole story is in the U.S. dollar. I think that whatever's going on here, that the real liabilities of everything that's happening is in the continued weakening of the most fundamental financial asset on earth, which is the U.S. dollar. And so isn't that
the Bitcoin story then? Right? Like forget Bitcoin.
It was.
It's the everything story.
How's it quoted though? BTC/USD.
But so that's the whole thing. That's everything.
Even if it's fruit batty, right?
Listen,
Dylan?
they don't call Bitcoin a fruit bird for nothing.
It could be fruit birdier. That's what I'm saying. Like Bitcoin could be a fruit bird, but the U.S. dollar could be fruit birdier at the moment. And think of it, if you think of it like a currency, Ilya, everything's relative. It's just a matter of relativity.
There is certainly a lot to be said for the immense shellacking that the U.S. dollar has faced as being a reason for all things not the U.S. dollar to go up. But given sort of my general conclusion that Bitcoin's fruit birdery is entirely undesirable, I would rather own the euro or the pound or some other liquid, reasonable
dollar.
Yeah, some sort of other dollar alternative. And that's the way I've been expressing that view all year, is basically buying major currencies, all of them, at one point or another. I wonder now if the dollar isn't ready to make a turn because it's been getting absolutely whacked all year long with no respite. You'll notice that whereas both the dollar and bonds and stocks kind of had a uniform sell America terrible crescendo in early April, and bonds have obviously been slower to come back than stocks, but they've both come back. The dollar has not. So in my mind, you're starting to get to a place, maybe, where the dollar is again becoming a risk-on, risk-off type of asset. You're kind of seeing it in the divergence of the way in the way that the dollar is behaving against different currencies. For example, I am right now both long and short against different currencies. I'm long the Aussie, I'm short the pound. Both are working. And that gives you a sort of risk-on, risk-off dynamic within the dollar itself. So my sense is that if stocks give way here, the dollar is going to rally. Not because its yield profile is improving, but because everything we just saw in the second quarter was about this idea that maybe we're going to crash the dollar-based economic order, and then coming to the conclusion that actually, no, we're not. And so if that's the overall conclusion, I don't really want to be long any highly volatile, high beta, jumpy dollar alternatives. I'm happy with the Aussie dollar as a way to get a little bit of a risk on tilt somewhere, since I'm not going to do it in stocks, and see what happens. But my sense is that the dollar is getting ready for a rebound of some sort.
I don't care if this is fake news. Apparently, there's a report from Notice, which says that during a meeting, Trump told members that they want to win their re-election, they shouldn't touch Medicaid, Medicare, and Social Security, to which one Republican in House leadership says, but we're touching Medicaid in this bill. I don't even know if this bill passes, but if it doesn't, right, like some form of fashion something is going to pass, right? So, but Dylan, you say
a bill will pass.
Ethereum's up 8.15%. If this is fruit birdery, right? Don't we just have to learn to embrace it and love the bomb? Go Dr. Strangelove on this thing. If pigs are going to fly like Ethereum, it's up 8.21% today. Rather be amoral and rich than smart and poor, as you said yesterday?
Yeah, I mean, I said it yesterday. I mean, I do believe exactly that. You know, I think the only question is sort of where to get the best bang for your buck. Is it in Bitcoin? Is it in Ethereum? Is it in the NASDAQ? Is it in the Mag 7? Is it in the financials? You know, that's I think the most interesting discussion right now from a purely trading perspective is not up or down or whatever. It's of the things that are going to go up, what has the best risk reward, the highest probability to go up the most relative to the lowest probability to lose value. And I think that's where the most interesting conversation is at the moment. And I don't honestly know what the answer to that question is.
Highly levered coal companies that are going to get a ridiculous amount of tax cuts. Wouldn't that be something that's really crap that hasn't performed well? What am I thinking of here? Here's BTU, Peabody Energy, looking like it's carving out a bit of a bottom. This was just in November after the election, by the way, a $30 stock. It's currently trading at $14.68. Alliance Resource Partners, again, after the election, hits a high of $29.44. So it's not terribly depressed, but about 10% weaker. Arch Resources, this has a big rebound today as well, right after the election. Actually, what's going on here with this chart? Was this purchased out? This was bought out. Oh, I didn't realize it stopped trading. AMR, this is up 13.3% today. But Dylan, that's kind of the point here. Where are the big outperformance in the market as this bill's coming on? You talk about stuff being pumped up, if it's Bitcoin or whatever. Maybe the play is just these beaten down energy companies that have low valuations that now are going to have the spigot opened up for them. I mean, AMR here, look at this thing. This was trading back in the what? 240s around the election. It's now a $120 stock. It's taken a 50% haircut. Why not pump again? I think we should take a look at this, Ilya.
I mean,
we're going to do the crappy things. Let's do the crappy things.
In my mind, it's to want to go do crappy things makes sense.
Not wanting to do them, feeling compelled and have to do
feeling compelled to do crappy things, sure, is a sort of bet on the slow and steady melt up generally continuing, because it is a bet on overall risk appetite being something that broadly survives. Otherwise, people aren't going to be in these names. We're going to a correlation 1 sell-off, and that's it. So for me, what makes this something that I'm not compelled to do isn't that it's not a good idea. It's the timeline. Because to me, the disparity between what stock markets are doing and what bond markets are showing suggests that there's some kind of a reckoning here that's going to become a defining theme for the second half of the year. We just spent the first half of the year basically on a single yo-yo bounce. We bounced down, we bounced up. We're where we started. It's January for all the S&P 500 cares. And so the question now, I think, is, okay, that was fun. What's going to be the theme for the second half of the year? And that disparity between stocks and bonds seems like the place where something needs to click, either this way or that. And then the markets will know sort of generally where they're going. Because a lot of what we're doing here is we're talking about things that are, for the most part, known. I don't think, by the way, that the markets went into this year expecting this administration to be restrictive. I think very clearly there were absolutely no pretensions to the fact that both candidates in this election are expansionists, that one of them wanted to raise the deficit by cutting taxes, and the other one wanted to raise the deficits by increasing spending. I don't think that was lost on anyone whatsoever.
Line goes up either way.
right? So I don't think there's anything shocking in this legislation in the sense that it increases the deficit or that Doge was a farce or that, I mean, I think the markets knew all of these things. And so that we have this disparity between the biggest pockets of liquidity in U.S. markets seems to suggest that some kind of a reckoning needs to come. It doesn't have to be negative, but some sort of a thing needs to get resolved for markets to get on page and define what's going to be the second half of the year in general terms, to set the lens for it, much like the Fed sets the lens for policy once a year at Jackson Hole, incidentally coming up in August. So for me, I think that the disparity resolves in lower stocks and higher bonds and a dollar that bounces and then sells off again, and gold prices that go higher. But who knows? What I'm not prepared.
I got a second half of the year for you right here, Elliot.
Yeah. What I'm not
1998, 1999 again.
I mean, maybe. What I'm not prepared to do is to say that we can with certainty say that at this point right here, we know the way that it's going to resolve, and we know that the environment for overall risk-taking will be good. If the environment for overall risk-taking isn't good, picking names here and there isn't going to matter.
There's just a part of me, and I think, I was talking with Mike Butler earlier today about this, how it's just like the season of like everything kind of feels fake. It's just the season of chase. Those weren't his exact words, but he used stronger language, and I don't want to put him on the spot like this. So we'll just leave it there. That captured the spirit. People are underinvested still. Stock traders are still short. We know that asset allocation people have become very bullish, but those are long-term fund managers. I'm talking about traders, speculators who are trading futures for simply the sake of trading futures to make money. And that lot of folks have been holding short this entire way. We're going to get out on the other side of July 4th here, Dylan. Actually on this chart, this was produced on June 24th, so that puts us basically here on our chart. So let's get a few more days of chop. We could follow this thing into the August, September. We don't have a big pullback, but if we're going to go nuts, why not just lean all the way in? Why not just embrace the crazy? It's going to be like the dot-com bubble. We're going to do tax cuts. We're going to do SALT deductions for the wealthy so that they can take more of their hard-earned money to put it back into the stock market. We're going to get cheap energy because we're going to burn all the coal.
No, I get it, but so you're saying just buy the S&P and keep it simple, stupid. Is that what you're going with here?
I'm compelled to say that because I'm reminded of some of the research we've shown in the past about kind of what trading style is most efficacious depending upon the volatility regime you find yourself in. And just for the sake of that study, it was when you're at 15 or below in the stock market, the best thing to do, both in terms of average daily returns and standard deviation of daily returns, would be to just simply get long stocks in some form or function, buying the index, buying an at-the-money call spread. And right now, the front month expiration has dipped into 14.97. We're below 15. We're back in that territory where you just kind of got to be a numbskull knuckle dragger like I was for so long last year, like you were. We were all for some time last year. It was just like, hey, this thing's floating up. I'm just going to buy the market and not think too hard about it. I know it feels dumb and there's so much noise out there, but Dylan, I think you made a really good point the other day. If you overthink and you react too much to the news, you're gonna drown. And you got to just kind of look at what's on front of you in the screen. And not that nothing matters, but there's incentive. But
just go with the math. If there's more money available, and especially more money available to the wealthy, it goes into stocks and real estate. Full stop.
Goes into stocks and real estate. Full stop.
Maybe some art. I don't know. It's pretty. Maybe a few diamonds.
Art. Well, diamonds are such bad business these days because they can make them jewels.
Some jewels for the lucky lady.
Maybe a new car. I was able to just negotiate a really good deal on a new car. Got them got them to drop down $100 a month by playing 3 different dealers off of each other. Yeah, I feel pretty good about that.
Congratulations. I mean, I guess the only thing is the sort of counter argument to this whole thing, for at least from my perspective, is too late, pal. Like, there's a stock market's already at records. No surprise here. Everybody thought the bill was going to pass. They priced it in a while ago. If anything, by the time this thing clears the finish line, it's sell the news, because the back end of the sugar high is a social and currency catastrophe.
I was under the other impression, or different mind, that the non-farm payrolls report would actually be important tomorrow, because if we started to tilt into this territory where private sector payroll growth, and even if it's ADP and we dunk on it, if it's going to be bounding around in negative territory, it shifts the focus on, can the Fed cut because inflation's sticky, to it's a different type of Fed mistake, right? A Fed misjudging inflation for not being as warm is not as bad as a Fed not understanding that the labor market is weak. So tomorrow's jobs report, right, if we then go back to some of the numbers we ran yesterday, there's 8 occurrences in history in which the market was down by 8% or more at one point year to date, only to finish the first half in the green. The only 2 times where the second half of the year didn't produce gains, 1958 and 1990, years that had recessions coming into the back half of the year. But all the other times, when you have that V-shaped rebound in the first half and there's no recession, the market stays up. So tomorrow's jobs report, right, if it is a soft number, if it's a negative number, I think that scares the hell out of the stock market, because all of a sudden that 23% chance of a Fed rate cut, that's going to get pulled forward. And it's like the Fed may have to cut rates for recession reasons, because can they afford to go all of July, all of August, into September without providing support? Because if they don't, you're basically going, from now until the next September cut is basically a quarter of the 20% of the year. So you're going to run off the clock 20% of the year if you don't cut in July. And that's why we also have to entertain the September 50 basis point cut, because they could really feel like they're late if things percolate. That's one of the reasons why I'm not worried about bonds either.
Yeah, I mean, this is an important part of this. It isn't just that since the June meeting, the markets have been baking out more rate cuts for next year. The probabilities for this year, for July, for September, for October, have become more dovish. The market is very pointedly looking at the Fed and going, you know that thing you said? No.
No. Well, that's why I'm not so worried about bonds tomorrow, because we know the long-term research shows that bonds go best places to hide during a recession. So if it's an exceedingly weak jobs report tomorrow for whatever reason, the metals should be on, decent enough ground. Copper probably not so much, but the metal should be on decent enough ground. And then I would think that bonds are going to be on decent enough ground there moving forward. Yeah. Dylan, I saw a headline today, because this is technically the last overtime episode of the week. A quick programming note. Tomorrow, there's no afternoon Tasty Live programming, so we'll get through non-farm payrolls. You'll have Tom and Tony. You'll run into noon Eastern, and then that's it. There's no futures power hour, no overtime. Dylan, this report makes me feel like either I'm a total idiot or, I don't know, maybe there's a great opportunity around the corner. AI virtual personality YouTubers or VTubers are earning millions. Apparently, there's a few of these folks with millions of subscribers. Folks, what are we doing wrong here that we don't have millions of subscribers, but some AI, CGI folks do?
Novelty, baby.
Dylan, is this one of the flags? Microsoft laying off 9,000 people with no intent to replace them because AI can do all the work. Content creators quickly becoming AI. When should the three of us start to worry?
I don't know that. So here's my thought. Pretty soon, the most valuable thing of the world is going to be live in-person interaction of all kind. Because as AI takes over, I believe the desirability and interest that anybody's going to have in non-in-person content is going to collapse, because people are not going to be able to tell the difference between us talking as we are now in a non-AI form and an AI version of us or of anyone. And so I think it's less about the future of content in the digital form, although I think that's relevant. I'm less concerned about our future or the future of those who sort of do content or entertainment for a living. I think that it's a massive opportunity for all live events. So maybe our future is where we are gathering people together in person, as Tasty already does. But I think that the number one shift here in terms of increase in value for live humans is going to be any person-to-person interaction. And that to me is more certain than the uncertainty of whatever the variable is of, sort of the decay in trust in non-in-person content, because of the fact that basically all news pretty soon will be fake news.
That's so interesting that you put it that way. I've had that same thought independently when talking with people. What's the best way to build off trust with individuals? And it's not by checking the boxes and sharing the same values like online. Although, and I think actually the internet has created these insular communities before everyone has their kooky view, but it's only you, and you say it to your neighbors or the people on the street, and chances are you don't find anyone else that shares that very niche interest or perspective. Now, you could find thousands, millions of people who share that same niche view. But that handshake, talking to people in person, looking them in the face, right? I know this person's real. They're not just a construct on camera, which I suppose is a good pitch for the tastylive.com/events page. We're in person quite frequently. Ilya, yes. Before you go into macro money here, give us a brief preview of what you're discussing today.
Not surprisingly, I'm going to be doing a deep dive on the jobs report and sort of how the tea leaves are laid out before the numbers come out, and really why this matters, and sort of showing the disparity in markets and what that might mean, sort of where we might be off sides if there is regime change macro-wise for the second half of the year, because it does look like the first half of the year had the theme of, wait, this is not the Trump presidency we signed up for. Oh my God, no, wait, it's still okay. And the theme for the next half of the year may well be, right, the dust has settled, where's the economy? And if that's the shift, this jobs data may very well be a crucial first step.
You can catch Ilya immediately after overtime. He's on Macro Money, Monday through Thursdays here on Tasty Live, 5 p.m. Eastern. I'll be back later on as well with Victor Jones for The Price of Truth, 6 p.m. Eastern, so be sure to tune in and stick around for Tasty at Night. But with that, for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. We'll catch you all next week on Overtime next Monday. Good luck trading until then. Stick around for the break because Ilya's back with Macro Money shortly.
See you there, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights. and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just
young.
question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing I can hear John laughing out there. See, the thing is that you either have it or you don't have it, and
All right.
you just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing. But
Last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah.
That's
when
one of
does
the
yours
unique-
get delivered? You didn't do the sword?
50 grand. And
Yeah, but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
I'm going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married or is your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck.
No.
That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
All right, Mike. All right, Nick. Do you remember the first trade that you ever made in your life or in your career?
I do. It was a long call on Twitter. This is when it was a publicly traded company. It was at like $50 a share. I bought a call at 50, and the next day it rallied, I think, 11%. And it was like the single largest bull rally in one day in Twitter, and I was like, this is the easiest thing I've ever done.
Oh, I know the exact trade. So it was in Costco. I don't know the exact strike, but Costco was trading about 150-ish. This is in 2015. I sold, I believe, the 165 strike call against it because I read some article online that Walmart was going to eat their lunch. Costco, I think, went from 150 to 200 within 3 weeks of that trade. It was a massive losing trade. I learned a lot from that trade.
And you still came back?
I still came back. Yeah. I was not discouraged. I thought I was an idiot, but I was not discouraged.
The future of trading is here. Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Well, it's that time of the month. We are looking down the barrel of the monthly U.S. jobs report, and there is plenty to talk about. Markets are relatively quiet here as we get into the week, and we have a generally content start, it would seem, to the second half of the year, but a defining theme is yet to emerge, and maybe this jobs data will be the catalyst. This is Ilya Spivak, head of global macro here at tastylive. This is Macro Money. And what we'll do here first and foremost is take a look at how we are setting up across the major markets for this data, how we came in today as we got the first days of the second half of the year and of the third quarter under our belts, and then see what this data might start to do to shape what comes next. Because as we've been talking about for the past several days, there is a glaring disparity that now emerges in stock and bond markets, and one way or another, it's going to resolve itself. And this data may be the beginning of how that happens. So just looking at the performance here for the day so far, Bitcoin had a nice jump, 3.9%. Crude oil, the standout, though, as far as moves outside of the realm of the usual. Crude oil having a spirited rally here after a few days of consolidation following those wild swings around the Israel-Iran conflict. And the data today on inventories, interestingly, seems to be the driver that inspired what we're looking here. The interesting thing here is that actually overall inventories for crude oil went up, but after a long period of sharp declines. So although the overall inventory number was up by 3.8 million barrels, that's after 5 months of blistering drawdown, most impressively an 11.5 million barrel drawdown in the middle of June. So with this sort of an aggressive 5-week run, it's not surprising to see a little bit of a build, but the standout was a jump in crude oil imports that seemed to speak to significant demand, an increase of almost 3 million barrels. That would be the largest rise since August of 2023. So perhaps a sign of improving energy demand here, and crude oil sharply higher on that. Otherwise, another slow push into the highs for the S&P 500. It continues to hover near the highs of the year and figuring out whether it has the temerity to break them. NASDAQ rebounding from yesterday's losses, now basically unchanged for the week. A little bit higher, but only very, very marginally so. Yields a little bit higher, the 10-year, the 2-year up across the board, and that might be linked with this jump in crude oil. That's the kind of thing that tends to echo into inflation expectations and nudge up yields, and indeed that's what we're seeing here today. Gold a little bit higher, the dollar a little bit lower against its major counterparts. Gold has been attempting to stage a recovery for the past several days, as a matter of fact, and its attempts have been, for the most part, fruitful. We're looking at gold prices now that for the past 2 days have erased almost a week of downside progression last week, and at this point are maybe about 50% of the way back in the direction toward June's highs. So a spirited rebound there, perhaps in the spirit of a slightly weaker dollar, and unbothered here by the pop in yields. But of course, all of this is sort of tinkering at the margins when we consider that the week's real big macro catalyst still beckons. And that, of course, is the June jobs report. The expectation here is that we're going to get an increase of 110,000 to overall non-farm payrolls. That's a rise that would amount to the weakest in 8 months. The jobless rate seen going up to 4.3% after holding at 4.2 for quite a while. That's certainly an increase relative to history. If we consider how that stacks up over time, it's the highest since October 2021 if it happens as expected, but nevertheless, it is still quite low by historical standards. Now, an interesting bit in this story, as we sort of look at what these numbers might mean and what they might do, is what automatic data processing told us earlier today, ADP. They put out a private sector estimate of job creation. And before we sort of delve into this, it's very important to note this is not usually a good month of foreshadowing or prediction of what the official NFP numbers are going to be. So in seeing these numbers for June, we wouldn't necessarily jump and say, well, NFP is going to be that. But it does create a sense of general conditions in labor markets that set up what the risk of surprise might start to be in incoming jobs data. And what we find here, of course, is that really since the middle of last year, there has been a steady slowdown in private sector job creation. But really what made June stand out was this negative reading. So ADP told us that in June, private sector payrolls declined by 33,000. And this was actually the worst result and the first time that we've seen a negative reading, as we can witness on the chart here, since March of 2023. So not exactly a happy sign here for labor markets, and adding to a general pile of evidence suggesting that the labor market is weakening. Last week's jobless claims numbers is a 4-week average of initial claims, so first claims for unemployment benefits. We can see here we're looking at some of the highest levels here on this 4-week average in 2 years. We'd have to go back to sort of the middle of 2023 to get something comparable. When we look at continuing claims, it's not much of a happier story. This is sort of the next iteration of claims, and as this rises, you get the sense that people are having a hard time finding a job once they lose one, and so they're extending benefits. Continuing claims now at the highest level since November 2021. Now, a slight bright spot in this equation has been a piece of data this week on job cuts, but it's only a bit encouraging, if encouraging at all. So we did get what was the smallest number for reported job cuts at around 48,000 so far this year. And this comes to us from Challenger, Gray and Christmas, which is a consultancy. But that's after a very dramatic spike earlier in the year. You can see here, this jump in layoffs was, in fact, the largest such thing since back at the onset of COVID. And we're looking for the year as a whole at 744,308 job cuts, which is the most, indeed, since 2020. So it is interesting, of course, to see moderation here, but what this is a return to trend rather than anything particularly encouraging. And then, of course, as we talked about yesterday, the ISM manufacturing survey gave us the fastest pace of contraction on the employment side in 3 months. As ever, this is in the logic of PMIs. So above 50 is growth, 50 is neutral, below 50 is contraction. The further you go below 50, the faster the contraction. The further you go above 50, the faster the growth. And so what we ended up seeing was a fourth consecutive month of contraction in the manufacturing sector against a backdrop of surging prices, falling new orders, and falling employment. So giving us that sense of a stagflation type of data set. Now, obviously, we're not seeing stagflation realized in the overall economy, but these kinds of numbers, if only just looking at the employment component, certainly suggest that the labor market appears to be under duress. And this kind of slow and gradual descent in the amplitude of job gains may finally be reaching some kind of a point of acceleration. Now, we do have, in addition to this jobs data, the service sector part of the ISM report. It is expected to give us basically steady growth, 50.5, so just a touch above total standstill. And when we compare that with what we've just seen, this overall 49 on the manufacturing, we probably have something that levels out to a composite of maybe 50 or just a hair above if we get the numbers as expected. So we'd be looking for an economy that's essentially at standstill, barring some sort of upside surprise. And on the jobs front, we can see that in the prior month, jobs slightly, by a narrow margin, returned to growth in services. We'll see if that momentum holds up. But the general trend since the post-COVID catch-up peak has been toward slower and slower job creation, and increasingly more and more time being spent sub 50, that is to say, both sectors losing jobs. Now, as we've seen over the past weeks, really going into the beginning of June, U.S. economic data has pointedly diverged in a negative direction from the global pack. This is Citigroup data on economic surprises. And we can see here that increasingly U.S. economic data is faltering relative to forecasts. Here's the zero line, which would amount to the data basically coming in line with expectations. And when we look at what's been happening essentially since late May, is this persistent weakening in data outcomes relative to those expectations, implying that basically analysts' models are off, and they're off in a rosy direction, notwithstanding some one-off jumps like the durable goods orders report last week. Moreover, we can see that the weakness in the overall global index is mainly rooted in the U.S., because we can see here that it is the G10 set that's pulling the global average lower as emerging markets hold up. And within that G10 set, it's the US that's pulling things lower and Europe that's holding up well. So while the US economy may be in absolute terms in a much better growth sort of environment than is happening for the other major economies, Europe is effectively at standstill, and so is China, as we just saw from PMI data over the weekend. So we're looking at a situation where the U.S. is certainly the brightest of a dim bunch as far as economic growth is concerned here amongst the major economies, but the direction of travel is pointedly more negative. And so it seems like what's occurring is the U.S. is converging on weakness elsewhere, rather than weakness elsewhere converging on strength in the U.S. We see a similar story in this Atlanta Fed GDP Now model, where, never mind the level, the story here seems to be that, again, since about late May, the tone of the data going into this model to inform where it's going has been decidedly negative, which is why the model is getting revised lower as this data comes in contact with the overall basket here. So never mind the fact that there is a vast disparity of expectations for what fourth quarter growth may actually, or second quarter growth rather, may actually look like. The range is unusually wide, from 0 to almost 4%. We're still far enough away from this data that these things don't actually matter all that much and will even out. But more importantly, the data informing the model is telling us the general trajectory for data flow in the US is toward weakness. And this speaks to the disparity we've been eyeing in bond markets. This is what we mentioned at the top, is this disconnect between what's going on in stocks and what the bonds are saying. So if we back up here to mid-February, we can see that stock markets start to sell off around when business and consumer confidence surveys start to say that the rollout of the tariff regime from the White House is spooking people and hurting demand and weighing on economic growth dynamics. We see at the same time that the inflation expectations baked into the bond market are falling with stocks, as if to say, okay, we have an economic slowdown, earnings outlook is worse, growth outlook is worse, so inflation outlook is lower. This is a deceleration in growth writ large. Then we have the crescendo that was early April. We get Liberation Day with a bunch of very scary looking reciprocal tariffs. The markets swoon, so do inflation rates. And then the White House starts walking back the worst of the spook. And we can see that since then, if the story from the first quarter was, oh no, the tariff rollout will hurt growth, the story for the second quarter is of divergence between what the markets think about growth and the sentiment implications of that thinking. Because clearly what stocks have done here is they've basically come back to their starting line for the year. And what we find then is that while sentiment has overwhelmingly and undeniably improved, whatever ungluing of the financial system we were worried about here has clearly faded from everybody's thinking, but the outlook on the economy remains downbeat. These inflation readings are within a hair of where they were at the worst of it. And so what we're looking at then is a market that is overwhelmingly biased in the direction of some kind of an economic downturn in the works. And not surprisingly, on that basis, the outlook for monetary policy is much more dovish if you were to ask the markets than if you looked at what is being projected by the Federal Reserve. And so what you have here is the markets basically screaming at the Fed to stop dithering, to stop trying to wait and see which side of the mandate they should worry about given this tariff shock, the inflation side or the growth side, and to get on with rate cuts. Because indeed, the last set of Fed forecasts that we had acknowledged that the outlook for GDP is cooling and the outlook for unemployment is rising, but still was worried enough about a tariff shock to inflation that it reduced the outlook on rate cuts and landed on just one rate cut next year and another one in 2027 after 50 basis points in 2025. Through the end of next year, that amounts to 75 basis points in cuts, 50 this year and another 1 cut next year. The contrast is obviously dramatic with what the markets themselves have on the menu. They have the Fed's 50 basis points here, and they're a little bit of the way toward pricing in a 3rd cut, although it's not quite better than even odds yet at just 8 basis points in that direction. But for next year, the outlook is a lot more dovish. To the Fed's 1 cut, the market has at least 2 and leaning in the direction of a 3rd by a narrow margin. In fact, even the outlook for the meetings still incoming this year, July, September, October, and December, since the Fed's conclave in mid-June, that outlook has become more dovish, not less, even as Fed Chair Powell has talked up all the many reasons to pause. Last week in congressional testimony, and just earlier this week at the ECB Central Banking Forum in Sintra, in Portugal. So this makes this jobs report critically important. If all of this leading signaling, be it from jobless claims, from ADP, from ISM, if all of this suggests that we're going to get soggy results here, then the market's speculating on what this might be policy-wise would be endorsed. It's important to note that besides the headline figures, too, there are the revisions, which have been overwhelmingly negative. In fact, the average revision since the beginning of January 2023 has been negative at about 20K. But most importantly, for the past 2 months, there's been this increasing downward revision in the preceding 2 months of jobs figures, where, for example, last month, the data beat expectations by 9K, but the prior 2 months were revised down by 58K. And so on net, we ended up with 49,000 fewer jobs than we thought over the course of April, March, and February than initially reported. So as we look at what happens now with this setup, the question becomes, well, if all of this early warning finally gives us an unmistakably weak and norm-breaking jobs report, well, then the markets are right and the Fed needs to step it up. But if that's the case, then there is, in fact, an economic growth scare on the menu. What that might do is push stocks lower from their heady highs, because now that we've reset from the spook in the first half of the year, the next half may well be about, well, where is actual growth heading? Now that we're through the tariff shock, the Iran-Israel shock, and all the various kind of headline risk that we've been watching. And if that ends up being a recession, or if at least the markets are presented with the risk that it is much likelier to be recession than they are currently envisioning with the S&P 500 at its highs for the year, well, then a pullback in stocks seems like a very live risk if this jobs data misses. The US dollar, which has been beaten up all year, may well rebound, interestingly, around some sort of a haven flow, if in fact there is finally a meaningful retrenchment in sentiment. And bonds may well go higher at the long end, around that same haven demand, and anticipating that the overall rate structure is going to have to be lower as the evidence supports markets, but the Fed continues to divot. And that is macro money for today. It's a shortened week here. Typically, we're here Monday through Thursday. This will be the last show for the week this week because of the holiday in the U.S. We're here on The following week, of course, as normal, Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'll be back with Victor and Tom for First Call on Sundays, with Chris for Futures Power Hour Mondays and Fridays. Back with Victor for the Price of Truth on Tuesdays, writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money returns next week. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The beauty of thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, Shelly Van, and of course, Dan, who doesn't have a last name. Dan Cecilia, full strength here in the cave or the studio. How are you guys doing today?
Yeah, we're doing great. We're doing great. Bitcoin's back up, so everything's right in the world.
109.5, just about. ETH flirting with 2,600. Solana over 153. It's getting wild. We've got a ways to go, but it feels a lot better.
Sure does.
Do we know why? What's the news? What's the deal here? Is it this bill passed, or speculation on interest rate cuts, or you're the macro guy? What's do we know? We have any ideas?
I haven't seen any headlines. Maybe the chat knows. If you're not watching this on YouTube and you want to join the chat, participate, take an active role in this show, get over to YouTube, Tasty Live, pop out the chat, type some crazy shit in the chat. Let us know. I haven't seen any headlines, guys. I think when you look at, and we'll talk about the volatility kind of derived trading ranges, the 1 week, 1 standard deviation move, this is pretty normal. We've been in that low vol environment. The upside of that 1 week range is about 113. Downside, it's about 102. So we just continue to chop here, but I haven't, typically there is a catalyst. I haven't seen anything. We know there's a lot that's going on under the surface that should support higher prices over time, but I didn't see anything specifically today.
Did we take a look at the volatility? Like, we could look at the BVIV, or we could look at, I guess, what IBIT's doing, as far as just, you talked about like volatility was really low, and we expected kind of somewhat of a move. So I guess it moved up to 41. It was down at 38.30. So this BVIV index.
Yeah, we are getting a little bit of a pop there, but in terms of any kind of actual catalyst, I mean, yeah, you're coming off of the lows, 39, 38, up to 42. So a nice move, as we might expect to, positive correlation here with that price movement. I don't know how well we can see this on the screen. Here's that volatility we're talking about. And if you missed the show on Monday, we had Cole Kennelly from Volmex on, went through the whole Volmex product suite, the dashboards, what they're doing over there. Very cool stuff. It's like a VIX for Bitcoin or ETH or crypto in general. So go and check that out on YouTube. Thank you. So yeah, haven't seen anything other than this though. Maybe there's a headline, but just a bullish day in the markets,
We have one from James Bond in the chat. Happy hump day. What do you think of coin to having exposure to the Bitcoin market? Thoughts? Do you mean, what do you think of owning coin stock as a proxy for Bitcoin exposure, or coin stock owning Bitcoin?
I'm guessing it's the former, right? Is this a way to play crypto? Absolutely. Curious to get your thoughts. The way that I would approach this, or the way that I think about this, is very similar to, we'll use that digital gold analogy or the gold comparison for a second. So you've got gold. You're going to have certain market conditions that are going to support higher gold prices. I think we're in one of those environments right now. Another way to add a little bit of leverage to that or have a higher volatility position or exposure is to invest in gold miners. Now with Bitcoin, clearly you have Bitcoin miners that are publicly traded. I would look at Coinbase in a similar light. It's not a miner, obviously. Holds Bitcoin, is going to be exposed to people participating in the market, obviously through trading. They have a couple other revenue streams as well. But if you believe that there's going to be more participation as prices move higher, that generates more revenue for Coinbase, it is a proxy for that market environment. It does trade at a higher volatility. I don't know if I've got the, let's see if we can find the data on this, the overview. So we just said the volatility of Bitcoin was what, 42? If we looked at the
42, yeah, 42.
Yeah, so we've got a IV index right here of 66.8%. So Coinbase trades at a closer vol to like Ethereum right now. But that's how I would think about it, right? You have crypto market risk, but you also have company-specific risk in Coinbase. It's one of the few ways you can invest in a publicly traded crypto company, but it is a decent proxy, I suppose. It's going to be mostly correlated. positively correlated most of the time is what I want to say with Bitcoin prices, but not always.
Yeah. Yeah. I mean, I think it's a great company to hold. If you're like, yeah, just alone from the crypto exposure, sure. But like,
Got in early, didn't you?
yeah, I was buying it in 2022, 2023. Actually, 2023 after everything kind of crashed. I didn't think the company changed at all. I thought it was maybe there was some regulatory risk, but yeah, held it since then and it's done really well. So, but I tend to hold the actual spot tokens. Like I don't use any of these as like proxies because it's like I just look at that as investing in a company, right? Like if I want to buy the token, I'll go buy the token. So, to Ryan's point, it's lower volatility to go hold spot Bitcoin, especially on the platform. So,
great question from James Bond.
Yes,
The fourth.
The fourth.
Yes.
Where's everybody else in chat? Do we have a question for the chat?
Wake up, chat.
Yeah, wake up.
We got a lot to talk about today. Do you guys want to jump into a quick performance kind of update here? These prices are stale, but this is the dashboard from our midweek market update that came out a little bit later than usual. Apologies on my end there. But if you do not receive the midweek market update or the Saturday morning email newsletter next to Orange, get over to tastycrypto.com and enter your email address. We put out a decent amount of information, value, trade ideas, I think, a little bit of education here and there in the email. But looking at this really quickly, if you've been following along with the shows, you watched OTCL on Monday with the guys, we've been in a pretty quiet period here, grinding higher. Obviously, we've got Bitcoin closer to 110 right now, 108 at the time, but up only a couple percentage points week over week. Bitcoin has outperformed. Looking around the tokens that we track or that are offered through Tasty Trade, Bitcoin Cash, BCH, was outperforming for a second, but is flat. It's up 16% year to date. So is Bitcoin. Elsewhere, everything's still underperforming. It's not alt season. Bitcoin market cap dominance still closer to like 65, 66%. Volatility is low. So really not much has changed from what we've looked at over the last few weeks. But I will point out again that price momentum in terms of how we measure this via exponential moving averages, it's positive for Bitcoin. So I think that's an environment where, again, you look at the implied trading ranges via the volatility. In these periods or in these environments, you can feel a little bit more comfortable in buying the dip. Doesn't mean that it's going to work, but I would assign a higher probability to this trend continuing until we see these signals change or this breakdown. But just looking at some of the larger market cap tokens that we track, again, it's been Bitcoin over everything. ETH still kind of bearish on the daily. Solana went from bearish to neutral. XRP, same thing. So you could see this inflect higher, but I typically like to wait until those signals to give me the sign. You guys trading anything else outside of some of what we talked about already here today? What's on the watch list?
Shelly, what do you got on the watch list?
Like crypto adjacent or crypto?
Just in terms of what you're trading, yeah. Have you been active this week? I mean, it's only Wednesday, but I know you've probably been in the market.
Actually exited my HUT position a little too early.
Oh, no.
But I was profitable, so I'm not going to complain too much. But
Can't go broke taking profits. Not go broke taking profits. But HUT 8 did just raise $220 million from Dubai bankers, so I don't know what that means, but
little capital injection. So you're out of HUT 8, the Bitcoin miner. Dan, what's on the radar?
I'm looking at this SharpLink, SBAT SharpLink thing, and I know it's not a crypto token, but it's this Ethereum treasury vehicle, which I think has been heavily covered elsewhere, but I am beginning to take a look at it because seems like it might be a good time to get in. I haven't bought, but I don't know. Just seems like an interesting play. ETH might be catching a bid here. We could see something happen with some of these treasury vehicles.
Yeah, you're seeing more and more of that. I mean, on one hand, you have more companies that are publicly disclosing positions on their balance sheet where they've added Bitcoin specifically, or more companies that are investing in Bitcoin via ETF vehicles. More institutions are coming, right? But what you're now starting to see is that those flows are making their way into Ethereum ETFs. And you're also starting to see a couple of these vehicles, as you mentioned, that are being spun up to specifically buy ETH. I've seen one that's buying BitTensor, symbol is Tau. Maybe that continues, but if you're an ETH bag holder like myself, you'll love to see it.
Yeah.
Quick look at expected ranges here. Again, vol is low, off of the lows, as we mentioned. Implied vol, as measured by BVIV or Deribit, volatility is about 40%, 42%. Realized vol is trading closer to 30, so a little bit of premium in there. IV ranks are near zero, so if you look at where is implied volatility relative to the range that it's been in over the last year, it's close to the bottom of the range. For context, if we were to see around these prices, the implied volatility of Bitcoin go back to the top of the range, close to it, let's call that about 70% implied volatility, then you're going to get closer to a $10,000 weekly move on a one standard deviation basis. Right now, you're looking at about 5,500, 5,700. So that move almost doubles, obviously, if implied vol doubles. But for context around where it could go or where it's been, it's about double from where we are right here. So just be aware that, as we know, this can all change very quickly. You could get much bigger trading ranges on the weekly and the daily basis for sure. It's been pretty sleepy for now.
You got to expect that to change too. Like it's volatility has been trending lower. We are in like a little bit of a summer dull period, but it changes quickly. So I do think paying attention to that is important. And everything can change very quickly. So
yeah, I think when you look at, just even the trading activity here, the price action in the market, we had a down market in April, and then you had this very quick recovery in May. So we went from about 80-ish to 110, and we've kind of paused. We're in this consolidation period right now. We've been in it for the majority of the past month. Maybe it changes. We need to break probably 112 or so on the upside. I think if you do see that pulls in buyers, shorts cover, and you could quickly get a run to 115, 120, just kind of arbitrarily calling out some levels. It wouldn't take much to get there. That's what I would be looking for. But yeah, you have to get the break of the resistance. And we're kind of flirting with, again, the top of that range there. But it does feel like, in terms of what we've observed and historically kind of how these patterns have played out, get this big move to the upside, get the consolidation, then you get the break. The breaks have been to the upside. And the way that this is trading, the trend that we're within, you would assume, I think, right or wrong, you would assume that you do get that break to the upside. And that's kind of the period that we seem to be in right now, is that consolidation.
Right.
That said, what else is on the show run here today? We've talked about performance. We've looked at volatility, trading ranges. Where do you guys want to go next?
Let's figure out how to watch the charts, because
let's take a look at the platform.
I think the grid view is superior.
This is a new update to the web platform, something that's existed on the desktop, but here we are. Improvements, new features galore.
Mm-hmm. And watch lists. I think it'd be helpful to just show that there are existing crypto watch lists, which I can see, and then you can create your own. So if you hit that little plus icon, you can create your own watch list and add whatever you'd like to see on it.
What are we going to call our watch list, Shelly?
Wow, my mind just went.
That's okay.
In
We can
75
just call it
different
like
directions.
test watch list, if that's what
That's lame, I think.
Tasty Crypto Show watch list.
All right.
First thing that popped in my head was squirrels.
Or squirrels. So we've got a lot of different watch lists, and we just showed the crypto watch list in here. But if you want to create your own watch list, then you don't have to just add crypto to this. This is what I love about probably where we're going, is we can add the spot cryptocurrencies, we can add the miners, we can add the ETFs, we can add the crypto companies, the proxies, the Coinbase, the strategy.
Let's add them
all in one place.
Let's add them all.
Okay. What would you guys put on your crypto watch list? And very easy to do this. You just have to type in the symbol, and then I think you can add it, right?
So Bitcoin, obviously.
Bitcoin, IBIT. Strategy. Is it still MSTR?
What is it? Yeah.
I think it's still MSTR.
Can't type. Apologies.
Yeah.
Do we want ETH on there?
ETH.
Yeah, we need a little
Solana.
ETH on there.
ETH, Solana, Ripple.
You can just type ETH and it'll pop up, right? Yeah.
Yeah.
There you go.
So what you're seeing me do here is just go in
EITO,
and
someone says in the chat, sorry.
EITO, and that's the ETF that tracks the futures, I believe, ProShares Bitcoin ETF. But what you're seeing me do here is if you do want to create a custom watch list where you can put all these companies, all of these different instruments that we've talked about that are all related to crypto on your list, you can go in, create that custom watch list, and all you have to do is just type that symbol in, you search for it here. Once you click on it, boom, it's on your list.
Mm-hmm. So now, go to the chart button on the left. And from there, I think on the right, on the right, you can put your watch list on the right panel. If you click, oh my gosh, I can't see on your screen.
WLT.
There you go.
There you go.
Now, from here, do that little grid icon, or it's like 3 squares in the middle. Yep, multi-chart. And now you can select from many different layouts. Yeah, 4. And then if you're clicked on that one and you want this to stay Bitcoin, that's fine. Click on the other one next to it and then click from your watch list. Just, yep, now that one's ETH. And so you can just swap them out. And having the watch list right there, it's easy to just bam, 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 set them up.
I like this a lot. I have not personally used this. I know it's a feature that has existed probably for some time on the desktop platform. So tastytrade, if you're not familiar, which I think most people are, has a downloadable desktop platform, but the web application has just completely evolved 2.0, 3.0, 100.0 at this stage to have all of these new features, everything on the desktop and more. This is really what we've been using on the show for the last few months or so. But this is a new feature I haven't used. And this is great because you can see everything on your watch list, or you can have these different kind of compartments. You can see the charts. You can trade off of this as well. This is really convenient.
Mm-hmm.
I would like to see a comparison. Oh, okay. I guess we already have it up. I want to see a comparison. We don't have to do this right now, but you know how there's like 3 different MicroStrategy. There's like MicroStrategy Preferred A, Preferred B, the regular equity. I wonder how those trade, and like it'd be nice to see those compared. And then the chat is going crazy over Tom Lee's company. I don't know what that is, but I don't know if that's like a publicly traded company or something.
Yeah, chat, what's the symbol? I've seen Tom Lee's popping up per usual.
Miner, is that what it's called?
Kind of pumping coins, which I appreciate, I suppose. But yeah, I think it's another an acquisition vehicle, as we talked about.
Bitmine Immersion Technologies has rebranded itself as a full-on Ethereum treasury vehicle. The company raised $250 million in a private round to begin accumulating ETH, with the explicit goal of becoming one of the largest public holders of ETH. Tom Lee, founder of Fundstrat, joined the company as chairman. BMNR. That's what it is. We should add that to the watch list. There we go.
Yeah, we got it up there. We've also put together, just to compare, and apologies, I'm not super familiar with the 3 different strategy vehicles here. I know there's a lot on these on X, but we have MSTR, STRF, and STRK up here representing those. And we also put up Bitminer. Is that what it's called? BMNR.
BMNR, yeah.
Okay.
Now
maybe I can zoom out a little bit. I don't know if this is yeah, okay. So you add Bitcoin to the balance sheet, ETH to the balance sheet, or you become a treasury vehicle, and you go up here.
You go from $1 to $60.
It is impressive.
Hold on to that rocket.
Also, howdy to Lone Sofo showing up here.
What
Late,
up?
but still here. Respect.
Late Sophos. What's up?
We need to do a deep dive on the different MicroStrategy vehicles.
Yes, we do. We should do that. That's actually a great piece of content because I've seen so much on that, and I haven't actually like deeply dove into it, but there might be an opportunity there if you're investing in the different preferred shares. You can't trade from the chart yet, though, right? There's no like place order from the chart. We don't have that yet.
I don't believe that you can do it from the grid here. If you can, I've just got to get a little bit more versed in how all of this works. First day with my new hands, as we often say. But yeah, I don't think you can trade off of the chart here, but you can quickly jump over to the trading page and set up trades off of this.
I don't know how to do it, but I'm pretty sure you can. What happens if you right-click on the chart? Anything?
No.
Not from there? Okay. We'll figure it out.
We'll get there eventually.
Now we just need giant monitors so that you can do all the charts.
I like this, though. This is an evolution of the show. We've got the watch list on here. We're going to cover a bit more than just a handful of tokens. We've got some of the ETFs that represent miners. We've got some of the individual companies. Some of these do have options. We'll start to get into that a little bit more. Obviously, the market's closed right now for options trading, but this is good. Setting up a watch list and using the new grid view, which just came out on the web platform. I don't think that we've made a loud announcement about this just yet. That's coming soon. This is kind of sneakily been inserted into the platform. So if you've been using this, congrats, you found it. If you haven't used this, we're going to use it on the show moving forward. But grid view, again, you've just got to go to the chart, and then you've got to go up here where it says multi-chart. And if you have a large enough monitor, it looks like you can get up to 8 different screens here. You can kind of change, that layout and the orientation of this visually.
You can change the appearance too.
Yeah, synchronized across all of these different categories here.
Nice.
So that's the other nice thing about it, right? If you have a process where, as we like to look at multiple time frames to kind of get a sense of momentum, you can put your indicators on here. And then you can have your 3 charts, you can have your 4 charts, whatever it might be. You've got your daily, your weekly, your monthly. Maybe you want to zoom in. You've got a 6-hour, a 4-hour. And so you can see what's happening across those different frames, and might give you a sense of kind of how you want to trade it, right? Obviously, the faster moving time frame is going to give you an earlier indication, but you can check that against, well, sure, we're seeing a pop short term, but are we in a bullish or bearish trend on a weekly or monthly basis? You can see that all on one screen.
Mm-hmm.
This is awesome.
Yeah.
Not to get off this, but do you have any trades that you've placed? We have that follow feed still, right?
Yeah, let's jump over to the follow feed really quickly before we wrap things up. I did put on a new trade as of the other day. I think we should be in the green, given the movement today. You can see that, recently have bought some ETH at 2750, bought a little bit more on that dip at 2500. So underwater on some of these, underwater on 2620. We've got ETH at 2583, but buying a tenth or a quarter of an ETH at a time. We're clearly playing for some higher prices. Would love to see that get back to 3. We'll probably sell out of some of that. But elsewhere, we've got some IBIT call options that we went long when IBIT was 59. So maybe they're looking better. Bitcoin, we bought some Bitcoin at 99.4 on the dip when we had some geopolitical tensions a couple weeks ago, or 622. You can see the date there. And then the most recent trade, this is just simply based off of those price momentum signals that we cover in the emails, but went long Aave again. So this is the second time we've put on this Aave trade, just again, solely based off the signals. I have no inside information or no view fundamentally into Aave, but aside from, it's a DeFi protocol and does accrue some value in ways. But just looking at it from the price perspective, went long this at 264, 281 right now, just bought one. So decent little trade, nice percentage return there. But again, that's just going off of the signals. And when we get a sign that maybe that's kind of exhausting itself, we get back to 3 where we were previously, maybe we look to take that off, but went long at 264.81. So you can see all these trades and track these. There's some really old legacy stuff going back, a year or so ago on here. But these are the new crypto trades, Aave, ETH, Compound, IBIT, you can see the open and the close there and track that that trade and hopefully, that performance, which we hope is positive. That's the goal, at least.
Mm-hmm.
I think you've done well with that IBIT strategy.
Yeah, let's just take a look really quickly over here. Here's some of the portfolio. We got a little bit of a gold position as well. This is just a small portfolio that I trade. Long some calls in here that, are still in the red, but, a nice pop today. Got some time. The view here is just buying very low implied volatility and looking for a pop. But, have a bit more to go before that turns into a profitable trade. You can sell some things against that, reduce the cost basis. But yeah, got a bullish position on there. You can see about 200 deltas in IBIT right now. So we'll see. That said, it's 5:01. That's it for our show. We've got a half day in the markets tomorrow, full day off on Friday. Be careful with the explosives.
Crypto doesn't sleep, so
Crypto will be open.
the traditional markets will be a half day. Crypto's 24/7, 365.
Yeah. To that point, if you want to get your fix on Friday and the market's closed, or Saturday or Sunday, if you're like me, and you do not have crypto approved for your Tasty Trade account, if you have a cash or margin account, individual account, get over to the trading preferences, and you can do that right here from the web. You go to manage, go to my accounts, trading preferences. You can see I've got it enabled. But this is where you can enable your, well, it's not up on the screens, apologies, but you go into your trading preferences, and that's where you can enable crypto for your account. So if you want to trade on the weekend or you want to trade crypto anytime and it's not available for you, when you go to the page, just click that button. Very easy to enable that. So that's going to do it for our show. Shelly, Dan, thanks for joining me here on this Wednesday ahead of the weekend. We'll be back on Monday. Until then, I'm Ryan.
I'm Shelly.
I'm Dan.
Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
Whew, let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You got to be aware of these things. Everything has value.
Well, not everything has value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about Us.
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I
well-
wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Oh, yeah, it's Wednesday, July 2nd, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast. Give it a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. More on those in just a bit. But first, it's Wacky Wednesday, everybody. It's time to introduce our plainclothes guest with no chest hair. The one, the only, Mr. Chris Vecchio. Views are going to be down 30 to 40%. Christopher, you know what the people want, and yet you keep teasing them and stringing them along. How you doing, my friend?
I figured we peaked last week with our discussion about Marjorie Taylor Greene to start the show, so there's no reason to even try to top it, right?
You know, I totally forgot about that until now. Bro,
Not
one
me.
day...
And the conversation
day-
after the show, telling you about when the light bulbs started going off over the conversation.
I have a feeling
panic
one
that
day
sets
in one of our lives, that episode's going to be used against us. Me at some court hearing or you at some Senate confirmation. One of the two.
I've actually sent that, and I faxed the URL to a number of people to give them like, the heads up. Like, you can't use this against me. I'm using it against myself. Joke's on you.
Attorney-client privilege. That's what we should change the description, the title of that episode to attorney-client privilege, and maybe that will help us. Shout out to everybody watching this. This is a trading show, everyone. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't already have both, go get them. But if you want to be part of the conversation that's taking place on your screen, bing, right here. Right here. Did we get it? Is it over here? I don't know. Somewhere in the middle of your screen. There's only one place you can do it. And that, my friends, is on Tasty Live's YouTube channel. So head on over to the evil Google YouTubes and subscribe to the channel. And hop on in there. Get your metacarpals, your phalanges moving. Bash your face in front of the keyboard or onto the keyboard to create random-ass characters. Do whatever you have to do to spoof the Google algorithm and putting us in front of as many people as possible. Shout out to all of you in the chat. I see you. I love you. But off, and away we go. Christopher Vecchio, the S&P 500, doing the exact same thing it does every single day, which is move up by just shy of 0.5%. The NASDAQ, though, recovered a little bit from yesterday's sort of, I don't know, unpinning of value versus growth, or let's call it small cap versus tech. Actually, on the positive side, up 0.75%. The Dow Jones did a whole bunch of nothing, down 2 basis points. And the Russell, again, the second day in a row of outperformance. In the cash markets anyway, up 1 1/3%. Chris Vecchio, I say to you to begin the show, one of the smartest questions that I can come up with, which is, what gives?
It's summertime, Victor. Everything's fine. The Fed's going to cut rates in a few months. The economy's still growing. There's no problems.
Economy still growing. Do you believe that? Do you believe the economy is still growing, or do you believe? Good God, that the economy is decelerating right now, at least on paper?
Yeah, I think directionally, right? One of my long-held tenets is that when you look to GDP trackers, until you get into the 2 weeks prior to the actual release of the official government report, you don't take the number at face value. You use it more as like a directional cue. And so it started off second quarter quite strong, but over the past few weeks, the economic data has been eroding, not just the hard data, but the soft figures as well. The surveys have begun to lighten back up after what was, we'll call it post-tariff recovery. The ADP report today doesn't do anyone any favors in terms of that narrative that the economy is weakening right now. But the stock market's never the economy. So we can just separate those two things very plainly here. We know that the stock market can be detached for a variety of reasons. It could be looking through the recession. Heck, it may have priced in the recession in April. And it's going to be such a short and shallow one that by the time we ultimately see the deceleration turn up in the official government figures, we'll have started to rebound thereafter. A situation not too dissimilar than what happened last year, where you get through late July and the market has its panic over growth and the Fed's too late in not cutting. And then by the time the Fed meets in September, they say, oh, yeah, we know we have to actually give you 50 basis points to catch up. And the market says, like, great, but we're actually no longer concerned about growth. Thanks for the extra money. Maybe that's what we're setting up right now again. But either way, right, this is a market that, you know, it has enough of what it wants to see. Might be delusion. I'm taking the Dr. Strangelove approach. None of it seems to make sense to me except for the fact that line goes up. So I'm going to stop worrying and just learn to love the bomb while we have it.
I don't know. I'm getting worried. I don't want to say worried, but there's a part of me that is watching a lot of market participants. And this isn't really a response to what you said, but the fact that you said, I'm not going to worry, I'm using that little part, which is I think a lot of market participants were worried at lower prices and are now switching to the mode which says, I'm just going to participate to the upside because the market has, I don't know, whatever phrase you want to use, climb the wall of worry or whatever the case may be. And now that we're at, you know, these effective highs nearing 6,300, I think a lot of people, a lot of market participants are betting that way with their money. They're effectively saying, like, look, yeah, I know we have geopolitical concerns. I know we've got potential inflation concerns. I know we've got uncertainty in monetary policy and potential the Fed chairman and direction of monetary policy in the future. But this thing's going higher, so I'm just going to stop worrying about all of that stuff. And I wonder, though, Chris, as we near 6,300 and perhaps stretch valuations, do you think that's perhaps the gotcha in all of this, that we needed to get to the point where there's this upside capitulation in order to get a little bit of a flush to the downside? Or do you think we need say it again?
Yeah, we do need that. And you're starting to see signs of it creep in, right?
We don't think we're there yet.
No, but like little tells, like the fact that when the market starts pushing the highs again, you see volatility stop falling and start to go back up, almost as if like volatility is going up because people are buying so many calls in that moment. And those are little signs of exhaustion, and you're getting into an exhaustive top. But the positioning isn't quite there yet still, which to me, you really need a hefty one-sided trade for traders, for speculators, to signify that you're at a turning point. And we're, CFTC COT report, speculators are still net short the S&P 500. They're still net short the NASDAQ, believe it or not. So long-term fund managers, they're feeling great. You know why? What do long-term fund managers do? Do they trade every tick? or do they dollar cost average positions every month, every quarter? This has been a great year for dollar cost averagers. This has been a fantastic year for people who rotate, every few weeks. If you rotated on January 1st and April 1st and July 1st, right? If you held tight, you were rewarded. Your clients think you're a genius because you saw through the fog when everyone else was losing their skin. So yeah, asset managers are bullish, but like traders are still not piling in yet. It hasn't gotten fully frothy. And so could this get stupider? Sure. Could there be a bigger disconnect? Yeah. But it also was like 2023, 2024, Victor. How long were we waiting for that shoe to drop of economic malaise? And it never arrived. And the market just kept going up. So if we can muddle through the next few months without a big downturn, why wouldn't stocks keep going up? Because we have all this negativity that still needs to be shed that's baked into price for whatever Trump premium or discount, dare I say, you want to apply to prices.
Let me go to you mentioned ADP earlier, and I'm really curious. So ADP, so we get some numbers this morning. ADP comes out. It's obviously not great. Shows a shedding of 33,000 jobs. Market dips into about 8 o'clock a.m. and rallies throughout the rest of the day. And it looks like algorithmic buying. It like whenever you see a slope that's consistent for the entirety of the day, that looks like just programmatic buying all day long. Mortgage applications were like okay. And then, but ADP showed that shedding of 33,000 jobs. Why do you think that is? Do you think it's because the market is looking through an ADP report because historically it's not the greatest in tracking what the actual employment situation report will show tomorrow, which is usually Friday, but it's going to be a day early because of the shortened week? Or do you think it's because recession is bullish because we're running 7% debt to GDP ratio? We're about to pass a bill that the CBO, for whatever problems they have with their math, says it's going to add $3 trillion to the deficit, plus another trillion if you include the interest that we're going to have to pay on that $3 trillion through entirety of the decade, plus raise the debt ceiling another $4 trillion to be ready to distribute some funny money dollars in the case that they need to and don't get what they need for monetary policy. So ultimately, you get a downturn and you're going to turn on that funny money gun. And if Jerome Powell doesn't want to play ball, you replace him with somebody who will. And I'm just curious, like, is there a reason to be scared of a downturn in the real economy from the point of view of the financial assets that I'm looking at on a day-to-day basis, Chris? Do you think the market looks through it because ADP is just not that concerned about it? Or do you think you look through it because Trump's going to do whatever he can do to hold on to political power and favorability? And that means turning our dollar into Tic Tacs if necessary.
Trump doesn't have a favorability rating that's above water right now. Right. So if he's doing things to be concerned with being popular, I have a hard time thinking that's what his North Star is. Right. He seems to be doing things that he wants to do. And maybe some might say like, well, to do the tough things, they're going to be unpopular sometimes. I personally don't think that's why he's seen his poll ratings fall in the way that they have, or why the One Big Beautiful Bill Act is polling where it is. I genuinely think that people don't want to see Medicaid cut. 17 million people potentially losing access to Medicaid, Medicare, right? That's a lot of people, right? And, I'm sure there are some Trump supporters in there who rely on those programs who are like, wait, I was all for dunking on liberals and, Doge, but I didn't think it was going to happen to me, right? Like I need my medication still. So if he was really concerned with doing what's popular right. So let's just back off that for a second. I have to reject that notion. But to that point, the deficits are huge. And like what makes Trump feel good is what the people around him say to him. Like he likes being surrounded by his yes men, and the corridors that he views into, he wants to see people patting him on the back. And so will $4.5 trillion of tax cuts offset by $2 trillion of spending cuts make him popular among the people that he cares about? Yeah. So I think that he's fine with this, and that means we're going to get the bigger deficits, the bigger debts. We're going to keep pumping financial assets for the foreseeable future because government deficits are private sector surpluses at the end of the day. And given the distribution effect right? If we look at the CBO scoring or Tax Foundation, find anyone, go out there on your own. I'm not a do your own research just a kind of person, although I think that is the job we have. We really do our own research here. So I'd recommend anyone else to do it themselves. But to that extent, look up a nonpartisan and independent objective score of this particular piece of legislation and look for the line items where they discuss where the money goes to, like which income decile benefits the most from this. And it's really going to be the wealthy. And I think that matters because if we want to talk about how money's spent and who gets the money matters, right? If I give someone who's in the bottom 25% of income earners, an extra $100, chances are they're going to spend that on things. If I give someone who's in the top 25% of income earners an extra $100, there's greater odds that they're going to save it, okay? Because their spending needs are being met already. And when you give that money, all those funds to the top 1%, top 5%, top 10%, chances are they're not just going to save them, they're going to recycle them back into financial assets, into real estate, because why hold on to the extra cash? So could this be really inflationary? Could that K-shaped recovery post-COVID continue as a result of this bill? I think so.
It will, for sure.
Right.
It won't, I don't think you'll see the same type of inflation in the CPI because the money's not going directly to the people. So you can have monetary inflation, which we will see, we could see inflated asset prices, but the cost of things at the grocery store don't go up like you saw during the Biden administration. I should say, I think a lot of that had to do with distributing money, those stimulus checks that were actually sent out during the Trump administration, and then the lack of supply we were creating at the exact same time. So you have a lack of production on one end, and then you have a lot more capital that's distributed to the masses, which now can bid up the price of goods and services. But in this particular situation, you're going to see all of those COVID-era savings spent down, still monetary inflation getting pumped into the economy. It's just going towards a group of people who don't need to bid up goods and services, Chris, because they don't buy as much goods and services and there's fewer of them. They buy monetary assets. So all of this money goes out, this $4 trillion goes somewhere. This is what I keep thinking about. And I feel like we just saw this. We saw this in the Biden administration when they spent trillions of dollars in a couple of these bills, the Build Back Better, the Inflation Reduction Act, and a few others. And it was like, all else equal, I think we would have saw a slowdown. It would have been, but we pumped so much money into the economy via fiscal dominance that it really changed the outcome that we perhaps versus what we would have seen otherwise. And I feel like people have forgotten that lesson and they're looking straight in the face of $4 trillion plus a $4 trillion raise in the debt limit. And they're just going, well, I'm calling the recession again. It's like, well, why don't you just see this as the exact same thing we just went through, but instead of money directly to the individual, money is going to the business this time or to the business owner. And so it's going to show up differently, but I don't know that the results are much different, Chris.
No, I don't know the results are that different. And it seems to me this is just, a story of bottlenecks. And that's really every trade, every investment. It's a story of where's the bottleneck. You want to own the bottleneck, right? Where was the bottleneck at the start of the AI story? Semiconductors and chips. What happened when DeepSeek happened in January? Our perception was that the bottleneck was no longer in chips. It was going to be an application. So the companies that had the superior applications, now they had the upper hand in the market. Right? Because we were moving beyond the theoretical, the build out phase, beyond selling the picks and shovels, we're moving into the gold rush. And along those lines, we look where bottlenecks would be if we're doing things that are going to reduce the labor pool in the country, make materials more expensive, raw materials more expensive. If we're going to pour a ton of money into the top of the funnel and, as Ilya likes to say, it really is trickle down economics because it just comes out in a trickle. It doesn't come out very fast to everyone else. What happens to those funds, right? They got to go somewhere. Water always finds a level. And when it's a different type of inflation. So you're going to get weird things like velocity of money falling in the economy, right? And like slower structural growth overall. That's what some of the CBO's estimates have put out, that the economy is going to be smaller in 5 years' time, in 10 years' time, in 20 years' time as a result of this legislation, whether we like it or not. And that's not at the benefit of, well, we have to do things to run a smaller government, spending habit and raise taxes and get surpluses in order to fix the deficit and debt. And you know what? We're willing to trade off a little bit weaker growth to start fixing our finance problems. But that's not the case. CBO is saying that we're going to have a weaker economy, bigger deficits, bigger debts. So I don't know what this helps besides Bitcoin, gold, which Bitcoin is looking really, very quietly, Victor, back in the futures market. Nice little bullish engulfing bar today. You look at IBIT or the continuous BTC contract, starting to look like we're breaking out a little bit here. No one's talking about it.
This thing's going. I think, I don't know if this thing's worth anything, but I think we go to the moon first before anyone. And if it's worth nothing, and this was all just a giant Ponzi scheme, and then they pull the rug on everybody, who knows? Maybe that its ultimate destination is somewhere in the single digits sometime in the next 5 to 10 years. But I just don't get why it's not. I've asked so many people, I've talked to so many people, I've read so many of these books, and I just cannot figure out for the life of me why somebody could look at this and go, this is nothing. This won't be around in 5 to 10 years. Like, I cannot understand why Jamie Dimon or Gary's Economics come out with the opinions that they come out with, Chris. You know what I mean? Like, are you fully on board with this, or is there some part of you that goes, I don't really know if this is anything? Are you still in that camp? Like, there's some part of you that goes, I don't know if this is anything, but I got to own it as some non-correlated volatility, or as some play that says I'll regret it if I don't have 2 to 3% of my chips on this, on Black 13, something like that.
Well, that seems
Are you a hardcore
really
believer?
accurate. No, I'm not a Bitcoin maxi. No, I'm not a
it?
Bitcoin maxi. No, there was definitely part of me early on I was like, hey, the global financial crisis happened. These people are kind of like F the banks, and I understand that sentiment. So yeah, consider me a fan in a certain regard. But also that's probably why Jamie Dimon and other people in institutional side of finance were so against it, because you have a group of people who create this new asset class out of thin air, which is effectively, the genesis of is because the bankers weren't punished enough during the global financial crisis, right? So you're not exactly going to be partial to these people or welcoming them into the tent of traditional finance, as it were. There's a business angle there, right? Jamie Dimon has no interest in saying, yeah, Bitcoin's the future. Those guys who designed a system to replace the banks, they're correct. I don't know if that works for shareholders at the end of the day. So there's, right, you talk about a world governed by incentives. I just think certain participants in the market are there because, even like the CFTC, some of the regulators out there, are they really representing the public, or are they representing industry participants? But ISDA is a great example. The International Swaps and Derivatives Association, they determine whether or not someone's gone into technical default. But who comprises the committee that determines whether or not a corporate or country has gone into technical default? Representatives from the banks. And so if the banks don't want to see their assets defaulted on, right? Like, oh, this person owes me money. If they default, I get nothing back. How about we all agree that none of us are losing money here? There's been no default. And that's what happened with Greece. So incentives govern the world, as you like to point out. But yeah, so the point is everything. If it's Trump, what he's doing at the national level, or even something like what's happening in the city with Mamdani here in New York, pronounced it right that time, Victor. He says he wants to build like 200,000 new units. New York City's goal from 2016 to 2026 was to build 300,000 new units. So we're going to have a 10-year program effectively that's going to have a lower pace of government financed affordable housing than we did in the past. And we're going to talk about raising taxes, and we're going to talk about giving tax cuts to the super wealthy, but raising them locally in New York City. I mean, this just seems like a really interesting mix where it can do nothing other than push up asset prices in the stock market, push up gold and Bitcoin. It seems highly inflationary for all the wrong reasons. But again, if that's where we're heading, we want to be where the puck's going to be, which is why I'm still long stocks and long Bitcoin and long silver. Let's get on the crazy train, Victor.
Yeah. I'm on the crazy train too, but I'm just not chasing. For better or for worse, I'm not chasing the highest priced and the highest valuation assets, like the hype train, the AI hype train. I rode that for a while. I'm off it. I probably regret getting off it a little bit. I think I got out of NVIDIA around 100.
Let that be the warm blanket that you wrap yourself in, that I wrap myself in. I'm not chasing this market. The first time I got really, really bulled up in stocks, right? 42.36 in the S&P. I remember it because it was like my best trade that year. It made my year.
Mm-hmm.
So I've been on this ride I'm not chasing this thing. I have been in the front car from day one. Sometimes I take a break and, I got to go to the snack car sometimes, right? But it doesn't mean I've lost my seat on it. So
yeah, I try to be chill in my everyday life, but when it comes to this thing, I'm like hyper competitive, super hyper competitive. So what I mean by I'm not chasing is I still want to outperform, and I want to outperform other people to a large extent, but I want to get there through like what I think are the best risk and reward bets that I can find. And sometimes I'm right, sometimes I'm wrong about those. But do I think NVIDIA is the best risk? Do I think putting my money in the Mag 7 and just letting it ride is a good risk reward? No. Do I think that has outperformed? Yes. For my entire adult life, I said this on the podcast the other day, for my entire adult life, being a big dum-dum and putting my money in the highest beta assets would have outperformed. And I've seen a lot of people who don't know anything about the markets come in, put their money on black and let it ride and make a lot of money. And I'm not necessarily jealous of those people or in any way wish them any harm. I'm glad that people are participating in markets and making money. I like that. But I think for me, if I eke out through a lot of hard work, dedication, whatever, if I eke out a really nice gain for the year and I do it without chasing the big dumb momos trades, and I'm doing it through what I think is like smart allocation of capital. You find the nuclear theme before they come knocking on it, because people go, oh my God, how are we going to power the whole AI, all this AI stuff, or the gold miners. And right now I went down the rabbit hole in the home builders, and I haven't stopped talking about them for like a month. And I finally got paid a bit yesterday. They all had a 3 to 5% lift. And I was really curious, was that a one-day thing? Was it a one-day thing because you had three things all at once? You had, as Ilya mentioned yesterday, Sequa, but I don't think that was the whole story. I also think you had value finally outperform growth in tech yesterday by 200 basis points. Russell was up 1% while the Nasdaq was down 1%. So I think these things all have single-digit forward multiples. So these are all in the value bucket. So if you're just algorithmically going out and saying buy value over tech or sell growth, these things are in that bucket. Also, bonds had lifted up to 115.5. So my biggest question was, would this theme continue? And what was most interesting about today is bonds took a hit. Bonds were down pretty significantly. On a relative basis to how they've been moving. So down to 114.30. And this theme, these home builders still performed pretty well to the upside, about 1.5% or something like that was spread across the board. So I'm kind of excited about that. But to my original point was, I'm hyper competitive. I want to outperform, but I want to get there through what I think is the best risk reward bets and smart allocation of capital. That's what I mean.
Can I pitch you on coal then?
Beautiful, clean coal. You pitch me on coal, and the next theme I'm developing, I can't find value in it, but it's water. So let me hear your coal thing, and I'll pitch you on water.
The government is giving tax cuts to do more coal.
I saw. Taxes and putting taxation where there wasn't any in electricity.
In electricity, yes, but solar and wind, those are rescinded. Which, like, why would you tax more energy? We want, again, I'm an abundant energy person. I want nuclear. I want hydro.
Agreed.
I want natural gas. I want all of it. I want a big base load, Victor. Right?
Who else is like that? China. China's like that.
Yeah. Well, we need to build the transmission lines. Which are we doing here? Okay, so coal. Look at like BTU on the screen, for example. Look how it performed after. Peabody, right? World's largest private producer of coal.
Holy shit. Holy shit. Up 11% today.
Look what it did after the election, though, where it was trading. Okay, come on. Like, go to the end of the year. Go to the October. Go to the
Right.
October. Okay, so you can buy like the $25 call spread, and I think it's like a 10-to-1 risk to reward. Like, come on.
That's crazy.
Come on. Like, I say this as, again, I am a bleeding heart
Where's
climate
coal
change
come?
believer.
Where's coal
Coal
come?
is something you gotta trade. You gotta
What's
trade
the
it.
state with the most coal? Is it like
West
who's the
Virginia,
senator? Is it West Virginia? That's what I was gonna say. Because it used to be Manchin, right?
Yeah, and now it's Jim Justice, the former governor who switched parties.
What's that lady's name?
Wyoming did, actually. Wyoming produces 40% of U.S. coal production. The next largest producer is West Virginia at about 12%.
What was the lady's name? Is it Murkowski?
Alaska?
Yeah, the one who voted for the bill and then tried to say it was a bad bill. And a lot of people are going to be hurt. But like, I saw her interview. She said, like, you know, my job is to represent for Alaska, and we're different. And once I saw the way this thing was going, I just had to do what I had to do to get what I could for the citizens of Alaska. I just was like, goes back to the incentive thing, man. It's just like prisoner's dilemma. If everyone acts in their own self-interest, we all lose. We only gain if we all sort of collectively understand the Nash equilibrium, what's best for all of us. And we just won't do that. We just keep acting as individual selfish actors in the system at the political level, and we're going to keep creating bad outcomes for everybody. And there's no better example to that than what Lisa Murkowski did and then what she said. I couldn't believe it, bro. What do you think about that?
I can believe it or not. I believe that happened. Because she got pork, right? Like, did you know? You now have, I think, whaling captains, Victor, will pay lower effective taxes than you or I now. You and I are in the wrong business, my friend. Okay. But Victoria Sparks, Rep. Victoria Sparks said this. She's from Indiana. She said this earlier today, like literally less than an hour ago, or less than 2 hours ago, in fact. She said, I'll vote for the bill since we need to make it happen for our economy and there are some good provisions in it. However, I will vote against the rule bringing it to the floor due to broken commitments by Speaker Johnson to his own members. So she's against bringing the bill to the floor, but if it's there, you know what can I do? I got to vote for it.
Yeah, dude, it's ridiculous, man. What's the deadline that they're operating on? They want to get it done by July 4th. Why? Just because the president wants it as an announcement? Or is there some, like, if you don't get it by this date, then you miss a deadline for taxes? I didn't think that there's no reason not to take more time. Is there? Other than I want this to be announced on July 4th.
There might be, but like the TCJA didn't pass until December 2017, and it didn't go into effect until January 1st, and we're in the middle of the year. So the changes in tax law aren't going to go into effect until next year. There's some things that are retroactive, like there's an incentive for having a kid. Maybe that's part of the Trump.
Is it the $5,000 thing for having a kid, or are you talking about the investment? I do like that. That's one of the only things that I liked in the whole stupid bill.
No, that's really smart. I think you and I have talked about this before, how the incentive for representatives, liquidate your private assets. You're forced to invest in SPY and TLT. And because if you're making policies.
What are you talking about? That's not what I'm talking about. What are you talking about?
I know. I'm saying for kids too, it's a very similar situation for kids. Like the second kids are born, give them some equity in the future of the country.
Yes.
Right.
The problem, though, is it makes all of us more. The reason why people like Brad Gerstner want this, I think there is an aspect to this which is good. The problem we keep running into is we keep going, okay, how do we fix wealth inequality? Raise the minimum wage. It's like, bro, are you kidding me? The reason that there is such a disparity between the haves and the have-nots is asset ownership. So you don't fix that by raising the minimum wage. And it's like, how do we have a society that keeps trying to fix this problem by raising the price labor per unit of labor. It's like, bro, we need to change the distribution of asset ownership, and therefore, as this thing appreciates, because that's what it was built to do, that more people can benefit from that. And we just keep having the same dumb conversation.
When was the when was the last time the federal minimum wage was raised?
It's been a while. It's been a while. Like Obama, I think, right?
It's raised from $6.55 to $7.25 an hour in July 2009.
Yeah, that was after Obama got elected.
$7.25 an hour, Victor.
Yeah, I know, bro. But again,
that's a problem.
Yeah, I don't know. There's another part of me that goes, well, what if you don't have $7.25 worth of skills to exchange in the marketplace? Then you're locked out. And then let's say if we raise it from $7.25 to $15, what everyone would get happy about that. But I'm telling you, what happens in an age of AI when you raise the price of labor from 7 to 15? What you're doing is you're saying anybody without $15 worth of skills to add to the marketplace, we are going to automate your job away. You're not going to be able to exchange your labor for wages. So I don't disagree, but California's a great case study in this. They raised minimum wage over in California. People lose jobs, bro. All those fast food joints, they just automated this stuff away. And I think Gavin Newsom gave one of his buddies over there that runs one of these chains a sweetheart deal, so they didn't have to raise their minimum wage. But like, I'm not opposed to raising it. All I'm saying is that it does have consequences that we don't seem to talk about. But anyways, my point is, I like the idea. I like this idea, but what it also does is it creates exit liquidity for Brad Gerstner and all of his partners and portfolios that he runs. Just a nice passive bit of exit liquidity just by having children. And then the other thing that it does is we're already so held hostage to the market because of our 401ks and everything else that's locked into this. It just creates a greater hostage situation for the U.S. as slaves to the marketplace and to doing things that positively benefit the
Victor,
assets.
We're already slaves to it.
I know.
If you don't,
and this
if you
just
don't
brings
own
us
any
further down the path.
If you don't own any financial assets and the stock market crashes tomorrow, do you think that your town is going to be affected? What about town's pension fund?
In a world where, look, I like the idea. I'm just saying that it's just going to create a new sense of awareness for the market.
We need more skin in the game. We need more.
I agree. I don't disagree. I'm just saying there is always a trade-off, and this is, to me, there's a trade-off there, which is like, there's a group of people right now that might vote for a representative that say, I don't care what the market does because the market doesn't impact my real world. Exactly. And so sometimes I think that might be okay. But in a world where even the lowest wage earners want to do things that prop up the market, you've now created an incentive that, again, disproportionately benefits the asset owner. Because now even labor says, I don't care about the markets. I want this for me and my community. You're going to get rid of that. Now everyone's voting in favor of policies that will positively and disproportionately benefit the asset owners. What I'm trying to tell you. I'm not saying it's bad. I'm just saying it is an outcome.
I love how you have to always do it's not saying it's bad because you know that I'm going to go, so then how far is too far? Are we advocating for completely free labor? Should people even have the decision not to work? Should we just throw people into shackles and force them to work? Right? Like, what's the most efficient cost model there?
What?
But you disclaim that. We're not going towards a slavery conversation about the model of, like, what's the cheapest input? And isn't that the conversation over immigration here? And this is one of the things that I feel like a lot of people on the left are talking past. Like, yes, I think that people who have been upstanding members of the community, give them asylum to some degree. But also, are we accepting the argument that we should have a class of people who live in this country who do work at subservient wages, and the only way that we can keep our economy on 2 feet is by having a class of subservient people who work for subservient wages? Like, that's not a comfortable reality or conversation that a lot of people want to have. But we need to say these things.
Can I offer you that?
That's the cheapest model, free labor.
Can I offer you that Singapore does that?
Well,
Singapore effectively imports a lot of foreign-born workers for construction. So like Bangladeshis, I think Pakistan, India, they come over. There's better work here at more attractive prices than where they come from. They get lodging. It's not great lodging. They do get lodging. They work really hard. Singapore erects buildings faster than I've never seen construction work as fast as it does in Singapore. They do the same thing domestically. So like, let's say women from the Philippines or Indonesia or all types of places that are sort of poverty stricken. There are no opportunities for jobs. They come over, they apply for these domestic helper visas. They stay with their individual employer. They make money. They send it back home. There is a different class of work pass for those people. Let's say if somebody comes over and they're a CEO of a company here, they have a different work pass, work visa, same thing in the US. But neither of those two that I just mentioned are citizens of this country. They have a longer process, not as long as the US. It takes a couple of years to then apply for some sort of like PR, permanent residency here, or even on a long enough basis, citizenship. But I guess what you're talking about is a model that exists in the world, and it doesn't exist in a way that is like ultra oppressive.
Is that a cultural thing though? Like
What do you mean?
I feel like that's the model that America has, and there's a large part of the population that says no, we don't want people coming here from abroad and taking our jobs, right, and doing the work that we would do otherwise. Not that Americans are going to be out in the field picking strawberries.
I think this time around, it's not a taking our jobs thing. I think in the past, when a lot of American industry was about low-skilled work with our hands, I think that was the thing. It was taking our jobs, even whether it was right or wrong. I think this time around,
So
I think it has a lot more to do. I think it has a lot more to do with the benefits.
Okay.
I think it has a lot more to do with the benefits that go out and whether or not people agree with that level of benefit that is going out to I don't know what they call it, migrants or illegal immigrants or I don't know what the word is, but I think that's sort of the crux of the conversation.
Sure. I mean, I think the number was, I saw it quoted from the CBO yesterday. Someone community noted one of AOC's tweets, but it was something like the U.S. spent like $4.8 billion on benefits for migrants last year, which
I think
you want to. Okay, but let's just say that's the number.
Okay.
How many magnitudes more are we raising the debt to cut Medicare for 17 million people? 2 magnitudes higher? 3? Right? 4.5 trillion versus 4.8 billion. So, hey, I mean, at least UPenn wiped away those swimming records, Victor.
Oh man, there is such a better way. There is such better legislation that could be passed, but that place is just a big bribery ring. It's just a big bribery ring, and that might have worked if the representative was representing a pool of people and not individual interests. So we get ourselves in this situation because I got myself to Washington because I got 2 or 3 big donations. So at any opportunity, I'm looking for the kickback to those 2 or 3 individuals. And that's why this stuff is so warped. It used to be, I'm going to do the thing that benefits the most people in my state that continues to get me reelected to come here. But it's not a vote thing. It's just, if I get enough money, I can put enough money in Facebook and TikTok to get these people to do and think whatever I want them to think, and they'll put me back here.
I'd like to think it's a little bit more complicated than that.
I know you would, but it isn't.
What I say,
it isn't.
Given my intimacy with the process, but in many cases, it's not.
My thing is, and I'm way late on this, but I do think the third order from this, this AI craze, just to get back to that individual symbol discussion. By the way, nice rally here in NVIDIA after a 2-day fall. We're back nearing highs again. They'll eat up anything you give them. But I think it was as soon as the U.S. figured out that we were going to go through the scaling model, the open AI scaling model, and not like the DeepSeek efficiency model. We're going to do the scaling model, and even after DeepSeek came out, it's like nobody cared. We're still going to plow forward with the scale. Then it was like, okay, well, we got to power this stuff. And so then the nuclear thing comes on. And I think at some level, people are going to be like, all right, we got to cool these data centers. And I've been really looking for, and that I'm sure that's already happening and already getting priced, but it's not a mainstream theme yet. And so I've been looking through all of the water utilities, trying to figure out like where in the United States is most conducive to building data centers over the next, 5 to 10 years, and then which of the individual regional utilities might best benefit from those bets. So I got a handful of utilities. So I did the home builders, and my next one that I've been waiting to do is water. There's a handful of companies I like.
Interesting. Okay.
And none of them are super cheap, though. They trade sideways for like the last 5-10 years.
They trade sideways, but, it's kind of like, when you look at XLU, for example, it's not exactly the sexiest action over the past 6 months, but if you've been selling puts in there or in the companies that are the biggest components of XLU, you've been having a fine time just collecting income here little by little because the market's relatively stable. To answer your question, data centers are being built mostly in the Mid-Atlantic, and in particular, like Virginia has the highest concentration up to Pennsylvania, in part because fewer earthquakes, you're not going to have wildfires, reliable infrastructure connected to some of the major metropolitan areas in the country close to New York. Also important that like Wall Street's backup centers are over in Allentown, Pennsylvania. So having ample power supply in PA.
I thought they were in Jersey.
No,
in Jersey.
No. If let's say a nuke goes off in Lower Manhattan, backup data centers in Pennsylvania get turned online, but they get routed through Mahwah, New Jersey. So just like one of those things you want to. So the Northeast corridor is where all the action's at. You're interested in water utilities. I want to give you a few
ETFs real quick and the people. Okay. So instead of the individual stocks, which is the way I'm going to play this, I'll just give you a few ETFs that go along with this theme. So this is Invesco's Water Resources ETF. None of these are super liquid, mind you. And you can kind of see what this one has done since those April lows. 58 to 72. FIW is another one. Which is the First Trust Water ETF, same idea. PIO, Invesco Global Water ETF, same thing. This one a little bit more outperformance since those April lows. CGW, I'll give you one more. There's a few others, but I'll just stop here. Invesco S&P Global Water Index ETF, another one. So you can see these things are going crazy to the upside. Since April, a lot of stocks have done this V-shaped recovery, but the last two ETFs I showed you even more so than the others. I just, that's what I'm saying. You're not getting a great price here. I wish I'd have been smart and thought about this ahead of time or picked up some of these during the April volatility. But, I'm watching them now. All right, you were saying?
No, I think the theme is, looking at this legislation and how I know the trope. I call it a trope because nothing's guaranteed in life, that Democrats are going to win back the House next year. With the retirements and shifts that we've seen in the Senate, Susan Collins is probably going to lose her seat, given where things stand right now. And Tom Tillis is a prime Democratic pickup as well, who just announced his retirement this week from North Carolina. But even so, that still only gives you a 51-49 Senate. If you're a Democrat. So Republicans are probably controlling the Senate after 2026. And that's today after, when you look at polls, Dems look like they're going to take back the House. But let's say they don't take back the House, right? Nothing's guaranteed. They were expecting a Democratic wipeout in 2022 after all, and what happened? That wasn't the case. So maybe it's the same way for Republicans. Trump gets all the nasties out of the way early. You mentioned this months ago. You do all the uncomfortable things early on in the term, so by the time the calendar goes to 2026, we've had the market fall, we've had the change in legislation, the economy's rebalanced before the elections occur for the midterms. Maybe that's what happens. Right?
And you can take credit for it because all the bad things that happened were Biden's economy, and now we're in 2026. And look at the stock markets, everybody. This is the Trump big beautiful bill.
Right, and it didn't matter that we had to have a 20% decline in stocks to have a 25% rally in stocks. All that matters is that we had that 25% rally in stocks back, and that's political messaging, right? Everyone does that, but you work through this year. So whatever is happening with this legislation is likely to have a shelf life until 2028, maybe longer, because it's no guarantee that the parties change power significantly. If maybe Democrats win back the presidency, but who's to say they win back the House or the Senate? Things change. So here I say short healthcare companies that are related to or highly dependent upon Medicaid reimbursement funding in rural areas. Long coal, short rural hospitals is the play. And there are a few like senior health care facilities and home health care providers that rely like 20%, 30% of their revenues are federal Medicaid disbursements. And they were down 2% yesterday. And maybe they're a little bit better off today because this bill's on rocks. But if this bill passes, it's just a penciling out dollars and cents. Like there are 2 hospitals in my area, not in my county per se, but within an hour's drive that would be in consideration to just shut operations completely if this bill in its current form passes because of how dependent they are on Medicare reimbursements. And that negatively impacts me, Victor. You know why? Because those people who go to those
your
hospitals
hospital
get sick still and they have to come to my hospital. Okay, so when that's more demand and strain on my services, and so that's more inconvenient for me, and that's great. I have a kid coming in a few months. I want a crowded hospital.
That goes back to the immigration thing too, man. If you're in a city that just got 30, 50,000, 75, I know what I'm trying to tell you is the same thing that I lived in the city of Chicago. Getting in an emergency room in the city of Chicago, it was impossible, bro. There was a couple of times we had to take the kids into I'm just saying, I've said this a million times. I think there was just a way smarter way to go about reforming in a more transparent way to go about reforming our immigration and increasing the amount of immigrants in the country than the way that we did it. And so we stress services everywhere, all social services, including hospitals. So to the same extent you're talking about with this bill, which would negatively impact the services in your area, well, anyone that lives in either one of these border towns or one of these sanctuary cities, completely flooded. All of their services, your schools, your hospitals, your everything.
But you and I have been clear-eyed about this for many months now. But the fact that it took Greg Abbott and Ron DeSantis busing people up to New York City, and you're adding, even John Fetterman to this, the guy has many faults, including the fact that he looks like he does not want to be senator. You listen to his what he's saying. He's like, I want to be at the lake.
Who, Fetterman?
Yeah, Fetterman? He's so checked out. It's so funny. He's so checked out. But like he even said,
you think he's checked out?
You absolutely checked out. But the point he said, he brought up a few months ago, when you're adding the population of Pittsburgh to the country month after month after month, right? That's going to strain resources. And like that happened in New York. You look at hotel prices in the city in the post-COVID era. The city started using a lot of these hotel rooms that because of COVID weren't being used, they were vacant for immigrants. And then once the economy reopened, now there was less supply of hotels. And so hotel rates shot through the roof. What's New York City's biggest industry? Tourism. And so tourism took a hit, which in turn deprived the city of taxes, which it was already suffering from because people left during COVID. And so they have a lower tax base. So you get this like negative feedback loop all of a sudden. And I'm very sympathetic. I think America's a melting pot, right? Should all melt together. But, they're even working this out with my town right now, talking with people about building more housing here. There are people who want to just open everything up, open up all the zoning. And then there's the pragmatists like myself who go, well, what can our sewage handle? oh, our sewage can only handle like 100 more people living here right now within the town's borders before we hit our capacity. So how do we do this? Do we want to build 100 new homes? Should we build multifamily housing so it's a little bit denser? Do we need to build new sewers? Right? But like you can't just build. There are constraints on systems, and you have to work within those constraints and then fix and grow the systems to accommodate over time. But you can't shock them, otherwise the system can fail.
I wonder who came up with that statistic, and if they have like this range. So they have a vol on that. So it's 100 plus or minus, let's say 30, and it depends on the diet of those of the people who come in. If we get 100 people who are on keto or like vegans, then we can only have 70 of those because they poop more. And if we get a bunch of like more bread based or carnivores, then we can get maybe 130 of those because they have less bowel movements.
Meat eating gym bros who just absorb all the protein and don't go to the bathroom.
I'm so curious what analyst came up with that statistic, and then did they put a range on it, and then what went into the range?
Yeah, no, but like those are the kind of constraints that you have to talk about. And so like we have our I'm a believer in like if I want something to occur, I am more than happy. It's what Reagan said. I know people don't like when I quote Reagan, but if someone offers you half a loaf and you want a full loaf, you don't smack it out of their hand. You accept the half a loaf and then you go back and ask for more.
Or you eat the half a loaf and you say, hey, there was something wrong with that half a loaf you gave me. It was expired. I want a refund. I want the other half. That's what I would do. If you don't mind, can I ask you one more before we get out of here?
I'll allow it.
Vietnam. Trump said we did something with Vietnam. You've been talking a lot about sort of the incentive structure between China and Vietnam. Trump said they struck a trade deal and imposed this 20% tariff on imports. What say you on that level of tariff on Vietnam relative to that gamesmanship that you were concerned about between Vietnam and China?
Well, part of the deal that's announced with Vietnam is that they're not going to allow themselves to be a transshipper. So the tariff that's being charged is 20% tariff for Vietnamese exports into America and a 40% tariff, right? So they addressed it. And so that concern that you're seeing in some of these data points out of Southeast Asia, where like Singapore is my flag that I like to wave. In a single quarter, they're importing enough NVIDIA GPUs that would consume the entirety of the country's electricity production for 1 year. So that's clearly not happening. And they're not letting these sit on a shelf and rot because the technology gets better and you want to use it now before it gets stale, so to speak. So like clearly it's a pass through. So they have to address this. You can't just, you have to do a comprehensive Fortress America type of approach where you plug the holes. So I do appreciate that is occurring because we don't want excess supply from China, excess capacity dumped into markets, and we don't want them finding ways to work around our export controls. So win. But moreover, you look at something like the retail, look at XRT, for example, the retail ETF. That obviously had a really good performance recently thanks to Nike, but XRT was the ETF that took the biggest beating after the Federal Reserve meeting in December. It never recovered to highs like the broader market as you made your way into the new year. It fell the hardest and the fastest as we made our way through the tariff talk and growth scare, in part because you look through history, the retail ETF is the ETF that historically loses the most during recession periods because it's all consumer spending. So the fact that it's performed the way that it has and has basically erased all of the losses that we've seen since the February 21st growth scare, that is a tell in and of itself. I really like that. I really like what's happening with KRE here, Victor, the regional banks. You mentioned before, which we skated by, rates are up, but so's the Russell today. Well, rates are up maybe for oil's reason. Oil is up. And if oil is up right now and it's non-geopolitical reasons, then hey, I guess it must be demand. So sure enough, the EIA data showed that U.S. crude imports absolutely surged last week, 2.9 million.
Copper up significantly too over the last week, and it doesn't seem like many people are talking about that. Copper's nearing highs, so for whatever growth concerns this market had at one point in time,
They're not there right
It's pricing something different in copper and in crude oil to a lesser extent.
I do have to go, but what was you were mentioning the green room before? What was your take on Diddy? All right, anyway,
I didn't really see the whole thing. I can't believe they dropped a bunch of those charges, but I have no idea. I saw the headlines of that. I think they put him away for like prostitution or something like that. I think from what I've heard, that seemed to have more than just prostitution going on in that whole ring. But that's for another talk for another day. Christopher, if people want more from you, tell them where they can go.
At CVecchioFX, StockTwits, Twitter, StockTwits, at CVecchioFX. You can find me here on Network Monday through Friday, Futures Power Hour, 1 p.m. Eastern, overtime, 4 p.m. Eastern, Monday through Thursday. Let Me Explain on Wednesday, 6 p.m. Eastern. And no, that's Tuesday mornings, 9:40 a.m. Eastern. It's The Praise of Truth on Wednesdays with you, Victor, at 6 p.m. Eastern. But we're off air tomorrow for Futures Power Hour and overtime, as well as Friday. So I will see everyone on Monday.
All right, man. You have a good one. This now that Diddy has been put away for a while, this now makes Chris Vecchio the #1 importer, purchaser, and consumer of baby oil in the United States. Congratulations on that title, Christopher Vecchio. I'll see you back here next week, my friend. For all of you, hit the like button as you get out of here. Subscribe to the channel if you haven't already. This is our Synthetic Friday here, so we won't have a show tomorrow. We'll see you back here next week. Until then, peace.